fact, you'll have to see that some of these shorts run for cover. Short positioning had come down to around that 75-76% odd. It's moved back up to around 81% from the FI point of view. The FIs, well, they sold in cash. They shorted, the index, and also they wrote more calls than puts. So it seems now the setup from their side is again very, very cautious. They wrote close to around 3 calls for every 1 put in Friday's trading session. And because of the aggressive call writing that we've seen, the PCR has come down sub that 0.8 odd. And there has been aggressive writing at around the 24,000 call, the 23,900 call. Between them, there's close to around 90 lakh shares getting added between them, telling you the call writers, they believe higher levels are going to get defended. And if you just look at the trend over the last few days, the Nifty has been making lower highs. And you'll want that trend actually to break because, on a day-to-day basis, you've been seeing this. So in terms of a level to track for today's trading session, that becomes the important mark if you want to break that trend. 24,206 is the important mark. And I think this 24,206 to around 24,284 is important because that's initially where the 50 DMA comes in at. And that'll be a bit of a resistance mark. On the downside, the 20 DMA has now moved up to around 23,600. So you'll want this mark to hold out. You don't want this level to get breached out. In terms of stocks that I'll be looking at in indices, I'll keep an eye out on the tech index. It's got smashed out of shape in the past week itself. But I'll track this index because, it's seen a very, very sharp fall. The rupee is a little bit weakish and the Nasdaq did bounce back as well. So let's see whether or not we can see some kind of a breather from these levels. And the India VIX over the last few days, it's moved from around that 16 towards the 20-odd mark. You don't want the VIX to run away, right? That's a sign of fear, volatility, in our markets as well. So you want that to cool off a little bit, closer to around 20. GIFT 50 starts off in the green. We could see some profit taking. You don't want the low levels to get broken, and you want to see a higher high.
Take that point, Nigel. Thanks a lot for that. A higher high is what the street wants right now. As we speak, the Nifty actually making lower lows over the last 4 trading sessions. Good time to get in our global guest then, Ed Yardeni, President Yardeni Research, joins in. Ed, it seems like the clouds of uncertainty have returned after some hope of truce. What do you do in a situation like this? Do you think the diminishing marginal utility principle applies here as well, that this uncertainty will not see as big a sell-off as the previous one?
Well, I think the market is settling into a new certainty, and that is that this may be the status quo for a while. I mean, things can change pretty quickly, but the market seems to be saying that investors can live with the thought that the U.S. blockades Iranian ports and that the Iranians blockade the Strait of Hormuz, and that the world can get along with that. It's a debatable point, but on the other hand, I think everybody's keying off the price of oil, and the price of oil even today, after the expectations of a possible meeting were dashed, the price of oil really isn't even up much, a couple of bucks, so we're still around $100. And I think certainly the U.S. can live with that. Other countries, I think, are going to be harder pressed. But all in all, the markets are saying that the earnings outlook is bright, not just in the U.S., but around the world. And I think a lot of that is actually the artificial intelligence trade has gone totally global. We're seeing it in Japan, South Korea, Taiwan, the United States, and I think other countries are experiencing some of that as well.
No, you're absolutely right. Actually, Ed, it's quite incredible. The weight of Taiwan, I think I'll have to, someone was pointing out, in the MSCI Emerging Market Index now,
right,
is equal or maybe slightly edging higher than China, thanks, of course, to TSMC. So that is the scale of this thing, right?
Yeah, it's a very good point. And of course, Taiwan is mostly Taiwan semi. So it's almost like saying, one company's got the same, or will soon have the same market weight as China. So that is quite a remarkable story. And that also it reflects on China. I mean, we all know that China is also working hard at artificial intelligence, but somehow or other, the global financial markets on a relative basis prefer Taiwan over China.
Hi, Ed. Good to see you in. What do you make of our own markets? The Indian markets, well, we did bounce back in style, but we've cooled off a little bit from the top. And for us, we have a macro challenge, right? The rupee is showing some weakness and crude oil price is higher. So where does India fit in, in terms of global equity market?
Well, I think the story that the markets are discounting with regards to India is really pretty straightforward, and that is India imports a lot of energy. Presume India also imports a lot of fertilizer. And both these commodities are in short supply and are more expensive. And I think that's weighing certainly on the Indian market. I think we really, while the US and some other markets seem to have no problems living with the status quo, that's not the case for a country like India. And so I think we really have to have a clear end to the war in the Middle East for India to do better.
And would that be enough for India to outperform, or are there other factors that you'll be tracking for the Indian market as well?
Well, I think because it has underperformed, investors will be looking around for opportunities where things have lagged behind. So yeah, India could have a catch-up trade.
And you normally give us a view with regard to the mother market, right? The US markets has been rock solid. What's the updated target on that one?
Well, the story there is earnings. They've been remarkably strong. It has been information technology, it's been energy, but overall other sectors have also shown remarkable strength in earnings. And what happened is, the market took a dive from January 27th to March 30th. It was led by a big drop in the PE, but the PE was dropped partly because earnings were so strong. And so right around March 30th, 31, investors suddenly realized that, well, if things are going to kind of get into a ceasefire status quo situation in the Middle East, stocks are a lot cheaper and earnings are an all-time record high, and buying in the dip just came in massively. And so I think this market still has room to go higher. I'm still looking for 7,700 by the end of the year. It could be a little choppy in the near term here on the Middle East, but again, the market's kind of getting used to that. Maybe the next thing we have to kind of deal with is the midterm elections in the U.S. and what that implies about volatility here in the U.S., never mind what's going on geopolitically.
Got that. Ed, we'll leave it there. Thank you very much for joining us.
Thank
Good
you.
speaking with you. Appreciate your time here on CNBC TV 18. Well, let me just quickly run you through the interactions which are lined up here on the program. At 8:35, we bring you a discussion with Macquarie's Kunal Dhamesha on the Sun Pharma deal. It's a big one. 8:45, Piyush Pandey of Centrum talks to us about Reliance Jio's fourth quarter earnings. 9 o'clock, Digant Haria to speak about a slew of financial earnings. 9:20, Harsha Upadhyay of Kotak Mahindra Asset Management is the market master of the day. 9:30, we have a discussion on M&A deals, IPOs and more. Following that, the manager of Hindustan Zinc will be speaking with us at 9:40, 9:50. Shriram Finance, numbers came through on Friday late. And towards the end of the program, the management of IDFC First Bank joins us to record the fourth quarter earnings run through.
Time to slip in a short break. We've got a lot of stocks to track for you in our special top 10 segment. For the time being, I give you a sneak peek. We're going with Sun Pharma, Reliance, L&T Finance, Mahindra & Mahindra Financial Services, IndusInd Bank. All of them will be reacting positively, while you have RBL Bank, Shriram Finance, Camfin Homes that will be reacting positively to news flow. IDFC First Bank opens up in the red, and we could see a mixed reaction on Axis Bank.
Welcome back. You're watching us here on Bazaar Morning Call. Our research team standing by with CNBC TV18's list of top stocks for the day, and none bigger than Sun Pharma. The whispers had been around. There was a lot of stock price movement earlier as well. And this morning, early this morning, the news was confirmed. They will go ahead and buy Organon. Ekta.
Yes, the big deal has been announced for Sun Pharma, and it's a landmark deal for the Indian pharmaceutical space, considering it is the largest acquisition which has taken place by an Indian pharma company. Now, Sun Pharma is going to be acquiring Organon, which is basically a US-listed company, for $11.75 billion in terms of enterprise value. Now, the equity valuation within that is around $4 billion, and the remaining is basically the debt component. But remember that they will be receiving around $440 million in terms of additional cash flow on account of divestiture of a product. So the debt of around $8.6 billion will reduce. Now, in terms of the all-cash transaction, it is going to be an all-cash transaction approved by both boards, and the expected closure is by early 2027. FY25 revenue for Organon was $6.2 billion, adjusted EBITDA around $1.9 billion, debt around $8.6 billion, cash $574 million. Again, there will be that $440 million additional inflow which will come in. Now, what does this bring to Sun Pharma? It aligns, they've said, with their strategy to scale innovative medicines portfolio, will enable them entry into biosimilars as a top 10 global player. It will strengthen their presence in the women's healthcare space as well. So Sun Pharma, basically, with this acquisition, is going to become a $12 billion revenue company and will be one of the top 25 global pharma companies. It will become one of the leading players, according to them, in established brands, which is basically in branded generics. So their innovative medicines portfolio will now contribute around 27% as compared to 20% earlier. They will be a top 3 global player in women's health and will be positioned as the 7th largest global biosimilars company. Now, remember, there was a lot of concern around the debt, but the valuations of around 6.2 times EV to EBITDA, plus a debt which would then possibly be serviced in the next 4 to 5 years, is making most of the analysts comfortable at this point in time.
Thanks a lot for that, Ekta. Well, let's hop across to Sonal. She's here to tell us about Reliance Industries that came out with their set of numbers. Hi, Sonal. Good morning.
Good morning, Nigel. Well, Reliance reported a strong retail business growth, and the other important commentary came in from the management, where they indicated that they're advancing steadily towards listing of Jio platforms. As far as numbers are concerned, in line with estimates, steady on a quarter-on-quarter basis. Revenues at 2.94 lakh crore rupees. EBITDA came in at 44,141 crore rupees. Margins at 15% and profits at 16,971 crore rupees. If we talk about the breakup, strong retail business, there was a revenue growth of 11%. Jio subscriber addition came in at 36.2 million YOY, which is the highest that they've seen in last 7 quarters. O2C did see weaker margins on a quarter-on-quarter basis. The refining did well, but because of supply chain issues, petchem spreads were lower. But the main commentary from the management that they're advancing steadily towards the listing of Jio platforms. Brokerages, most of them have a buy or an outperform rating. Nomura says they have a target price of 1680 rupees per share, and Jio IPO from here on remains the key catalyst for the stock. Morgan Stanley also has an overweight rating, target at 1803 rupees per share. They are expecting recovery, which will be driven by energy, chemicals and retail. They continue to be positive on the stock.
Right, Sonal, thanks a lot for that. So that's about Reliance, good performance for the retail business. Jio IPO is something that the street is watching out for as well. But let's go across to Ritu. Ritu, how do you read Axis Bank's numbers? Mixed?
Well, yes, Mangalam, it was a mixed bag, stable operating trends, but there were some one-off headlines, that we have to focus on. The profit came in largely flat year on year at about 7,071 crore rupees. However, that included a tax write-back of nearly 2,100 crores thanks to the Citi acquisition, and it was offset by a one-time standard asset provision that the bank made of about 2,001 crore rupees. Now, when we asked the management about it, they said the additional provision is just precautionary in nature. We should not read it as reflective of any kind of stress build-up. On the core front, though, the net interest income growth was very modest, just about 5% growth year on year. Margins are flattish year on, sequentially, They've come down to about 3.62%, but the trend has been declining for at least the last 4 quarters. That said, the big positive from the Axis numbers is the asset quality. That has improved. Gross NPAs have come down to 1.23%. Slippages are down almost 20% sequentially. So those are the positives. Apart from this, the bank has announced a fundraise of about 55,000 crores in debt and equity, but it is only an enabling resolution at this point of time. And there was a 2250 crore rupee capital infusion into Axis Finance that was announced along with Kedara Capital.
Okay, all right. Thanks a lot for that, Ritu. Well, let's hop across to Ananya. She's going to continue with some of those financial numbers that we got. L&T Finance and Mahindra Finance. Ananya, take it away.
L&T Finance and Mahindra Financial Services both delivered a healthy Q4 with stable business momentum. Now coming to L&T Finance, the quarter was driven by healthy NII growth of 24.5% YOY, helped by margin expansion with NIM's expansion improving to 8.8% compared to 8.2% last year and 8.6% in Q3. Now operating profit grew 26.6% YOY and 2.4% quarter on quarter, while net profit increased 27.3% YOY. Now asset quality also improved sharply, with GNPA declining to 2.9% from 3.3% YOY and 3.2% quarter on quarter, while credit costs improved to 2.5%. Now growth momentum also remains strong, with AUM up 24.8% YOY and disbursements up 61.5% YOY. However, higher OPEX weighed on profitability, making cost control the key monitorable going forward. Now coming to Mahindra and Mahindra Financial Services, NII grew 24.1% YOY and 3.9% quarter on quarter, and PAT grew 55% YOY and 7.7% quarter on quarter despite higher provisions. Now margins improved to 7.3%. Business assets grew 11.8% YOY and 3.8% quarter on quarter. Now on guidance, Mahindra and Mahindra Financial Services maintain its medium-term growth outlook of 16 to 18%, NIM guidance of 7.1%, and FY26 credit cost guidance of 1.3 to 1.7%. Now management also reiterated ROA target of 2% and ROE target of 15%. However, they created a 217 crore provision for macro risk going forward. And possible stress in the tractor portfolio, and highlighted that West Asia crisis may temporarily impact Tamil Nadu, Assam and West Bengal. Overall, for both the companies, the quarter was stable. For L&T Finance, the cost control becomes a key monitorable, while for Mahindra and Mahindra Finance, we need to watch for the macro risk going forward.
All right. Thanks very much, Ananya, for that. Well, IndusInd Bank is what we're going to focus on next. And Ritu is here with details and news flow. Ritu, morning.
Morning, Prashant. Even for IndusInd Bank, it's far from back where it was before, the entire episode of Forex derivatives exploded. But the numbers look good overall. The bank has swung back to profit about 533 crores compared to a loss of about 2,300 crores that it reported a year ago. And this is above what the street was factoring in. The core income growth was also steady, although not very strong. NII is up 43% year on year, but it dipped about 4% sequentially. Margins look like they're stabilizing, inching up to about 3.39% in the quarter. That was helped by a lower cost of funds as well. But the biggest positive, again, even for IndusInd Bank, has been on asset quality, because the credit cost has come down to as low as 1.9%, and slippages are down almost 30% quarter on quarter. And there's improvement across segments that the bank has reported. Now, going ahead, the management is talking about loan growth tracking industry levels, and they're targeting a return on assets of about 1% for FY27.
Right, Ritu, thanks a lot for that. Let's go back to Ananya for IDFC first and RBL Bank. Ananya.
Now, coming to RBL Bank and IDFC First Bank, they both reported different Q4, but the common takeaway was improving asset quality and better setup for FY27. Now, coming to RBL Bank, the quarter was strong and cleaner. NII grew 6.9% YOY. Net profit was the biggest highlight, jumping 233% YOY, supported by lower provision. Now, asset quality also improved meaningfully, with GNPA at 1.45% and NPA at 0.39%, and PCR improving to 73.6%. However, margins remain under pressure, with NIM at 4.41%. Now, management commentary was constructive. Management guided that the portfolio mix will broadly remain 40 to 45% corporate and commercial, 35 to 40% secured retail and 20 to 25% unsecured MFI and credit card. Now, deposit growth may be slower in FY27 in the single digit or double digit, low double digit range. Now, NIMs may remain flat in Q1 but will improve from Q2 onwards, the management mentioned, and also credit card stress may stay elevated in the first half of FY27. Now, coming to IDFC First Bank, the quarter was mixed. Operating profit declined 48% quarter-on-quarter and PAT fell 37% quarter-on-quarter, mainly due to fraud-related costs. Now, however, the underlying business remained healthy. The loan growth was strong at around 20% YOY. Management guided for around 20% YOY deposit growth in FY27, supported by normalized momentum from April. Now, asset quality also improved with GNPA at 1.61%, NNPA at 0.48%, and credit cost at 1.63%. Now, management expects credit cost to reduce further going forward, while NIM should remain broadly stable around 5.75%. Now, overall for RBL Bank, the quarter was stronger, and for IDFC Bank, the results were mixed, and they will perform better going forward when the things normalize from April onwards.
Okay, got that, Ananya. Thanks a lot for that, Ananya. But you're tracking a few more numbers, I believe. Shriram Finance as well as Canfin Homes. Tell us how about those numbers.
Now, Canfin Homes and Shriram Finance both delivered strong Q4. Now, coming to Canfin Homes, the quarter was led by healthy disbursements. NII grew 21% YOY, while PPOP was up 20% YOY. Reported PAT looked very strong with 48% YOY and 31% quarter-on-quarter growth. But this included a one-time tax-related gain of 59.5 crore. Now, after adjustment, PAT grew 22% YOY and 8% quarter-on-quarter, which is also healthy. Now, margins also improved with NIM rising to 4.19%, supported by lower borrowing costs up around 7%. Now, overall, Canfin Homes, it was a strong quarter for them. Now, coming to Shriram Finance, the quarter was steady. AUM growing 14.8% YOY and 3.6% quarter-on-quarter, mainly driven by CV and passenger vehicle segment. Now, NII increased 21% YOY, although margins saw slight sequential compression. Now, the key highlight was strong cost control, which helped operating profit grew 22.8% YOY and PAT rising 41% YOY. Now, asset quality also remained largely stable, with gross stage 3 at 4.6%, net stage 3 at 2.3%, and credit costs under control at 1.9%. Now, management commentary for Shriram Finance remains stable, with guidance of around 18%. AUM growth in FY27, NIMs near 8.5%, OPEX growth of 10 to 12%, and stable credit costs. Now, overall, for both the companies, the quarter was healthy and stable going forward.
All right, we take that point. Thanks a lot, Ananya, for joining in and giving us an update of all those financial numbers that came by, and we thank our entire team as well. In case you missed it, here's a quick recap of all our top stocks that we're tracking this morning. Stocks with positive news flow: Sun Pharma on the back of that acquisition, Reliance Industries, their results, L&T Finance, M&M Financial Services, IndusInd Bank, RBL Bank, Shriram Finance, and Canfin Homes. A bunch of financials, all of them on our radar on the back of their good numbers. But IDFC First Bank, the stock on our radar that's likely to open in the red on those numbers. Axis Bank, as Ritu said, likely to see a mixed result. With that, let's go back to Ritu right now. Ritu, apart from all the news around results, on Friday evening we got that news around Paytm Payments Bank as well. It's more of the same?
Yes, actually, see this as a continuation of the multi-year crackdown that RBI has had on Paytm Payment Bank, and this is the payment bank entity which was pretty much non-functional, for the last 2 years at least. The license has been cancelled effective the 24th of April, that is Friday, and RBI is now going to initiate a winding up through the High Court. Now, the wording of the RBI statement is, what's taken a few people by surprise. It is harsh because RBI says the bank operations were being conducted in a manner detrimental to depositors' interest. The general character of the bank management was prejudicial to public interest. There was no useful purpose or public interest being served by allowing them to continue, and their failure to meet license conditions, regulatory norms, all of that forced RBI's hand. Now, keep in mind, a new customer onboarding had been stopped for Paytm Payment Bank back in March of 2022. So that is 4 years ago. And between January and February 2024, business was pretty much frozen. No deposit top-ups, no credits were restricted, etc. Paytm then migrated to a third-party application, moved all the UPI handles to other partner banks. Now, in its response, Paytm does highlight that there is no material business link with, the payment bank. They'd already impaired about 227 crores of investment in the bank as of FY24 end. And now the board and shareholders of the bank have even passed a resolution to wind up the operations of the company. Now, keep in mind, the real casualty of all of this really is the wallet business, which used to contribute as much as 500 crores EBITDA annually before RBI's crackdown. So that is something that remains a question mark, whether Paytm will apply for this new license or not, and whether all of this is going to weigh on that new license application. Separately, we understand about 800 crores of customer deposits are still stuck in the bank, which includes half in frozen accounts and another half which has not been claimed by customers in the last 2 years. So that's where things stand. But for now, no financial impact. It is a continuation of the action. Going forward, of course, the regulatory overhang may be a negative.
Okay, all right. Thanks very much for that, Ritu. So keep an eye out on those stocks as we open up for trade. There's a lot, right? I mean, it's a full deck with regards to earnings and other news flow as we open up this morning. Manisha is here with a roundup of all the action as far as commodities go. Manisha, good morning.
Morning, Prashant. Thank you for that. I'll start with the crude oil prices, where we started Asian markets with nearly 2% of gains. That stands at a percentage point just about right now. So we are off the highs of the day, which was at around $107 a barrel. While, of course, the U.S.-Iran peace talks have stalled and the Strait of Hormuz mostly remains shut, and the U.S.-Iran war has entered ninth week. IEA has said that the U.S.-Iran conflict is the largest or the biggest in energy supply shock on record, but IEA also says that they are looking at demand concerns. So that is what the markets see as a balancing right now. And then there are various reports, one from JP Morgan, the other from Goldman Sachs, suggesting that as and when the war does get over with and Strait of Hormuz open, the rapid oil recovery that the markets will see is perhaps what the futures months are factoring that in. So while the physical is trading at around $120, $125 a barrel, the far month is trading at 106, and the furthest month is trading at $100 a barrel. So we are looking at a strong backwardation coming in for the crude oil prices. What has seen gains, though, has been the metal prices. So nickel is trading at 22-month highs, copper near 2-month highs, aluminum continues to be supported as well. So these metal prices, yet again, another week which has started on a stronger note.
All right, Manisha, thanks a lot for that. For the time being, we slip into a short break. Next up, we'll get a discussion with Macquarie Capital's Kunal, who will be joining in to analyze the big Sun Pharma deal that was announced earlier today. We'll also connect with Dharmesh Kant of Chola Securities for some fundamental stock talk. Stay tuned. Welcome back. Well, the big stock in focus today will be Sun Pharma, Sun Pharma company. They've gone ahead. They've announced the acquisition of U.S. drug maker Organon in an all-cash deal for an enterprise value of around $11.75 billion. Ekta earlier spoke to Macquarie's Kunal on the deal contours and what does he make of this deal. Let's listen into a slice of that conversation.
So, I think the valuation that they have come up with of EV of 11.75 billion is definitely lower than what was was there in the market of around $13 billion in the last week, right? So to that extent, the stock had already reacted to that 13 billion valuation making rounds, and hence having 11.75 billion is more or less, I would say, a good sign, in terms of better negotiation. So very difficult to predict the exact stock reaction, but I think what I had highlighted in my report was the compelling strategic and the financial fit of this acquisition for Sun Pharma. And I continue to believe that there is a strong rationale both on strategic and financial side, and with valuation coming down. And company has also suggested that they could unlock synergies of around $350 million over the next 2 to 4 years. I believe that this is going to be a significantly accretive valuation, both on earnings, reported earnings, as well as the cash EPS.
Okay. So, Kunal, but what according to you is possibly the biggest concern that the street would have with this acquisition?
The biggest concern would be, as you highlighted, it's a landmark deal, right? It's the biggest pharmaceutical acquisition, outbound acquisition that we have seen. And the company that they are acquiring is also of a similar size to Sun Pharma. So integration would obviously, have its own kind of, they'll need to basically dedicate a lot of management bandwidth to integrate this. So given it's a large size deal. And both the countries have presence across many markets. So Sun Pharma has presence across 100 markets. Organon has 140 markets. So integrating such a large deal across so many markets, first of all, you will need a lot of approvals from the Competition Commission of all the major countries, and then integrating in terms of the people, culture, etc. Is something that people have been highlighting to me as the potential risk.
Well, the stock has been under pressure simply because the street is fearing the debt component of the enterprise value. How do you think that Sun Pharma could possibly solve the debt issue? How long do you think it will possibly look to service the debt issue? Because from being a net cash company, they've now all of a sudden become a net debt company.
So I think the company has suggested that the post-close net debt to EBITDA would be around 2.3 times, and both the companies, have generated very strong operating cash flows. Sun Pharma last couple of years they've generated around $1.5 billion of cash flow per year. Organon has been generating around $1 billion cash flow, right? So of the $2.5 billion operating cash flow, they can easily service the debt. In terms of the debt, cost of debt, as of now, if you look at the weighted average cost of debt for Organon, it's roughly around 5.9 percentage point, right? So, the cost of capital remains low, and strong operating cash flow, they can definitely deliver very fast. So my sense is that they will be able to become again net cash company over the next 3 to 4 years.
Okay, so you expect them to possibly service the debt component in the next 3 to 4 years. According to you, what might be the biggest benefit of this acquisition for Sun Pharma? And it really propels them to a different league.
Yeah, so the biggest benefit is in terms of market development, right? So Sun Pharma has been building its innovation portfolio and has been launching all these products in the US market. But if you look at out of US market, the presence is quite patchy, with only Ilumya and Odomzo being launched in Europe. Primarily because the lack of the commercial front-end infrastructure in a lot of these markets like Europe, China, etc. So they were leaving a lot of value on the table for their innovation medicine business, which in my view, now with a strong Organon presence in all these large market, they have a very strong commercial presence. Sun Pharma will be able to leverage that capability to kind of capitalize on the products that they already have and some of the products that they have in the pipeline. Moreover, the innovative medicine business revenue, which is currently contributing 20% for Sun Pharma, with this deal would jump to around 27% of the overall combined entity, right? So that's a first benefit. And then second, like capitalizing on that commercial front end infrastructure. Those are the two which are the biggest benefits that I see. And third distant would be the very scaled presence in biosimilar business with almost a $700 million revenue and 24% EBITDA margin. This is a very strong entry into the biosimilar place. And that kind of helps growing that stagnant, unbranded generic business, especially in the wake of next 10-year loss of exclusivity, primarily focused on biologics versus small molecules. So this is a very strong presence and strong entry into the biosimilar.
Okay, well, that's a Macquarie analyst there. Dharmesh Kant is head of research at Chola Securities. Dharmesh, good morning. Good to have you with us here. Just a straightforward question on Sun, the stock today. What is your sense? You know, some would say it's corrected a little bit coming into the announcement today. But on the other side, there is a large debt element which kind of comes in, and they're acquiring a business which is kind of not growing very much. So overall growth for Sun also comes into the single digits, kind of territory from around 13-14% where it was at. What is your sense?
Yeah, good morning, Prashant. Thanks for having me for the show. I mean, similar observation was made because Organon, which they have acquired, doesn't, last 3 years, there is a very tepid kind of a growth trajectory. 1.5 to 2% is the growth they have been doing. And most of their products are out of the patent now. It's a generic kind of a product portfolio they are having. And scalability of, be it women's healthcare product or, biosimilars, Organon has not been able to do it. They're expecting that Sun Pharma with scale, size, and earlier, expertise may be able to turn around and market it. The process and for approvals and every medicine remains the same for Sun Pharma as well. Maybe they are better equipped to scale further. For Sun Pharma, if you look at the numbers perspective point of view, since it's an all cash deal, it would be ROE and EPS accretive. Because the margins are similar for both the companies and it will be doubling of their scale of revenues will be doubled from there. So that way on historical valuation multiples, it does give a comfort if you are valuing Sun Pharma 1 year or 2 year forward. And there, I think some trading bets would be placed. But definitely the growth rate on the revenue scale of Sun Pharma, which they have been doing for the last, say, 5 years, 10 years, will come under single digit on a blended basis when both the entities merge. So that's our concern as well. But I think if today there's a stock price decline, one can go in for a trading play for Sun Pharma. There would be definitely a trading play out there just to match the valuation multiples.
All right, just to match the valuation multiples, there could be a trading play out here just today, given the sort of decline that we've seen already. What do you make of all the other numbers that have come by over, the last few days? In fact, the last 3 days we had Reliance, we had IndusInd Bank, we had Axis Bank, there was L&T Finance, there was MMFSL. Is there anything that stood out for you?
Yeah, good morning, Mangalam. I mean, see, as far as, banks are concerned, the wild card has been the provisioning. Because of lower provisioning across the board, they have been able to report better set of numbers, so which was a surprise. Because if you look at Axis Bank numbers, they directly provided for 2,000 odd crores for the political issues in the Middle East crisis which is happening. It cannot be a particular bank exists in isolation, they are having the headwinds, others are not. So this is debatable. I mean, as of now, most of the managements have cited that there can be a problem, but till now, since the problem has not been there, they have not front-loaded the provisioning. So Q1, we are going with a muted expectation. I think that Q1 will be a difficult and challenging for most of the banks when the provisions will come back, which will be a drawdown on the profitability. Business-wise, more or less, they have done well. I mean, asset quality has been contained, NIMS has been stable, and Axis Bank in particular. I mean, that's a bit of a negative because their cost-to-income ratio has gone up. And that's a challenge for them. 51% it has climbed up, so too. So there will be some fallout there. IndusInd Bank definitely came out with a very strong set of numbers, and it's a bank in the making. So that I have been highlighting that for quite some time. I think with 1% kind of an ROE expectation by the end of the year and still trading at less than 1 time price to book, it's a good catch point out there. Reliance Industries in particular, I would like to highlight that the numbers were kind of a mixed and a muted kind of a number. While to chemicals or while to gas, the problem persists. It will be persisting in Q1 as well. So there would be degrowth in the both EBITDA numbers out there. So I mean 3 to 4% kind of a drawdown can be there on the EPS to that extent. As far as retail is concerned, the biggest, to my mind, the drawdown has been the quick commerce business, which is drawing the margins down. It has come to 7.7% on the EBITDA front. It was plus 8%. So that is, limiting the growth on the PAT basis, 2% kind of a growth on the retail front. So that's a disappointment. Geo platforms, I mean, it's a saturated state where they have reached to. If you look at the RPUs, last 3 quarters, 211, 213.7, and then 214 rupees. So there's no headroom out there to increase the outputs, though they have been going the data volume business out there. So structurally, to my mind, this year and next year, it's more of a capex and commissioning of new energy plays for Reliance Industries, where the valuation, SOTP-based valuation comfort will come into. Till that time, it will more a range-bound time correction kind of a play to is there. My own sense is 8 to 9% kind of a EPS growth for FY27 if things reverses from where for Reliance Industries. So it's a portfolio buy for a long-term perspective. Immediate trading gains is difficult to come by, and new energy will take at least 2 years, to have a meaningful contribution to the EBITDA front. So a good portfolio buy, but don't expect, immediate fireworks in Reliance Industries. And just to highlight, Geo platforms, to our mind, $100 to $110 billion should be the valuation. People are quoting a higher set of numbers, but if you look at Bharti, 20% kind of a discount will be there because Bharti has a good headroom for South African play, where they can still manage to have the increase in the outputs, which Reliance does not have. So that is how we are seeing Reliance Industries.
I just want to make one other point. Nigel Mangalam, on social media, there was all this hullabaloo around how hot it is, right? Did you guys see those red map all across? I mean, I think apparently India is now, across cities, if you count the top hottest cities now, I think the top 10, 15, 20 are in India. And what has happened, of course, is that power demand, peak power demand in India has hit an all-time high.
Yes.
And this is, that's a graph. IMD, of course, has issued a heat wave, and specifically for northwest and central India, the warning has come this morning. But suddenly over the last 10 days or so, the temperature has climbed absolutely vertically. So that's the number I'm talking about. Over the weekend, this happened on Saturday. The peak power demand hit 256 gigawatts. In 2025, that number, the peak was about 243 gigawatts or so. Now, just a few nuances. That 256 number actually is, I think it was hit around 3:30 p.m. in the afternoon. First of all, I mean, peak power demand over the weekend on a Saturday is unusual. Usually it'll be on a working day, but on Saturday, and this number is from 3:30 p.m. Now, the nuance is that, bulk of that demand can be met through solar because the sun is still shining. So what matters is essentially evening peak power demand when solar and solar power is not available, because we have about 160 odd gigawatts of solar capacity available, which can kind of compensate for a lot of this peak power demand during the day. But in the evening, that situation is no longer available. That power is no longer available. So at that number, the evening number, we kind of still don't have. We're still trying to figure for Saturday, for example, if that did spike to a new high as well. But you're seeing this 256 number all across, and that's very high. And there are some indications that perhaps this season, this summer season, we're already in April, as we head into the next 2 months, which are going to be hotter, will we hit, there are some indications of 270, which is going to be pretty, very, very strong, very, very high. And that number will be met. But the important thing is, when does that peak demand happen? Does it happen during the morning hours, or it happens in the evening hours? And if it's the evening hours, then I think we'll have to make contingency plans, etc., so that there are no blackouts, etc., to avoid that kind of thing. Stocks, remember, have done very well. Will this, and the question to ask is for Adani Power, if you can have the stocks up, Adani and the JSW Energy and the Tatas and all of the IPPs, independent power producers, will this number again spark off a bit of a rally today? I mean, it's possible that you see a bit of a move, but they're all, in the month of April, already up between 45 and 50%. So keep that in mind. that you're getting into a bit of a sugar rush territory with bulk of these names. So don't get too carried away. These numbers are high and the demand environment does look very, very strong, especially on a peak power basis. If you look at the overall electricity consumption, I mean, the point is it's still very weak. The base is very weak. We're looking at 3-4 months back, absolutely no growth on a year-on-year basis. And now we're seeing some growth. So maybe markets do get excited and we'll keep an eye as stocks open. But they've already rallied very, very hard. So I think that is important contextual information that you must keep in mind. I mean, there are other implications as well for AC sales and all of that stuff, right, which we can talk about as we go on. But just wanted to kind of sort of make a quick mention of it. We'll take a quick break here. We'll come back with Piyush Pandey of Centrum, who will be with us on Reliance Jio's fourth quarter earnings in just a bit.
Welcome back. You're watching us here on Bazaar Morning Call. A lot of news to contend with global and local. Meanwhile, the Asian markets, however, they're doing a lot better than what the headlines would indicate otherwise. Peace talks stalling, the uncertainty, Brent at 106.5. Nikkei has no problems there. It's up around 1.5%. The Korean index as well, up 2.2%. We have the Taiwanese index, which is up around 2.5% as well. Hang Seng, the only one which is absolutely flat. The GIFT Nifty, in light of that, is also indicating a positive start. Remember, at all of last week, we did see a decline in our frontline indices from a peak of close to around 24,600 thereabouts. We closed below that 24,000 mark on Friday. So the Asian market's doing a lot better despite all the global news that have come by and the Brent prices. So we'll monitor as we go along in today's trading session whether this gap up of 220 points actually happens when the market opens, and thereafter whether it sustains beyond that or not as well. With that, we'll take a short break, come back on the other side, pre-opening, and Piyush Pandey of Centrum joins in to discuss Reliance's earnings. Remember, that will be an important parameter to track the market today as well. Digant Haria of Greenwich Wealth also joins in to speak about a slew of the financial companies that reported their numbers. Welcome back. You're watching us here on Bazaar Morning Call. A minute to go for pre-open, 15 minutes to go for the markets to open. We do have earnings to contend with. Piyush Pandey, who's the Senior Vice President at Centrum India, joins in to discuss what he made of Reliance Jio's numbers in particular. But Piyush, beyond just the numbers, the commentary that came in, they are moving to, looking at Reliance Jio platforms listing. How would you view that as a factor on the stock, how it moves today?
We are currently valuing Reliance Jio at close to $130 billion at current valuations. And primarily, I would say trigger would be like the next tariff hike, which comes in, say, in the month of July or August. But as of now, I would say it can be a big trigger for the overall Reliance Industries. It might take longer, but in terms of value unlocking, I think it would be a great step.
All right. And you said $150 billion, and you're working with a base case of July and August. What about...
Base case is $130 billion.
$130 billion. All right. And what do you make of the reported numbers, though? Subscriber additions up 35% year on year. We had the revenues up around 11% as well. They've added, nearly 3.5 crore subscribers, 36 million to be precise. The ARPU is doing extremely well, up nearly 4% year on year on that one as well. What do you make of the numbers by themselves?
For Jio, customer addition has been very strong, and it has been historically also. Like, they have added customers at a decent pace, and even in this quarter they added 9 million customers. But I would say the one of the matter of concern has been the growth in ARPU. So this quarter ARPU was barely flat, was mostly flat, primarily impacted due to lesser number of days in the quarter because Q4 has 2 days less compared to Q3. So had it been say equal number of days, we would have seen close to say 1.5 to 2% increase in ARPU. Having said that, tariff hike would be the key driver of ARPU for Reliance Jio. And besides tariff hike, I would say Reliance Jio needs to have other lever also that can drive ARPU. Like say, for example, they can ramp up their say postpaid customer base or other add-on services. So our base case is say Reliance Jio along with Bharti, they can do say around 10% increase in ARPU over the next 5 years, CAGR ARPU growth, and 3-4% increase in volume. So base cases on the wireless business, we can see around say 12 to 13% CAGR revenue growth, and that looks decent, I would say.
All right. Hi, Piyush. Good morning. Good to hear your thoughts. So on Jio, you're valuing it at $130 billion. Did I hear that correct?
Yes. $130 billion, yes.
Yeah, and how does it compare with, say, Bharti? Are you giving it a bit of a discount? Is it at par?
For the India wireless business, we are giving the same multiple, right? We have it of 13 times for the India wireless business. And Bharti has other business like, say, Africa, then Indus Towers. They get a slightly lower multiple. But if you compare on the like-to-like basis, we are giving it similar valuation multiple.
All right. And would you... look at Vodafone at some point in time? The last couple of quarters, the subscriber hemorrhaging has come down. In fact, they've added a few subscribers. Do you think that calls for any sort of attention, or maybe you just stick with Reliance and Bharti?
See, Vodafone has started adding customers, but I think they are mostly M2M customers. And M2M customers are primarily low ARPU customers. But having said that, they have significantly improved their network. And so losses have come down and they have got in the positive territory. But I would say even with the improvement, it would be difficult for Vodafone to gain market share. So even with some positive, it would be somewhat challenging for them to maintain their market share also. Now it depends on, to what extent their AGR dues come down after the reassessment. Plus, if they're able to raise fresh equity funds, then that can, I think, excite interest among the investors. But having said that, I think the worst is behind for Vodafone Idea, and things are incrementally improving on multiple fronts, like say customer addition or like say AGR dues, or if they raise fresh funds. Yeah.
All right, we take that point. Thanks a lot, Piyush, for joining in and giving us those details. Meanwhile, stock to monitor today will also be Cohance Life, because Umang Vohra, obviously the earlier CEO of Cipla, has now joined Cohance Life, which was the earlier known as Sun Pharma, is now appointed as the chairman and group CEO. Will there be a big impact on account of the management change? Well, the kind of reputation that Umang Vohra carries, perhaps the street would like that, and pre-opened that stock up nearly 4.5%, 5%. So all about pharmaceuticals. But Let's get to our technical experts. Mitesh Thakkar of Bonanza Portfolio and Sudarshan Sukhani joins in now for technical trends. Sudarshan, what do you think? Lower levels sought? The GIFT Nifty is indicating a 200-point uptick. Would you believe that or look that as a selling opportunity?
Good morning. No, we were waiting for the markets to go through a deep and sharp correction. That happened by Friday afternoon when the Nifty was down 700 points from the highs it made last week. That's good enough. Now, today is a good day to buy. I would not take the gap up as a selling opportunity. We are flat in the market unless somebody bought on Friday afternoon. So the trade is to go long in the Nifty, divide your quantity volume into two parts. One, half you just go long after the markets cool off, say 10-15 minutes later. And the second, wait for a 200-point dip or a decline and then add to that position. But irrespective of that, the fact remains that after the sharp 800-point correction, the markets are willing to go higher.
Okay, Sudarshan sounding far more optimistic this morning. Got that, Sudarshan? Mitesh, what about you?
Morning. So I think two things. One, the market kind of managed to hold on to an important support around 23,800, 850, which was a historical gap. My sense is that the way market shaped up in the last 2-3 trading sessions, it is a market which might now contract and be slightly choppy within a range. So I'll mark down 23,850, 800 as the zone on the downside, while 24,350, 400 as the zone on the upside. So I think we might do this range. Therefore, I think trading would be good near the edges. So after 200-point gap up opening, not very keen to buy. In case we get an intraday decline post that, maybe we'll look at buying opportunities.
Okay, got that. What about individual stocks, Mitesh? You go first.
On the stock side, I have all buy calls today. Chola Finance is a buy with a stop at 1544 for targets of 1615. Then buy on Inox Wind. It gave a good 2-day pullback and it's above all its averages. So buy here with a stop below 96 for a target of 110. Cipla was in news and there was a breakout which happened on Thursday and Friday was a sideways candle. So Cipla is a buy with a stop at 1274 for a target of 1335 and a buy on Ireda with a stop at 132 for a price target of 144.
Okay, got that. Since Mitesh just spoke about Cipla, I just want to point out that at least in the pre-open, it appears Sun Pharma is going to be opening more or less flattish, or maybe a tinge of green is what I could see the last time. We should just pull that stock up. Probable reasons would be that the stock is already down 11% in the last 1 month or so. And Mr. Sanghvi is saying this morning that it'll be EPS accretive from year one itself. So we'll wait by Sun Pharma is the one that we're talking about. They are the ones that have gone in there with a big ambitious deal with an EV of more than $11 billion. For the time being, a more stable opening, maybe because the stock has already underperformed in the run-up to this very adventurous acquisition. Let's get...
Just one thing, right? Yeah. If you can look at the the Nifty in the pre-open session, I don't know if you have the rate coming up. I think it's settling down. Okay, this is more like it. I was very surprised. 200 points in the GIFT Nifty, etc. The other thing we've not talked about so far, right? 29th, the sort of polling ends, elections end. Post the 29th, it's most likely, there's no choice. The government is not going to shoulder the entire burden of the increase in fuel prices. So fuel prices are set to go up. How much is the question? Will they go up enough to cause a shock to the system? And markets could react. If it's a large enough increase on the day after the increase, whenever it happens, post the 29th, it can happen any time. Will the government wait till the 4th when the election results come out? They can do it now, they can do it post 4th. But the point is, they will go up. The degree is the question. So that's the other, it's for those who are trading, it's an important event because, all those numbers, because the government said, well, they're not going to do it. Nothing is under consideration. But that Kotak report was that 20 plus rupees something, right? 25 rupees or something is what is required. It may happen in a staggered fashion. But it's an important event. Especially if you are trading in and out and trying to do this in that sense. Sudarshan is with us. Sudarshan, what's on your radar? Morning.
Yeah, good morning. Well, Coal India is a buy with a stop under 445. State Bank is a buy, SBIN with a stop under 1080. I have two short sells, Astral, stop above 1595, and IDFC Life, stop above 600. I would be a buyer if the markets open flat.
Okay. a buyer if the markets open flat. Sudarshan and Mitesh, thank you very much. We'll chat again soon. Digant Haria is with us, founder of Green Edge Wealth Services. Digant, good to have you with us here. Thanks very much. Out of the numbers we've gotten between the last time we spoke and now, what stands out for you? Digant.
Yeah, morning. Thank you. Prashant, so I think, the entire banking sector is reporting good set of numbers. I think, and it was expected, this war and this entire impact happens later in the quarters, if at all. So I think, what stands out is, IndusInd Bank, the microfinance division has definitely turned around. It probably gave 600 crores of profit and the bank reported 600 crores of profit. So I think IndusInd Bank is, the worst is really behind. We can say that with a lot of confidence. Similarly, for Axis Bank, we can say the same thing, that it is a second quarter where credit costs were firmly under control and, margins also were maintained QOQ. So I think the growth has picked up. I think results, Prashant, are good. I wish, this whole Iran war, if that was not there, this sector would have really fired up.
Okay. Because, there is this impending stress which the market kind of seems to not have a handle on. It's not expected to be very large, but the longer it continues, perhaps it could be, right? Digant?
Yeah, absolutely. See, like Shriram Finance also gave brilliant results. Like they are guiding for 17-18%, but they also said that we need to see one quarter. What happens with the fuel price hike, the availability, and now there is this El Nino also, which they say that India may have a very harsh summer and a delayed monsoon. So I think the macros are against us, but the micros are absolutely strong and brilliant, Prashant.
Yeah, and we'll see. Yeah, the fuel price hike. What's your sense, Digant? You think it could be a large one? It could be what? Have you thought about it? Because that impacts everything, right? So far, consumers have been shielded.
Yeah. So far, the OMCs and the government are taking the entire hit, and I think after these elections, I think you guys were discussing a few minutes back. After the elections, we will see a price hike, and I think India can take on that price hike because when you look at the SME sector, the agri sector, they are more impacted by local events and less by this whole fuel shock. Only thing is, Prashant, if the availability of things, of gas, oil, fertilizer, the feedstocks, if all this is not impacted, maybe, we have one quarter of caution and then we move on and, then this entire interest rate sensitive pack, which is, banking, NBFCs, autos, they may actually start doing well. See, they're just not doing well because of the macro front. On the micro front, there isn't really any slowdown. And even these banks say that we have not seen any adverse movements as of yet. Everybody is waiting for something bad to happen. It just seems like that.
Yeah.
But we are not seeing anything right now.
Yeah, no, absolutely. Digant, from your coverage universe or otherwise, anything to do actionable at this point in financials?
In financials, there are two pockets which are turning around and which will do well irrespective of what happens to the fuel price hike and the war. One is microfinance. There the trends are extremely strong. Like, IndusInd Bank was the worst sufferer and that has reported a very strong set of numbers. So I think microfinance space will do very well. And, the good players, the L&D Finance and Ujjivans of the world, Arman. I think we can see some, good results coming from there. And even the gold loan space, I think the gold loan space continues to do very well. People get, scared when the gold price volatility is there. But at least the sector is on a very strong footing. So I think these two pockets can be, a pocket of calm or, pocket of outperformance as we wait for, the macros to settle in the next 3-6 months. So I think investors in financials should focus on these two pockets now. And once we have some bit of macro clarity, I think even these regional banks, DCB gave a good set of numbers. I think today Tamil Nadu Bank will report. I think those numbers will also be, very good based on their, early quarterly numbers which they gave. So I think things are looking okay. These two pockets for now, Prashant, and maybe once we have macro clarity, you can, widen your basket.
Hi, Digant. Always good to see you, and hear your thoughts. Tell us about Paytm. What's the view out there? I think in pre-open, that stock is going to be starting off a little bit on the back foot. What do you make of the news flow and what would you do?
I think, Nigel, this issue, has a past and it has no business impact. Let me tell you, it has zero business impact because none of the three businesses, the payments business, the they have this lending business or a DSA kind of a business, and then they have this wealth slash, advertising business. It won't affect any of the businesses, but see the language which has been written by RBI, it just tells us that, everything is not too fine with these two, between RBI and Paytm. So that is one way of looking at it. So there may be some sentimental impact. I don't see any business impact. Paytm keeps on gaining market share, be it in consumer payments or in merchant acquiring business. So that is not a concern. And if I have to become optimistic, I will even say that, this closes a past chapter and maybe Paytm can apply for a fresh NBFC license. And if they get an NBFC license, I think their lending business gets a booster shot later on. But this is taking it too far.
Shrikant, you would be a buyer on this dip this morning?
Probably not this morning, but I'll always wait for a week and see. I think the business is doing very well. Prashant.
Got it. Digant, sorry, apologies. We'll leave it there. Appreciate your time here. We've got about a 0.5% higher move on the Nifty, 24,013. The Nifty Bank is up 0.5%. We're at about 56,300. You've got the mid-cap index and the small-cap indices, which are up about 1% apiece as well. I mean, this is a pretty good start all told. We've got advanced decline out of the gates, which is looking very strong. 1450 stocks are higher, some 360 stocks are lower, but that will change and settle down into in some ways. Sun Pharma is up 2%, so that's interesting. And maybe commentary from the management, and we perhaps should get Ekta back on with a summary of all the commentary from Dilip Shangvi and others at Sun in terms of what they are projecting. So the stock is up 2% this morning after that very, very large deal which has been announced. We've got what else? I mean, I think the Nifty heat map should give you a quick sense of where everything is landing at 9:15 on the Nifty at least, and we'll go into individual single stocks. So it's all up. Sun Pharma, Adani Ports, Kotak, Eternal, Wipro, and the Nifty is now moved up 140 points. On the other side, you've got Axis, Shriram Finance, and Reliance Industries, which are the three names in the red right now. So the question to my mind is, are we going to sort of trade with a 150-odd point gain, or is it going to disappear with more flattish kind of trends? Because I mean, the underlying situation has not really changed very much. Paytm is down about 8%. It's a sentiment hit in terms of actual financial hit is not very much. But I mean, the language in that order from the Reserve Bank of India, very, very sharp, very, very sharply worded order with regards to what they've seen, and the way it's been framed, I think, is making some sort of a difference as well. Mangalam.
Well, a bunch of stocks that make the morning. Sun Pharma is now increasing its gains. It's up around 3.5% right now. Opened mildly in the green, then is adding on to those. M&M Financial up 10% on their numbers right now. So big up move is what we're seeing. India Cements as well. The EBITDA being at a multi-quarter high out there. That stock too has surged about 7-8% in the morning straight out the gates. IndusInd Bank up 6% on the numbers. But the pharmaceutical stock of this morning is not Sun Pharma. It is Cohance Life. Umang Vohra's appointment as the leader of the company has taken that stock higher by almost 10% this morning. So it's a big move that we're seeing out there as well. But on the way down, obviously, it is Paytm, which is down about 9% as we speak. We are seeing some profit taking on names like RBL Bank, AU Small Finance, and Strides Pharma as well. But by and large, it is all results specific and perhaps order win specific as well. Indian Hume Pipes is the other one, which is seeing a big up move on the back of an order that the company is on. Nigel.
Well, that's right, Mangalam. Brilliant move is what we're seeing on India Cements. Ultratech Cement, they've got the knack, right? They've taken over this asset. They've scaled up the EBITDA per ton towards around 500 rupees. And they're halfway through because they said in the next few years it goes to around 1,000 rupees. So India Cement, that stock is up and about. The debt is under control. They're looking at expansion. India Cement is the stock that we're talking about, up 6%. The only fear is at some point of time it could get folded into Ultratech Cement. And if that's the case, normally you see that the parent, the ratio is normally in favor of the parent. So that's the fear out there. But beautiful move. What a turnaround of events. Growth in high teens. Profitability improves. Captive power as well, has moved up. So splendid turnaround of events out there. Jaiswal, Nico, I think we were one of the lone voices who had explained the company at around 40-45 rupees, close to around 10 months or so ago. Well, they reported good results, record EBITDA. They've done a preference issue via warrants as well at around 90 rupees, worth around 200 crores odd. Keep in mind, there's no institutional holding in the company. And the promoter entity in the past as well, has flattered many times, but they haven't delivered. But this time around, it appears, going by the numbers, going by the operating cash flows as well, is looking quite good. And the net debt number from 2020 till date, it's come down from 5,000 crores to around 2,000 crores. Explains why that stock is up and about. The other one is Tanla. Good numbers out there. On a sequential basis, those, the revenues have grown by close to around 5%. On a year-on-year basis, the revenues are up by close to around 15%. And margins are holding steady. The street likes that, so that's flying away up close to around 12% as we speak. A few more notable movers. Just take a look at Sun Pharma. It seems the shots are getting squeezed out here. As I said earlier, the stock had already corrected a good deal getting into this deal. The street had a bit of a sniff that the deal is in the offing. So for the time being, it appears the shots are running for cover. The management says that it will be EPS positive from the first year itself. So the street likes that. But Cohance, that's really the stock of the morning, up 16% as we speak. You have a top boss, who was at the top of, a very big pharma company that's come in there for Cohance. Stock has corrected big time from the top, 16.5%. Wow, what a welcome.
Yeah, and Hormas tells us that before this development that took place, Cohance was actually the worst performing stock in the small cap index in all of 2026 so far. It was actually down 31% this year before this news has come by, and now it's curtailed its yearly losses to about 21%. Still an underperformer, but what a news.
And what a difference one person, at least, for now, can make. At least that's what it seems like. We'll see if it holds. Harsha Upadhyay is with us. He's CIO, Kotak Mahindra Asset Management Company. Harsha, good morning. Great to have you on the program, and thanks for joining in. As a fund manager, how would you treat an acquisition like what Sun has done? I know you can't talk single stocks, Harsha, but let's consider company ABC doing an acquisition for $12 billion, taking on $8 billion in debt. What would your reaction be?
Good morning, Prashant. As you rightly mentioned, I will not be able to speak on the particular acquisition, but clearly whenever we see these acquisitions, we look at incrementally what it's going to add to the acquiring company, whether it's going to bring in synergy, whether it's going to reduce costs and increase margins, how soon the company is going to break even on the acquisition value. And these are the kind of analysis that one usually does. So that remains same in every case, I would say.
Okay. So any opinion on this one? Broadly, roughly, top down, if you've looked at this, Harsha, this specific case? Not asking you whether to buy, sell Sun, but any thoughts?
Clearly, it's one of the large transformative acquisitions, I would say. Rarely you see Indian companies acquiring such large companies outside India or even inside India. So to that extent, of course, this is one of those large acquisitions. But beyond that, I will not be able to comment on that.
Right. Just to complete that loop on the pharmaceutical space, Harsha, Cohance as well, the earlier Suven, has seen a leadership change. Again, typically, I've noticed this for the consumer companies at large, where every time there is a leadership change, things definitely move. It seems like a bit of an inflection point, especially for a stock that has been struggling. Would you say the same of something like Cohance Life or, other sectors as well, where after a struggle, there is a notable leader that comes in? Do these moments then become inflection points for the stock?
Mangalam, again, I'll start with the same response. I have no views on this particular management change, and I will not be able to comment on it. But clearly, when we analyze stocks, we do look at significant management changes, especially as you rightly mentioned, if the company is going through a bad patch and then there is a change in management, what it could bring on table is something that we closely evaluate. Every time it may not be a success, but clearly this is a point where one needs to reevaluate all the parameters and take a fresh look at those companies. That's exactly what we do in each of the cases where we see significant changes in terms of the management or even in terms of the strategy itself. So even in this particular case, that's what most investors would do, I guess.
All right. Hi, Harsha. Good to see you. Let's talk about the market construct on the whole. We have gone through a period of underperforming, if you compare it with the global peers. Hopefully, earnings come back. The problem is, this war has come out of nowhere. And the initial part of 2026, all data points on ground were pointing to a good recovery, both on the economic front, which would translate into good earnings. However, now with Brent crude prices at elevated levels, how are you feeling about the Indian markets? Do you think we're just ignoring all this bad news and, just climbing the wall of worry, and ultimately, things will catch up? Or do you think the worst is behind and hopefully the war settles out and we chug along from here on?
Nigel, if you step back and see a couple of months back, clearly a lot of things were becoming supportive for the markets. For example, macroeconomic environment was very, very benign. Crude was trading at $60 to $65 per barrel. Tariff deals were signed between India and various other regions. Overall, it looked like finally we are likely to see earnings trajectory moving up, and which was the case sequentially as well. Last couple of quarters, we were seeing a slightly improved earnings trajectory as well. And that was the hope that sequentially for financial year 27 and the financial year 28, you will start seeing recovery in terms of earnings growth. However, after the war, things have suddenly changed a bit. Crude has moved significantly higher, which means that there could be impact at the economic growth level. There could be impact on company growth as well as margins, all of that. Having said that, I think most of this would be very, very short-term in nature. I don't think it's going to extend beyond a certain time frame. That's the hope as well. So some companies have already witnessed the ill impact of war in the Q4 results which have come through. Some companies may have withstood that volatility during Q4, but may see that in Q1 results when we go to the next earnings season. But I think this is something that investors will have to clearly understand and not panic at this point of time. And usually, if you go by history and look across various wars, including our own Kargil war or even Russia-Ukraine war, any other war that you look at, markets typically bottom out even before the war ends. So clearly, I think if you are waiting for the war to end, then you are paying a price in terms of valuation premium for that clarity. So for all long-term investors, I think this is a good place to be in. You can keep building your equity allocation over a period of time. Nobody knows exactly how this is going to turn out on exactly at what point of time there will be a ceasefire, etc. But I think that's how equity markets are to be dealt with. I mean, when you have uncertainty, you keep participating with a long-term in focus. And hopefully the long-term wealth creation is going to be superior in that case.
Okay, all right, Harsha, earlier this year when we had connected, you were making this point that the real estate cycle is already midway through. Normally you see it for 8-9 years and we're already in year 5. And that's why you said you'll continue to remain your underweight stance on real estate stocks. And that's played out quite well because from the frontline names itself, to the smaller names, all of them are corrected 20, 30, 40% as well. What's your view on this theme?
Nigel, we still remain with the same view. Apart from the mid-cycle view that I had presented earlier, there is another overhang, which is about what kind of new employment generation is going to happen in IT sector. Clearly, over the last year, some of the top IT companies have actually seen a reduction in the headcount. And very unlikely that you will see very large headcount addition in IT sector. And also there is a bit of a question mark in terms of the overall IT sector growth. So given all of this, one large segment which was leading to real estate growth may be under some bit of pressure even in financial year 27. And as we had spoken earlier in the interview, the prices have significantly shot up. While I agree that on the interest rate front, the affordability has increased, but the pure capital appreciation has been much higher. So to that extent, that will also come into picture. So you need to be a little more cautious on real estate despite the correction in the stock prices in recent times.
Are there any opportunities which are emerging in the energy and oil price related space because of this war? Because, a lot of people believe that maybe while the impact of the war on the markets may not increase as much going forward, and perhaps the markets may have bottomed out. But what's for sure is that, for the very near term at least, oil prices would stay elevated. So there are perhaps opportunities on the back of that on upstream oil energy companies. The converse on that would be those who are using oil. And similarly, typically related industries, you have fertilizers, you have chemicals, all of that. What's your thought on this play?
Mangalam, if you go back and look at how the government has dealt in history in terms of crude price volatility, while on paper the upside should be there with the oil exploration companies, that doesn't really happen in practical terms. There could be cases of windfall tax or such taxes going forward, which means that some of the negatives that you see on the retail side or on the oil marketing companies' profitability side is going to be cushioned by the supernormal profits that the exploration companies would make in that case. So I think typically it doesn't make sense to just look at the beneficiaries of this crude price increase because in our view, this is not a permanent structural kind of a situation. It's going to correct. The only thing that we do not know is at what point of time it's going to correct. I mean, there have been 4 or 5 cases when crude has moved beyond $100 per barrel. And in each and every case in the past, it has corrected because fundamentally the demand is not increasing at a rapid pace. So given that and also that the geopolitical issues are going to keep global growth in check, we are unlikely to see any change, any significant change on the demand side. Yes, there has been a logistics issue. There has been some supply issue on the crude. But I think structurally, we cannot argue for a sustainably higher prices. So to that extent, it's better to ignore the impact of crude for a moment and look at the overall basket and see where companies have withstood such cycles in the past, where the valuations are in our favor. And it's better to keep a diversified approach rather than any thematic or sectoral focus, because typically in times like these, a diversified approach with valuation in mind is what helps investors to kind of manage volatility, I would say.
Okay, all right. Harsha, we'll leave it there. Thank you very much for joining us. Good speaking with you and appreciate your time here on CNBC TV 18. I think we have our next discussion. Rahul Saraf, Head of India Investment Banking at Citi is with us, and Bhavesh Shah, MD and Head of Investment Banking at Equirus Capital is also with us on the program. Gentlemen, great to have both of you here. Thank you very much. I mean, I think it's great that we have both of you with us on a day when we're reporting on one of the largest transactions in the pharmaceutical industry. Rahul, you're smiling. So I have to ask you this. What did you make of it, Rahul? Any thoughts?
No, I think you're right. It's a great day to be on CNBC today. It marks history for India. It's the largest outbound acquisition for any Indian company to make out of India. And it's a very powerful acquisition. And we are sure that this will be very, very good for Sun going forward. A lot of synergies, a lot of, as Dilip Bhai said, this is going to be the next chapter for Sun going forward and going to create a lot of synergies as well. So it's a very big transaction. And it's a great time to be on this call.
Rahul, is there a way, I'm just kind of sort of, this is a slightly, and we'll get into individual sectors where deals are happening, etc. But, is there a slightly different way in which markets are going to treat large acquisitions? Because, I mean, one of the criticisms has been that, the focus has all been on, this is not about pharma or this deal or anything, that maybe, companies are not ambitious enough and the market doesn't treat large acquisitions kindly, and in many cases it is not. High debt, and especially if it is overseas, it's difficult to manage and sprawled out, etc. Right? Is there a broad change of thinking which is emerging, Rahul? Especially if an acquisition gets you new technologies, new areas, and things like that, or not really?
So Indian companies have the ambition of becoming global. And no other than a large company like Sun to do this transaction. They have presence around the world. They know how to manage global businesses and global teams. And they've actually done fantastically well in their earlier acquisitions as well in terms of integration. So it's a structural shift to the positive, going to the next orbit and then to the next orbit further. The balance sheets are strong for large companies like Sun Pharma. And similarly, there are other large companies also that we'll see that with strong balance sheets, big ambitions, they would look to go to global geographies, global markets, and then capture the synergies that they can, given their own strengths.
Right. This aside, there has been a fair amount of M&A activity in general, be it, institutional capital backing some of the financial companies, or, large cap FMCG companies going ahead and buying D2C players. You have a bunch of them, IPL deal unlocking, Rahul. So a lot of these things have happened. So far of what has happened versus what is likely to happen, can you give us a whiff of what more is in the pipeline?
Well, I would say that you had last 5 weeks, you had probably 5 transactions in the market, right? IKS acquired a company in the US. We were involved with that. Hire, of course, closed, where a Chinese company partnered with Sunil Mittal and Warburg. You had another transaction with Sanmar, where they acquired the stake for Fairfax. So lots of transactions happening almost every week. And each one has a different theme. Each one has a different motive. Each one has a different trajectory. There could be consolidation. There could be spin-offs. There could be outbound acquisitions, MNC exits, MNC entry. So lots of different varied reasons. And I would say the deal activity will continue across sectors and across themes. There's no one theme. India is fairly large and very diverse. So there's no one theme which will play out more than the other, I think. And the deal activity, the good thing is the deal activity will continue. And we're feeling very good, very bullish about the deal activity, both in the capital markets as well as M&A for the rest of the year as well.
Bhavesh, would you want to add any specifics to what Rahul has said? He said that obviously deal activity will continue. Your thoughts on the Sun Pharma deal, and thereafter, what kind of deals are we likely to hear in the very near future?
Thanks for having me on the show. I think I think this is a great acquisition by Sun Pharma. In my view, stronger companies in India have aspirations to be going global, and this is one of the methods in which they can do that. Not only it helps them acquire new products, new geographies, it kind of helps strengthen their overall strategy for growth on an inorganic basis. I would just add to that, in terms of the trend, I think we will continue to see a lot more strategic-oriented acquisitions. I think each company will have their own strategies, either to scale up or either to kind of add companies to kind of add to their combination of product and geographies and markets. So I think this is going to be very positive. But I think what I would say is also companies need to be also very calibrated, especially when it comes to acquisitions in the foreign markets. There have been examples of companies all with good intentions acquiring companies abroad. But I think some of them have played out, some of them are not properly played out. Yeah. So I think it's very important to be very, very calibrated and make sure that the post-acquisition integration strategy is in place.
Bhavesh, just one thing. If you looked at this particular transaction morning, is this a turnaround bet? Because look, Sun has about a $2 billion EBITDA, growing at 13-14%. The acquired entity's got a $2 billion EBITDA, but no growth. So overall, post-acquisition growth rates will come off sharply for Sun. And then there is the debt. So is this the bet that Sun will be able to turn some of these assets around and inject growth into the acquired entity? That is always harder, right? Than acquiring something which is already humming along well.
Absolutely right, Prashant. I think it's not easy. It's very easy to kind of do, let's say, an acquisition, but I think the post-acquisition integration, how does it weave into the overall strategy? How does the management capability here in India is able to kind of inject a good amount of energy so that the growth overall happens, the synergy benefits are extracted. I think this is the what I would call is the companies who are able to successfully do that, they earn something known as a consolidator premium. So as I said, it's easy to acquire, but very difficult to integrate. So and consolidate. So companies who will be able to do that, will get to get a premium from the market, from the investors. But yeah, it's going to be hard. It's not a very easy task for sure.
All right, let's just then complete this with the Jio IPO. Rahul, going back to you. I'm not sure whether it will be an IPO or how in what manner will the Jio platforms list. What we know from the Reliance earnings release is that they have accelerated their move towards Jio platforms listing. What has your sense on this been? Obviously,
I'm going to deflect that to Bhavesh because since we are on the IPO, we'll not be able to comment much on that. I'll deflect it to Bhavesh.
Bhavesh, you want to ask a question to Rahul? He's on the IPO.
Sure. No worries. I think it's one of the most looked up to IPO in India. I think India has been a beneficiary of the very big digital wave, and that has been enabled by Jio. Frankly, the way to think about this business is it's not just a network which provides data, but I think it goes much beyond that. And I think the company has been instrumental in creating that wave in India. My sense is it will create good amount of unlocking of value for the overall ecosystem within Reliance. And this will be a sought after an IPO from the investor side.
Okay, all right, gentlemen. We appreciate you all joining in and having a very, very effective chat. Interesting point of time as well. A lot of deals, IPOs in the works as well. We look forward to catching up with you all rather soon. For the time being, have a good day ahead. Well, we'll slip into a short break. On the other side, we'll get chatting with the management of Hindustan Zinc.
I think we can go to it now.
All right. I think, let's go across actually to the management of Hindustan Zinc. We have Arun Mishra, the CEO and whole-time director, who joins us on the show. Hi, Mr. Mishra. Good morning. Good to see you, Win. Well, we've got a few questions with regard to your business. So let's start off with the more glittering part of it. That's the silver business. We saw pricing move up one way, and then it came down considerably. What is the estimate on silver prices for FY27?
See, I guess silver will touch the new normal. What used to be the normal of $30 to $40 per troy ounce will be the normal between $65 to $75 per troy ounce. And it can then fluctuate up and down, but I guess it would remain there. So our job will be to now focus on silver production. And this year, if you look at, we have done 627 tons, but we have also sold about 37 tons of silver through the concentrate route. And if we bring that into production, I would have produced 666 tons. So next year's guidance of 680 tons is very much achievable, and that should give us a earning at the current level of $70-75 a troy ounce. About 50% of the EBITDA would come from silver.
Oh, that'll be interesting. 50% of EBITDA from silver, and you're saying that now there's a new normal with regard to silver prices. However, the tricky part is how much of your sales are hedged. In the past, you'll have hedged at lower prices. So what proportion of your silver sales are hedged as of now?
No, so we are not hedging any more silver. We had hedged about 10%. Whenever we hedged about 10% of the silver quantity, and we are not going to hedge anymore.
All right, Mr. Mishra, I wanted to ask you about the 680 tons. Now, last year was a bit of a weak year. Are you being conservative on this silver volume target of around 680 tons?
680 number, no, it's not conservative. It is, see, we are also maximizing on the zinc production. If you look at last year numbers, actually we produced more zinc compared to FY25. But total metal looks like flat, 1048 versus 1052. But actually the zinc production is more and lead production is less. And we are financially benefited there because of lead prices fell down, whereas the zinc prices went up. And we would continue with the same strategy this year, and hence the silver is the optimized number. More lead production will give more silver, whereas we will keep silver at 680, produce more zinc metal, and then get much better EBITDA next year.
Okay, got it. Interesting way then. Now, you're focusing more on zinc in the past year and lesser on lead. And, that worked out perfectly with regard to prices. But let's focus on silver. What is the global demand supply scenario as of now? Does a deficit continue to exist?
It continues. It continues. And with the current upheaval in the global geopolitical situation, more and more push towards investing in precious metal. And we are seeing the effect. The prices would remain there. That's why for at least next 1-2 years, the investors push to the precious metal. At the same time, the demand is also growing as we see more and more electronics, including the warfare that we see. It's all electronics now, so more and more silver will be consumed.
All right, Mr. Mishra, we have spoken enough about silver, but that's such a large proportion now of your EBITDA, so that's why we're putting the spotlight on silver first. Let's turn our attention to zinc then. Could you tell us what's the outlook in terms of prices? And also, since costs have moved up, is there an upside risk to that guidance of around $100 per ton?
See, our cost, 44% is by the power cost. So in that power cost, since if you look at our RE power consumption, we are at 18%. And now from the month of June, the entire windmills will be commissioned and the battery commissioning is already going on. We expect about 30% of the RE power coming in. And this time this power is also round the clock. And so our cost of production will be under control, around $1,000 per ton. The impact of about $25 to $30 per ton we have taken into account because of the global situation that we are currently encountering. So that we have factored in that. And otherwise the volume impact will also we are getting 1.1 million ton compared to 1,048 this year. That will also come in handy for reducing the cost.
Okay, what's the zinc price outlook though, sir?
I don't give price outlook, but since we have been speaking for a long time, it's anywhere between $3,100 to $3,300 a ton.
Okay, got that. You know, the other kicker is going to come from your byproduct. Sulfuric acid prices, they are booming. Could you put together, a rough math with regard to how will this impact your EBITDA number for FY27?
The sulfuric acid, this is, at times the sulfur prices go up and this results in price of sulfuric acid going up. And this has helped us a lot. Not that we are making business plan based on that. We did about 1 million ton of sulfuric acid last year and with 1.1 million ton production. Similar amount of sulfuric acid will be sold next year. But also now that fertilizer plant will, the moment we start consuming, the nature of acid will change. Initially, we will convert about 1/3 of the sulfuric acid into phosphoric acid, and if phosphoric acid fetches us even better price, we will do that. Otherwise, sulfuric acid will remain. And it should be around 2% or so of the EBITDA level, and we are not really basing much on EBITDA side. We are looking at more as a cost management side because this is netted off in the cost of production, and so we are looking at acid as a way of counterbalancing the likelihood of increasing cost because of the current geopolitical situation.
Well, a byproduct like sulfuric acid contributing 2% of the EBITDA number is a rather large number as well, Mr. Mishra, so that's come as a good kicker. But besides that, what about the expansion plans? You have already announced phase 1 of expansion, but the street is waiting by for phase 2. When is that likely?
Our phase 2 will, I think, somewhere around July or August board meeting, we should be able to get it through. See, the design, originally we were thinking of having multiple smelters and different locations. Then we have now finally zeroed in on the same location, Debari, where we are putting up the 250 kiloton smelter. We'll put up another 650 kiloton of smelter there. So that itself, that complex itself will be more than 1 million ton metal production complex. And only the mines will be dislocated, and that will help us to optimize the capital cost and also put in best of the technology in one place only. So that design is almost complete. We should come out with the announcement for investment by the month of July or August.
Mr. Mishra, things are looking up for you with regard to prices. You're looking at scaling volume as well. Don't you think it's an opportune time to go ahead and unlock some value in Hindustan Zinc, maybe separate the silver business?
I'm sure with these current silver prices that we have, it does call for re-looking at the proposal of demerger of Hindustan Zinc. But right now our hands are full. Vedanta demerger is in place, and once that is done, I'm sure that will be the right time to look at Hindustan Zinc demerger.
Okay, first Vedanta demerger, and then you look at Hindustan Zinc. Can we expect some movement though on Hindustan Zinc's demerger in this fiscal itself?
At least discussions should start.
Okay, discussions will start. We'll wait by Mr. Mishra, but it's always a pleasure to have you on the show. You're sounding reasonably optimistic about business for this particular year. Everything firing, whether it's silver, zinc, as well as your byproduct, sulfuric acid. For the time being, the stock as well has moved to the high point of the day. And Vedanta has also moved behind it because, the first entry that will list in the next few days will be primarily on the value of Hindustan Zinc. So that's why you're seeing Vedanta as well has spiked up in the last few minutes ahead of its record day.
The other one is Sun Pharma, Nigel. I mean, first, of course, the fact that it moved up 2-3% and now it's up 7.5%. So we want to find out what what are the top 5 takeaways from what the Sun Pharma management has told analysts, and we'll have Ekta join us in just a bit to help us do that. We'll take a break here. We'll come back. We'll speak with the management of Shriram Finance on the other side, and then we'll have Ekta join us on that Sun acquisition as well. So for now, Umesh Revankar of Shriram Finance with us in just a bit. Okay, welcome back. I think we have the manager of Shriram Finance with us. They reported their fourth quarter numbers. Net interest income grew 21% on a year-on-year basis, though margins compressed slightly on a quarter-on-quarter basis. Assets under management also grew about 15%. We have Umesh Revankar, Executive Vice Chairman of Shriram Finance with us. Mr. Revankar, good morning, sir. Thank you very much for joining us. Prashant here. It's an excellent quarter and the performance is fantastic. My question, sir, is... and we'll rewind back to the numbers, what you've reported, but just one forward-looking item, which is that there is widespread expectation that there is a large fuel price adjustment which is imminent upon us as soon as the elections end. In the past, sir, when that has happened, and is particularly important for your business, the segment that you operate in, does that make even a short-term dent if the adjustment is large? Because the shock this time is very large in terms of international crude prices.
See, any increase in retail price is going to have certain impact, but how it is going to come, how it is going to be introduced, is something which we are watchful. If it is a gradual increase over the period, then there is enough time for everyone to adjust their cost, that is logistics cost. The transporter can pass on to either customer or shipper, and the shipper can build in his business model, and the distributor can pass it on to the customer. See, these are all the things which happens. So if it is done in a gradual manner, if there is a surprise, if there is sudden increase, then there is a little time for adjustment. Then temporarily, till the adjustment happens, then there is an impact. So that we need to see how it is going to happen. The way we have seen, because 91 there was a crude shock, then there was a Kuwait war. Again, 2012 there was a surprise increase in the fuel price for a couple of months. That the Red Sea challenge was there. So these are the two past incidents where the increase in crude price resulted in the retail price, and we have seen how it is impacting. I believe if it is the gradual increase, then the surprise element is less, and everyone will be able to manage the situation.
Right. And, in the conference call, you did say that if there is any sort of pressure on borrower affordability, that's something that you will see only after November or December. The extent of that remains uncertain. We take that point. Mr. Revankar, I just have a question on asset quality going ahead, because while on the one hand, your AUM growth guidance of 18% led by gold, and you have PVs, CVs between 15 to 18% stays, what is the kind of asset quality move you see in the next few quarters? We say that for three reasons. One, other NBFCs have said that maybe, the next couple of quarters will be absolutely fine. The current rise that we've seen in, the uncertainty because of the war, a lot of problems will start to emanate 2 quarters down the line. Do you see that? And in your MSME portfolio in particular, gold prices are off highs as well. So all these factors do point to maybe some sort of latent stress emerging. Would you agree with that?
See, we have been extremely cautious. In fact, in MSME, we have slowed down our disbursement. We have been trying to focus only on by additional security being there in MSME lending. So we slowed down a little in the last 2 quarters, mainly because it initially started with US tariff being hit on certain MSME segments. So we have been very careful. As of now, we don't see a challenge. Even in commercial vehicle segments, we are not seeing any challenge because ultimately what is important is economic activity. If the economic activity remains at a certain level, then everyone is able to pass it on and have a comfortable journey. So I think the economic progress, GDP growth has been good for us. And as long as it remains above 6.5, I think their impact will be much lower. But if the monsoon has a certain impact, there will be temporary impact post the October, November. That we need to see as and when it happens. Otherwise, I don't really see a big impact. Maybe marginal movement between stage 1, stage 2 could be there.
Right. And your 18% AUM growth guidance, I suppose, factors in some sort of potential negative impact as well. You've been conservative here. Is that how the street should read it?
We did give 18% growth guidance much before the commencement of war and the negative news on the monsoon being below normal. But I do, at this stage, I believe that we'll be able to maintain that growth projection. However, as and when there is a right impact, then we'll be able to revisit it.
And what about margins? Because your cost of funds, because of the large money coming in from MUFG and all the subsequent rating upgrades that happen, they've come down. How do you look at NIMs going forward? Do you intend to pass on the additional benefits to the consumers and keep your NIMs at a certain price band, or maybe at some point look at increasing your NIMs as well, given the sort of uncertainty that is there?
See, we don't really control the NIMs. So what happens is, if you look at my numbers, last year, same quarter, we were at 8.25. Now we have moved to 8.61. And this improvement has happened by 2 counts. One, we have reduced the excess liquidity that was there on our balance sheet. And the second, the incremental borrowing cost coming down. Both has happened. And this has happened much before the rating upgrade. So the advantages of rating upgrade is going to happen in future. That is, we are going to get benefit of that. And that will definitely improve our margins. But certain increase in that margin will be passed on to the customer to acquire, make the customer ensure that they remain with us. Basically, we would like to retain the customer as long as possible, as and when he upgrades and buys new vehicle or larger fleets. So that's the idea.
All right. Hi, Mr. Revankar. Always good to see you in, sir. So you're saying the incremental cost of borrowing is at around 7.2%. Is that correct?
Yes. Last quarter, it was at 7.2%.
All right. Besides the operational performance, there are a couple of questions that your shareholders are waiting for clarity on. So let's get straight to that. One, is MUFG looking at buying an additional stake, from the promoter entity, or are they looking to up it? Point number one. Could you clarify on that?
No, there's no discussion on that. Right now, we have just done the first tranche of 20%, and that is what we have finally agreed. There's nothing like additional increase at this stage. There's no discussion, and I don't think anything is there in the near future also.
Thanks for clarifying on that, sir. What about the open offer price? Is there any plan to revise it higher? Some on the street believes that it's going to be much higher than what the earlier deal got done at. Your take?
I said there's nothing in hand or nothing in discussion.
Nothing. So both those two, you're saying there's no talk whatsoever.
No.
Okay, let's focus on a couple of other aspects then, sir. What about the credit cost? What kind of guidance could you help us out with that for the next 2 years? And also in ROE, there was some hope that it'll improve, I think, to around 13-14% or thereabouts. What's the trajectory you see on that front?
See, as far as the credit cost is concerned, we would be happy to maintain and particularly at current level because we believe we have reached the best. And if the environment helps us, if we are able to maintain that, we'll be very happy. That's for first thing. And on the second question was on
credit cost and ROE, sir.
ROE, sorry. As far as ROE is concerned, see, since equity infusion is there, ROE will definitely come down because of that. And we expect it to come down to around 12% level, then start inching up over the period because ROA temporarily goes up and ROE has come down. So ROE to go up, then we should start using the equity and the balance sheet growth, both we have to do. So I'm very, very happy to go back to 16 at the earliest.
Okay, all right, Mr. Revankar, thanks a lot for running us through your guidance with regard to how you see, your company progress for the remainder of this year and also clarifying on a couple of issues like the open offer and MUFG is not in talks to buy an additional stake. Wishing you all the best for this quarter and we'll wait by in case there is any kind of revision in the guidance towards the end of Q1. Well, the markets are holding strong as we speak, actually. We're up close to around 200 points, so that's pretty good news. Sun Pharma is clearly the stock of the morning. That's bursting away as we speak. And Jefferies had come out with a note on JSW Steel, and the street is taking note of that. They're talking about pricing improving. They're also highlighting that exports out of China actually have reduced, which is a tailwind for the entire global ferrous sector. So JSW Steel has moved up. And Sarda Energy from the broader markets, that stock is now up close to around 4.5%. It saw a sharp correction, and now that stock has pulled back a lot of it. The power business is firing, and they have exposure to longs. I guess the street is reading that through as well. Vinay Rajani of HDFC Securities joins us for a technical check. Hi, Vinay. The bulls will be very happy this Monday morning. Crude oil prices are still holding at elevated levels, but the Nifty is holding with a gain of around 200 points. What's your view? Would you advise taking some money off the table, or do you believe if the recent lows are defended, then we could trend higher from here on? So trade on the Nifty and a couple of fresh trading ideas.
Yeah, so good morning. So in the month of April, we have seen a rally of 2,200 points in the Nifty from the swing low of 22,200. It went up to 24,600 and we have seen 800 points correction. Today, we can see that it is up by more than 200 points. And during this rally, many leaderships have changed and some of the sectors are really outperforming. And they are actually behaving like the negatives are already being discounted in the market. So metal space is one of the space, power, PSU, these are the sectors which are continuously performing well. So the structure of the market is quite bullish. Sector specific bullishness is there, and we have to select the stocks from the strong sectors. And there are many ideas we can generate from to generate the alpha from here. So we are bullish on the markets right now, and we feel that as far as Nifty is concerned, 24,800 should be the next target for the Nifty. And the Friday's low will act as a strong support, which happens to be around 23,800. So traders should hold on to the long position with a stop loss of 23,800. As far as ideas are concerned, we are bullish on metals. So Jindal Steel and Power, this is looking extremely good after some running correction. This has resumed the upward run. So 1289 is the level around which one can take a fresh entry. 1260 should be the trading stop loss. On the upside, we are expecting a target of 1350 in the short term. The second stock also, we are taking it from metals and mining space. That is nothing but the NMDC. So NMDC has given a fresh breakout on the medium to long term charts. And we feel that this rally is going to last for a bigger gains. But for traders also, one can take alpha from here around 90.50. One can take long positions. 88.50 should be the stop loss. On the upside, we are expecting a target of 94.
All right, take that point. Thanks a lot, Vinay, for joining in and giving us your view on the markets and individual stocks. But let's put the spotlight once again on Sun Pharma. The stock up 7.5%. Ekta joins in. She heard into what the management had to say over the conference call, and she brings us all the key takeaways. What is it, Ekta, that the management said that has the street so excited? 7.5% higher for the stock.
Well, the street possibly believes the Sun Pharma capabilities that they've shown in previous acquisitions such as Ranbaxy as well as Taro. Now, a couple of important key takeaways from the conference call where the management did say that they're acquiring more or less the same size of a company as Sun, but around 20 to 22% of Sun's value. Now, the acquisition will bring quite a significant amount to Sun Pharma in terms of, their presence. Commercial presence in 150 countries, 18 countries with $100 million in terms of revenue. They will provide presence to them in China, which is one of the biggest growing pharmaceutical markets today. Organon has around $800 million in sales and 8 brands present there. It'll make Sun number 3 in women's health, increase their presence in biosimilars, where they will have around 7% in terms of combined sales, increase their innovative medicines portfolio to 27% of sales versus 20% that exists currently. And they will also look to turn around the established brands business, which is basically the bulk in terms of Organon's business and will be the bulk of the combined entity at 51% of sales. It was down 4% in CY25. They're looking to possibly look at around single-digit growth within the established business segment going forward. Now, debt, it is an issue. But one of the reasons why the stock is actually higher is because the entire enterprise value is lower than what the street had anticipated, because the net debt is at around $7.6 to $7.7 billion. They have made a divestiture of around $40 million, which will make them a little more comfortable in terms of the debt position. So what they have indicated is that, Mr. Dilip Sanghvi was very clear that they will be focused on paying down the debt as soon as possible. They will be looking at working with lenders on refinancing options as well. The net debt is currently at around $7.6, $7.7 billion for Organon, like I mentioned. So they will look to possibly bring that down in the next 4 to 5 odd years. The combined entity debt at these levels at around 2.3 times net debt to EBITDA. They will also have a free cash flow, which will be at around $2 to $2.5 billion, which will help in terms of easing the debt burden. Synergies of around $350 million, which will be realized over the next 2 to 4 years. Acquisition will be EPS accretive from day one. They will assess cash flows and come back on the dividend payout issue. And they will also they're looking at Organon basically as a long-term play and not something which should be looked at within 6 months to a year.
All right. Thanks very much, Ekta, for that. And some of the takeaways really very focused on repaying the debt down as fast as possible. I mean, very explicitly indicating to the street, basically acknowledging that the debt is very large and they'd be very focused on paying it down as soon as possible. I think that perhaps an area of comfort. The $350 million synergy benefits perhaps also the market liking very well. It's a large number. I mean, if they're able to realize it, and I think that those are the two reasons why perhaps if there were some shots in the system, or perhaps people were, fearing the stock perhaps will go down, has gone the other way and force some of the short covering, etc. We'll know by the end of the day with regards to data in terms of what has happened. But it's a thumbs up for today, for now, as far as the deal is concerned. Manisha is here on the other side. Commodities in focus. Stay tuned. Coming up.
Welcome back. It's a very, very good morning from a bullish perspective. The breadth of the market is something that's standing out. You have close on 5 stocks that are advancing for just one stock that's declining. But as promised, let's shift focus to the commodity markets. Manisha Gupta joins us to tell us what's going on there. Manisha?
Well, thank you for that. I'm looking at metals as a space. Remember, the US-Iran war has entered week 9. The peace talks between US and Iran have kind of stalled. We've been hearing statements from both sides all over the weekend. And it also is about the Strait of Hormuz, which mostly has remained shut since Feb 28th. Iran war has created some kind of a turmoil in metal as a sector as well. But importantly and interestingly, what we also are looking at support from metals is the fact that the China restocking is happening on every dip. And this is majorly ahead of the Labor Day holidays in China between 1st to 5th of May. Take a look at the global aluminum prices, and we have been trading at around 4-year highs onto this one. We've seen 12% of gains come in for aluminum prices in the matter of last 1 month. Nickel is trading at a 22-month highs as well. Much of those gains actually have come in the matter of last 1 week. 10% of gains onto that one in last 1 month. And then you have copper prices trading very close to those 2-month highs. 11% of gain putting in by copper as well for the last 1 month. Now, the major reason for this really is that one, West Asia produces nearly 9 to 10% of aluminum, and much of that has been contained within West Asia as well. The Gulf also accounts for 25% of global sulfur production. Now, this is what is required as a key input for many of those miners. The miners for copper and nickel use it. 1/5 of refined copper, by the way, the production of that comes from solvent extraction technology on oxide ores. And for that, you need sulfuric acid. Nickel production from high-pressure acid leach plants also is requiring of sulfuric acid, and sulfur then in fertilizers also is nearly 2/3 of an overall global market there. So that is where sulfur seems to be getting divided. Agriculture clearly is a priority right now, and the miners really suffering from the lack of it. China, which is nearly 40 to 50% of sulfuric acid, has said that they will ban export of that from the month of May, also taking sulfuric acid up by nearly 50% in this year, and it's trading very close to all-time highs as well. Also, Macquarie, an interesting report from that says that $4,000 per ton is added to Indonesian high-pressure acid leach nickel production cost. And the interesting report from Radix says that $100 a ton rise in prices translates to 4% rise in cash operating cost as well. So this is another thing leading to higher prices in sense of metals.
Manisha, thank you very much for that. Time for a break. On the other side, the management of IDFC First Bank joins Lata to decode their 4th quarter numbers. Stay tuned, coming up.
Welcome back to Corporate Radar. IDFC First Bank reported better than expected profit, led by a rise in net interest margins versus the previous quarter, and also led by a fall in credit cost that is more than expected. This is, of course, the cost of providing for bad loans. The expected bad news was the 645 crore rise in expenses because the bank was providing for the fraud in Haryana. In the current year, the bank is expecting a strong 20% growth in deposits. For more details, I'm joined by the Managing Director and CEO, Mr. V. Vaidyanathan. Good morning, Vaidya. Thank you very much for your time. Well, first up, this deposit growth, it was a little surprising because you all normally do well over 20%. This time, 17%. So, first of all, why that, pushback? And what gives you the confidence for 20% next year? That is this year.
We dropped rates in January quite meaningfully. We brought it down from 7% to 6.5 in the high buckets. In some buckets, we brought it down by 200 basis points. So some impact, we think largely impact is that. The good news is during this crisis, no customers pulled out money, like nothing meaningful, still stayed flat. So I think these things would have played together. But I think 17% YOY growth is what we achieved. Next year, we think we'll be back to the 20% growth because, this year, April has started well. And we put that issue behind us very, very quick. That also must have helped.
Mm-hmm. Yeah, clearly, you all overcame that. But 645 crore, will you all get back something? Or all that was the cost accounted for? You clearly say in your guidance, you won't have to pay more. But I was wondering if you can withdraw something.
Yes, of course. If you recollect in your interview, I had said that we will take it all in the P&L same quarter because we don't postpone anything. And we did. But yeah, we do think that some portion of that money should come back because, this is a legal process in the country. There are many investigating agencies working on it. There are court processes involved on how to get money, etc. It's a process, but we are pursuing it very seriously and we are working on it.
Okay. Now let me come to margins. You said more or less 5.75, which is very close to where you are now. You don't expect pressures because yields have gone up and, there are inflationary pressures. Crude is at 107. What gives you this confidence that you will be able to maintain margins?
Indeed. And if you recollect, last March was quite elevated for everybody and liquidity was tight and war and all that. The thing is that we have developed a really, really good deposit franchise in the country. The brand is good, service is what we focus upon and all that. So we think that we will keep a close eye, but frankly, we never take very definitive positions on these things. We play to the situation and 10 basis points this side, that side, anything can happen. But broadly, I think we are on track. I think our deposit 20% plus, I can tell you this year we will be back without fiddling with rates very much.
Okay. No, your deposit record speaks for itself, which is why I was surprised by the 17%.
17 because last quarter we didn't grow. We were a flat book. The short answer is that.
By design?
I told you, rates we brought down. So we'll not know what. It's a combination of this incident, drop rates, hard to tell.
Fair enough. Okay, now, I can understand your operating expenses going up by about 650 crore. It has gone up from 3982 to 4654. I mean, almost entirely that 645 crore is showing in your other operating expense. Why is the other income so much lower? I know, yields have gone up. Mark-to-market losses would be there. Did you have to record something because of RBI's FX rules as well?
I'll tell you numbers, if that helps you. The bond yields went up last quarter, suddenly after the war. I think 30-40 basis points. So that gave us a treasury loss of 115 crore. Then the FX RBI asked us to close our, to calculate our, net open positions on basis of and to not do the international one. So that happened for everybody. So that gave us 20 crore to be very precise. And that was 120, the 20. And there were some bonds which we had lent to credit in the form of bonds. So that gave. So net was about 170 crore. But that we all factored into it. And then also we reported the PAT that we've reported. And frankly, if you add back if you add back the the normalized profit, I think it's like more like 750 or 745 crore this quarter. And we are feeling very good about that. I mean, things are coming back very strong. And watch next quarter, Lata.
Yeah.
You'll be positively surprised, I think.
No, I know most of the analyst commentary also is pointing that X of that 645 crore, this would have been a very good number. And that was anyway factored in by everyone and by the stock price, I would assume. Can you take us through credit cost? It's done very well. And you told me in the interview last time that your MFI issue will be behind you. And clearly the numbers show. But now we have worries that exporters may be suffering. For want of raw material, plastic makers, polyester makers, anything related to crude could be an issue. Loans to fertilizer companies could be an issue. So you worry, and you have also upped your credit cost a bit, isn't it? It is 1.63 now. For the current year, you're giving an estimate of 1.7 to 1.8 credit cost. So you're assuming a little bit of toughness in loans?
No, this 1.63 for the quarter. Every quarter.
I agree. It is for the quarter. Year on year, it is still lower. I take your point. But I'm just, bad loans, it's always not a very good YOY comparison. We have to go QOQ. It's not a seasonally adjusted number. So I'm just asking, are you factoring in that there is a possibility of some small loans, especially because you're very big in MSMEs? You have a 30% rise in MSME loans.
So I'll tell you very closely. So last year was 2.1%. Yes. Next year, we are saying about 1.8%. So provision should come down overall. It's our belief as our eyes can see today. But to your point about the situation evolving there, high fuel prices and many small businesses getting affected, these are real things. We should be very careful. We have done a very detailed analysis on our portfolio, and we have presented that to the board also. The broad assessment is as follows. About 60% of our book is consumer and retail customers. Even during COVID, we saw that they were broadly, they are salaried people, etc. Their life somehow moves and lives through cycles. They're fine. 20% of our book is corporate credit. They are like healthy institutions. They are quite strong, and you know how unleveraged India is, etc. Yes. So that's 80%. The balance 20% of the book, which is the largely you can call it the MSME. Out of that, our unsecured book for the last 1 year we've been keeping it flat. Not because we foresaw this crisis, because when a Trump tariff issue came, that time itself we started slowing down the unsecured MSME book. Okay. Last year it was 4,000 crores. This year it's 14,000 crores. So by keeping that flat, we're positioning the bank well for a situation. But frankly, these are extraneous events. We want to be very careful with that.
Okay. Point taken. What is the likelihood of the way OPEX will grow? If you took out that 645 crore, your OPEX has actually been very much under control. Do you think that you can bring down OPEX as a percentage of the total expense in FY27, in current year?
Yes, definitely. As I always tell you that now it's the time for the bank to start delivering operating leverage, because 5 years we were investing, because we had to build the bank. There was no substitute to invest. Last 5 quarters at a stretch, if you notice, Lata, our book grows by about 18, 19, 20%, but our OPEX grows by 12.5%, 13%. Next year also, we believe that our OPEX will stay in the zone of 13, 14%, but our income, our book will grow by about, we call it 18, 19%, barring this Trump issue, this tariff issue, war issue, that we don't know where it will end, but broadly should be okay. So we think that that's a very strong operating leverage coming up. First quarter, we do expect that OPEX will be a little higher because the salary increments will come and all those usual things will happen. But year to year, 13, 14% growth of OPEX, you should expect from us one more time. And while growing the book by 18, 19, 20%.
Okay. You didn't find any pressure. In fact, I was expecting that there will be pressure on the advances growth, not on the deposit growth, for the simple reason, macro reasons. You're not seeing any resistance or difficulty of finding good borrowers.
No. First of all, we never tinker with the credit model. It's a very finely tuned model for 14, 15 years now. We don't touch it. So we don't relax norms at all. So without relaxing norms, we are growing this at 20%. That is now. And like I said, we play to the merits of the ball. Like in cricket, you don't go with the predetermined shots. You play to the merit of the ball.
Exactly what I'm saying, Mr. Vaidyanathan. Because you all have credit standards, Are you finding enough borrowers coming up to your standard? That is why I am worried whether you will be able to deliver on advances growth.
No, I said as for now, for the quarter that went by, the quarter that's going on, that's without relaxing norms, we are growing at 20%. There's no issue with that. But, for the whole year of 27, we'll have to watch as the game evolves.
Okay. When we last met just a few weeks back, you said that in FY27, you will be in kissing distance of 1%. I mean, the question obviously was because originally you had guided for 1% in FY27, but you said you will be in kissing distance and now you're going to reach 1% in FY28. How close will you be to 1%? Will you be at 0.95? Where will you be?
Good. I think you remember the term. Yes, I said yes, kissing distance, but kissing distance is kissing distance. I think we will get close to that. Basically, what's happening is that even this quarter, like I said, the real profit, our core profit is like 750 odd crores. That is like 0.7% return on assets already reached. And remember, we started with zero base, but it's 0.7. So for this to touch, 1% should happen. I mean, I believe that for a bank which is making 11% risk-adjusted yield, that is 13 minus credit cost, right? Risk-adjusted yield, and at our cost of fund, we should be making more than that. I mean, we should not stop at 1 also. But to your point, yes, we should be there. We should be getting close to that point.
Okay. Good to hear that, Mr. Vaidyanathan. Pleasure speaking with you. All the very best for FY27.
Thank you, Lata, and thanks for everybody watching this program. We are getting close to it, and we will deliver strong this year.
Okay, good to hear that. Well, we are closing Bazaar at a time when the markets have retained all the green in Sensex and Nifty, but Bank Nifty alone is not in a very good spot. So the rise in yields and some higher than expectation from Axis Bank, that's the one that's leading the negativity. But otherwise, mid caps extremely strong at 1.2%. Wrap up on Bazaar, Chartbusters after the break.
Sun Pharma inks a definitive agreement to acquire US-based Organon in an all-cash deal valued at nearly $12 billion. The acquisition will enhance Sun's presence across 150 countries with over $100 million in revenue in 18 of them. The stock surges 8.5%, the top Nifty gainer today.
And Cohance Life Sciences names pharma veteran Umang Vora as the new executive chairman and group CEO. The management change comes amid the company's attempts to arrest a period of stagnant growth and regulatory hurdles. The stock hits upper circuit, up 20%.
A slew of earnings coming in the BFSI space. We have treasury losses and one-off provisionings which have dent Axis Bank's show in the fourth quarter, while significant improvement in asset quality is IndusInd's fourth quarter earnings. Solid moves on M&M Finance and IDFC First Bank as well on the back of their numbers.
India Cements delivers a strong set of numbers for the March quarter. The EBITDA per ton comes in at the highest we've seen in 17 quarters. A solid 18% growth in volumes coupled with a pickup in realizations both annually as well as sequentially aid growth. The shares of the cement major jump up more than 10%.
Shares of Paytm off opening lows but sharply lower after the Reserve Bank cancels the Paytm Payments Bank license. Brokerages, however, upbeat, marking a 30% upside from its previous close. Bernstein maintains an outperform rating, while Jefferies has a buy recommendation.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And it's a good start to the week actually from the bullish perspective. The Nifty is still up 120 points, but we've come off close to around 80 points on the high point of the day. And the problem is the one that's on top of Mangalam's head. The Nifty Bank, that slipped into the red. It's down close to around 80 points. And that's the reason why the markets have slipped a little bit. A lot of those banking names have moved into the red. And big boy HDFC Bank as well has slipped a little bit. But Mangalam, if you look at a positive, it's with regard to the breadth of the market. Yep. Number of stocks advancing are still 5 in comparison to one stock that's declining. So you like that? If we put the crisscross lines, it'll give us a better picture.
It's looking like a good screen on the broader markets, Nigel. The Nifty Bank needs to, cross its important technical levels as well. But DCB Bank is one which is doing well following their fourth quarter numbers. Praveen Kutty, who's the managing director and the CEO of the company, joins us now to discuss their earnings. Thanks a lot, Mr. Kutty, for joining in. If you could give us a sense on going forward from here on, given the sort of uncertainty that we've seen because of the geopolitical issues, are any of your clients facing repayment issues? Is there any worry that you have on asset quality going ahead, at least if not outright, non-performing assets, but, the credit quality slippages? Are there any delays in payments, etc.? If you could give us a sense on that. And in this heightened uncertainty, are you going to disburse any lesser loans than what you've done earlier? So give us an outlook on loan book growth and asset quality going forward.
Thank you for having me here. What I want to tell you is that there's a familiar pattern emerging. Over the last 8 quarters, repeatedly, we're seeing a growth of somewhere between 18 to 20% on both sides of the balance sheet. There's a consistency of bottom line also following. And we have had pretty much difficult headwinds during the last 2 years as well. So headwinds come in, you got to manage it. That's why you are here in the first place. But it's a good position to be in, because our gross NPA ratios and net NPA ratios are the lowest in the last 7 years. If what is even more gratifying is that our slippage ratios have come down from 3.09% all the way down to 2.28% in this particular quarter. So that augurs very well for the future as well. Do you see a gathering storm? Yes, things could get bad if there are second order issues coming in. But effectively, the kind of segment that we are serving, if there is a inflationary move happening, it will impact that particular segment. But at the present moment in time, all the indicators, whether it is check bounce ratios, whether it is the early delinquencies, and the published numbers that you can see on the asset quality is indicating something different. But we are cautious as a banker. We are always cautious. We are the paranoids survive. So we are always looking around the corner for issues and taking proactive steps in the particular direction. Okay. But from a growth perspective, I believe that we are not going to change our outlook. 18 to 20% will continue to happen. The good news is that we are a small ticket player. We are a secured lender. So that helps us in terms of loss given default. So we'll continue on that. It's for the bad times that the strategies come in pretty handy. So I think that's holding up pretty well, and it will hold up in case things were to go south in the distant future.
Okay, hi, Mr. Koti. Good morning. Good to see you in. This is Nigel on this side. Congratulations on a good showing. And as you're telling us, you're confident about 80 to 20% growth, and you're showing no worries with regard to asset quality. Give us a few details, though. Credit costs, what is the guidance out there? And I believe you've been talking about that ROA moving to around 1%. When does that happen?
So the ROE is at 30.5% plus. I had given a guidance last year that we should be closing this year at a full ROE of 13.5% or more. Comparative number for the year that has gone past is 12.77. It's the highest ever in the last 11 years in the post-tax environment in DCB Bank. This has been the highest ever. So you're seeing step-by-step growth happening, and there is every reason to believe that we will be ahead of 13.5% ROE for the coming year. I would like to think that the ROE is at 0.97%.
Yes.
We do leverage everything. I mean, we are hard on every resource that we get, whether it is productivity for employee, whether it is utilization of capital, whether it is a cost. So we've become very, very tight over the last 1.5 years on everything. So I would tend to think that we'll be leveraging capital very, very much, and we've always been doing that. The last capital raise that the bank had, apart from the promoters 83 crore which we got last year, was in 2018. So we will be focusing more on ensuring that we'll get to a 13.5% ROE, subject to any capital infusion that may happen in the future. So I'm very confident about that. And then going forward, the year hence, we are targeting 14.5, 1% more on our ROE front. So that's the outlook currently, and I don't see anything to change that particular outlook going forward.
13.5 is FY27 and 14.5 is FY28.
That's right.
All right. And credit cost, it's about 40 to 50 basis points?
So on credit cost, our model always suggested that we'll be between 45 bips and 55 bips. Having said that, we closed the year at 0.4 bips and we closed the quarter at 0.32 bips. So I don't see us crossing we'll be below the 45 bips mark that we've always alluded to in our models. It should be much below that.
Right. Let's get to the third part then. Your cost of funds and NIM trajectory from here on. What's your prognosis on how net interest margins yields go from here on? Because your CASA is still at around 23% as against industry, which is a lot higher. So what are you doing to improve your cost of funds, improve your CASA, and at the same time, if you could give us a guidance on NIMs?
So let's look at the quarter four. Our yield was 10.98 in quarter three. It is 10.98 in quarter four. Despite having a 25 bips repo rate cut impact, we kept the asset yield the same. Our cost of funds dropped down by almost 5 bips, and cost of deposit came down by 2 bips. So what we're really focusing upon is the cost of deposit. How do we ensure that we bring the cost of deposit down, still grow 20.9% of liabilities, and still keep the granularity alive? Our top 20 ratios have, again, reduced to 6.55%, well below 7% that we set for ourselves. The opportunity for the bank is in current account. I think we have not performed very well on the current account front. There is, you can look at it as an opportunity that we missed, or an opportunity that we can exploit going forward. I certainly look at it as a latter. So there's a lot of focus on growing at the 18-20% that I mentioned earlier. There's a lot of focus on granularity, and there's a lot of focus on reduction of cost of deposit. And we've achieved that even without growing the current account. Just imagine what will happen once we get our story right on the current account. It'll be a very, very different story going forward.
So CASA from 23 goes to where? What's the target here?
I will give you, our targets basically are on cost of funds and not on a one component of cost of funds. So while CASA is important, it's very easy to grow CASA by offering a very high rate on savings account. The ratio meets itself, but you don't meet the cost of deposit as criteria. So what we constantly focused on is how to widen the NIM gap. If you see, we have a 12 basis point difference between what we were in quarter four of last year and what we have now. You may say that the last quarter to Q3 to Q4 may be a bit cyclical, but the right way to look at it is the same quarter previous year to the same quarter now. And it's it's widening. When it was 3.2, I told the public that we have hit the nadir. I don't see the NIM being squeezed anymore. And from 3.2, we moved to 3.23 to 3.27, and now we're at 3.39. So you can see that trajectory, and past usually has a history, has a habit of repeating itself.
Right, Mr. Kudi, very quickly, I'm looking at your fundraise. You'll have taken an approval to do that. It could be via the QIP route as well. Which quarter do we see this happen? And what is the the quantum of the fundraise you're looking at?
Well, we've taken an enabling resolution for 1,500 crores. My belief is it will be somewhere in the region of $100 million, maybe about 1,000 crores plus. That's probably what we'll be going with. And you will see that it should be happening maybe quarter 2 end or quarter 3 beginning. That's when we probably will be going to the market. But having said that, our capital adequacy ratio is pretty strong. Our tier 1 is pretty good. And depending upon what dividend is being decided at the AGM, after giving that, we should be hovering around 14.2 for the year, and much above the internal benchmark of what the tier 1 capital should be well into the next year as well. But somewhere what you're looking at is quarter 2 end, quarter 3 beginning is probably where we probably going for a capital raise.
All right, quarter 2 and quarter 3 beginning, around $100 million is what you're looking at fundraise to obviously shore up growth for the company going ahead. So we'll monitor that as we go along. But for now, we've taken a point forward on growth, ROEs, and the NIMS target from here on, along with likely improved cost of funds for the company. Thanks a lot, Mr. Kudi, for joining in and giving us an update on the business. We take a short break, come back, get more on the markets, a lot of stock-specific action on the other side. Welcome back. A couple of these, retail companies doing extremely well right now. We have from the broader markets, Aditya Birla Fashion and Retail up around 4.5%. We are seeing some traction in Havells as well. Was a stock that declined post its numbers on Thursday and Friday. Right now, the stock is up around 2%. Crompton is the other one, which is spiking to the high point of trade as well. So broader market's doing well, even though the frontline index is seeing some sell-off from the top, led by the Nifty Bank. That itself has come off the lows. But India's power demand has surged to record levels, driven by heat wave conditions across the country. Sonal joins in to tell us more about this. Sonal.
Well, yes, the scorching heat is leading to higher power consumption across the board. India has hit a record high when it comes to electricity consumption in the month of April, 256 gigawatt. That was the consumption on Saturday, and this compares with 250 gigawatt. That was the previous record that we saw in May 2024. The government projection for April is at 263 gigawatt, and the full year 2026 peak is expected at 270 plus gigawatt. This is as per the Central Electricity Authority. Now, let's look at how this has progressed in the month of April itself. Early April, the consumption was anywhere between 210 to 220. Mid-April, it increased to 230 to 240. And April 18th, it was at around that 239 gigawatt mark. And it has been continuously increasing from here on. And April 26th is when we hit that record peak of 256 gigawatt in terms of electricity consumption. It suggests basically it's a big jump in the month of April itself, 35 to 40 gigawatt. Demand sustained above 230 gigawatt in the second half of April itself. And late month spike is driven by heat wave, the rising temperature, and this is just April, so May could be seeing higher consumption as well. Now, it's just not one city, one state which is contributing. Maharashtra's peak demand came in at 26,700 megawatt, which is among the largest contributors to electricity consumption. We have Tamil Nadu, where the peak demand was 21,000 megawatt, which is seeing strong nighttime peak pattern, where ACs, coolers are used more. We have Kerala with a peak demand of 6,000 megawatt and has seen record consumption levels compared to state's previous record itself. Now, where is this energy coming in? Is it renewable or coal? Well, coal or thermal continues to be the biggest contributor, 70 to 75% of total generation coming in from gas, coal and lignite. And we have renewables, the likes of solar, wind, hydro, which are around 25 to 30% of share overall. But considering that the summer temperature continues to be at record high, this number is something we'll be tracking very closely.
Thanks a lot for that, Sonal. Well, let's focus on Paytm. The shares are off the opening lows, but still under pressure after the Reserve Bank of India cancelled Paytm Payments Bank's license. Ritu joins us to analyze that piece of news that came in late Friday. Ritu, yes, Ritu, let's come across to you. I hope you've got your tea. Go ahead,
Yes,
Ritu.
I've got my coffee. And you know,
Ritu.
Well, let's talk about Paytm then, because RBI has cancelled their license for the payment bank. And, effectively, this brings the curtains down on an entity that has already been under regulatory scrutiny for 2 years. So don't take it as a big surprise move at all. But what was surprising is how RBI has worded its concerns. It said the general character of the bank's management is prejudicial to public interest. It flagged the failure to meet regulatory norms. It even said allowing the bank to continue is going to serve no useful purpose whatsoever. Now, what this follows is a prolonged crackdown and multiple run-ins with the regulator we've seen over the last 2 years here. Customer onboarding, in fact, had been stopped way back in 2022 itself. And by early 2024, deposits were stopped, top-ups, credits, everything was frozen, and business effectively had shut down. Now, while, keep in mind, the parent entity, 197, holds 49% stake in the bank. Promoter Vijay Shekhar Sharma holds the rest of the 51% stake. Paytm, in its statement to exchanges, has said there is no material business linkage with the bank anymore. It has already written off about 227 crores of investment back in FY24, and no one-offs really are expected either. Perhaps that's why brokerages are still upbeat on the stock. Separately, while the business is frozen, our sources indicate even now about 800 crores of customer money is stuck in the bank. Roughly half of it is in frozen accounts and the rest is unclaimed deposits. Now, in terms of impact, to sum this all up, the license cancellation itself is just an incremental move. Paytm had already migrated the UPI handle to partner banks in 24. It got the TPAP license, so UPI is on track. It got the payment aggregator license as well from RBI last year. The only real casualty, Nigel, if you look at it, is the wallet business. That was housed under the bank. It has been frozen since March of 2024. But when it was functional, it was contributing about 500 crores in annual EBITDA. So going forward, whether Paytm can eventually get back that PPI or wallet license is uncertain. And because of these compliance failures, the talks with the regulator, the conversation with the regulator is not going to be any easier.
Take that point, Ritu. Thanks a lot for that. So that's about Paytm. Stock off lows, down about 3.5%. No business impact, but sentiment impact for sure, as Ritu pointed out. With that, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Kanchi Shah joins in with the stock that she's been tracking.
So the company that I've picked for today is TVS Motor Company, which is one of the key players in two-wheeler and three-wheeler space. So what I really like about TVS is that it is clearly positioning itself for future growth, especially in the electric vehicle segment. So in electric two-wheelers, TVS is actually leading right now with around 24% of market share in FY26, which is quite impressive. With supportive policies like the Delhi EV policy, this segment should continue to scale up, and TVS is in a strong position to benefit from that momentum. What's even more interesting is their push into the electric three-wheelers now. Though it is at a small base, but the growth has been massive, with volumes growing over 1,500% in FY26, and the market share has improved to about 3% from almost negligible levels last year. On top of that, the recent joint venture with Hyundai Motor Company adds strong credibility to their long-term plans in the last-mile mobility. They are also expanding exports and has just recently entered the Zambia market, which helps them to diversify growth beyond India. Also, with El Nino expected, the two-wheeler industry is better placed in the automobile segment. Though the valuations are a little on the higher side, around 33 times FY28 PE, but given the growth visibility, EV focus and execution so far, I would recommend to accumulate TVS from a long-term perspective.
Okay, Kanchi, thanks a lot for that. For the time being, we slip into a short break. Come back. We continue to focus on markets and stocks moving around. Stay tuned. Welcome back. Well, the Nifty bank that had turned into the red, that's moved back into the green. So that's done a quick 200-point U-turn in the matter of the last 20 minutes or so. So that's good news, and that helps the Nifty as well to move to the high point of the day. From the Nifty pack itself, one of the top gainers is NTPC. I recall when I had a conversation with Bernstein's analyst, Nikhil, he had mentioned that NTPC is the stock that has exposure to various parts of the, the power play, whether it's nuclear, whether it's the core business as well. And that one's chugging along, up close to 2.5%. And earlier this morning, I pointed out that the index that had got hit very, very hard in the last few days was the tech index. So maybe, in fact, the trend is not reversing, but there was good reason to see a bit of a tactical bounce on that one. And that's the big outperformer today. It's up close to around 2%. It fell one way, so that's why this could be a bit of a relief rally. Well, on that note, though, we'll wrap up on this edition of Chartbusters. That's it from Mangala, myself, and the entire team that put this show together. You stay tuned. The team of Trading Hour is waiting by.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormas Fatakia. Joining me from the studios in Bangalore is Ritu Singh. Ritu, good morning. And it's a complete mirror image from Friday morning when everything was in the red. Today, everything is in the green. The truncated week has begun on an optimistic note. And, we've recovered almost 2/3 of what we lost last Friday. It's a very important week because of the fact that there are at least 100 odd companies lined up to report results this week. And, of course, it's a very important week on the global markets front as well.
Yes, Hormaz, good morning. There are positive global cues and, of course, the earnings that came on the weekends. All of that is helping sentiments on the street today, and the market breadth tells you about the kind of activity that we're seeing. Almost 5 stocks are advancing on the National Stock Exchange for every 1 stock that is declining. There are laggards, yes, but overall the mood of the market is positive. Bank Nifty is also recovered in trade today. It was briefly in the red. Now it is up about 26 points. You have the frontline index back above the 24,000 mark, trading with gains of about 170 points as we speak. The mid-cap index also doing well, up about 1.5%, and the small-cap index also up about a similar level. So all in all, it looks good for the markets. Leading the rally is the pharma pack. The Sun Pharma news, that's come as a big positive trigger. The media pack, IT, realty, metals, all of that is doing well in trade today. A bit of a drag is from some of the banking names like Axis Bank, weak core operating performance that the street is not taking too well. So that's one of the stocks on the downside. ICICI Bank also seeing some pressure. So is Shriram Finance. But let's go back across to Hormaz, who's standing by to put the spotlights on the top movers and shakers. Hormaz.
You mentioned Sun Pharma, and that's possibly been the biggest talking point, not just today, but over the last couple of weeks now, ever since this Organon acquisition news had broken. 7% higher on the stock. At one point was up almost 9% as well. Is the biggest single-day gain for the stock since July of 2021. Volumes today are the highest since May of 2024. Over 1 crore shares have already been traded on Sun Pharma in just the first couple of hours of the trading session. The 20-day average is only 8 lakh shares, so gaining on significant volumes. For the May series, the 1700 call option has seen its premiums go up almost by has almost quadrupled, up 265%. And almost half of those shares that have been traded so far have been marked for delivery for Sun Pharma. And as a result of this, the stock has become the most traded one on the Nifty 500 today so far, of course. And it's nearing its 52-week highs of 1851. The other big pharma stock that has done well today is Cohance Life Sciences. And it's not as if Cohance has had a very good year. It's had a forgettable start to 2026, but today's gain is the biggest since June of 2020, and the stock was up 19% on the 10th of April as well, and that's of course before the announcement of Umang Vohra as its group CEO. Now, 1.5 crore shares have been traded here so far. The 20-day average is only 12 lakh shares, and close to 30% of those are marked for delivery. So that delivery volume is also nearing close to about 50 lakh shares in today's session already. It's the before the start of today's session, Cohance was the 3rd worst performing small cap stock in 2026, was down almost 30%. Despite this recovery, the stock is still down around 20% so far this year. And as Ritu mentioned, there were some negative earnings reactions. Axis Bank was one of them, but MRPL and Supreme Petro as well. MRPL is down 7, Supreme Petro is down 6. You take a look at the volumes as well. MRPL is dropping on volumes that are significantly higher than its 20-day average, almost double. Supreme Petro too, double its 20-day average. And Axis Bank's volumes already are triple its 20-day average. So stocks going up on significant volumes, yes, but the ones that are going down are also going down on significant volumes, Ritu.
Well, thanks very much, Hormaz, for putting the spotlight on that. But let's focus on the banking space again. UCO Bank, now that is one stock in focus. We'll pull that up for you. They reported a healthy 4th quarter, mainly driven by strong loan growth, better asset quality, lower operating expenses, and strong PAT growth as well, though NII was a tad weaker. Let's bring in Ashwani Kumar, the MD and CEO of UCO Bank, for more on the company's performance. Mr. Kumar, thanks very much for your time here. Let me start with the business itself. Your NII has declined. We've seen a decline both year on year and quarter on quarter, even though advances growth was strong at about 19% growth. What is driving the disconnect there?
Good morning, and thank you for having me on the show. First of all, let me tell you that last year, March 25, and there was a substantial recovery in one of TWO accounts. And that was around 283 crore, which was part of the interest income last quarter also. So that was the reason that the last year's interest income was quite high, and this year that recovery is not there. And because of that, if you look at normalized recovery interest position, then our NI growth works out to be around on a year-year basis around 8%. And on a quarter-on-quarter basis, YOY, then it is more than 6%. So that was the one main factor, that NI was little lower and growth was little lower than the previous year.
Okay, Mr. Ashwini Kumar, what about margins? I mean, sequentially, we've seen a dip about 3% from 3.08%. It's a small decline, but deposit cost is still high. The rate cycle looks uncertain right now. Where do you see sustainable names through FY27? Any guidance you could, give us?
See, at the beginning of the year, if you look at, we have given a guidance of 2.8 to 2.9% of NIM. And that time we have given a guidance that maybe exit NIM will be around 3%. So that in December also we were above 3, and this quarter also we are above 3. And next year guidance also, again, we are keeping our guidance at 2.8 to 2.9. And we are confident that we will continue to have above 3 NIM in the next year as well.
Mr. Tiwari, please, Mr. Kumar, please stay on. We'll just cut across to Sun Pharma's management. They are getting ready for the big deal announcement that they made earlier this morning.
The Ranbaxy transaction. At that point of time, we were, of course, a much smaller company. But at that time also, we were buying another company which was almost 80% of our company in terms of size. We did not pay for that acquisition through cash, but we paid for that acquisition through a much more expensive currency. We paid through our stock. And dilution to Sun Pharma shareholders was close to 20%. Kirti will present the details to you about both the companies, and you will see that Organon, in terms of size, is more or less the same as that of Sun Pharma. In terms of profitability, is maybe even little bit higher than Sun Pharma. However, the transaction values Organon at less than 25% of the Sun valuation. So the key difference in my mind is the difference in our growth trajectory. Sun has been consistently growing and Organon has not been growing. So we know that for us to create value, the key driver is to find a way to grow this business much better than what it has been able to do. It will possibly require some investment, some focused effort to improving processes, and also many of the other tools that Kirti says we plan to use so that we can reignite the growth of the company. But what is more important for me is that it gives us a global presence. It gives us an ability to license products globally. Also launch many of the products that we already have in our pipeline in many geographies that we are not currently present in. And those are interesting geographies. However, I think some of the concerns that people have expressed to me are related to large size of debt that we might have to raise to pay for the company. We will be, of course, using our own cash, but we will also have to raise some significant debt. So I think I want to remain objective. This debt, even though large in terms of overall size, it's still going to be 2.3 times the combined company EBITDA. And we have a focused effort towards finding a way to minimize the debt by finding a way to repay the debt as early as possible. I mean, all of you who've been tracking the company for a long time, you know that we've been either a low debt or maybe a significant cash positive company for a long time. And even the debt that we got as a result of Ranbaxy acquisition, we found a way to repay it in the shortest possible time. So that would be our effort, that would be our focus. But we will still have ability to do business development deals, and we will focus on investing our investable surplus into products which are close to market and products in therapy areas of our interest. The other important issue is the ability to repay the debt. I think Kirti and Jayashri will share with you what you call combined company cash flows and what is it that we can theoretically achieve. Other important issue is the dividends that we pay. We know that for investors, especially who invest in emerging market, dividend is one of the attraction for them to invest. So whatever decision that we will take for what to do with the future dividend policy, we will factor this preference and liking of our shareholders while we take a decision, and we will keep people informed. As on today, when we've done the cash flow calculations and our desire to repay the debt, I think we've kept a provision so that we will continue to have the dividend maintained. But I think greater clarity for all of you and also subsequently questions from you will help people understand the logic of the transaction and also why we see ability to create significant value for Sun shareholders as the time passes. So thank you.
Yeah. Good morning. And thank you for coming on such a short notice. Today I feel very excited and very proud. This is a historic day in Sun journey as we are accelerating the Sun's transformation toward becoming a global pharma company. I think in next 15-20 minutes I will try to explain you the deal rationales and what is a compelling story, why these two companies are coming together. And we'll also take some of your questions, some of your doubt. So that should also help you to understand the rationale behind acquisition of Organon. So there are initial few slides about Sun. I will run them through fast and then talk more about Organon. These are some disclaimers and forward-looking statements. So all of you know Sun well. We are like a $6 billion company present in 100 countries. We are number one in India. We are number one in another 2-3 geographies like Romania. And 20% of our business comes from innovation. So what we have been focusing for last few years is to increase the innovative part of the business. And then we have a strong balance sheet, $3 billion of a cash as on FY25. So this is all about Sun. That is a business part. Second is, like you know, Sun is all driven by values of Sunology. We always focus on patients. I always look at how do we solve unmet needs of patients? How do we come with new product which will solve some of the patients' problems? And third thing which is important is the execution rigor. And Sun has been doing things well, executing it well, and that helps company to grow to the next level. If we look at our track record, which Dilip Bhai also mentioned, is acquisition of Taro, Ranbaxy. I think post-acquisition, we did well. We grew the business. We also integrated the team well on both the side. And the new Sun, which was formed, was growing faster than what we used to go earlier. This is a history of Sun, and these are not all the milestones, but major milestones is like, which includes the acquisition of the companies on the top, and on the bottom is some of the major licensing deals what we have done. So 2010 around, we acquired Taro. Then, of course, DUSA was entry into dermatology. Then in 2015, Ranbaxy, which was also like same size of the company. We were 2 billion. Ranbaxy was also 2 billion at that point of time. And then Concert and Checkpoint acquisition happened recently. Incidentally, the Illumia product, which we have licensed from Merck, was developed by Organon. So this is just a coincidence, like we are acquiring a company which developed this product historically a few years back. So what we have seen in last, say 15 years, if you can focus on the bottom part of the slide, is like from 2010 to 2025, our CAGR of revenue is 14.4%, and the EBITDA is also in line, almost like 13%. So consistently, the objective for the business is to continuously grow the business, and sometimes some of the businesses are also growing faster than the market. What's Organon? And I will spend maybe a couple of minutes on this slide because earlier part was more on Sun. So Organon has 3 business verticals. One is a women's health. And women's health is mostly an innovative part of business. In women's health, in contraception, they are number 2. In fertility, they are number 3. So that's one part of the business. Next big part is the established product business, which is almost like 50%. And there are strong 50 brands. Some of the brands I will also show is like a household name. Every SCP, doctors, patient knows this brand. And out of these 50 brands, 15 brands, 15 brands are large size, and that is 100 million and above. What Organon also helps us is our entry into biosimilars. So we become like the number 7 players worldwide in biosimilars. I think the next point is most important, is what I will keep repeating throughout my presentation, is what Organon is giving to Sun, is a global commercial presence and a global platform to commercialize our existing product as well as future products. And it also gives us entry in some of the markets where we are not present today. And one notable market is China. And I will talk about more details in China going forward. In terms of manufacturing footprint, Organon has 6 sites, 3 of them in the EU and 3 in the emerging market. And has a good manufacturing footprint where most of the product they are able to manufacture on their own. So this is a business part, but even if you look at financially, it's a very stable EBITDA company where the margins are in excess of 30% over the last 5 years. And they are generating free cash flow of about $1 billion. And most important is the history of any company. Like Organon has a legacy of more than 100 years. And in these 100 years, they have developed complex products. They have developed complex biologics, like I said, Illumia. Like that, new biologics were also developed in Organon in the past. So all of these things, how does it help Sun to achieve our transition and go to the next level is what will follow in the next part of the presentation. So 3 parts of the business, women's health, and some other innovative products. So the top 4 products are women's health product. The biggest product is Nexplanon, which is a contraception used for 5 years. Then we have product like Folistim, which is also into women's health fertility. Then there are 2 products. One is Imgality and Vitama. They are for, say, migraine, and Vitama is for dermatology.
The management of Sun Pharma there explaining the big acquisition of Organon. You also heard Dilip Shanghvi talk about how the company is looking to maintain its dividend payout to its shareholders, make provisions for that as well, accounting for the cash flows and the other financial considerations that need to be undertaken for the same. Still, the stock is slightly off the highs of the day, still holding on to gains of around 6.5%. Take a short break, return on the other side with some quick charting ideas from Somil Mehta from Mirae Asset Share Fund. Welcome back. Still holding on to some gains on the index. So it's been a positive start for this truncated week. Saumil Mehta from Mirae Asset Share Khan is now joining in for some trading ideas and a quick chart check as well. Saumil, good morning. Thank you for joining in. Back above 24,000, but still finding some barriers at that 24,100 mark. Do you believe that this recovery that you have seen from Friday's lows, do you use that to trim your positions down further, especially considering we have 2 monthly expiries lined up this week? Your call on the index and your stock recommendations as well.
Good morning to everyone. The overall fall which we've seen from 26,300 to 22,200 levels, we've almost reached 61% retracement in this bounce. And now I'm taking this as a bounce. I'm not taking this as an overall reversal or a medium to long term reversal. These levels, these hurdles, 200 daily exponential moving average is at 24,800. 61% retracement level is around 24,750. So there are some hurdles at this point of time, and I'll be expecting markets to stay range bound between 24,500 and 23,500. So it's a broad range, and I'll be expecting markets to stay in this range. However, we would see stock specific, sector specific moves and sharp moves like we are seeing in metals or pharma. So I'll be expecting, and I will be focusing more on sector specific and stock specific action at this point of time. Overall, the trend still remains down in the medium to long term outlook, where I'll be expecting the lower levels. However, in the very short to medium term outlook, a range bound movement between 23,500 and 24,500. I have two stocks on the long side because we've taken support around the lower end of the range. And the two stocks are, the first one is L&T. L&T has formed a flag pattern and expected to break on the upside, taken support at 10 daily exponential moving average. Stop loss would be 4,000, some very small stop loss, and target would be 4,250. The second stock is Max Healthcare. Max Health has also taken support at some short-term averages, 20, 40, and 10 daily, consolidating for a little while now from last couple of weeks. I'll be expecting this consolidation to break on the upside with a stop loss of 990 and target would be 1060.
Saumil, thank you very much for joining in with that. We appreciate your time here. Let's slip into a short break on that note. Up next, we're going to discuss the cancellation of Paytm's payment bank license and the repercussions it will have with Sachin Dixit from JM Financial Institution Securities and Abizar Devanji from Neostrata Advisors. Welcome back. Let's focus on Paytm Payments Bank. Now, the Reserve Bank of India has cancelled their banking license, citing various KYC and other lapses. Now, while the entity had been dormant for nearly 2 years, it merely formalizes the multi-year crackdown that we've seen from the Reserve Bank of India on the company. But keep in mind, there is no financial impact. However, the language of the RBI press release is what has got some people worried. Let's take this, pick this up with Sachin Dixit from JM Financial Institutional Securities and Abhizer Divanji from Neostrata Advisors for more on what to make of this development. Gentlemen, thanks very much for your time here. And Abhizer, just to start with you, what do you make of the move? I mean, of course, we've seen the multi-year run-ins between Paytm Payments Bank and the Reserve Bank of India. Now, finally, this license cancellation coming in. Yes, there's no financial impact, but sentimentally, is this an overhang that will remain now?
I don't think the overhang will remain. I think the larger issue and RBI's bigger messaging here is that clearly they were not eligible for a payment bank license, or they did not behave themselves well they were running a payment bank. And the harsh language, the way I would interpret it, is to actually more exemplifying the others to say, and you have models developing like Jio and Airtel, to say, do not compromise on client acceptance and AML. KYC and AML are the most important issues because that is the gateway of somebody coming into the banking system. And I think the importance of that has been highlighted more here in the RBI letter. It's more exemplary in my view to others. I don't think it will impact the existing business model or their ability to apply for other regulated licenses.
Well, Sachin, let me ask you then, because RBI's language is very unusually blunt and harsh. It doesn't really typically put down these kind of views on paper, which it has. Do you think this will have some sort of implications for any future license applications? Of course, they already have payment aggregator, but let's say they want to apply for a wallet or PPI license again. Is this going to be an overhang, you think?
Sure, I think a couple of things to highlight here, right? The first thing is that the language, if you look at it, is largely similar to what they used when they initially put that pause on Paytm Payments Bank. Now, if the current action largely is that, okay, whatever we did 2 years back, now we are just reiterating it, I do not see why they will logically want to dilute that language, right? Unless they are diluting the impact or the action as well. So I think that's one. Probably there was no incentive from RBI's angle to dilute that language. Secondly, if you look at it, there was already sufficient decoupling that had happened between Paytm Payments Bank as well as the listed Paytm entity that we have, in the sense that the entire sort of shareholding structure of Paytm Payments Bank was relooked at. Vijay Shekhar Sharma had already resigned from the board and there was minimal overlap. Most of the new executives who had come in Paytm Payments Bank were actually people who have worked previously in sort of PSUs as well as other banking entities. So I think that decoupling had already happened. I genuinely do not think this actually impacts anything on the business that Paytm runs as of today. And I do believe rather from the overhang angle, if there were people at Paytm who were actually waiting for Paytm Payments Bank license to come through again, or basically that embargo to go away, they might actually now start to look at alternate options, whether they want to tie up with other banks to do any sort of wallet sort of businesses, or they even want to apply a PPI license separately via the 197 communications limited entity.
Sachin, you mentioned, yes, that there would be no financial impact. But now, does the focus of the street shift from Paytm sustaining its profitability that it has managed to achieve over the last couple of quarters? Or does the focus now shift back to this as a major overhang as to the further approvals that are pending for Paytm also? That
still pending with the RBI or any governmental entities as of now. I think most of the approvals are already in place. At least whatever we can forecast or whatever we can see as an outsider, they're already in place. And as I mentioned, like there was sufficient decoupling between Paytm Payments Bank and 197 Communications. So I believe that if any approvals are applied for, I do not see this becoming an overhang. Rather, on the other side, I'll highlight that basically the current listed entity that we have, there is already enough visibility of how the numbers are going through, and which is why I think every analyst, no matter what their rating or view on Paytm is, has been highlighting that there is no business or financial impact on 197 from this.
Abizar, the very fact that the action was first taken in 2022, the business was completely stopped in 2024, but the license cancellation is only coming 2 years later after that in 2026. Do you read this as regulatory patience? Allowing customers to withdraw deposits, etc. We understand, but what is the cost of a wait this long?
No, frankly, the cost was nothing because the operations had stopped. What's more important is that RBI did not want any kind of a panic situation. It actually did it in a nice way. It first asked them to stop accepting new deposits, continue with the existing ones, then ask the existing ones to move out, and then stop the license. I think RBI likes to do this in a more regulated way rather than just say that let's immediately remove the license. But Paytm saw the signals clearly, and they had stopped doing any business with the Paytm Bank any which way. So there were some deposits in the Paytm Bank that would have now been realized into cash. Anyway, there were government deposits. So I don't think that will have an impact. It is just RBI's way of doing these things. But the sterner message that goes through to everybody, especially newer business models that are evolving now, is that KYC becomes a very, very important aspect. Because, as I said earlier, it is the gateway to banking. It's the gateway to get, money into the official system. And that, I think, was a big responsibility which RBI seems to think that the fintechs are a little lax about, particularly Paytm was. So, we spoke about the fact that you had more PSU people come in and the management change. What is management change when the whole ecosystem is interdependent? Very, very clearly seems to be,
I just wanted to point out
on-paper compliance of revenue, of the regulation.
Abizar, I just wanted to point out there is this silver lining, so to speak, that some brokerages on the street are talking about when it comes to this action, and that is this clears the way, in Bernstein's word, it clears the way, to apply for an NBFC or a PPI license, which can then pave the way for certain products. Do you think when a payment banking license has been cancelled with such harsh language, I know you said it may not weigh on future licenses. Is NBFC something that can realistically be on the table for a company like Paytm?
It can, of course, but by the way, earlier also there was no real restriction. I mean, we have now Airtel, for example, which has a payments bank in the group, and it's also going to apply for an NBFC license. We have Reliance Jio as a model which exists. I don't think RBI is in any way not saying that you should have these two separate things. The funds can't be commingled because they're different entities, and that's accepted as a concept. So I don't think that really is the issue. NBFC can always be done. Whether they will be competitive from a cost of funds basis or should be simply be loan service providers to people who have better cost of funds is the business decision that Paytm will need to take.
Okay, Sachin, let me also quickly get you on the bank earnings that have come in. Overall, it seems like a good set of numbers. All those concerns about margin compression, etc., not really playing out. Asset quality holding up across the board. Business growth has been strong. With one-off surprises like Axis Bank, of course, where the core performance was a tad weaker. What did you make of the numbers, especially in light of the asset quality? Because, the impact of the West Asia crisis is obviously not showing up yet. Do you think it could show up in the next couple of quarters, and then does this reverse?
Just to flag it up, I look at the internet space. I do not look at the banking space broadly, so not really in the place to comment on this. So probably I'll pass on this question.
Okay, sure. My colleague Hormaz also wanted to come in. Hormaz.
No, so the question being for Sachin is now where do you stand on the stock in itself? This dip that has come in today, the stock has recovered from the lows of the day, but the bottom line being that despite recovering from those early 2024 lows of 300 rupees, the stock went up to 1400. Now it's back at around 1100 odd. Do you use this as a buying opportunity? Because at the end of the day, it has still been a value destroyer. The IPO price is 2150. It's still well below that.
Yeah, agreed. So I think at the time of IPO, I don't think we were positive in how we looked at the IPO pricing. It was just a matter of how the markets looked at it at that point of time. Broadly, Paytm at this value still remains one of our top picks. Largely the reason being that the company remains very, very well positioned in terms of the merchant side of the ecosystem. They continue to gain market share even today, despite whatever disruption we have seen since fiscal year 24, when the initial RBI halt on Paytm Payments Bank came through. I think the company has continued to grow rapidly. They have improved profitability. Gradually, I think people are realizing that Paytm is not really a core book lending story, right? Paytm is a platform, and which is how you should look at it, and which is also the reason why that the company continues to deliver on a very high operating leverage. Like if you look at contribution margins, in most of the internet space that we look at in India, I do not have too many companies which can compete with Paytm in terms of the 55 odd % contribution margins that the company is reporting. So broadly, I think it's a function of realizing that the company has a very, very long-term growth story. Market position remains unchallenged. Rather, they continue to gain that market positioning. And you will see numbers will also turn around in that period of time. From 1400 to 1100, I think the journey has largely been slightly truncated by how some of the regulatory action has come through. Not directly related to Paytm, if you think, but broadly PIDF sort of incentive going away and all. Some of those things have played out probably.
Yeah. All right, we'll leave it at that. Sachin and Abizer, both of you, thanks very much for joining us here to help analyze the move on Paytm. On that note, we'll slip into a short break. Back with bond markets with Manisha Gupta in just a bit.
Welcome back. Shifting focus to the bond markets as promised. Manisha Gupta is here with the latest. Manisha.
Well, the Indian government bonds have opened slightly on a weaker note on expected lines, and this is because the US and Iran peace talks have kind of stalled. You have the crude oil prices which have jumped back above $106 and even $107 a barrel. Inflation concerns still strong onto the market, and the rupee in the previous week put the steepest weekly decline since September 2022. And that's exactly what the markets are working with right now. In addition to that, the street will also watch out for the state government raising 14,500 crores via debt auction This is happening on 28th of April. In the meanwhile, I have a list of private bond issuances as well, which you can take a look at. Mahindra and Mahindra Financial Services is looking to raise 10 billion rupees, and they are doing this via March 28, 2029 bonds. Spandana Spurti Financial Limited is looking to raise 5 billion rupees, and they are doing this via 26 April 2028 bonds. Kirtana Finserv should come in on your screens. 1.25 billion is what they're looking to raise from 27 September 2029 bonds. And then you have Purple Finance
taking on. A lot of the shareholders have bought Sun Pharma stock because you're a net cash company, you're a safe investment, and now you're a net debt company. I know you've given a timeline, a brief timeline in terms of how you'd like to reduce the debt, and its net debt is at 2.3 times, so that's comfortable for you. But a little more granular details in terms of the journey on debt reduction, one. And two, the revenue for Organon has been sluggish for the past 3 years on the top line, $6.2 to $6.4 billion. What is the plan to possibly build up all of the verticals from women's health to established brands to the biosimilars business?
No, I think, Ekta, you know that as a company, we ourselves are debt averse. However, we are not risk averse. So at some point of time, when we think that the debt will help us scale the business and change the trajectory of the business, we are comfortable with debt. Not debt alone, but also based on our internal assessment of the future cash flow and our ability to repay the debt or bring it down to a much more reasonable level. Because I think even like what Jayashree explained, when we are raising the money or we will pay for the company, the debt to EBITDA is 2.3 times. It's not a very high debt ratio, even though the amount of debt would be significant. But we should be able to repay the debt within a reasonable period of time. And we've been disciplined about repaying debt in the past, and we'll continue to be disciplined post the closing of transaction. Maybe Kirti can respond to the next question.
Yeah. I think, in my view, this is a very important question, Ekta. What you're asking is how do we grow business? And they have been stagnant for last 4 or 5 years, or a very small growth of 1 to 2%. So I think if you look at, they have 3 parts of the businesses, and innovation, they are big in terms of women's health, then established brand and biosimilar. And I will explain you. In innovation side, on women's health also, they have done in licensing of a couple of new products. So there is a product called Medulla, and this is all in public domain. Then there is a product called Nilemdo, they have in license, so that business can grow from where it is today. That's one part of it. What I see as a much bigger opportunity is on innovation side is our ability to license products globally for the entire market, like for 140 countries on both in terms of women's health and other therapeutic areas. Second side on innovation is they also have a product called Vitama, which fits very well with our dermatology portfolio. And third product is Emgality, which is a different therapy area, it's a migraine, but it's a good innovative product with a patent protection, and it has a long run-up to grow further. So now, the Sun's responsibility, or I would say, is to how do we add more product into this basket that the innovation keeps growing. And that's possible for us to do. Like in women's health, there are more than 100 opportunities. Maybe all may not come to the market, but even if a couple of opportunities which are close to phase 3 or close to market, if we can in-license, this part of the business will grow. Second come the established product business, where the 50 or 51% of the revenue comes from it. There we have a lot of ideas in terms of line extension. These are very well-known brands. See, if I launch a new line extension or new formulation or even new combination of the product, we can have this brand grow from where it is today. In some of the market, they are growing, but this growth can even further fuel and do it. And third, of course, biosimilars, they are growing 13%. And biosimilar, as I explained you, is a much bigger opportunity. In terms of number of product getting LOE by 2035 is almost 320 billion. So we have to consistently and constantly look at what are the new biologics I can in-license and make them successful. It's a good business. They are worldwide ranked 7th, and we, with our licensing and our ability of marketing, we can improve this further also. So I think broadly for everyone, I think there is a good opportunity for us to grow this business from where it is today.
Anurag Joshi, ET Now. Congratulations on the deal, Mr. Sanghvi. I had two questions. Sun Pharma will be making a global entry into biosimilars. Could you give us more details about your strategy about growing the biosimilars business globally? You have a small business locally. In terms of the global pan out, what will that be? In terms of new markets, you mentioned China and South Korea. Again, the women's health business over there, how would you grow these business? That's one part of my question. My second question is on the debt. What will be the structure? What will be the remaining tenor for Sun Pharma to repay the debt, given the fact that you are a net debt zero company currently and you'll be taking debt on your books? And will this be a leverage buyout? Will you be taking the loan on the books of Organon?
So I think we've shared our view about biosimilars with investors in the past. The reason why we were not investing in biosimilars is there was no clarity about substitution as well as interchangeability. There is now greater regulatory clarity on both of these issues. At the same point of time, potential cost of registering a product is likely to come down because many of the products may qualify to potentially avoid clinical studies. Now that is the largest component of the investment required to bring a biosimilar to market. So this is something that we've been saying, that when there is greater clarity, it will justify the investments that are required. But if we have to develop our own biosimilar, then it's a minimum 6, 7, 8 years project. Because anything that you start developing will take time for coming to market. So I think like what Kirti says, we will continue to look out on opportunity to in-license product from people who have ability to bring this product to market, to be in first to come to the market. So that is the focus and the priority. For rest of the question, I think finance and all, I think Jayashree can respond.
Sure. Organon has a debt, gross debt of about $8.5 billion. And with a cash of close to $900 million, the net debt is something that we would be looking at refinancing. At this point in time, our thought is also to work with your existing bondholders to see if there is a possibility for a swap. We have to go through this process over the next few months. And for the balance, we would be issuing fresh debt. So that is the way we are thinking.
Mr. Sanghvi?
Thanks. So can I request Satviki, do you have a question? Yeah. No.
No.
Hi. Hi. Yeah, thank you. Firstly, congrats on this deal. Everyone had been sort of keeping an eye out for this. I just, what really struck out is the China market opportunity that, arises from the deal for Sun. And I think in the presentation, you also mentioned that one is, of course, using Organon's portfolio to expand Sun's reach in the China market, and also to tap the innovative portfolio and the landscape that China provides. Could you shed a little more color on what will that look like, say, in the next years to come? How are we looking at getting more innovative assets from China, or in what specific products is Sun looking to enter China through Organon's already existing reach?
I think today is not a business development session for me to explain you what product we will license. But broadly, I will guide you. Is like As you know, after UV, China is also becoming a place where there are a lot of innovations are coming, both in terms of biologics and small molecule, and they are across therapy area. A large part of the innovation, of course, is in oncology, but there are other interesting areas. I will give as an example is like in cardiology.
Slightly off the highs of the day is the index, but still holding on to that 24,000 mark. That's the most important one to watch out for on the downside. The Nifty Bank, though, is at the lows of the day. That continues to remain topsy-turvy, and that is having a bearing on what the Nifty is currently up to. So, choppy moves on the Nifty Bank. Take your leave on this edition of Trading Hour from Ritu and me. Thank you for watching. The team of Halftime Report takes the action forward on the other side.
Stock shrug off the stalling of US-Iran talks as focus shifts to deals and earnings. Mid-caps lead the charge with healthcare, utilities and IT seeing strong gains while financials and energy lag.
Sun Pharma will buy New York-based Organon in a $11.75 enterprise value deal with equity value at $3.99 billion. Sun says the deal will be EPS accretive and will make it number 3 in women's health and number 7 in biosimilars globally. The street gives a thumbs up to the deal that will double Sun's revenue to over $12 billion.
Reliance Group Chairman Mukesh Ambani says that the company is advancing steadily to list Jio platforms while commenting on the Q4 performance that saw strong growth in digital and retail, even as OTC took a knock from the Iran war.
RBI revokes the license of Paytm Payments Bank and proceeds to wind up the company as it functioned in a manner detrimental to depositors' interests. The harsh comments on the management spooks the stock of group entity Paytm.
India's peak electricity demand scaled to a record 256 gigawatt on Saturday, inching closer to the government's projection of 263 gigawatt for April. Power demand is expected to peak at over 270 gigawatt in 2026. Stocks of power producers climb up.
Hello and welcome. You're tuned into Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me today is Vinny Motiwala. Vinny, good afternoon. Well, we continue to be in the green, but we are definitely off the highs of the day. 24,000, that's an important level to watch out for. We're still above that, but we have slipped below that as well. So it's been quite choppy so far. Bank Nifty is the one which is leading to the cuts from the highs of the day, though that too has recovered from the lows, but continues to be very volatile. Absolutely flat right now, but it has come off sharply from the highs of the day. Nifty Media is the top gainer, followed by Nifty Pharma. Of course, the big deal. We'll discuss that in greater detail with respect to Sun Pharma. IT doing well as well. And the broader markets also are contributing to the gains, with the mid caps and the small caps outperforming today.
Absolutely. Both of them outperforming, and that's why the advance decline ratio is still in the favor of advances versus declines. Though the market, like Sonal mentioned, has come off the day's highest point. We'll watch out for the 24,000 level as well. And IT, today that's managing to hold on to very good gains as well. So let's watch out for overall the trend shaping up. But we have a very exciting lineup for you all on the show today. First up, we'll start we'll bring in into how naphtha acts as a key inflation trigger amid the ongoing West Asia conflict and how it impacts petchem space. Moving on, we'll also speak with the management of Supreme Petrochem on the back of their Q4 earnings, and in our movers and shakers segment, we will put the spotlight on Paytm, Tanla Platforms and MRPL, as well as a slew of financial companies that reported their Q4 earnings. First up, let's go across to Hormaz, who's here to take us through the important stocks that are moving around in the trading session this afternoon. Good morning. Good afternoon, sorry.
It's turned out to be a good morning, at least for the markets in the first half. But of course, they are coming off the highs of the day, yes. But there are plenty of movers in today's session. Look at Cohance today. Umang Vohra is now the new CEO of the company, and they recovered some of its losses now of 2026, but it is a 20% upper circuit now for the stock. And some of the others that are doing well today is M&M Financial. That is possibly the biggest positive earnings reaction that we have in today's session. 8% higher on the stock, the biggest single day gain that the stock has seen since October of 2022. The other positive earnings reaction is India Cements. The stock is up double digits, 12.5% higher. EBITDA per ton is at a 17-quarter high. The parentage of Ultratech starting to show some impact, and it is among the second best performing stock on the Nifty 500 in today's session. Can't not talk about Sun Pharma. The management is continuing to lay out clarity on their debt repayments, on the dividend payouts, still holding on to gains of 7%. The top Nifty gainer at the highest point of the day. The stock was the biggest single day gain since July of 2021. Some negative earnings reactions, MRPL and Supreme Petro. We'll hear from the management of Supreme Petro shortly, but among the worst performing stocks on the Nifty 500 in today's session. Shyam Metallics is a stock that's doing well today. Goldman Sachs has initiated coverage with a buy recommendation, 8% higher on the stock. among the top performers on the Nifty 500 in today's session. And lastly, stocks that are 52-week high. There are plenty of them, mind you, but power as a theme continues to dominate that list. 6.5% higher for Torrent Power, 5% higher for CESC, and Engineers India 2 packing in a punch today, 6% higher on the stock at a 52-week high.
Okay, all right. Interesting names there. We'll discuss some of them in greater detail through the course of the show. Thank you so much, Hormus, for joining in. But of course, the first stock that we have to talk about is the top Nifty gainer in Sun Pharma. Finally, that big acquisition has been announced by the company Organon, which is bought at an enterprise value, or the acquisition is announced at an enterprise value of $11.75 billion, where the equity valuation is close to $4 billion. Let's talk about the company that has been acquired as well. It is a spin-off from Merck and Company in 2021, and it is an all-cash transaction now, which will be done to acquire all the outstanding shares. The deal is approved by boards of both the companies, and they expect it to close by early 2027. Important to look at the financials as well. For Organon, the revenues have been to the tune of $6.2 billion. EBITDA has been around $1.9 billion. They have a debt which the company will be taking, of course. That's the big concern as well for the street, $8.6 billion. Cash has been at $574 million. So now what happens after the acquisition? The combined positioning looks like this. Revenues at $12.4 billion. It makes Sun Pharma amongst the top 25 companies in the global arena. And it will make innovative medicines contributing to around 27% of the total revenues for Sun Pharma. The key difference is that Sun has been growing, Organon has not been growing. This is something that a lot of analysts have highlighted as well. This will, according to the management, require some sort of investment that will come in. Investors have, of course, spoken about a lot of issues around debt that the company will be taking. The management says debt will be 2.3 combined EBITDA. They will find ways to repay the debt as soon as possible. They indicated to our colleague Ekta as well that they are debt averse but not risk averse, and they will be very disciplined when it comes to repayment of debt. And that is something which the street likes. Dividend payments will continue, and that's why the stock continues to surge up 7% in trade as we speak.
Absolutely, that's about Sun Pharma, but we have one more pharma company that's in focus today. That's Cohance Life Sciences, and this has come in and they're locked in upper circuit if you look at it. Why? Because now they've named Umang Vohra, who will be taking charge as this group CEO of the companies from 20th of May, as well as the new executive chairman, and that's going to be from 1st of May. Umang Vohra has spent almost a decade with Cipla before this. He's a pharma industry veteran as well. He's worked a lot in terms for diversifying Cipla over the last decade into more of a global player. When you look at the EBITDA margins from Cipla, they've almost doubled and now around at 25-26% versus 2015-16 as well. So Vohra will come into place. He had resigned from Cipla in October 2025 and completed his notice period on 31st of March. So 1st May is executive chairman date and 20th May as the group CEO of the company. Vivek Sharma, who is currently the Cohance CEO, will remain in the company as a special advisor for the next 9 months as well. He is resigned due to personal reasons is what they've highlighted. But do not forget, today the stock is locked in upper circuit. But before that, last 1 year, last 6 months, when you look at it, it's not been anything good, right? 1 year, the stock is down almost 60%. 6 months down almost 50% as well. In the last month, it's 42% up, including today's 20% as well. So do not forget that. So 20% in the last 1 month, we've seen some bit of attraction, and today itself 20% uptick further. So that's the main reason that we're seeing focus coming in for Cohance Life Sciences, appointment of Umang Vohra as the CEO.
Okay, so Pharma Index, one of the top gainers today. Thank you, Vinny, for that. We'll slip into a short break. On the other side, a deep dive into how NAFTA acts as a key inflation trigger and the ongoing West Asia conflict, how it impacts the petchem space as well. Stay tuned for that.
Welcome back to Halftime Report on CNBC TV 18. Now let's shift focus, and the West Asia war has impacted downstream segments more than upstream, with the key petrochemicals and products seeing supply shortages and force majeure announced by major players. Sonal is going to be putting the spotlight for us on such petrochemicals, which is used across different sectors and has started impacting prices as well. Sonal, over to you.
Your clothes, your phone case, the packaging your food came in, the fertilizer that grew it, they all trace back to one petrochemical that people do not talk about so often. It's naphtha. And right now, its supply is under pressure, and it is showing up in your inflation numbers and your grocery bill. So what is naphtha? It's a crude oil distillate, which is between petrol and kerosene in the refining chain. When you put it through a steam cracker, you get ethylene and propylene, which are the building blocks of virtually every plastic and synthetic fiber on the planet. Globally, the naphtha market is worth $182 billion. Petrochemicals alone account for nearly 70% of all naphtha consumed, and it is expected to grow. Asia is the engine. The region consumes over 53% of global naphtha. China, India, South Korea, Japan. As of 2025, more than 60% of Asia's seaborne naphtha was coming from one place, that is the Middle East Gulf. The largest suppliers, Russia, Saudi Arabia, UAE, Qatar, Kuwait, Russia, post-Ukraine sanctions. That has been exporting 30 to 35 million tons a year, becoming the world's single largest naphtha exporter, supplying Asia at a discount. Naphtha took a direct hit post-West Asia crisis. Gulf naphtha premiums surged to $42.75 per ton, that is a 2-year high. Every $10 rise in oil lifts naphtha-based plastic production costs by 300 to 500 yuan per ton. And for manufacturers in China, South Korea and Japan, this is something which is not so good. For India, the situation has layers. We consume 12 million tons of naphtha every year, but we produce them domestically through Reliance, IOC, HPCL, BPCL. But we import about 3 million tons. Additionally, largely to feed our petrochemical plants. India had already pivoted to Russia. In FY25, Russia supplied more than 50% of India's naphtha imports, up from just 14 to 16% the year before. India is the 7th largest importer of naphtha. But prices are higher, oil prices have jumped sharply, and that has led to higher prices of naphtha, and the transit from Strait has become difficult. IOC had committed 61,000 crore to a naphtha cracker at Paradeep. Haldia Petrochemicals had locked in a 10-year, 2 million tons a year deal with Qatar. We need to understand what happens to these deals. Gulf naphtha premiums, as I earlier said, have surged, which is at a 2-year high. Asian plastic producers have already started declaring force majeure. South Korea restricted naphtha exports for 5 months to protect domestic supply. Qatar Energy, which basically has signed the largest naphtha supply deal in history just months ago, 18 million tons for 20 years with Shell, declared force majeure on all exports. So we don't know what happens with this deal as well. Now the sectoral impact. Plastics and packaging, every FMCG sachet, every PET bottle is downstream of naphtha. Cost inflation hits manufacturers within weeks, and it reaches the consumer shelf within 2 months. Textiles, polyester, nylon, acrylic, all naphtha derivatives. India's textile exporters are facing a cost squeeze at a time when they can least afford it. Fertilizers and food. Naphtha feeds ammonia synthesis, ammonia feeds urea, urea feeds the farmer. Over 30% of global urea passes through the Strait of Hormuz. Fertilizer prices are already up 35% globally. That cost lands on the kharif crop. Petrol. Naphtha is blended directly into gasoline. A continuous naphtha shortage impacts refinery economics and makes operations difficult. Chemicals like benzene, toluene, xylene, all are naphtha derivatives and causes a feedstock issue for the industry. So this is something we are seeing at the wholesale price inflation level as well, right? Which has increased in the month gone by and will ultimately impact consumers as well. It is one chemical, but making everything cost more.
Okay, thank you so much for that, Sonal. Giving us a beautiful explanation over there, a lot of details and something that is very interesting. So thanks so much for that. But let's move on and actually sip into a very short break. On the other side, we will be joined by Supreme Petrochemicals Rakesh Nayyar, who is joining us to talk about their Q4 numbers. Stay tuned in.
Welcome back. You're still tuned into Halftime Report. Supreme Petrochem is the management joining us on the show now. The company reported a good set of Q4 numbers. Profit rose 56% YOY. Margins expanded as well. But a lot happened beneath the surface as well. To understand what the supply situation is looking like, how is the West Asia war impacting the company and the sector as a whole, we are joined by Rakesh Nair, who's the ED, Supreme Petrochem, to break down the numbers for us. Mr. Nair, good afternoon. Thank you so much for joining in. It's been an eventful March for the entire sector and the company as well. If you can explain to us what led to this surge that we are seeing in margins, how has March been, how has April been, and if you can talk at a macro level and at a company level as well about the current demand-supply situation.
Good afternoon. You all are aware post-West Asia war, the raw material supply from the Gulf stopped totally, and the only source available was, to some extent, Asia and China only. The quarter always is the fourth quarter is always good for us because that is the peak season for the OEMs. So that resulted in the numbers, what you have seen this year. And as far as the raw material supply is concerned, it's nothing is coming in from West Asia. Now, only source of supply at the moment is China for us. And coming to April, the raw material availability is tight, but so the market is also not very good in the sense that the OEMs are buying, but the non-OEM sector is, their demand is heavily dented right now. One, because of the high prices of the raw material, which is in turn results in the prices of the finished product, and also the labor not being available, and so some processes, the gas not being available. So the non-OEM sector market is taking a big dent in the month of April.
Okay, so non-OEM sectors is taking a dent in the month of April. So you mentioned increase in raw material prices as well, right? So monomer prices, how are they in terms of increase since West Asia war? What's the increase been there? And anything in pricing trend that you're expecting going forward as well?
See, before the West Asia war started, the prevalent prices were around $1,000 a ton, be it Gulf or be it the Asian markets. But post West Asia war, the prices in the month of March jumped to $1,650. But currently they have somewhat come down, and the current landed price in India is around $1,500.
Okay. What is the indication now? What are your customers saying? You do have an export market as well, Mr. Nair. If there is demand, are you able to supply it? Is any exposure to the Gulf countries as a customer?
We can supply not to the Gulf because no shipping is available, but to the European markets. Currently, we are concentrating only on the domestic market because the raw material availability is to be balanced. But then, yes, we are supplying some small quantities to Europe, and the prices in line with the raw material prices have also increased in the export market.
So, what about the price increases, right? If your raw material prices have increased, are you passing on any price hike to the customers? If yes, have you taken any so far? And what is the expectation maybe for Q1 as well for price hikes?
See, the price hike is happening. Whatever now the raw material is coming at a higher price, the international prices have also gone up. So we are able to pass on the prices. Only in the month of March since we have some contractual customers, so part of the quantities we met our contracts based on the raw material availability with us. But now onwards, we are right now not entering into any contracts because the raw material pricing and availability both are in a band of uncertainty right now.
Mr. Nair, you did see a 2% volume growth in FY26. You said OEM demand is strong, but non-OEM demand is not so good. It is seeing a dent. What does that mean for volume growth in FY27? You do have some new commercial updates that have come by, capacity expansion that has come by as well. With considering the volatility, are you in a space to give us any guidance in terms of volume growth?
If the post-Asia war and if everything settles down by, say, June and second quarter onwards, we are in a normal space. We expect that we should be still doing around 8 to 10% of volume growth this year.
Sorry, can you repeat that number again, Mr. Nair?
I'm saying that if the normalcy returns by June, sadly, from second quarter onwards, if everything is normal, pre-West Asia wars type, then we will be able to do around 8 to 10% growth in volumes this year, mainly on the back of our ABS.
Okay, all right. On the back of the ABS capacity that has come by, how is that going along? You did see some repairs that would come by. What is the revenue potential that is coming in from there? And I would just like our team to say there has been an impact of West Asia war. The supplies from Gulf have stopped and China is the only one. So that ticker will change that in just a bit. But Mr. Nair, coming back on the ABS conversation, how much is it contributing right now? At peak, it was going to be around 800 crore rupees.
Yes, right now, because we are operating only at 65% of the rated capacity, since one of the critical equipments had a failure and that is still under repairs. So our collaborators gave us another arrangement by which we are able to operate at curtailed capacity, which is 65% of the original capacity. And we expect that at least we should be able to do almost 80% of that 65% this year.
Okay. You'll be able to do 80% of that right now. Okay, yes. Sir, in terms of overall value-added contribution as well, how is that going to be shaping up? It was expected to be at 35-40%, right? Now, obviously, with this ABS project also kicking in, what is it currently and what is the expectation maybe for FY?
We are close to 40%, but with the ABS and ABS compounds increasing, we expect that we should be inching up to around 44 to 45%.
44 to 45%. How does that help margins, Mr. Nair? If you're going to value-added products, then your commodity becomes the raw material, right? So that means there will be a margin lever for the company. Considering that commodity makes the margins very volatile, once you move to VAP, the margins will be more stable. What kind of margins are you guiding for?
I won't comment on the margins because the way currently the markets are, the raw material prices are, the global scenario is very different. It's very difficult to predict the margins at the moment. I would rather stick to the volumes. If the second quarter onwards things are very normal, we should still be doing around 8 to 10% volume growth.
Okay, 8 to 10% volume growth maybe is what we'll keep an eye out on. But sir, thank you so much for joining us this afternoon, talking to us about the current situation in terms of what's happening on ground, as well as the outlook for the company going forward as well. Thank you so much for that. On that note, we're going to step into a very short break. After the break, we'll have Axis Securities' Rajesh Paulvia, who will join us to talk some trading strategies on the other side. So stay tuned here. Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty is managing to hold on to the 24,000 level. But what are the important cues in the world of F&O? Let's go across to Mangalam, who is at the F&O desk to take us through all of that. Mangalam, afternoon.
Well, if you look at, the way the market's moved right now, it's not particularly bad. The Nifty is holding on to good gains, despite the Nifty Bank having actually a bit of an off day in today's trading session. The mid-cap index is doing a lot better. The advance decline firmly in favor of advances. And add to that, India VIX, which had seen a big rally all of last week, is now cooling off as well. So the fear is cooling off. And now where the market is, after a big rally all of, the week before last, and then a decline from the last week highs, the important part is that we're consolidating between the 20 and the 50-day moving average for the Nifty. The Nifty 20-day moving average is 23,635. 50-day moving average is 24,284. I think this is the broad range that the street will be working with, and that will be led by the Nifty Bank, which again is between the 20-day moving average and the 50-day moving average. 56,000, an important level from a Nifty Bank standpoint. For the option writers of the Nifty, remember, these are options that expire tomorrow and tomorrow's monthly expiry as well. The 24,100 call, very active, and 24,000 put, equally active as well. So if you plug in the premiums out there, 23,900 to closer to 24,100 is 24,200 thereabouts is the broad range, again between the 20 and the 50-day moving average on the Nifty. Amidst all of this, we are seeing a lot of stocks seeing long positions being added. Tata Power is one of them. Emphasis in OFSS. Remember, IT, after a pummeling that it saw last week, is coming back in today's trading session. So some bit of long positions being added in mid-cap IT names. Emphasis and OFSS stand out in that. And a lot of short positions added in a couple of these financials. AU Small Finance Bank and Chola Invest are the ones that stand out in terms of short position additions.
Take that point. Thank you so much for joining us with those cues, Mangalam. It's a good time to get a technical check on the markets as well. Rajesh Palya of Axis Securities is joining us now. Rajesh, what next? Nifty Bank has been quite volatile, leading to the volatility that we are seeing in the Nifty as well. Do we end the day with levels above 24,000, or it could continue to be very choppy?
Yeah, hi. So looking at the behavior of broader market, we believe that, if Nifty continues to trade above 24,000 level, I think in second half of the trade, we could see this rally to extend further, and possible extension of rally towards 24,150, even 200 we may see in the Nifty itself. So we are holding bullish view as Nifty managed to hold its major put-based concentration in the recent correction. So 23,800, 23,900, that's the major put-based concentration, and Nifty has managed to hold that support area. So I think this pullback may extend further, and towards expiry, we hold our view that Nifty may able to again retest 24,200, 250 mark in next couple of days. So that's the view on the Nifty. But Bank Nifty is looking quite volatile. But again, here also the important supports are defined in the recent volatility. 55,800 is the important level to watch for Bank Nifty trade. If it continues to trade above these level, I think some recovery trade will play out here also, and we may see 56,300 to 500 kind of zone for Bank Nifty also. But looking at the broader market, I think some of the sector where a lot of buying interest is there. Power space is looking attractive. Again, EMS space is also showing sign of strength. So I think some of the pockets where clear visibility of uptrend, where one can deploy some long trade. On the stocks front, we are focusing on power space at this juncture, and JSW Energy is looking quite promising. The way stock managed to give breakout of its multiple supply zone, long built-up is there in the derivative data. So we expect JSW Energy may extend its gain. Possible target towards 595 to 600 we could see for the counter, and on the downside, 565 needs to keep as a stop loss. Another stock where we are focusing on the long side of trade, that is Bharat Forge. Again, almost stock is negotiating with its previous swing high, which is almost its all-time high trajectory. So any breakout above 1910 can take this stock further higher, and then possible target of 1940, 1950 we may see for Bharat Forge. So here also one can buy an equivalent. On the downside, 1875 needs to keep as a stop loss.
Okay. Rajesh, thank you so much for joining us on the show, taking us through the macro levels as well as individual stock names. Thanks for that. But on that note, we're going to step into a very short break. On the other side, Manisha Gupta will join in with SkyMet's GP Sharma. Stay tuned in. Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty's moved back a bit up from where we started the show, right? Look at it, trading almost in the day's highest point, 24,080, up 182 points in the trading session. And especially in the broader end of the market in the last 30-odd minutes, we have IKS, that's picked up pace. We have IFL Finance also, that's picked up pace in the last 30-odd minutes. But let's go across to Manisha now. She's going to take us through a conversation with GP Sharma of SkyMat. Manisha, over to you.
Well, absolutely. With the kind of heat waves that we are getting as in sense of alert for all of India. And I was talking to Mr. Sharma a while back and he said, Mr. Sharma, just reiterating what you said, that 26th April was the hottest day in this year currently. But are we anticipating today, tomorrow to get any better?
I don't think it'll be better. Because the margins will be very, very little from what we had yesterday. Yesterday, the temperature had touched about 47 degrees, I think for the first time at some places, a couple of places. And as I said, you know, the heat wave conditions, they had broadened and over many areas, be it Gujarat, like Gandhinagar, Ahmedabad had 45 degrees, first time season, even South Gujarat, border areas of Gujarat, Jaisalmer, Barmer, both had 46 plus. And then similarly, Uttar Pradesh, that has been in the news for quite some time now. Place like Prayagraj and Banda also crossed 47 degrees. Maharashtra, Vidarbha is the hottest pocket, Akola, Amravati, Wardha. They have been crossing 46 degree the temperature. Yesterday, yes, it was one of the hottest day of this season. It was the hottest day of the season. Today, the things are almost the same. Like Delhi, yesterday had recorded 42.1. Today also, it's going to cross 42. Already 41 plus now. It's going to cross 42 today also. So I don't think, yes, tomorrow onwards, the things will be possibly a shade better. Today also, there will be a thunderstorm activity over possibly Delhi, parts of Uttar Pradesh, say Agra, Mathura, even parts of some Rajasthan, but that will be towards the later part of afternoon and evening hours. So tomorrow onward, I think it will be more consistent. For the next about 4 days, every day we will have some thunderstorm, dust storm activity, typical pre-monsoon activity with the gusty winds, dust-raising winds, that will be there. And that should happen mostly towards second half of the day. And that will definitely give a little relief, but little relief only. Temperatures are not going to drop below 40 degrees even after that also, because the activity happened in the late evening. And then by the time next morning, it catches up again the sunshine, and again it rises. So that's going to be the pattern, yeah.
No respite, really. The only thing is that the second half is going to be slightly better. Mr. Sharma, you spoke about the pre-monsoon showers. How long are we anticipating that to go on?
This will carry on till about the 1st or 2nd of May. Even after that, in small pockets, it will go on. The only thing is now, between tomorrow and further next about 4 days, large pockets of the country will observe this. Down south also, place like Bangalore also will have activity. Farther to the east, even Kolkata will have. Delhi, in any case, will be in it. The only pockets will be left out, which will be left out. They will be Gujarat, Konkan region, and Konkan and Goa region, I will say, and maybe some parts of Madhya Maharashtra. Otherwise, most of the part, if not simultaneous, they will take some turns and the activity will be there over all along the Indo-Gangetic plains, starting with, say, Punjab, Haryana, Delhi, entire Uttar Pradesh, Bihar, Jharkhand, West Bengal. All these parts will have this activity. Northeast India already is having a good amount of pre-monsoon activity consistently for the last about 1 week or so. That will carry on. That's the only pocket where the temperatures are less than 30 degrees, day maximum. Otherwise, blistering temperatures are there all across plains of Indian region. See, like last time I said I take it a good sign that the pre-monsoon activity is there simultaneously, maybe for 3-4 days. We do call it as a right PMPR, pre-monsoon peak rainfall. And this is the activity, it has some linkages with the arrival of the monsoon. And as per this, I feel that there should not be any delay as such, significant delay. Possibly it could be just on time and maybe a day or two prior also. The indications are it is not going to be delayed. And earlier arrived the monsoon. Like last year also, similar conditions were there. It arrived on 24th of May on the mainland. So I won't be surprised even if it arrives about few days before the due date over the mainland, Kerala. Yeah, this side also.
Mr. Sharma, are you also anticipating water woes this time around? Because with the kind of heat waves that we are looking at, and you told us that the winter rains were below normal as well. This monsoon is going to be below normal. The Kharif crop is a bit of a concern right now. Are we also looking at lower water reservoirs by the time it is monsoons, and then concerns going forward?
Sure. That is there. You see, this season, even in the winters also, the rainfall was not good. The peaks and the mountains, they haven't had sufficient snowfall. Otherwise, from that, the water bodies, they get recharged once the summer set in, which is not happening. The ground level, subsoil water also, that water level is also not very great. So the canal network, etc., which depends on the reservoirs and all these water bodies, they will definitely feel a little stress as far as the water management is concerned. I think it's going to be a little crucial issue across those parts where agriculture obviously it needs. The only thing is now there's a little break, but we will, at the time of the onset, there will onset of monsoon in the month of June itself. When the sowing starts, the water requirement will be multifold. Okay, so I feel that stress is going to be there, particularly in those areas which are largely dependent on rains, rain dependent in the pre-monsoon and even in the monsoon season also. Possibly that will leave some anxious movement for the farmers during that period. Yeah.
Okay, take that point, Mr. Sharma. We could do some with some break, but let's hope things don't get worse from here in terms of higher temperatures. Thank you so much, Manisha, for joining us and taking us through this conversation. That's the word coming from Sky Met on the heat wave predictions. We'll slip into a short break. When we come back, we'll get you more on markets, get you a lot of stock-specific action as well. Stay tuned for that. Welcome back. You're still tuned into Halftime Report. Earnings season, we have a lot of them trickling in, impacting the moves that we are seeing on the Nifty and the mid-caps as well. Varun Beverages just reported their results. Good set of numbers. This is, of course, for the first quarter of calendar year 2026. Mangalam is joining us now with the analysis. Mangalam.
Well, it's a good performance that is coming from Varun Beverages this time around. If you look at the, key positives, the first one is that the India volume growth is actually above estimates, and secondly, the India revenue realization is actually lower than what the street feared. So let's run you through the numbers at large. The revenue growth of 18%, street was working with a number of close to anywhere between 5,800 crores to 6,000 crores. The company's gone ahead and reported 6,500 crores in overall consolidated revenue. The EBITDA growth at 21% as well is higher than street expectations. Most on the street were working with a margin compression. The company's gone ahead and shown margin improvement by about 60 basis points year on year, and the net profit on the back of that is an improvement of 20% over same time last year. Now the internals, the India business volume growth has come in at around 14.4%. Street was working with a number anywhere between 8 to 10%, so that's an outperformance there. International volumes have grown by about 21.5%. Remember, a large part of that is on account of some of the acquisitions that the company has done as well. So scaling up of that will be extremely crucial to track. But the important part, in India, the management says that demand has remained encouraging. Realization per case in India is down 1.5%. That's because of the volume upsizing that the company has done. Here, the analysts were working with a realization decline of 4 to 5%. So a decline of 1.5% with higher volumes actually is a lot better than street expectations. And finally, mix of low and no sugar products are at around 63% of consolidated sales volumes. Why is this important? Not from a consumer's health standpoint, but a company's gross margin standpoint as well, because sugar prices are higher. So if higher sales are coming from no or low sugar products, then that improves their gross margins. The only imponderable going forward is the higher raw material prices and the impact it will have on the quarter that we're currently in, which is the second quarter of this calendar year. But here, the positive triggers outweigh the negatives. The biggest positive is the projection of a hot summer and lower rains. Growth in their international business would also be a trigger. The stock has already seen a correction from the peak. An expansion into alcobev and snacks in geographies outside of India would give another optionality for Varun Beverages, which is why the stock, after dipping post the numbers initially, has seen an up move.
Okay, yes, has seen an up move as of now, managing to hold on to gains of around 1.7% in trade. But let's move on, talk about Tanla Platforms. They reported the numbers over the weekend as well, and we're seeing a sharp up move coming in the stock. Now, a good number. When you normally look at it, it's going to be a quarter-on-quarter basis. So Q4 revenues have seen a good growth versus last quarter as well, around a 5% growth. In terms of EBITDA also, we're seeing EBITDA at 16.3% versus 17%. Slight bit of a contraction there, but not much of a worry. Profits of the company managing to hold on to the 130-134 crore range, which they've been in. Segment-wise, we've seen a good change that's come in terms of the digital business as well as enterprise communication side of the segment as well. We've seen an improvement on a sequential as well as on a year-on-year basis. Overall, for the full year also, the company has managed to see growth for the full year as well, 9.7% to 10% growth on a year-on-year basis for FY26. And previously, the growth rate was quite low in FY25. So we've seen a marked improvement versus that. Margins have remained steady at 16.4% for the year. And for the profits also, stable. So all in all, good quarter that's come in versus previously that we've seen. And in terms of growth rate, we're seeing a good improvement for FY26 as well, Sonal. And that's why the stock is buzzing in trade.
Okay, all right. That's about Tanla Platforms' big surge. On the other hand, we do have MRPL, which is in focus on the back of weak numbers. In fact, the numbers are much weaker than its peer, Chennai Petroleum, as well. Now, remember, both of these are standalone refiners. They refine the crude oil and they sell it to the OMCs, which is ultimately sold to the consumers. Weak set of numbers, as I said. Revenues were down 3% on sequential basis. EBITDA down 3.2%. Margins declined to levels of 7.4%, which compares with 10.5%. Profits were down 89%, and it is also because of one of the factors where it was profit decline was higher due to higher taxes, reduced tax credits as well. Now, it is surprising that there is a decline here because as a standalone refiner, it would have benefited from higher cracks across the board, which is something that we saw with MRPL, and this is something that happened with Reliance as well. But that is not something that happened here, and that's why the big fall in terms of stock price for MRPL, and that explains the cut in stock price that we have seen as well, Vinny.
Okay, that's a word coming in for MRPL, but let's move on and talk about Paytm. That's seeing a sharp fall as well. A lot that came in for Paytm over the weekend as well. Ritu's joining us to talk to us about all of that.
Well, the Reserve Bank of India has cancelled the license of Paytm Payments Bank, formally bringing curtains down on an entity which has been under regulatory scrutiny for more than 2 years. Now, RBI in its statement has cited some serious concerns. It said, for instance, the general character of the bank's management is prejudicial to public interest. It flagged the failure to meet regulatory norms, even said allowing the bank to continue is going to serve no useful purpose. But the action itself is not really a big surprise because it follows a prolonged crackdown and multiple run-ins within the regulator. Customer onboarding, remember, had been stopped way back in March of 2022. And by early 2024, deposits, top-ups, credits, all of it was stopped and business was effectively frozen. Now, while the parent entity 197 holds 49% stake in the bank and promoter Vijay Shekhar Sharma holds the remaining 51%, Paytm, in a statement to exchanges, has said it has no material business linkage with the bank anymore. It has already written off that 227 crore investment in FY24 itself. So therefore, no one-offs are expected either. Perhaps that's why brokerages are still upbeat on the stock. Now, separately, while the business has been frozen, our sources indicate even now about 800 crores of customer money remains stuck in the bank. Roughly half of it is in frozen accounts and the rest remains unclaimed by customers. Now, in terms of impact, the license cancellation itself is an incremental move because Paytm had already migrated the UPI handle to partner banks in 2024. It secured the TPAP license, so UPI is very much back on track. It even got a payment aggregator license from RBI last year. But the only real casualty is the wallet business, which was housed under the bank but has been frozen since 2024. Now, that wallet business was contributing roughly 500 crores in annual EBITDA before RBI's crackdown. But now, of course, it is going to be shuttered. So going forward, whether Paytm can eventually win back a PPI or a wallet license is uncertain, and these compliance failures are not going to make that conversation with the regulator any easier.
Take that point. Thank you so much for joining us with all those details. The stock has recovered sharply from the lows of the day, and so has the market. It has recovered from the lows. We are looking at levels of around 24,073 on the Nifty. It is led by the recovery that we are seeing in some of these banking names, pharma names as well, and that is the reason why these are some higher levels that we are looking at. Bank Nifty, though, continues to be very, very choppy. We do have the Nifty Pharma, which is up around 2.5% right now. In terms of the moves on the Nifty, we do have Sun Pharma, which continues to be the top gainer, followed by JSW Steel. The loser today is Shriram Finance and Axis Bank on the back of numbers that we got over the weekend and on Friday as well. A lot of moving parts in the broader markets that continues to do really well. Not big moves as such, but the advance decline ratio continues to be in favor of the advances as we speak. As I said, Cohance Life Sciences, which Winnie highlighted at the top of the show as well, continues to do really well. We do have something like an LT Foods, which is higher. Dollar Industries on the back of its numbers. Symphony is up 8%, Nitin Spinners is up 7%. So the heat wave conservation is something which is leading to a lot of these power utilities going higher and some of these AC makers as well.
Absolutely. So watch out for them. Heat is not going anywhere. I think SkyMet also said that. But we'll watch out for that in the trading sessions going forward as well. Today, IIFL Finance, that's picked up pace in the last 1 hour. And Poly Medicure, that's also picked up. So look at it. Suddenly, in the last 1 hour, we've seen almost a 4% gain coming in for these names. So that's what we'll watch out for. And Supreme Industries, the numbers flashing at the bottom of your screens for you all. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.
Stocks shrug off the stalling of US-Iran talks as the focus shifts to deals and earnings. Mid-caps lead the charge with healthcare, utilities and IT seeing strong gains while financials and energy stocks lag. Sun Pharma will buy New York-based Organon in an $11.75 billion enterprise value deal with equity value at close to $4 billion. Sun Pharma says that the deal will be EPS accretive from the first day and will make it the number 3 player in women's health and the number 7 player in biosimilars globally. The street gives a thumbs up to the deal that will double Sun Pharma's revenue to over $12 billion. Reliance Group Chairman Mukesh Ambani says that the company is advancing steadily to list Jio platforms while commenting on the Q4 performance that saw strong growth in digital and retail even as the O2C business took a knock from the Iran war. The Reserve Bank of India has revoked the license of Paytm Payments Bank and proceeds to wind up the company as it functioned in a manner detrimental to depositors' interests. The harsh comments on the management spooks the stock of the group entity Paytm but recovers from the lows of the day. And India's peak electricity demand scaled to a record 256 gigawatts on Saturday, inching closer to the government's projection of 263 gigawatts for April. Power demand is expected to peak at over 270 gigawatts in 2026. Stocks of power producers climb. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormas Patakia. Well, it's been a good start to the markets on this truncated week, but a very important one nonetheless. Every dip that has happened in today's intraday session has been bought into. For now, the Nifty is up around 200 points. This is despite the fact that the Nifty Bank has been extremely choppy all through the trading session. At one point, the index was down almost 150 points. Now it has moved into the green. So 75 points higher on the Nifty Bank as well, fighting to stay above the flat line and more importantly, above that mark of 56,000. For the Nifty, of course, 24,000 is that important level to defend on the downside before we go into the monthly expiry of the NSE contracts in tomorrow's session. What is holding up for the Nifty today is Reliance Industries. The stock is at the highest point of the day and is the chief contributor to the gains that you are seeing on the index in today's session. 1.5% higher now on Reliance Industries. This is despite the stock having started off lower in today's trade, and since then it has seen a recovery of almost 2.5% from the early morning lows. What is also doing well though are a lot of these earnings reactions. India Cements is one of them. That stock is up around 12-13%. But of course, the earnings that have come in just a few minutes ago, Varun Beverages is one. The stock had moved higher after volume growth was very strong, 16%. And margins too saw an expansion on a year-on-year basis. That stock, after surging as much as 3%, has cooled off slightly. And the other one, Supreme Industries, numbers were out just a few minutes back. And the management here has said that it is confident of delivering an improved performance in FY27, while the plastic pipes volume growth in FY26 was 11.8% compared to the management guidance of 15 to 17%. So after the recovery that the stock has seen from lower levels, it is giving up some of those gains, but still holding on to a 2% advance. Of course, there are a lot of other earnings that are lined up today. We'll get to that in just a bit. But the big story today, of course, is the mega pharma deal. Sun Pharma announced the acquisition of US drug maker Organon in an all-cash deal with an enterprise value of $11.75 billion. The acquisition has been approved by the boards of both these companies and is expected to close by early 2027. The deal enables Sun Pharma's entry into the biosimilar space as a top 10 global player and also strengthens its presence in women's healthcare. Let's now go across to Ekta on what the management had to say on this largest ever overseas deal by an Indian company.
Well, you know, the street possibly believes the Sun Pharma capabilities that they've shown in previous acquisitions such as Ranbaxy as well as Taro. Now, a couple of important key takeaways from the conference call where the management did say that they're acquiring more or less the same size of a company as Sun, but around 20 to 22% of Sun's value. Now, the acquisition will bring quite a significant amount to Sun Pharma in terms of, their presence. commercial presence in 150 countries, 18 countries with $100 million in terms of revenue. They will provide presence to them in China, which is one of the biggest growing pharmaceutical markets today. Organon has around $800 million in sales and 8 brands present there. It'll make Sun number 3 in women's health, increase their presence in biosimilars, where they will have around 7% in terms of combined sales, increase their innovative medicines portfolio to 27% of sales versus 20% that exists currently. And they will also look to turn around the established brands business, which is basically the bulk in terms of Organon's business and will be the bulk of the combined entity at 51% of sales. It was down 4% in CY25. They're looking to possibly look at around single-digit growth within the established business segment going forward. Now, debt, it is an issue, but one of the reasons why the stock is actually higher is because the entire enterprise value is lower than what the street had anticipated, because the net debt is at around $7.6 to $7.7 billion. They have made a divestiture of around $40 million, which will make them a little more comfortable in terms of the debt position. So what they have indicated is that, Mr. Dilip Sanghvi was very clear that they will be focused on paying down the debt as soon as possible. They will be looking at working with lenders on refinancing options as well. The net debt is currently at around $7.6, $7.7 billion for Organon, like I mentioned. So they will look to possibly bring that down in the next 4 to 5 odd years. The combined entity debt at these levels at around 2.3 times net debt to EBITDA. They will also have a free cash flow, which will be at around $2 to $2.5 billion, which will help in terms of easing the debt burden. Synergies of around $350 million, which will be realized over the next 2 to 4 years. Acquisition will be EPS accretive from day one. They will assess cash flows and come back on the dividend payout issue. And they will also they're looking at Organon basically as a long-term play and not something which should be looked at within 6 months to a year.
Ekta, thank you for that update there. 7% higher on Sun Pharma, the top gainer on the Nifty in today's session. Let's also now listen into what the management had to say about the deal and on the company's debt outlook.
As a company, we ourselves are debt averse. However, we are not risk averse. So at some point of time, when we think that the debt will help us scale the business and change the trajectory of the business, we are comfortable with debt. Not debt alone, but also based on our internal assessment of the future cash flow and our ability to repay the debt or bring it down to a much more reasonable level. Because I think even like what Jayashree explained, when we are raising the money or we will pay for the company, the debt to EBITDA is 2.3 times. It's not a very high debt ratio, even though the amount of debt would be significant. But we should be able to repay the debt within a reasonable period of time. And we've been disciplined about repaying debt in the past, and we'll continue to be disciplined post the closing of transaction.
Innovation side on women's health also, they have done in licensing of a couple of new products. So there is a product called Medulla, and this is all in public domain. Then there is a product called Nilemdo, they have in license, so that business can grow from where it is today. That's one part of it. What I see as a much bigger opportunity is on innovation side is our ability to license products globally for the entire market, like for 140 countries on both in terms of women's health and other therapeutic areas. Second side on innovation is they also have a product called Vitama, which fits very well with our dermatology portfolio. And third product is Emgality, which is a different therapy area, is a migraine, but it's a good innovative product with a patent protection, and it has a long run-up to grow further. So now the Sun's responsibility, or I would say, is to how do we add more product into this basket that the innovation keeps growing.
The management of Sun Pharma there after the mega Organon deal. And now Reliance Industries reported its fourth quarter numbers on Friday. It became the first company to cross $10 billion in annual profit. The highlight was the retail business, which registered double-digit growth. Sonal is here to break the numbers down for us. Sonal.
Well, that's right. It's the retail business that reported a double-digit growth. It was a strong showing from that one. However, of course, considering the West Asia war and the global energy shock, there was some decline in the O2C business. But the important commentary made from the management where they are saying that they are advancing steadily towards listing of Jio platforms. As far as the numbers are concerned, let's take a look at that. A revenue at 2.94 lakh crore rupees, EBITDA at 44,141 crore rupees, margins came in at 15%, which compares with 17.4%. And we did have the profits at 16,971 crore rupees. But the annual profits is a record for the company as well. There was strong showing from the retail business. As I said, double-digit growth, 11% up on a YY basis. Jio subscriber addition at 36.2 million YY, which is the highest in the last 7 quarters. As far as the O2C business is concerned, it was impacted by the global energy shock, specifically in the petchem chain, where spreads were lower this time. But the important comment on which the street is liking this stock price as well is the company talking about advancing steadily towards the listing of Jio platforms. Brokerages are largely bullish on the stock. Nomura has a buy rating with a target price of 1680. They talk about Jio IPO being a key catalyst for the stock. Morgan Stanley has also written on Reliance Industries, where they call it an overweight call, target price at 1,803 rupees a share. They expect recovery driven by energy, chemicals and retail. And other than that, most of the brokerages have been quite bullish on the stock. And that's the reason we are seeing an uptick in trade today.
Indeed, 1.5% higher on Reliance Industries. Sonal, thank you for that. 33 out of the 34 analysts who cover the stock have a buy recommendation on it. Take a short break, but just as we do that, a quick programming reminder for you. We step back from the noise of quarterly earnings and ask a far bigger question. Is one of India's most defining economic engines, which is the IT services sector, at an inflection point? Catch sector experts on our special market forum, The Tech Trade, tomorrow, 4:30 p.m. onwards. We invite you to be a part of this conversation. You can send in your queries on the email ID shown on your screens. And the first 50 entries stand a chance to receive an invite to join us in the studios. Welcome back. Now moving on to some weather-related updates. India is expected to experience sharply contrasting weather in the coming days with intense heat wave conditions persisting across several northern and central states. The Indian Meteorological Department has said that the heat wave conditions over northwest and central India will persist for the next 3 days. A heat wave alert has also been issued in isolated pockets of Himachal Pradesh, Punjab, Haryana, Chandigarh, Delhi, Uttar Pradesh, Rajasthan, Gujarat and Chhattisgarh for today as well. And as a result of which, India's power demand has surged to record levels driven by heat wave-like conditions across the country. Sonal is here to tell us more on this. Sonal.
Record high levels as far as the electricity consumption is concerned, 256 gigawatt in April 2026 itself, and the last record we saw was in May 2024 at 250 gigawatt. The government projection for the month of April is at 263 gigawatt, and the full year 2026 peak is expected at 270 gigawatt plus. Now let's talk about the April month, because it has continuously seen a progression in electricity consumption. Early April it was around 210 to 220 gigawatt. Mid-April it increased to 230 to 239 gigawatt. April 18 was stable at those levels. April 25th saw a jump, and April 26th, that's the Saturday, is when we saw that record high level at 256 gigawatt. The trend suggests that in the month of April itself, we saw that surge of around 30 to 35 gigawatt. Now, that's a big number considering the consumption that we've seen earlier. Late month spike was driven by heat wave that we've been talking about. And it's just not one city, it is across states. For instance, Maharashtra saw peak demand of 26,700 megawatt, and it is amongst the largest contributors to the consumption that we are seeing. Tamil Nadu saw a peak demand of 21,000 megawatt. There is a strong nighttime peak pattern. For Kerala, it was a peak demand of 6,000 megawatt, which is a record consumption level for the state itself, out of which 70% is driven by thermal, which is coal, lignite, gas, and 25% only by renewables. However, considering the consumption that we are seeing, the 270 gigawatt of peak is something that we'll be watching out for. But for now, a big surge on the back of which a lot of these power stocks are have already run up around 30 to 50% and are seeing a surge today as well.
Sonal, thank you for that update there. Now, India and New Zealand are all set to sign their landmark free trade agreement in New Delhi today. Abhimanyu is now joining in with all of those details. Abhimanyu.
Well, the free trade agreement is going to be signed shortly between India and New Zealand. And now with this FTA signing, India is going to have trade pacts with all RCEP members except China. And now this FTA, more than just trade of goods and services, is also much about investment as well as mobility for working professionals. Now, Indian working professionals will get an easy access into the New Zealand market as far as their mobility into New Zealand is concerned. Also, there is an investment commitment aspect as part of the FTA, which is quite unusual for FTAs. Earlier too, India had an investment commitment as a part of its FTA with the European Free Trade Association, and now the FTA with New Zealand is also going to have an investment commitment of $20 billion over a period of next 15 years. Also, several sensitive sectors, particularly dairy and agriculture, have been kept out of the ambit of the FTA due to sensitivities on India's side. So sensitivities are going to be protected, whereas the tariff lines are going to be liberalized to the extent of 100% of India's exports to New Zealand. They are going to witness zero tariffs. And also, India has offered tariff liberalization in 70% of the lines, which already cover 95% of bilateral trade. So even exporters from New Zealand are going to get access to the large and growing Indian market, something which has been dubbed as a win-win proposition by leaders from both the countries. And also, more importantly, Indian working professionals are also going to get access into New Zealand. They are going to get access. They will be able to work for a longer period within New Zealand, which is going to be a win-win proposition. The New Zealand market is going to get trained Indian professionals for a longer period of time. So it's certainly going to offer a lot of certainty as far as the availability of skilled manpower within New Zealand is concerned.
Abhimanyu, thank you for that update. Just before we take that break, pull up Mobi quick. The stock is now up 15% as we speak. You saw some flashes at the bottom of your screens just a few minutes ago that the group has received the Reserve Bank of India's approval to get its NBFC application. That has been approved, and as a result of which the stock has seen a very sharp surge. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now on to updates from West Asia. Hopes of a breakthrough in negotiations between Iran and the US seem to be fading fast as both sides appear to be unwilling or to moderate or make concessions. Now, the White House last week said that it would dispatch envoys Steve Witkoff and Jared Kushner to Islamabad to follow up on the historic face-to-face talks earlier this month. But shortly after Iran's foreign minister departed for Islamabad for talks, the US president called off the trip because of a lack of progress with Iran. Meanwhile, over the weekend, Iran's foreign minister briefly visited Islamabad as Pakistan's political and military leadership scrambled to reignite ceasefire negotiations between Tehran and Washington. The minister said that he had a very fruitful visit to Islamabad. CNBC's Dan Murphy now joins in with all the details. Dan.
It feels as if, as we approach a fresh week of the conflict, this is a situation of who is ultimately going to blink first here, because both sides are claiming effective control over the Strait of Hormuz, and at the same time as well, both sides clearly see this as diplomatic leverage for any future peace talks. But what was also really interesting, and perhaps the lead indicator for me, was the fact that we saw oil prices shooting up once again in Asia trade this morning on hopes for a diplomatic track that have ultimately faded. Of course, Axios also reporting that Iran has submitted a new proposal to the US, one that would reopen the Strait of Hormuz and end the war with nuclear negotiations postponed to a later stage. So, in other words, Tehran is offering to separate this nuclear issue from the immediate question of ending the fighting, which is essentially an attempt to break the stalemate by bypassing literally the single most divisive issue on the table here, which is Iran's nuclear program, the reason that the war started. The problem for the United States is the fact that accepting that proposal would mean lifting the blockade before Iran has made any nuclear concessions. It removes Trump's entire leverage for the harder conversations still to come. And of course, that is getting Tehran to surrender its enriched uranium stockpile and suspend enrichment moving forward. Axios reports that Trump is expected to hold a Situation Room meeting today with his top national security and foreign policy team to discuss the stalemate and the potential next steps as well. But he also told Fox News on Sunday that he wants to keep the blockade in place and continue strangling Iran's oil exports for the next few weeks. Meanwhile, it's still not clear if there is really a consensus inside Iran's leadership as well on how to address these US demands and move forward. The US pulled the plug on what was expected to be another round of peace talks at the weekend, with the president saying he saw no point in sending in Steve Witkoff and Jared Kushner to Islamabad on an 18-hour flight just to sit there, to use his words. And then on Truth Social, Trump said there is tremendous infighting and confusion inside Tehran as well. Nobody knows who's in charge, including them. So the situation as it stands right now is still incredibly complex. There appears to be no immediate diplomatic off-ramp, but we're going to have to watch and wait to see exactly what the president says when he wakes up, perhaps also emerging from this meeting that's taking place later today, according to Axios, to see if the US has a counter-proposal to what Axios is reporting.
At what point do you send Witkoff and Kushner and send Vice President Vance in? At what point are you going to be ready?
They're all very competent, all three. Those are three good. But they weren't meeting with the leader of the country. They were meeting with other people. And I said, we're just not going to do it. Too much traveling, takes too long, too expensive. I'm a very cost-conscious person.
Will you continue the ceasefire?
Haven't even thought about it yet.
Did they offer anything in return to 20 years of suspending enriched uranium?
They offered a lot.
What did they offer?
They offered a lot, but not enough.
Moving on, US President Donald Trump and First Lady Melania Trump were rushed out of the White House Correspondents' Association dinner on Saturday after a man opened fire with a shotgun on security personnel outside the venue. The shooting prompted the evacuation of several US cabinet ministers, including Secretary of Health and Human Services Robert F. Kennedy Jr. and Secretary of Defense Pete Hegseth. Now, an hour after the evacuation, President Trump posted on Truth Social that the shooter had been apprehended. With that, we take a leave on this edition of Business Lunch from me and the team. Thank you for watching. We leave you with the markets still around that 24,100 mark, nearing the highs of the day again. Mid-cap radar on the other side.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. Joining me today is Mangalam Malu. Mangalam, good afternoon. A sudden pickup in the markets led by Bank Nifty, which has been quite choppy from the word go, but a lot of action in the broader markets, and that is something we'll discuss on the show.
We will. It's been a good day so far. Result reactions also largely have been on the positive side. And as we speak, at the bottom of your screen, Tamil Nadu Mercantile fourth quarter stock up 4% on the back of decent performance that is coming in. So all in all, a good day of trade after what was a bad week for bulls last week. Let's tell you all the top stories that we're tracking this afternoon. Market defies global concerns. The Nifty is higher, along with the broader markets consistently outperforming the large caps. M&M Financial, JSW Energy, Suzlon among top mid-cap gainers.
Cohance Life Sciences names pharma veteran Umang Vora as the new executive chairman and group CEO. Management change comes amid companies' attempts to arrest a period of stagnant growth and regulatory hurdles. Stock purged up at upper circuit.
Heatwave batters the nation. India's power demand hits record levels in April. A 35 to 40 gigawatt jump in a month. Solid gains in bigwigs like Torrent, Tata Power, Adani Power, Suzlon, SJVN, NLC India and NHPC.
Goldman Sachs initiates coverage on Shriram Metallics with a buy stance and a target price of 1,065 rupees a piece. Net debt to EBITDA ratio lower than peers, coupled with consistent growth in margins, bodes well for the company, says Goldman Sachs.
And MRPL's net profit plunges 89% on the back of high taxation and reduced tax credits. The management of Supreme Petro flags raw material availability concerns but eyes 8 to 10% growth in volumes if geopolitical conditions normalize. Both the stocks down and out.
Okay, all right, those are the top headlines. Market really is the story of the day. Nifty is above the 24,100 mark, and it is led by the recovery that we are seeing in the bank stocks. So that index should come up here on the screen, 0.4% higher for that one. There was a point in time that stock was deep in the red, so there's a swift recovery from the lows. Mid caps, of course, outperforming today, and that is something we'll discuss in greater detail. Small caps too, not far behind, and a lot of sectoral gainers today.
A lot of sectoral gainers today, and right now as we speak, we're seeing a big surge in IndusInd Bank. Remember, the company reported its results over the weekend, and at the same time when we speak, there was sequential improvement and year-on-year improvement in the numbers as well, even as the stock hasn't reached back to those levels of the derivatives issue. And now it's a big up move that we're seeing, 6.5% on that one. But a lot of movers. Let's go across to Upasna, who will take us through that list. Stocks which are moving around in trade.
Well, certainly it's been a good day for the markets. The mid-cap index is up over 1.5%. So first, let us look at the top gainers in terms of volumes. Shriram Metallics in focus up nearly about 7% as Goldman Sachs has initiated a buy with a target price of 1,065 per share. Next up is Blue Jet Healthcare up nearly about 10% in today's trading session. The stock has managed to hold on to these levels since morning. Sada Energy is the next one with a 5% gain. Oracle Financial Services 4.5%, and lastly Jaiswal Nico. The company has reported a strong beat in terms of its Q4 numbers, and also there's a significant debt reduction. Hence we can see the strong up move of nearly about 7% on the stock. Now let us look at some of the other stocks. Now the heat wave alert has driven the AC stocks further higher. For the likes of Voltas, Blue Star, EPAC Durable, all these counters are seeing high surge in today's trading session, somewhere about 4% to nearly as high as 16%. EMS stocks are also surging higher in trade today. Dixon up nearly about 3%. Amber Enterprises up more than 3%, that is 4%. Sign DLM seeing a sharp up move of as high as 7%, and followed by PG Electroplast that is seeing a surge of nearly 3%. Now let us look at the stocks that have hit a 52-week high today. HFCL 7% on that one, Engineers India 7% on that one as well, followed by Aarti Industries seeing a up move of 3%. And lastly, let us look at some of the losers. Well, there's not much here, red on the screen, but still let us focus on MRPL, weak set of numbers. Supreme Petrochem down nearly about 4%, and lastly Dollar Industries seeing a cutoff as high as 6%.
Okay, that's a comprehensive list. Thank you so much, Upasna, for joining us with that. Those are some mid-cap movers. By the way, before we talk about other stocks, MobiKwik Systems, that's the one which should be on your radar. A sharp surge. The company says they've secured RBI approval for NBFC application. 15% higher on this one. They say they will be targeting tier 2, tier 3 cities, and a lot of co-lending with co-lending platforms, and a lot of opportunities that they have with the current customer base that they have. So that's why the stock is higher, around 15%. But Varun Beverages, that is the stock on our radar. Good set of numbers for the first quarter of calendar year 2026. Mangalam, tell us more.
Yes, you know, it's the fourth or fifth FMCG company or consumer company that has reported numbers so far and much ahead of street expectations this time around as well. And Varun Beverages joins that list. And that explains why the stock has moved towards the higher end of today's trading session so far. 18% revenue growth, 21% EBITDA growth, net profit up 20%. The street was working with a number much lower on both the revenue as well as the profitability front. Key internals, the volume growth has come in at 14.4% for India. Street was working with a number of 8 to 10%. International as well, volumes have grown 21%. So that's above expectations. The management has said in India, the demand remained encouraging during the quarter, and there are prospects of better demand going forward as the heat wave alert has come by. Realization per case in India declined by about 1.5%. Here, you know, the anticipation or the fear was it would decline by about 4 to 5%. So decline is limited, volume growth is higher, and that's a positive. Mix of low sugar and no sugar drinks are now 63% of volumes. This is positive, not from a health perspective as much, but so much from a gross margin perspective as well, because cost of sugar is a lot more in you know, products which do have sugar as an important ingredient. Key triggers for them going forward: projection of a hot summer, lower rains as well for products that Varun Beverages makes. Growth in their international business obviously will be a positive as well. And finally, the last couple of quarters, they've made important expansions into categories beyond carbonated soft drinks, into Alcobev in South Africa, along with snacks categories in a lot of the African countries that the company is making for Pepsi's you know, snacking business. All these would be optionalities. That explains why the stock is higher by about 2.5%. But that's not the only one. We do have a slew of NBFC earnings which were reported over the weekend, and Ananya joins in with that list. Ananya.
NBFC stood out with a strong Q4. Let me first start with L&T Finance. Now, it was a strong quarter for the company with better margins and asset quality. Now, NII grew 24.5% YOY, PAT grew 27.3% YOY, and NIM improved to 8.8%. Now, GNPA declined to 2.9%, but higher OPEX remain a key monitorable for the company. Now, under Lakshya 2031, management aims for 20% plus book CAGR, credit cost at 2% or lower, ROA of 3 to 3.2% and ROE of 16 to 18%. That was highlighted by the management. Now coming to M&M Financial Services, it was a healthy and very strong quarter for the company. Now asset quality was a key highlight with GNPA improving to 3.4% and NPA at 1.4%. Now reflecting best ever portfolio quality, management also created 217 crore provision for future geopolitical risk. Now coming to Shriram Finance, it was a steady quarter with NII broadly in line and profitability supported by lower than expected OPEX. Now NII grew 21.3% YOY, PAT rose 40.9% YOY, and AUM increased 14.8% YOY. Now asset quality stayed largely stable, while MUFG infusion is now complete, leading to rating upgrades. Though weak monsoon in West Asia conflicts remain key monitorable. Now lastly, coming to Canfin Homes, a strong operational quarter with healthy growth, better margins and lower borrowing costs. Now NII grew 21% YOY, reported PAT grew 48% YOY, and NIM improved to 4.19%. Core profitability was solid even after adjusting for one-time tax gain of 59 crore. Now overall fundamental remain clean and strong for the company. Now overall we can see NBFC delivered a very strong quarter, but going forward we need to watch out for monsoon trends and geopolitics.
Okay, all right. Thank you so much for explaining that comprehensive synopsis of NBFC numbers. But Shyam Metallics is the stock buzzing in trade today. There's a note from Goldman Sachs. Nigel is here to tell us more. Nigel.
Well, that's right. Goldman Sachs, they've come out with various notes on quite a few ferrous names. But one such note, one such company that stands out is Shyam Metallics. Now, remember, the company has gone through, the share price has been in a bit of consolidation for the last many, many months. Goldman Sachs, though, they have initiated a buy rating with a target price of around 1,065. And there are three big reasons that they're highlighting out there. First up, they like the horizontal exposure across carbon steel, stainless steel, as well as aluminium, which is effectively downstream. They also highlight that the net debt to EBITDA is lower in comparison to its peers. And finally, they're quite impressed with regard to the consolidated margins. So put that together, a stock that's gone through a bit of a consolidation. Today, it's popped up in trade on the back of a Goldman Sachs note, which has come out, and they have a target price at 1,065. Back to you guys.
All right, Nigel, thanks a lot for that. 7.5% higher on Shyam Metallics. We take a short break, come back, we focus on stock-specific action and the way a lot of these mid-caps are moving. 1,000 points for the mid-cap index right now. Take that break, come back, and we focus on the markets again. Welcome back. A bunch of these mid-caps doing extremely well. Anantraj up 9% right now as we speak. Greaves Cotton is the other one, 7% higher. Aeroflex Industries up 9% as well. So the mid-caps by and large doing extremely well. But there's an important conversation that needs to be had about raw material prices for a lot of these important confectioners, FMCG companies as well. And for that, we have the management of Parle Products joining in. Alongside that, we do have, Shashank of the Whole Truth Foods as well. Both of them from different ends of the spectrum facing the same problem. The cost of important raw materials for their products have increased anywhere between 30 to 100% basis reports. And this is dry fruits that we're talking about along with the others as well. So thanks a lot, Mayank and Shashank, for joining in. Mayank, coming to you first, could you tell us, what's the kind of raw material bill in dry fruits and other things that you rake up annually? And what's the impact of this war been on that?
Almost about 5 to 7% of our input cost on raw material goes towards cocoa products and dry fruits. And there has been an increase there, by almost about 15% or so in last almost about 1.5 months. So, while that is one of the significant ones, but the other ones are no less significant, which is increase in conversion cost, primarily because of fuel. Also increase in packaging cost, again, a crude derivative. So I think when we talk about total cost, there has been almost about 15 to 20% escalation in input costs.
All right, 15 to 20% escalation in input costs over the last month or so. Shashank, you've put out multiple videos online speaking about how your products have faced severe inflation. Dates in particular stand out for you as well, along with dry fruits. If you could, quantify the kind of impact that it has had on your raw material basket, and as a result of which, the plan ahead. Will you look at increasing prices or taking the losses?
Yeah, sure. Agree with Mayank. Just the numbers are slightly higher for us because we use only 4 or 5 ingredients, many of which are dry fruits like cashews, almonds, dates. All of these have gone through a 15-20%, sometimes a 25-30% increase. Pista, which is largely comes from Iran and US, has gone through a massive upcycle, a 50-60% upcycle. In fact, cocoa, which was on a downturn, has again gone to an upturn because a large part of it gets shipped through the Strait of Hormuz, and that has again started climbing. So a big impact net for us, about 30% on raw materials, because we use only 4 or 5. There's nothing else that we put in. And then there's packaging material, which again, as Mayank said rightly, a crude derivative, which is seeing an impact. There, I think the real impact will hit in another 1 or 2 months because everyone, including us, was sitting on some stock. You don't have just like 15, 20 days of that stock because it's not perishable. And lastly, actually, we've seen a lot of labor migration back to their cities also. Part of it is due to elections, part of it is due to summers, but part of it is also due to LPG shortage. And hence conversion costs are going up because we are having to incentivize our workforce to stay back in these tough times also.
Take that point, Shashank. This question is to both of you because we are talking about packaging costs being higher, raw material costs being higher. Mayank, first to you. One is prices going higher. The other is a supply issue. So is there enough availability which is coming at a higher price, or is availability also an issue?
So the quantum that we use is not that huge. As far as the total market is concerned, it's not that huge. So supply is not as much as an issue as much as the cost. So currently, as we speak, it's more about the cost. That's pinching more to manufacturers than the supply issue.
What about you, Shashank? Packaging, you said 15 to 20 days of inventory only. What happens next? Is it happening across more raw materials as well, or do you have enough inventory for now?
I think same for us. We also, since we are now a mid-sized player, also we are able to cover for inventory. We will get stock, at least that's what we are hearing right now. I think this problem will be bigger for smaller, younger startups who will not have the ability or the heft to pull with traders to get their stocks. They will face some stock issues also.
Right, let's go back to Mayank then. Mayank, you've seen a total increase of around 15 to 20% in your costs, including dry fruits, cocoa, and packaging, everything else that you're speaking about. The question obviously is, what are you doing? Are you looking to take that hit on your EBITDA, or have you taken selective price hikes? Because Obviously, you all had some cushion because of the GST cut as well, right?
Yeah. So GST cut has been cushioned, but if you look at most companies, they have passed back the GST benefit. So on small packs, ideally in terms of higher volume, or on bigger packs, there has been revision in MRP, downward revision, so as to pass back the GST benefit. That leaves us not much, to really fall back on. So it is currently, concerning to all manufacturers. So right now, as we speak, what is really bothering most of us is the volatility. It's difficult to take a call on price hike in this kind of volatile situation, because you may go ahead, take a price hike. It has a lead time of about 1.5 months. By the time probably you take price hike, the prices might have further gone up, or they may have gone back. So while all of us are hopeful that things should get sorted, and if they do, then prices will go down, and probably the expectation is that they will go back to the levels which were there prior to the geopolitical tensions. So if that happens, then you are caught on the wrong foot. You may have taken a price hike, you may be rendered incompetitive in the market, so outpriced and incompetitive. So ideally, most players currently are very closely monitoring the situation, and we're waiting for some sort of stability in prices. I mean, even if they get escalated, they need to be stable. The volatility which is currently there is something that's really concerning, and making it difficult for us to take a call on price hike.
That's right. That's the word that we're getting from people across the industry. Even if things get better, production, supply chains will take some time to get back on track as well. So that's another volatile element that you have in the entire supply chain. Shashank, what about you? Do you think price hike is the only way to ensure that the balance sheet, P&L are in shape? Or do you think you will also wait like Parle?
Actually, even before the war, most agri-commodities were in an upcycle. We use a lot of whey protein that's been in a massive upcycle. Cocoa had just peaked and had started coming down, but it had gone through a 4x price rise in the last 2 years. So we are just coming out of one price hike that we've taken and passed on to consumers. So this is very new, volatile situation, as Mayank said, and I don't know how it fully plays out. And we don't like passing on price every few months. We want to have a certain cadence to it. But if it doesn't stabilize soon, we will have to, because our consumer at least is more quality sensitive than price sensitive, and we'll never touch the quality of ingredients, nor can we ever put in anything that we don't declare on the front of pack. So there is no, there is no wiggle room here beyond 1 or 2 more months. So there's just 1 or 2 months of, wait and watch. And after that, most probably we'll have to take another round of price hike. Yeah.
All right. And Mayank, since we have you with us, the one thing that has stood out is that across all this uncertainty, the fourth quarter numbers in the consumer sector, they haven't been bad. In fact, they've been a lot better than what the street was anticipating. Do you see the same for your products as well? What's the kind of volume growth that you've seen in the fourth quarter so far?
So it has been a low double-digit volume growth in the fourth quarter, and we're expecting it, to continue. I think there were certain concerns initially because of the fuel availability, and hence, production concerns were there, availability of fuel, and as a result of that, running of plants. But things have been sorted, and hopefully going forward, I think we shouldn't be having major issues as far as demand is concerned, because when you talk about food products, I think most food products fall under, essential category. So we're not really seeing any major impact as far as war is concerned on the demand side. We'll continue seeing robust demand for food products.
And just to confirm, when you say low double-digit growth, that's for you, and the industry also is double-digit?
I'm talking about industry, low double-digit growth for the industry.
Got that.
Okay, all right. To take that point, Mayank and Shashank, thank you so much for joining us with your insights and the outlook on demand, pricing, and a lot of other aspects of the business. With that, we'll slip into a short break. But before we do that, a quick programming reminder. We step back from the noise of quarterly earnings and ask a far bigger question. Is one of India's most defining economic engines, the IT services sector, at an inflection point? Catch sector experts in our special market forum, the Tech Trade, tomorrow 4:30 p.m. onwards. We invite you to be a part of this conversation. Send in your your queries on the email ID on your screens, and the first 50 entries stand a chance to receive an invite to join us in the studio. Welcome back. The markets have picked up some pace. 24,112 on the Nifty. It is coming in a lot of ways from the Bank Nifty as well. Mid caps outperforming. We do have the Pharma pack, which continues to do well. And with that, it's a wrap on this edition of Mid Cap Radar. Stay tuned. Your stocks when we return.
Mr. Kirti as well as ma'am, thank you very much for joining in and speaking with CNBC TV 18. Mr. Kirti, I'm going to start with you. We've spoken about how you all do have plans in terms of growing the revenue eventually. But just wanted to understand that with this acquisition, what is the plan for Sun Pharma when it comes to research and development? Is that going to be a part of this acquisition, or is that maybe a plan which might be now possibly put on the back burner?
Well, thank you, Ekta. I think as we said, we'll continue to invest on R&D. Now we are investing on two R&Ds. One is innovative R&D and generic R&D. So going forward also, our plan will continue to invest on the R&D on the innovative side also.
Okay.
Because what I said and what you should understand is now we have a commercial platform through Organon where we can go to 140 countries. Now, how do I use this commercial platform? I will need a product, and this product can come from the only R&D.
Yeah.
So there are two ways. Either I take the R&D from outside, or I can develop in-house R&D. So we'll continue our effort on developing product through our in-house R&D.
Okay, so that would continue.
Yeah.
But what is Organon's R&D pipeline looking like, which you can possibly leverage?
So Organon has a limited pipeline in terms of R&D, and most of the details we cannot disclose, but I would say it's a limited pipeline. Few things they have done very recently. They have licensed 2 new products which will get commercialized in next 2 to 3 years.
Okay, so that means that you would be looking at out-licensing deals, in-licensing deals, as well as maybe bolt-on acquisitions of certain brands, which Sun Pharma has done in the past. Would that be a strategy that you all would adopt?
See, broadly, Ekta, what I can say, whatever is required for us to grow the business, then it's like acquisition of a brand, or in-licensing of the product, or sometime even out-licensing, we will do it. And that is what we have been doing for a long time in the interest of the business, depending on the therapy areas.
Okay. Yeah. All right. On that note, ma'am, there is going to possibly be a lot of stress in the initial 4 to 5 years because you will be taking on that debt. You will possibly look at opportunities in terms of growth as well. So give us a sense in terms of what shareholders should expect in the next 4 to 5 years when it comes to the balance sheet of Sun Pharma and Organon combined.
Sure, Ekta. With this acquisition of Organon, from a cash positive, Sun would get into a debt EBITDA of about 2.3x. Both these entities on a standalone basis itself generate positive cash flows to the extent of about $2.5 billion on an annual basis. With some of the synergies that we have spoken about and the growth opportunities in terms of revenue, I believe that this will further augment the cash flows from the operation. This will be used towards repayment of the debt, and we will also be using it selectively towards acquiring assets as required, whether it be in licensing or brands. This is business as usual, which is how both these companies have been operating. So I do not think this should cause any further stress in the balance sheet. I do believe in the next few years, we should be in a position to comfortably pay the debt and also have funds for further investment.
Okay. The $350 million in terms of synergies that you've spoken about, that will be, you'll probably see that in the next 2 to 4 years is what you've guided for.
Yes. Absolutely.
And what would that be based on?
See, this is looking at Sun's ways of working. We are known to be a company who's been very disciplined. In our DNA, we have lean operations, bringing in cost efficiencies in multiple fronts. When you look at procurement, it could be procuring from a joint procurement, looking at both Organon and Sun together. So our negotiating power with our suppliers could be better. Sourcing itself could be from markets where you could get a better cost leverage. Likewise, there are multiple areas across supply chain and functions that we have identified which could help us to realize this potential.
Okay. Would that mean that margins will, possibly remain between this 29 to 30% band? That is, Sun Pharma reported margins of 29% in FY25, and Organon is at around 30% margins. So is that the band that we're working with?
Yes, I think that could be the band that we will look at for the combined business.
Okay, but initially will we see some hiccups? Will we see margins possibly see a decline because of integration issues? How should one possibly look at the margin trajectory in the next 1 year?
As you know, in all companies where you go through the integration, the first year there could be some costs in terms of the transaction, in terms of integration. The synergies will start flowing in over a period in time, which we believe will be between year 2 to 4. Therefore, the first 1 year or 1.5 years, you could see a slight dip in the margins, but this is going to be a temporary phenomenon and it will come back to its normal numbers.
So steady state would be anywhere between 29 to 30 odd %.
Absolutely right.
Okay. Based on the current assessment, and you did mention that the established pharma business would possibly look to come back to a single-digit revenue growth. When are we expecting Organon to come back into, say, a sustainable growth trajectory?
No, I think I would say these are initial days. We just completed due diligence, but we have a lot of thoughts and ideas on how do we bring this business to
You must be having an internal
single.
target. Say 2 to 4 years down the line, we want Organon to report an XYZ amount of growth.
No, that part of the work we need to do more now, because this was the initial part where you do due diligence, you look at all functions and everything together. But now what we are looking at, what are the sales synergies? But to ask specific question in which year this growth will come is very difficult to answer. But the effort for all of us is to see that growth comes early. And we have done this in earlier transactions also. When we looked at Entiro or in case of Ranbaxy, we could bring some of this business on a growth path much earlier compared to what they were doing in the past. So if I go with the same experience, I think the same something we can do during the Organon also.
So same question to you, Mr. Kirti. Initially, we are going to see hiccups in terms of growth for Sun Pharma as well. Is on a consolidated entity, the average growth is possibly going to reduce because of both of the entities coming together. If so, what is the internal bandwidth that you might be working with?
As we said, Sun keeps growing at a single-digit number, and our focus is the Sun should continue to grow at that number, and it should not come down. Now the question is, Organon is not growing, or they are almost like a stagnant. So for 1 or 2 years, the growth may not be in line with what Sun has a usual growth. But then all of us will make an effort to see that the growth comes back on track in a few years down the line. Yeah.
On that point, you do have your branded business, which is growing. It's 20% of your business at this point in time. You have key drugs such as Illumia, Sikoa. You do also have maybe some issues with regards to, say, the Halol facility at this point in time. Do you think that there could be a dilution in terms of the management focus on the Sun Pharma core business because of the integration of such a large business?
I think the integration takes its own time. It's like a process where we have to go through 1 to 2 years. But as a management, we have discussed this internally, is like we need to continue to grow the Sun Pharma business the way it is growing today. And then look at how do we grow the Organon business. It's a challenging time and we have to go through this time. I think what makes me more comfortable is we have done this repeatedly when we acquired Ranbaxy. Ranbaxy was 2 billion, Sun was also 2 billion. And both the India business as well as the emerging market, they grew than what it was growing under the Sun's.
But that was an Indian entity buying an Indian entity. Here you are, acquiring an MNC. You're acquiring a US business with a completely different culture. So from that standpoint, what do you think might be the biggest challenge?
No, I think the biggest challenge, in my opinion, is not the culture, but to show the ways to the people on how they can succeed. Because what I appreciate is Organon also has a good talent. Now once we assess their talent and we show them this is the way you can grow. As an example, if I in-license product, I introduce new product. If the business start growing, then that talent, when they are seeing the growth, they will also feel much better. And that time integrating two companies will become much easier. So as we said, is like everybody wants to succeed in life. Nobody wants to remain stagnant or not to grow. As a leader, if I am able to show them how to grow, it will help us to integrate both business more successfully.
US tariffs, Section 232. How are you navigating that for Organon and Sun Pharma? Do things get difficult or do things get easier because they have 3 manufacturing facilities in the US?
I can speak for Sun Pharma. Organon is still a listed company and they have not made any public statements around it, and therefore I would not be able to comment on it at this point in time. Organon has 3 facilities, those are in Europe. and then from Europe they ship it to US for final sale. As far as Sun is concerned, we have been in discussions and we have a strategy to see how we can work through the tariffs.
Okay, all right. Just a quick last question. There was news which just came out during the press conference about, Ademi LLP possibly investigating Organon for possible breaches of fiduciary duty. It's a class action suit. Any comments? Because I know these sort of come up quite regularly with any kind of big moves or transactions in the US. But your comments, sir?
No, my comment is that today we have announced the transaction. Sun and Organon are two different companies.
Yeah.
So we will close the transaction maybe 6 to 9 months down the line.
Okay.
So during the period, Organon remains an independent company.
Okay.
So it's better that the Organon has to handle this kind of litigation. The Sun, we won't be able to comment on it. Yeah.
Okay, all right, Mr. Kirti, as well as ma'am. Thank you very much
Yeah.
for joining in and speaking with us.
Yeah.
Thanks very
Thank
much.
you.
Thank you very much.
Yes,
Thank
yes.
you.
Hello, good afternoon. Welcome to your stocks on CNBC TV 18. We're coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, in terms of markets today, what are we doing? 24,100, comfortably above that mark is what we're trading. At one point of time, we did go below 24,000. Then we came back up, and now we're comfortably near the day's highest point. So, hoping that this continues in the last hour of trade as well. But as of now, almost 0.9% of gain, 200 points for the Nifty 50 in terms of an uptick. Broader end of the market. Where is that doing, right? Because we've seen a bit of an outperformance today coming in from the broader end of the market. So mid and small cap are also doing well in the trading session today. More than a percent of gain coming in for the broader end of the market. And that's why that advance decline ratio on your screens for you all, right? 2,000 stocks and more on the advance side. 2,500 stocks on the advances versus just 600 stocks on the decline. The gap is there. Not much to worry on that front as well. So good in terms of the broader end of the market. Banks, that's a bit muted versus other sectors. At one point of time, it was flip-flopping between the red and the green. We were seeing a bit of a drag coming in because of the banks. But now that banks has also picked up a bit of a pace. So Nifty Bank also is holding on to gains of almost 0.4% in the trading session. But that's what we'll talk about as well, right? Why was banks in focus as well? Or why are we seeing banks see so much of an action? A slew of banks reported their numbers, Q4 numbers over the weekend. Ananya is joining us to take us through all those details. Ananya.
Now, over the weekend, banks delivered a clean recovery-led quarter. Now, coming to IndusInd Bank first, now we can see it was a clear turnaround quarter for the bank with PAT at 533 crore versus a loss of last year. Now, NII grew for 3% YOY, NIM improved to 3.39%, while GNP improved to 3.4%. And management guided for 13 to 14% loan growth in FY27, targets 1% ROA by end of FY27, and said liability repricing is largely complete with no near-term capital raise needed. Now coming to Axis Bank, we can see a strong balance sheet growth, but it was overall a soft quarter for the bank. Now loan grew 18.5% YOY, deposits grew 14% YOY, CASA improved to 39.6%. Now asset quality also showed improvement as technical slippages normalized and the net impact reduced to 0.07%. Now the bank also built an extra 2,000 crore contingency buffer, which they indicated as precautionary rather than a stress-led. Now coming to IDFC First Bank, it was a mixed quarter for the bank, with core income getting impacted by the fraud issue. Now, NII grew 16% YOY and NIM improved to 5.93%, while GNP improved to 1.61% and credit cost declined to 1.63%. Deposit growth was temporarily slowed down due to the fraud episode, though management said the trends have started to normalize from April itself, and MFI stress also eased sharply. Now coming to RBL Bank, lastly, a mixed quarter with strong growth, but margins and credit card stress remained pressure points. Now loans grew 23% YOY, deposits grew 22% YOY, NII grew 6.9% YOY, and PAT rose to 234% YOY to 233 crore. Now, Emirates NBD capital infusion can support 25% plus growth. So we can see overall for the banks, it was a clean and recovery-led quarter, but we need to watch out for geopolitical risk going further.
Okay, thank you so much for that, Ananya. But let's move on, talk about Paytm. The stock had fallen in trade, recovered from the day's lowest point, but still in the red. And this came in after the Reserve Bank of India cancelled the banking license of Paytm Payments Bank. Ritu is joining us with more details on this one. Ritu?
Well, the Reserve Bank of India has cancelled the license of Paytm Payments Bank, formally bringing curtains down on an entity which has been under regulatory scrutiny for more than 2 years. Now, RBI in its statement has cited some serious concerns. It said, for instance, the general character of the bank's management is prejudicial to public interest. It flagged the failure to meet regulatory norms, even said allowing the bank to continue is going to serve no useful purpose. But the action itself is not really a big surprise because it follows a prolonged crackdown and multiple run-ins within the regulator. Customer onboarding, remember, had been stopped way back in March of 2022. And by early 2024, deposits, top-ups, credits, all of it was stopped and business was effectively frozen. Now, while the parent entity 197 holds 49% stake in the bank and promoter Vijay Shekhar Sharma holds the remaining 51%, Paytm, in a statement to exchanges, has said it has no material business linkage with the bank anymore. It has already written off that 227 crore investment in FY24 itself. So therefore, Therefore, no one-offs are expected either. Perhaps that's why brokerages are still upbeat on the stock. Now, separately, while the business has been frozen, our sources indicate even now about 800 crores of customer money remains stuck in the bank. Roughly half of it is in frozen accounts and the rest remains unclaimed by customers. Now, in terms of impact, the license cancellation itself is an incremental move because Paytm had already migrated the UPI handle to partner banks in 2024. It secured the TPAP license, so UPI is very much back on track. It even got a payment aggregator license from RBI last year. But the only real casualty is the wallet business, which was housed under the bank but has been frozen since 2024. Now, that wallet business was contributing roughly 500 crores in annual EBITDA before RBI's crackdown. But now, of course, it is going to be shuttered. So going forward, whether Paytm can eventually win back a PPI or a wallet license is uncertain, and these compliance failures are not going to make that conversation with the regulator any easier.
Okay. Thank you so much for that. But let's also get Rima on what to tell us about Tanla Platforms. The stock is locked in upper circuit as of now, Rima. Numbers look good.
Well, indeed. The company had gone through a period of slowdown, but this quarter it's bounced back very sharply. Revenue growth is up 5% on a quarter-on-quarter basis. On a year-on-year basis, revenue growth is now touching 15%. This is the highest that we've seen in the last many quarters. And for the last 2 consecutive quarters, the revenue growth has been in double digits. The company has managed to keep margins steady. On a year-on-year basis, there is a little bit of an expansion, 30 basis points. Quarter-on-quarter, it's down 70 basis points. But broadly, if you pull up the trend, you would see margins have remained stable. The company's digital platform business has seen about a 10% year-on-year growth, while enterprise communications is up nearly 15.5%. Even for the full year, when we zoom out, FY26 revenues for the company have gone up 9.7%. This is an improvement to the 2.5% growth that we had seen in the prior quarter. And I think that is what the street likes. It's gone through a period of slowdown. The company has bounced back with a double-digit revenue growth. The question is whether this sustains.
Absolutely, Rima. Thanks so much for that. That's Tanla Platforms for y'all. But at the bottom of your screens, y'all can see the numbers of Kirloskar Pneumatics as well. Good numbers, seems like it. The stock has spiked up once the numbers were reported. Net profits up 79%. Revenues were up almost 20%. EBITDA performance, operational performance also seems to be strong. 69% odd, I think, was the growth that came in there. Board has approved a stock split also. So that is also something that you'll keep an eye on. As of now, the stock is up 11% in the trading session. If you look at the chart, it spiked up just in the last few minutes once the numbers were reported for the company. On your screens at the day's highest point, revenues at around 700 crore odd for the company. Stock split in the ratio of 1:2 as well. But yes, that's Kirloskar Pneumatics. But let's move on and talk about Cohance Life Sciences as well. Why is this one in focus? This was also locked in upper circuit as well. The reason behind this is the company's board has now approved the appointment of Umang Vohra as the group CEO of the company from 20th of May, as well as the new executive chairman is what he'll take a role of as from the 1st of May as well. The previous CEO, that is Vikas Sharma, will be exiting the company, but he will stay on the board as a special advisory side for a period of 9 months. Now, Umang Vohra, he's had obviously more than a decade of experience before this with Cipla, where obviously he's been an integral part in converting or transforming Cipla to a global diversified player. He's a veteran in the pharma industry. He's brought up Cipla's EBITDA margins almost doubling at around 25-26% now for the end of this year, approximately at that level, versus in 2015-16 when he joined in. It was just half of that at 15-16%. So Vohra had stepped down from the CEO role of Cipla in October last year, and his notice period at end of 31st of March 2026 is a strategic decision that Cohance Life Science Board said that they have taken to get in Mr. Vohra on the board, and that's why the stock is buzzing in the trading session today, still locked in upper circuit as of now as well. That's about Cohance Life Sciences, but let's move on, and actually we're going to wrap up this edition of Your Stocks on CNBC TV 18, but a quick programming reminder for you. We step back from the noise of quarterly earnings and ask a far bigger question. Is one of India's most defining economic engines, the IT service sector, at an inflection point? CAT sector's experts on our special market forum, the Tech Trade, tomorrow at 4:30 p.m. onwards. We invite you to be a part of this conversation. Send in your queries on the email ID on your screens, and the first 50 entries stand a chance to receive an invite to join us in the studio.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
The Hang Seng, though, is trading just above the flat line, but most of the others are trading with very, very strong gains in today's session.
They weren't meeting with the leader of the country. They were meeting with other people.
It is going to be an all-cash transaction approved by both boards, and the expected closure is by early 2027.
Jio subscriber addition was at 36.2 million YOY, which is the highest that we've seen in 7 quarters.
With all the hedging and speculative activity, the FAR month is typically slightly lower on the curve, and that's what we're seeing. This is a pretty good start all told. We've got advanced decline out of the gates, which is looking very strong. 1450 stocks are higher, some 360 stocks are lower, but that will change.
Clearly, it's one of the large transformative acquisitions, I would say. Rarely you see Indian companies acquiring such large companies outside India, even inside India.
We would continue with the same strategy this year, and hence the silver is the optimized number. You know, more lead production will give more silver.
We want to adjust their cost, that is logistics cost. The transporter can pass on to either customer or shipper, and the shipper can build in his business model, and the distributor can pass it on to the customer.
Next year also, we believe that our OpEx will stay in the zone of 13-14%, but our income, our book will grow by about, let me call it 18-19%.
Now, while the entity had been dormant for nearly 2 years, it merely formalizes the multi-year crackdown that we've seen from the Reserve Bank of India on the company.
There are more than 100 opportunities. Maybe all may not come to the market, but even if a couple of opportunities which are close to phase 3 or close to market, if we can in-license, this part of the business will grow.
The ground level, subsoil water also, that water level is also not very great. So the canal network, etc., which depends on the reservoirs and all these water bodies, they will definitely feel a little stress as far as water management is concerned.
Nifty is above the 24,100 mark, and it is led by the recovery that we are seeing in the bank stocks.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Rima. And earnings are coming in thick and fast. And Rima, just a first look at Ultratech Cement's numbers that are at the bottom of your screen. Those numbers look good. On the top line, it's more or less in line. The EBITDA number, in fact, is looking much better than what we are working with. And that's heartening. So it appears, at least as of now, it's an operational beat. The margins have come in at around 21.7%, which is a 170 basis points expansion on a year-on-year basis, and on a sequential basis, it's close to around a 300 basis points expansion. Just take a look at the beat in terms of the absolute EBITDA number. It's more than a 7% beat included in the consolidated numbers. That one, in fact, reported a good set of numbers, but these numbers look good. The reason I say that is because operating leverage clearly has played out. Revenue growth of around 12% on a year-on-year basis, and your power and fuel costs have gone up by only around 4%, the absolute term that I'm talking about, as well as the freight cost has gone up by only around 9%. So there appears, all the line items that I'm looking at on the expenditure front, it hasn't gone up by more than 10%, and the top line has grown by close to around 12%. So the street likes these numbers, explains why the stock is holding up with a gain of close to around 1.5%. Ultratech Cement showing that why it's the leader. It can buy companies, it can turn it around and run its core business as well. So thumbs up, at least as of now. The numbers just hit, but went through a brief amount of details, and it looks good, Rima.
Well, indeed, and markets are also looking good. The Nifty is comfortably above 24,100 at the day's high, snapping a 3-day losing streak. Last week we fell from a high well over 24,500, but today we've managed to conquer the 24,100 mark. And you can see there was a dip, a little bit of a wobble, which took place between 11 and 12 o'clock. But that dip was bought into the mid-cap index. Look at that go. Mid-cap index is up 1.5%. Very strong advanced decline ratio. Pharma is doing well. The Nifty Pharma index is up 2.5%. Realty is higher. IT stocks are bouncing back after last week's massive sell-off. The Nifty IT index is up 2%. Reliance Industries industries, numbers, reacting to numbers, that is also helping on the way up. We've got 1 hour to go, and let's quickly tell you what we have for you on the show. Markets defy global concern. The broader markets outperform large caps. IT pharma are the top sectoral gainers. As we see the biggest ever deal in the pharmaceutical space. Sun Pharma inks a definitive agreement to acquire US-based Organon to expand the company's presence in women's healthcare. A deep dive into the contours of the deal and the expected synergies coming up. While India is reeling under a severe heat wave resulting in power demand hitting record levels in the month of April, a 35-40 gigawatt jump in just a month. Solid gains in stocks like Torrent Power, Adani Power, Suzlon, SJVN, NLC India, NHPC. Following suit, Hindustan Zinc has delivered a better than expected set of numbers in Q4. Fine print and an excerpt of our chat with the management coming up on closing bell. But to begin the show, as always, we've got Mitesh Thakkar joining in to tell us how you should position yourself in the last hour of trade. Mitesh, what's the advice?
Good afternoon. So, I think on the index, as I said, the next few days appear to be more of choppy and ranged. On the downside would be Friday's low of 24,813. I've given a range of 24,850, 800 as the support area. And on the upside, 24,350, 400 zone would be difficult for the markets to get past. So on Friday, we were at the lower end of the range. Today, we are trying to move up. But until we cross and close about 24,400, I think this is simply a market which will be more of volatile and contracting. And therefore, I think not trading on the index since we are somewhere in the middle of the range. But on the stock side, and the breadth is good and the mid-cap stocks are looking good. And on the stock side, I've got two long calls. Zydus Life is a buy with a stop at 939 for targets of 980. And PG Electropast, that's a buy with a stop at 554 for a target of 595.
Got that. Let's talk about Hindustan Zinc. Better than expected Q4 numbers, Nigel?
Well, that's right. Hindustan Zinc, actually, the Q4 numbers looked quite good. And let's break this up, actually, in terms of, into three parts. First is on the numbers. Better than expected numbers is what they delivered. On the top line itself, they delivered a revenue number of around 13,500 crores. It was much better than our poll. Even the absolute EBITDA number was much better than what we were working with, came in at around 7,700 crores or thereabouts. A couple of factors played its role. First, on the realizations front, you had, zinc prices that was sharply higher on a sequential basis as well as on a year-on-year basis. And even if you look at the, silver prices, though they've come off the top, it looked very, very good. So clock closed around $84. Besides the top line getting a bit of a booster shot because of higher LME prices, on Hindustan Zinc, you had the benefit of zinc cost of production. And the management has been making this point. They're focusing more on renewable power. And that's what's helped the cost of production to actually come down to around $103 on a per ton basis. Besides a good operational performance, they moved into a net positive number in comparison to a net debt just a few quarters ago. And now the net cash number stays at around 5,600 crores or thereabouts. So that was on the numbers. Next, brokerages, they're impressed. Jefferies have gone ahead. They say they have a buy rating with a target price of around 700 rupees. Though they take into account that on an EV upon EBITDA basis, the stock is trading at around 8.5 times. It's not cheap because the long-term average is around 7.8. But they say it's justified because now silver is constituting a higher amount of their EBIT. So that's why they're impressed. IIFL, they have upgraded the stock to buy from add. They've tweaked up the target price as well. They see the EBITDA is likely to grow at a CAGR of close to 14% over the next few years, and they're expecting margins to scale up to around 62% from around 54%. They say that the recent stock price correction is actually a good entry opportunity and risk reward is favorable. And finally, you had Nuvama. They have upgraded the stock to buy. They have upgraded the EBITDA estimates by around 20 to around 28%. So all the brokerages as well, fairly impressed. A few highlights from the chat that we had with the management. They said that they are targeting silver volumes of around 680, which is sharply better from the 627 odd. And renewable energy as a percentage of the mix will go up. And also there could be some work on the demerger of Hindustan Zinc post the completion of Vedanta's demerger. In fact, let's hear out what Hindustan Zinc CEO and whole-time director Mr. Arun Mishra had to say with regard to the past quarter's numbers and the way ahead.
This year, if you look at, we have done 627 tons, but we have also sold about 37 tons of silver through the concentrate route. And if we bring that into production, I would have produced 666 tons. So next year's guidance of 680 tons is very much achievable. Consumption, we are at 18%. And now, from the month of June, the entire windmills will be commissioned, and the battery commissioning is already going on. We expect about 30% of the RE power coming in. And this time, this power is also round the clock.
Let's welcome Deepan Mehta, Director, Elixir Equities, on the show. Hi, Deepan. Good to see you. Deepan, what do you make of Hindustan Zinc? You're normally not a fan of metal too much, but Hindustan Zinc's numbers look good. They have the benefit of having some silver exposure, the only listed company that has silver exposure. They're working on their cost of production. They're saying even taking into account the geopolitical tensions, which has caused cost to go up, still they're comfortable because our renewable energy as a percentage of the mix will go up. Stock is not cheap, but some would say, if you want to play silver, there's only one way. Your take.
Good afternoon, and thank you for having me on your show. But I think, that silver prices now, they have seemed to have got flattened out. And from what I can see from Hindustan Zinc's numbers, a lot of the improvement in profits has come from higher and higher prices of end products, which may be perfectly fine. But, this is a cyclical industry, and these such high prices may not be sustainable maybe 6 months, 1 year down the line or so. But what I'm a bit disappointed is the volume growth. So, the volume growth for zinc is not as impressive as one would have thought it would be. They're working on the costs, they're working on getting high realization. But the key thing for sustainable profit growth has to be a very strong roadmap to significantly higher volumes. And within the metals pack, our preferences for companies engaged in copper and aluminium, where I think the demand dynamics are far better than zinc, which is more related to the steel business. And of course, I think silver is a big contributor. But as I said, I think silver prices I expect will kind of peak out at these levels. Already we are hearing a lot of companies trying to look at using alternatives to silver in industrial applications. So one needs to be a bit careful. I think it's a fairly well-known story and well discovered also. So I would say within the metals pack, there may be better stories and better investment ideas than Hindustan Zinc.
Or the parent, Vedanta. When Mr. Agarwal announced it in 2023, people were wondering whether or not there'll be any unlocking of value. 3 years down the line, the metal cycle has turned in his favor. So he's actually lucky on that front. And he's got exposure across the board. The stock, I think, today is at around 735 rupees odd. But some believe that it's only valuing Vedanta Limited, which effectively gets most of its value from Hindustan Zinc, and the aluminium piece. The remaining businesses could come free. Do you believe the special situation is still worth betting on? This is the stock that was close to 800 rupees last week itself.
I think so, and great value unlocking opportunity over there. And I think all concerns around debt at the holding company will get addressed with this. I suspect that the businesses they're not that keen on, they may even liquidate or give it to, try and reduce their debt by selling off those businesses. So it's a very positive step. And the aluminium business, I think, has got great growth dynamics over there because the volume increase over there is amongst the highest within all the businesses. And the oil business also will certainly benefit from significantly higher realizations as well. So yes, very positive on Vedanta and more so than perhaps Hindustan Zinc also. As I said, I think some of the parts of the 5 listed companies, I think will be certainly higher than that 738 price which we are seeing on the screen.
Okay, let's talk about the big story then. That's the mega pharmaceutical deal. Sun Pharma has announced the acquisition of US drug maker Organon in an all-cash deal with an enterprise value worth $11.75 billion. Ekta joins in with the contours of the deal and what she learned with her chat from the management.
Well, the big question is why exactly is Sun Pharma up around 6% post the deal? Now, a couple of key points is that the enterprise value of the deal is around $11.75 billion versus an estimated $13 billion that the street was working with on the upper end. Now, while the equity component is at around $3.99 billion, it is the debt component which seems to be more manageable than earlier anticipated. So the debt has come in at around, or the net debt for Organon is at around $7.6 to $7.7 billion in terms of the total enterprise value. Now, the street believes that, the net debt to EBITDA, which will eventually be at around 2.3 times on a combined basis, is quite manageable. One of the reasons for that is because the combined cash flow of the company would be around $2 to $2.5 billion. And also the track record of the management in terms of servicing debt or in terms of managing large acquisitions in the past. The company itself has said the acquisition will be EPS accretive from day one. The combined entity margins are estimated to eventually be around 29 to 30% on a steady state basis. Also, like I mentioned, the company has successfully integrated Taro as well as Ranbaxy. Now, the acquisition itself will bring quite a lot to Sun Pharma's table, which is making the street positive. For example, commercial presence in 150 countries, 18 countries with $100 million in terms of revenue. They will be provided a presence in China, which is one of the largest growing markets in pharmaceuticals. Organon has around $800 million in sales in China and around 8 brands there. It'll make Sun number 3 in women's health in the world globally, increase presence in biosimilars, which they don't have any presence, and increase their innovative medicines portfolio to 27% of sales versus 20%. The challenges, they will eventually have to grow a business which has been quite sluggish in the past 3 years. So, for example, they're guiding for single-digit growth in the established business segment already, which was down around 4% in CY25 for Organon and is the largest part of their portfolio. Guidance on whether the synergies will be executed or not, it's around $350 million is what they've guided and is expected to be realized over the next 2 to 4 years. And also the cash flows and whether that will, whether there will be any sort of disruption in terms of the dividend payments. So these are a couple of challenges, but net-net, the street seems to like the acquisition.
Thank you very much for that. Dipan, you want to comment?
Yeah, I think very, very positive development for Sun Pharma shareholders, us included as a measure of disclosure. And the interesting part is that 51% is branded business, branded generics, 27% will be specialty. So almost 78% of the business is non-commoditized. And then you have 7-8% coming in from biosimilars. So I think this puts Sun Pharma in a completely different league as compared to a lot of other Indian peer group companies. And I think congratulations to the management. I think it's a great deal. And I completely agree with Ekta's assessment that the track record in terms of assimilating all these acquisitions among the best in the country. So I would be very positive on Sun Pharma. Right now, I think the stock seems to be appears to be kind of valued, I think reasonably valued. But I think at corrections, certainly one could look at making Sun Pharma part of the core holdings, because now you will have more predictable, I think, let us 6 months, 1 year go. But I think down the line, you will have more predictable earnings from Sun Pharma. And of course, being an international company, will benefit from a rupee depreciation as well. So many positive variables going for Sun Pharma, and we remain quite optimistic and positive.
Dipan, had a look at the news surrounding MobiKwik. They announced earlier today that they've received, the RBI has approved their application for an NBFC license. So it's a significant milestone for any fintech company, the ability to do in-house lending, there is margin improvement, and you pretty much become a full stack fintech company. Have you all analyzed it?
No, not really. I think we got disappointed with the numbers which came through from MobiKwik. I think that execution could have been better for the company. And no doubt an NBFC license will open up new avenues for growth. But as I said, it's easy to get a license, but managing an NBFC business is not that easy. Collections, one has to see how they play out, and putting a proper risk management system in place is easier said than done. And end of the day, I think there are better plays in the fintech space. I would prefer Paytm to one MobiKwik also. Even Pine Labs, I think both have got a slightly superior business model. And Paytm right now, the sentiment is down. We've seen the stock correct. Actually, the cancellation of the license for the bank has got no effect on the profit of the company. But Paytm certainly is emerging to be a fantastic distributor of a lot of financial products. So more positive on Paytm, positive on Pine Labs as compared to perhaps one MobiKwik. But yes, I think it's a good development, and one will keep it in cognizance and see how they actually execute on that front.
Okay, all right. Dipan, I wanted to ask you about the cement pack. I recall you were getting a little bit constructive earlier. Ultratech Cement just came out with a set of numbers, and you can't really follow these numbers, right? A top line more or less in line. The EBITDA number was better. And clearly their focus on the, alternate fuel, on the renewable fuel is definitely helping them out, because their top line grew by 12%, but the power and fuel cost was up only around 4%. And the management is saying that's the way going ahead as well. The ability to turn around companies is something you'll have to laud, right? India Cements, for so many years, I heard the management saying, this is not there, that's not there. They have come in there, they've reimagined the business, and they're making good profits, 500 rupees on a EBITDA per ton basis. What's your view on UltraTech Cement?
Nigel, I think among the most efficient cement companies in India, if not in the world. Only thing is valuation is expensive at 46 times trailing. So that's what, kind of acts as a bit of a dampener. But on the whole, you're right. We are getting constructive on the cement industry. And a lot of cement companies, I think, should report excellent numbers. With usual disclosure that we and our clients, when we invest, I think the top pick for us still remains Ambuja Cement, which is pursuing merger of ACC. And they're the main scope within the entire group over there. Of course, apart from the fact that Adani Group will bring about far higher aggression in terms of expansion, acquisitions, but also there's scope to get more efficiencies out of the businesses. So that would mean that I would expect Ambuja Cement and the merged entity to report growth numbers which are superior to the industry, and valuation-wise, I would say a bit more attractive than some of the larger players or other pure players like, say, an UltraTech or a Shree Cement.
Got that. Let's talk about the power stocks. India's power demand has surged to record levels driven by the heat wave-like conditions across the country. Sonal joins in with more.
Well, yes, record levels for India's power demand that happened this weekend, 256 megawatt. Now, remember, the last time we saw record levels was back in May 2024 when power demand hit 250 megawatts. In future, the expectation is the government projection for April is 263 gigawatt and the peak levels are expected at 270 gigawatt. This is as per Central Electricity Authority. Now, let's map what happened in April. In the first half of April or the early April, power demand was anywhere between 210 to 220 gigawatt. It moved to levels of 230 to 239 gigawatt. Come April 25th, we reached levels of 252 gigawatt and then record levels on April 26th at 256 gigawatt. That's basically a 35 to 40 gigawatt jump within a month, and that's a big number. Demand sustained above 230 gigawatt in second half, and late month spike was driven by heat wave that we saw. And it's just not one city. It was across the board, across states. Maharashtra, for instance, saw a peak demand of 26,700 megawatt, among the largest contributors. Tamil Nadu's peak demand came in at 21,000 plus megawatt, and it was majorly driven by late night patterns or strong nighttime peak patterns. Kerala's peak demand was 6,000 megawatt, which was record consumption levels as well, driven by higher AC usage, higher cooler usage as well. And if we look at the source of these energy, thermal continues to take the bigger chunk, around 75% coming in from thermal, which is coal, lignite, gas, and the remaining is coming from renewables, be it solar, wind or hydro. But remains to be seen whether we touch higher levels as expected by the government and what happens to the transmission lines and the grid as well. But these are important numbers to track as far as power demand is concerned. Gas or power utilities, the stocks have already surged around 40 to 50%, but some additional data coming in on this one.
God, Dipan, you step out and you feel like literally India is burning, and the IMD warning is that this heat wave is going to last from April to June 2026. I mean, you've been looking at this whole energy theme very closely. Power stocks have been rallying hard, and now you've got this. And somehow you get the sense that this heat wave is not an outlier anymore. Every year we've got these heat waves coming.
Yeah, that's right. I think and the only way to feel a bit better about the summer is to buy the air conditioning companies. But I have a stock idea, again, usual disclosure that we and our clients have invested, that India's largest air cooler company, Symphony, one could certainly consider that as well. It's had a kind of a patchy track record last 4 or 5 years or so. But this is ideal conditions for them. And they have a very, I would say, asset-light business model, strong brand, a lot of good track record when it comes to innovation. And I think that this is one company, it may go to a new orbit in terms of growth because of this trigger which we are seeing. Having said that, I think I'm also getting more and more positive on the solar equipment manufacturers, where there are concerns about excess capacity coming into play. But with this kind of a demand for electricity, I think that a lot of the excess capacity will be needed. And mind you, solar is a quick way to set up power plants and generate electricity. The turnaround time, the lead time is significantly less than thermal. So very positive on all of the Body Energies, Premier Energies, Vikrant, all of these companies. I think the prospects look pretty attractive to me.
So you would bet on Symphony over the AC makers and, of course, the solar theme. From the 52-week high, Symphony is actually underperformed, 36% lower. while Blue Star and Voltas are 6 and 4% lower from their recent peak levels, 52-week high. So in that sense, Symphony's underperformed, and that's the stock that Dipan is betting on. But Dipan, any other stock that you'd like to highlight that has caught your attention today?
Oh, I think Cohance, another company in which we are invested in. I think getting Umang Vora as the CEO is really a feather in the cap. And Mr. Vora has done a fabulous job with Cipla. And Cohance is a smaller company, and I think far better prospects than some of the other peer group companies as well. Because end of the day, I think contract manufacturing has got a great scope. Although there's a lot of volatility in their earnings, so you need to have a really slightly longer term view. But nonetheless, I think it's a great development for the company. And as I understand, I think this is one business where the numbers are yet to come, but the inquiries, the RFQs, the number of molecules which are going into kind of a testing phase is certainly increasing year after year. So very positive on this development. I wouldn't, as I said, we are already invested in the company, but now I would give even more importance and watch the company even more closely in terms of what changes will come because of such a impressive change in management.
Upper circuit lock there. Cohance Live. Thank you, Dipan, for joining in. Many mid-caps are actually seeing some momentum on the way up. iFinance was strong, getting stronger, 15% up. Very strong volumes today. Stock is at a fresh 52-week high. NTPC Green Energy now 5.5% higher. Varun Beverages, good numbers. And that stock is now up nearly 5-6%. Karnataka Bank, Vishal Mega Mart, all these stocks are inching up.
Just one word, Rima, on UltraTech Cement, the stock is coming for some profit taking, but actually the volume number, the grey cement volume number looks very, very good. You know, the growth is close to around 15% on a year-on-year basis, which is very, very encouraging for an industry that was growing in high single digit. The big giant growing by around 15%. So that's the volume number that we're looking at. Earlier, we had got the volume number, which was clubbed, but this is the sole, the standalone UltraTech cement business, which is very good.
Why is the stock down?
The stock would have come in for some profit taking. It's already moved up. But the point is that if you looked at the number, the grey cement volume number was showing a 9% growth. But that was including India Cement. Now, you stripped off that. If you just look at the core business, it's actually done very, very well. It's a 15% growth. The presentation is just uploaded. So just thought we'll highlight this particular point as well. The numbers look good. It's routine profit taking because the volume growth as well. When you grow on that sort of a base by 15%, it's encouraging. So just pointing that number out. 15.2% growth. UltraTech, grey cement, domestic volume growth. Thumbs up out there.
Okay, got that. Stock seeing some profit booking. Get into a break. On the other side, we'll invite Vikas Khemani of Carnelian Asset Management and Advisors on the other side. Welcome back. Sun Pharma's acquisition of Organon is one of the largest ever in Indian M&A history. But what were the other major acquisitions done by Indian companies? Hormus is here with some interesting data.
Sun Pharma's deal has been the talk of the town in today's trading session. Of course, that has been so over the last couple of weeks as well. But this is not the first time that an Indian company has gone all out to acquire a foreign entity. But of course, we'll get first up to speed with what Sun Pharma has done today. Now, they will be acquiring Organon, the US-based company, at an enterprise value of close to $12 billion. The pharma sector, the biggest pharma sector deal that we have seen in recent times. But this almost started 2 decades ago, and it was when the Tata Group had gone all out in acquiring the much talked about Chorus acquisition that they made all the way back in 2007 with a $12 billion deal that still gets talked about even 2 decades later. Now, beyond the Tata Group, there was also Bharti Airtel that had a $1 billion acquisition, almost an $11 billion acquisition that they had made around 15 odd years ago in 2010, and that was of Zen Africa, and that is also a company that was acquired by an Indian entity. The big metal transaction, of course, beyond Tata Steel, was when Hindalco went on to acquire Novelis. That has now become a core part of Hindalco's business, a $6 billion deal going all the way back to 2007, and Hindalco's fortunes now very much tied to what Novelis does as well. And of course, the other one was UPL when they had acquired Arista Life Sciences just around about a decade ago in 2018. There was a $4.2 billion deal from the agrochemical space. So that was one major transaction as well. And of course, the big PSU bet had come in 2 decades earlier as well, when ONGC Videsh, which is the unlisted subsidiary of ONGC, when they gone on to acquire Imperial Energy at a $2.1 billion valuation. That was one of the biggest PSU deals that you have seen, especially to acquire a foreign entity, Nigel.
Thanks a lot for that, Hormus. Interesting data. Indian companies going out there, having appetite and going and picking up some of these large companies. Sometimes it works, sometimes it doesn't, but you need to admire the kind of thought process that goes into acquiring a larger company and trying to be very, very successful at that. I recall, in fact, when Novelis initially was acquired by Hindalco, the street gave it a thumbs down. And we know years later that actually, Novelis is now more value than even the Hindalco's core business. The stock from around 200 rupees, if I remember correctly, now it's at around 1,000 rupees in the last 6 to around 7 years. So that's some of the big transactions that took place. By the way, just need to pull up Ultratech Cement yet again. They came in for some profit taking, but this volume growth number actually is good. So that's why the stock has recovered from the day's low. On this sort of a base, when you grow by that sort of a magnitude, it's pretty good. And just one more number I pulled out, Ultratech's brand sale, that's actually grown by 19%. So there is some overlap between India Cement as well as Ultratech. Eliminated out of that, it will be 9.5%. But the core Ultratech brand sale, that's grown by around 19%, which is good. So stock reaction is up and down, but these numbers go down as a thumbs up. Let's welcome Vikas Khemani, founder, Carnelian Asset Management Advisors, who joins us on the show. Hi, Vikas. Good to see you in this afternoon. Well, markets have looked far better in April in comparison to what we saw towards the end of March. First, I wanted your take on this big transaction that's taken place by Sun Pharma. As an investor, at times, you don't want to look at this longer-term vision. You want returns immediately, in the next 4 or 5 years. And sometimes some of these acquisitions don't work out. What's your view on this particular acquisition? Sun Pharma biting big, more than $11 billion.
Hey, Nigel, I think, first of all, of course, M&A is always a, sort of a 50-50 game and depends on the history of the management who does it. From the face of it, it looks quite interesting deal. I think the price which company has paid is quite decent, only 6 times EV to EBITDA. But more importantly, I think more than the price, I think the complementarity it offers to Sun from getting the specialty chemical, specialty portfolio, biosimilar portfolio, and the markets where Sun is not present, including China, Korea, and many more. So I think there is a sort of good complementarity. And of course, a lot depends on how one executes and integrates. But given the fact that Sun has a good sort of track record of integrating M&As and delivering from a long-term perspective, looks quite decent. Obviously, all these things, in any merger and acquisition, there could be always integration pain, which one has to see. But from no entrepreneur does, no company does M&A of this size, keeping in few quarters mind. They are decadal in nature. They are kept in mind for a very long time. So at times, the perspective of investor as well as the entrepreneur can mismatch in the shorter term, but long term, I think seems to be a good deal.
Vikas, hi, afternoon. Have you all been aggressively buying in the month of April?
We've been positive net, whatever, we've been getting decent flows and we are sitting on almost no cash. So we believe that crises are the best times to deploy capital. And every time we have seen historically also, when the crisis hits us, around the crisis hitting us, the markets bottom out, and then as kind of it progresses, it languishes and recovers. Same thing happened in case of tariff. Market bottomed on the day of lockdown. COVID, and same thing happened in case of tariff when it was announced last year. Market kind of bottomed out in around that, and then recovered later on. So I think crisis uncertainties are always there's always a reaction in the market very sharply, and then as you adjust and it settles down. So I think we've been of the belief that these kind of crises do tend to get over, and India will come out on it on the other side once we look back.
Defense, once again, is in the spotlight for the last couple of months on account of the geopolitical tensions. Globally, there seems to be this entire rearmament cycle. Now, in the past, you found defense expensive. What is your view now?
It does not change, to be honest, because not that stocks have corrected significantly. I think defense stocks have kind of pretty much held on. Of course, there's a big rearmament cycle, and I think the real thing you have to do is the company specific assessment. And we own some stocks, but we don't own a lot.
Because someone who's so optimistic about Indian markets, and you always say bad news actually is providing you an opportunity to buy stocks of your choice at the price of your choice as well. And it's good to be optimistic. But if you had to highlight a couple of factors which could make Indian markets a little bit nervous in the time to come, what it would be? Crude could be one. The Indian rupee, if you had to point out the top 3 points that would make you a little bit cautious.
I think, India was going very strong, if you say about a year ago, on current account deficit side. But in last 1 year, India had undergone a triple whammy on that. Number one, I think the gold prices went up. India imports 700 tons of gold every year, which does not go down given our nature of our economy and society. So only the price increased. So if we import $70-80 billion of gold, that bill itself has gone up by $40-50 billion, right? Number one. Number two, semiconductor or chips prices have gone up significantly. India again imports $70-80 billion of chips. Now there the price hikes have happened between 40% to 250%, right? So there also the bill has gone up by $40-50-60 billion kind of range. And third, which came about with this war, was around the oil price, which is again pushed our bill by 40-50. So in a very short time, India has a hit of $140-50 billion of hit, and maybe more a little bit, depending on how the number pans out, to the current account deficit. And that's the reason we are seeing currency depreciating, right? Now, I can see once war settles down, oil price might come down, but other two still continues to remain a vulnerability or pain, right? So I think that's where we are kind of seeing, and especially in an environment when the capital isn't coming, especially on the portfolio side. So I think we need to figure out a way to accelerate the import substitution, manufacturing part far more than what we've been able to do to compensate for this triple whammy. And this can create intermittent volatility, intermittent pain either on the currency or on our finances, depending on how the macro global geopolitical situation plays out. And that, to my mind, will also keep the upside in check for some time. But eventually, I believe that given our policy, I think we should be out of it. But it can create intermittent pain.
What's the one theme you're most bullish on, the structural theme? I know in the past you've spoken about Make in India, but now things change. Now, what is the theme you are most excited about?
Again, India's story does not change very often. Of course, manufacturing kind of themes comes once in a while, and that continues to remain. It's a decadal theme. It's a theme of exports and import substitution. So I think that continues to remain a very, very solid theme. I think probably entire Europe bloc with FTA in 3 to 5 years can come about a very interesting opportunity space now that can play out across various sectors and but I think that block one needs to be studied very, very carefully from opportunity standpoint of view, which was not there before the tariff crisis, but now in last 12 months that has come about and one should look at. Other than that, I think from a sheer opportunity perspective, I feel BFSI could lead the recovery as and when this whole geopolitical situation settles down. Because today we are seeing elevated interest rates, currency and the stress. So that has put some bit of a pressure on the financials, which I think would come out will once it settles down, should do well.
Okay, Vikas, thank you very much for joining in, laying out the themes that he likes a lot. Vikas Khemani of Carnelian Asset Management. Time now to talk about what Dalal Street is saying today. It's D Street Chatter. Nimesh is joining in with his insight. Nimesh.
Hi, Rivana. So it's a decent day of trade. You can see the outperformance across the board. So while the flows are quite mixed from larger FIs, still many of the indices are up nearly 2%. So it's quite spread out in terms of outperformance in today's market. As I said, the mid-cap index is up 1.5%, but a lot of individual names within the broader market, whether it's small cap, mid-cap, micro-cap, are buzzing in trade and reacting to earnings as well. So that's clearly playing out. As a theme, power as a theme continues to outperform. A lot of power names are buzzing again in today's market. And that's been the trend, right? We've been speaking as well that from an institutional investor's point of view, power as a theme has picked up and there is a bit of buying interest as well. Even in today's market, the utility index has gained another 2.5%. And a lot of individual names, whether it's FNO or a cash stock, are buzzing within the power space. Financials, it's kind of a mixed day within the financial names. Though some of the numbers were good, but for the financial, the feedback is that maybe post this Q4, don't read too much into the earnings because next 2 quarters could be headwinds for many sectors and many companies. So mixed view in terms of financials, but clearly power as a theme is playing out and catching a lot of investor attention.
Okay, and Nimesh, what about individual stocks? What are you picking up?
I'll start with the power theme. So first on my list is NTPC. That's been buzzing in trade, good volumes as well. Large buy flows is what I understand, and also there was a Morgan Stanley tactical buy on stocks like NTPC, and hence seeing a big move there. So that's the first name. The second stock is CDMAC. It's a recent listing, not too much of an history, but that's also buzzing in trade today. In fact, intraday it was up 15-16%. Last I checked, it was up 10-odd%. Large volumes as well. And for CDMAC, the buzz is that maybe the company is likely to bag a new product approval very soon. So that's a trigger in CDMAC, and that's the reason why that's buzzing in trade. The third name is Whirlpool. As a theme, the AC themes has picked up in the last couple of weeks. Whirlpool stands out as well. The interest is back from larger institutions is my sense as far as Whirlpool is concerned. Remember, the stock is in a one-way correction, and from lows of 800, we've seen a bit of a pullback in that name as well. And the last is Mahindra and Mahindra. Of course, oil eyes will be on the monthly data, which will come up next week. But from a flow perspective, looks like the selling pressure from a leading FI is largely over. So HNI has bought as well is the buzz. But also as I said, for M&M, the next immediate trigger would be the monthly data, sales data, which will come up next week.
Thank you very much for that. We will get into a break. On the other side, we'll get you a few BTST calls from our technical experts. Stay tuned.
Welcome back. Well, let's welcome Mitesh Thakkar back on the show. Mitesh, what's your take? We've had a good trading session. The Nifty up 200 points. Take some money off the table or ride it along. And also fill us in with your fresh two picks.
On the index, we don't need position, so we'll wait. But on the stock side, we've been trading with long buys. So right now have a BTST on NHPC with a stop at about 82.10 and a target of around 85, 85 half, 86 and NTPC. And both these are power. I think Nimesh was just mentioning the theme. NTPC is a BTST with a stop at 407 for targets of 416.
Thank you very much for that, Mitesh. Let's talk about Maruti Suzuki, all set to report their Q4 numbers. Sudarshan now joins in to tell us what the street is penciling in.
We are expecting another steady quarter from Maruti Suzuki and double-digit volume growth that company has seen in Q4 FY26 year-on-year. That is going to boost the revenue, while rising mix for export segment is going to boost the realization, where we can see an improvement of almost 12% year-on-year, while higher commodity cost may drag margin. So in resultant, profit may increase by 12%, revenue can see a jump of 26%, and EBITDA can increase by 44%, can come in at rupees 6,142 crore, and margin may hit 12% level versus 10.5%. Volumes were up 12% YOY and 1% sequentially. Similar move we have seen in realization, which was up 12% YOY and 1% on a sequential basis. What we'll be watching out for in the commentary, what does company say on the CAFE emission norm draft that central government had released last month, and also Delhi EV drought policy. And Maruti Suzuki is one company which is yet to announce the price hike despite a sharp increase in commodity costs that we have seen in the last few weeks. So we'll have to see what exactly management talks about the pricing on the price hike part, and also if there is any launch on electric vehicle.
Thank you very much for that. Let's talk about Eternal, also going to be reporting numbers. Mangalam joins in to tell us the expectations. Always watch very closely, Mangalam, especially to get a sense of quick commerce, competition, profitability.
More than the numbers, you know, the information docket that the company gives out, it calls it the shareholders letter. So the quality of growth and the numbers that will be reported will be extremely crucial to track this time around, especially in context of the fact that the stock is down about 30% from the peak already. Revenue and, all the numbers comparable would be quarter-on-quarter viewed, because same time last year, the Blinkit operating model was different from this time around. So quarter-on-quarter, the street expects a 5% growth, 17,155 crores on the top line. The EBITDA grows about sub 9%, 400 crores with margin improvement. And at the same time, net profit on a low base seen higher by almost 87%. Just shy of 200 crores is what the street is working with this time around, in which two important things to track: food delivery, NOV, net order value, seen between 16 to 18%. Blinkit likely to grow 95 to 100% year-on-year, and contribution margins of Blinkit will also improve to mid-single digits, which would imply that their EBITDA break-even continues this time around as well. What is it that is important to track beyond just the reported numbers? One, the qualitative commentary on impact on food delivery due to the LPG crisis, competitive intensity in quick commerce, commentary around gig worker payout and how that could impact their unit economics in quick commerce, and potential impact of increase in cost of delivery going forward due to higher fuel prices. Now we know post-elections an increase in petrol and diesel prices are imminent. Would that impact the unit economics of delivery, and thus an impact on offtake as well, is something that we will track the management's commentary closely on.
Okay, all right. Thanks a lot for that, Mangalam. Let's welcome Sudeep Bandyopadhyay, market expert, who joins us on the show. Hi, Sudeep. Good to see you in. What do you expect from Eternal? The stock has seen a big correction from the top. We'll be looking forward to the numbers. How would you be positioned?
Well, Nigel, I've been positive on Eternal for a very long time, and I continue to maintain my view. Look at the quick commerce segment. In spite of the intense pressure from competition, I think we will see Blinkit, kind of growth year-on-year of roughly around 100%. That's what we are expecting. And EBITDA break-even should continue. And a path towards profitability probably will be indicated by the management in the information docket which they share. As far as food is concerned, I think they are already profitable, and their progress will be watched. Their commentary, if any, on multiple headwinds, particularly the fuel price increase, the cost of labor because of the labor benefits which they are passing on now, and of course the LPG crisis will have to be seen and understood. But fundamentally, if you believe in the Indian economy and the growth, I think this is one company you need to remain invested in.
That's eternal. Let's talk about Cohan's life. That's locked in an upper circuit. In fact, earlier Dipan Mehta was also telling us on the show that that's a stock that he likes. He owns it in his portfolio, but now with Umang Vohra coming in, he's all the more excited. So Vinny is now joining in to tell us more. Vinny, the street is also very excited, 20% up.
Absolutely, the street is very excited about this, given that, Umang Vohra has a very good experience in the pharma industry. He's a veteran in the pharma industry. Now, Umang Vohra will be taking charge as the new executive chairman from 1st of May and as the group CEO of the company from 20th of May. The previous CEO, that is Vivek Sharma, will remain in the company as a special advisor for a time period of 9 months. Umang Vohra, like I mentioned, he has a decade of, at least an experience in Cipla itself. And he's focused on transforming Cipla to more of a global player and diversified global player. He's managed to bring up the EBITDA, double the EBITDA in the last 10 years at Cipla itself. And Vohra had stepped down from Cipla in October last year, and now his last day was 31st of March 2026 in terms of resignation. So Umang Vohra coming in, the street is really excited given that he's a pharma industry veteran, and they hope for some change coming in here for Cohan's Life Sciences, which is a CDMO player.
Thank you very much for that. Get into a break, but here is a quick programming note. We step back from the noise of quarterly earnings and ask a far bigger question. Is one of India's most defining economic engines, the IT services sector, at an inflection point? Catch the sector experts on our special market forum, The Tech Trade, tomorrow 4:30 p.m. onwards. We invite you to be a part of this conversation. Send in your queries on email ID on your screens, and the first 50 entries also stand a chance to receive an invite to join us in the studios. Welcome back. The Nifty is hovering around 24,100. Sun Pharma is your big mover, 7% higher, very large volumes. The stock today has crossed all the important technical averages, the 50-day moving average, 100-day moving average, and the 200-day moving average, with this 112-point up move that we're seeing. Reliance Industries is now inching towards a 3% rally, and IT has rebounded after last week's fall. And the other big story is the big move seen in power names on the back of the heat wave that all of India is feeling right now. Sudeep Bandopadhyay is still with us. 9 minutes to go before we wrap up. And it's going to be a good close for our markets. Mid-cap index is up nearly 1.5%. Sudeep, you want to share your views on Sun Pharma? Is it a buy at this juncture, 1732?
Well, I think, it's a fantastic transaction. I think we should be proud of this. Sun Pharma has completely pivoted in a different direction, and it is, I would say, completely different from other pharma companies. About 51% branded, then they have the biosimilars, then they have some others. So about 75-80% of the business is in a different trajectory and not dependent on third party. So I think Sun Pharma has done a commendable job. The acquisition, I understand, based on the commentary, based on what I'm reading, I think it should be becoming EPS accretive very soon. Also, I think this gives them good inroad into China, which I think they wanted. The debt is not unmanageable with the kind of cash flow which they generate and Organon generates on a regular basis. It is very, very manageable. So on the balance, I think it's a very good acquisition. And they have a fantastic track record of acquiring companies and kind of assimilating them and performing. They had done it with Ranbaxy, they had done it with Taro, and I'm pretty confident they'll do with Organon as well. So I think it's thumbs up, definitely. As far as buying the stock is concerned, I think, whenever there is a little bit of a cool off in the market, I think I would prefer to buy then rather than now. But from a long-term perspective, from a portfolio perspective, it is definitely a good stock to hold.
Okay, all right. Sudeep, I want to come across to you and ask you which is your preferred metal stock. But for the time being, we'll just do a quick check on the F&O market. Looking at the options data, the 24,000 put, well, that's seeing very aggressive writing today. And the bulls are making a point because actually the start wasn't as good as what the GIFT 50 was suggesting. And, post that, actually, those intraday dips have got bought into, and we're going to go home with a gain of around 200 points. The PCR had dipped to around 0.75. That's more back towards the 1-odd mark. 24,000 put, just take a look at the premium, down to around 45 rupees. Start of trade was around 210 rupees. 24,100 put as well, premiums down to sub 80 rupees from around 280 rupees. You're pulling up the 24,100 call. We need the 24,100 put, actually. That premium has come down to around 80 from 280. The Nifty, the next level you're looking at is the 50 DMA. That's around 150 points away from current levels. And remember, the Nifty is yet to make a higher high because though, today's high is not as much as what we saw on Friday. So you keep that in mind as well. For tomorrow, that's going to be the target out there. Individual stocks that you're looking at, Tata Power, that's the one that's coming for about a fresh buying and trade today. On Sun Pharma, actually, there's a mix of activity because there is some delivery-based buying. In the F&O market, there is some long built-up, but there is a bit of a short squeeze that's taking place even on Sun Pharma because there were some shorts in the system. On Suzlon, that's clearly a short covering bounce that's playing out there. So one day ahead of the expiry that will play out tomorrow, things looking up actually from a bullish perspective. The Nifty is defending the 23,800 odd mark. The 20 DMA is at around 23,600. And with crude oil prices at these sort of levels of around 107, the bulls clearly believe that the worst with regard to this conflict is behind, but we'll have to see crude oil prices come down for a sustained up move. So that's going to be important to track. Sudeep, I wanted to ask you about the metal stocks. Vedanta, you have that special situation that's playing out. Last few days, the stock corrected, I think, from around 800 rupees to around 710. We did a masterclass on Friday where we explained, various aspects of the business. And what's, Mr. Parekh told us was that the aluminium business and Vedanta itself, the holding company of Hindustan Zinc, will be enough to take care of the current price. The remaining businesses you get free. If you have a view on that name or, stocks like Sarda Energy have moved up. Jaiswal Neko, we here at CNBC TV didn't explain the stock around 40-45 rupees. That's around 105 rupees. What do you like from this basket?
Vedanta definitely have been liking Nigel, for quite some time. And I completely agree with that logic. The way the aluminum has moved globally, I think Vedanta has been extremely lucky. And, the way the Vedanta's aluminum cost structure works, I think, again, they're benefiting in a big way. So at this aluminum global rally has benefited them big time. Of course, 60% holding in Hindustan Zinc has helped them in a big way because the way the silver has moved, zinc has moved. So Vedanta definitely, after correction, definitely merits attention from a medium-term perspective because value unlocking should start soon. But beyond Vedanta, I do like actually Hindustan Zinc now. The results were very good. And, they're already talking about looking at some kind of corporate restructuring, whereby they will do probably like Vedanta, they'll take out the businesses separately and get it listed, which should again lead to some value unlocking. Capacity expansion is happening in Hindustan Zinc, and that should be coming on stream by the next fiscal, I understand. So both silver as well as zinc capacity is going up. performance has been very good. And I think the way the global metal scenario is poised, Hindustan Zinc should continue to do well.
Shriram Finance, Sudeep, after the fall today of nearly 4%?
I like Shriram Finance. In fact, I had mentioned when the results came out that it's a very good set of numbers they have come up with. The asset quality has improved, growth is back, and leave aside a little bit of disruption in demand, which may happen because of the West Asia war in the first quarter. But otherwise, from a 1 year perspective, it is definitely a very good buy. And yes, this correction can be an opportunity for picking up from a 1 year perspective.
The other one that there was a deal on was RBL Bank. That as well has come in for some profit taking. How's that looking?
The results were also good. The results also came out, and a little bit of profit taking post results is understandable. Asset quality is definitely improving, and the deal, fructifying is definitely good. It should get into a different orbit, and the growth should be back in a big way. This is a long-term bet. RBL Bank, IndusInd Bank, both have been our long-term bets.
Got that. Thank you very much for that. Tanla Platforms, it's sort of a forgotten stock, a communication platform, a CPaaS company. Tanla, along with Route Mobile, they've gone through a rough period, but for the last 2 quarters, the company's managed a double-digit revenue growth, and Street seems to be recognizing it. There is a one-time reset, up move that we're seeing. Any thoughts on Tanla?
Well, I think the way we have examined Tanla, we believe that whatever excitement had to come is already come, and the prices have really gone up. So at current level, we will be a little careful getting into Tanla Platforms.
Got it. All right, Sudeep, thanks a lot for joining in and giving us, all of those details. Wishing you a good remainder of the evening. Well, let's wind up the markets for you. It was a good day of trade. The Nifty goes home with the bulls raising their back because there is 200 points that they put on. What did well in today's trading session? Sun Pharma, one would think they were being too adventurous, going ahead and doing an $11 billion deal. Well, the street gave it a thumbs up. Stock up 6.5%. Remember, the last 1 month or so, it was down close to around 12%. But the Nifty Bank, that was a little under the weather. And there were stocks from the banks and the financial space that actually came in for profit-taking post its numbers. Shriram Finance was down 3.5%. Axis Bank was down close to around 3%. RBL Bank as well was under pressure. But the heavy lifting today was done by Reliance Industries. That came out with its set of numbers. They're talking about the Jio IPO as well. The street, jumped onto that stock. It's protected the lower levels, the technical level of around 1300 odd mark. And today it swiftly moved towards that 1370 mark. Other stocks that did well, tech, that was the index that we had highlighted at the start of today, that could be bracing for a bit of a technical bounce because the way it's fallen just one way. And that's precisely what's happened. Tech Mahindra was up 3%. Wipro was higher in today's trading session. HCL Tech as well did pretty well. And the metal stocks, you can't leave them out of the action. Well, they were glittering all the way. Hindustan Zinc, based on the past quarter's numbers and the way ahead, well, that stock in fact was up. Vedanta, that one of the entities will be holding that stake in Hindustan Zinc. Well, that celebrated as well. That's up close to around 3.5%. You had other stocks from the broader markets like India Cement that was up and about. Jaiswal Nico reacted positively to its numbers as well. And a whole host of other names like Sarda Energy were up and about in today's trading session. Net, headline index looks good. But the bigger reason to celebrate today was that the breadth of the market was firmly in favor of the number of stocks advancing. More than 3 stocks advanced for one stock that was declining. The bulls have started off the week on the positive note. They'll be hoping they can continue with this good form. Well, on that note, we'll wrap up on this edition of A Closing Bell. You stay with us. The team of Markets Forward is waiting by.
Markets end higher with the Sensex and the Nifty snapping a 3-day losing streak. The Nifty closes above 24,100 while mid-caps outperform.
Sun Pharma acquires US-based Organon with an enterprise value of $11.75 billion. This is among the largest foreign acquisition by an Indian company. The Wall Street waves a thumbs up to the deal, which will double Sun Pharma's annual revenue to more than $12 billion.
Ultratech delivers a good number in the fourth quarter. Net profit and EBITDA rise over 20%. Margins also expand, and the board has also approved a special dividend of 240 rupees a share.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points together for the next trading day. I'm Sonal Putra. With me is my colleague Hormiz Fatakia. Hormiz, good afternoon. A good trading session. We ended higher and above the 24,100 mark, 210-point gain on the Nifty as well. And for a larger part, Bank Nifty was quite volatile, right? But that towards the end of the trading session did support the Nifty. Reliance Industries was one of the big gainers in Nifty. A lot happened beneath the surface. Too many earnings. Mid-cap index too was up around 1.5%. Across the board, all the sectors ended in the green. Nifty IT, for instance, which was not doing so well last week, a big gainer today. So all in all, good day for the bulls.
A day that belonged to the bulls indeed, and that was despite the volatility seen on the Nifty Bank. And of course, as you mentioned, Reliance Industries was the big contributor towards the index upside. Also adding to the bullish sentiment is the fall in the wicks. So 7% drop on the wicks, and earnings reactions as well. The earnings reactions both on the positive side and on the negative side as well, and both of those have been on the extremes. There have not been subdued reactions to results. They have either been very strong ones or they have been very weak result reactions as well. But here's what we have lined up in store for you today. We start with the top movers and shakers of the day with Sudarshan. We decode why Sun Pharma, MobiKwik and power stocks were buzzing in trade today. And last but not the least, we delve into the key market events to watch out for going into tomorrow's monthly expiry. Now to our first segment, Sudarshan is here with the big movers and shakers of the day. Sudarshan.
It was a good day of trade. Nifty has surged almost 200 points, and we had some of the top Nifty gainers. Sun Pharma surged almost 7% after announcing acquisition of Organon. That's the US-based pharma company. Reliance too has seen a big up move after reporting a steady set of earnings for Q4 FY26. Even Jio Finance has been moving higher for the last few trading sessions. Today also this stock was up more than 3%. SBI Life, after seeing a sharp down move on Friday, today has seen a recovery and closed with a gain of almost 3%. And amongst all the IT packs, Wipro was the top Nifty gainer, up almost 3%. And we also saw sharp reaction to earnings. Shriram Finance, despite reporting a steady set of earnings, but the commentary was mixed, and that's dragged the stock. And at the end, it was down almost 4%. Ultratech 7, despite reporting a stable set of earnings, stock closed near flat line. Axis Bank, it was a mixed set of earnings for Q4. That's the reason you can see 3% down move. IndusInd Bank and Varun Beverages, both these companies have reported a stable and strong set of earnings for Q4, and that's the reason both these stocks are up 6% each. Some of the other top mid-cap gainers, Hindustan Zinc company, while talking to CNBC 18, has said there can be certain commentary related to demerger going forward, and that's the reason. And also the earnings were largely stable, and the stock up almost 7%. Paytm has seen a sharp recovery from day's low because there is no financial impact because of RBI's action on Paytm Payments Bank, and that's at the end the stock was down just 1%. At one point it was down 8%. Cohance Life hit upper circuit 20% because company has announced that Umang Vohra, former Cipla CEO, is now appointed group CEO, and that's the reason up 20%. Anant Raj also has provided the clarification related to ED search. The stock up almost 8%. All the power and AC names were higher. Voltas, Blue Star, JSW Energy, Suzlon, Torrent Power, all these stocks were up in the range of 4 to 8%, and that too with healthy volumes.
Okay, all right. Interesting names there. Big search across the board. And the biggest one, of course, in the Nifty pack was Sun Pharma. Thank you, Sudarshan Duja, for joining us with that list. But let's talk about Sun Pharma. It is set to acquire US-based healthcare company Organon for $11.75 billion, one of the largest overseas deals by an Indian pharma major. The deal is expected to double Sun Pharma's annual revenue to more than $12 billion. The company's management said it is open to take on debt to drive growth with a comfortable leverage position and strong cash flow visibility. Let's listen in.
As a company, we ourselves are debt averse. However, we are not risk averse. So at some point of time, when we think that the debt will help us scale the business and change the trajectory of the business, we are comfortable with debt. Not debt alone, but also based on our internal assessment of the future cash flow and our ability to repay the debt or bring it down to a much more reasonable level. Because I think even like what Jayashree explained, when we are raising the money or we will pay for the company, the debt to EBITDA is 2.3 times. It's not a very high debt ratio, even though the amount of debt would be significant. But we should be able to repay the debt within a reasonable period of time.
What I see as a much bigger opportunity is on innovation side is our ability to license products globally for the entire market, like for 140 countries on both in terms of women's health and other therapeutic areas. Second side on innovation is they also have a product called Vitama, which fits very well with our dermatology portfolio. And third product is Emgality, which is a different therapy area, is a migraine, but it's a good innovative product with a patent protection, and it has a long run up to grow further. Second come the established product business, where the 50 or 51% of the revenue comes from extension or new formulation or even new combination of the product. We can have this brand grow from where it is today. And third, of course, biosimilars, they are growing 13%, and biosimilar, as I explained you, is a much bigger opportunity. In terms of number of product getting LOE by 2035 is almost 320 billion. So we have to consistently and constantly look at what are the new biologics I can in-license and make them successful.
And to take this discussion forward, we are now being joined by Steve Bandyopadhyay from IndiTrade Capital and Jay Thakkar from ICICI Securities. Gentlemen, good afternoon. Thank you for joining in. Jay, to you first. This nifty rebound that you have seen today, gaining almost everything that we lost on Friday. Do you use this to trim your positions down?
Very good afternoon to you, Hormaz, and Somal. Well, I would say that overall trend, or I would say the overall bias on the Nifty is positive from the medium-term perspective. We did see some short-term profit booking from the high levels last week, wherein for the 3 consecutive days we saw Nifty in fact struggling to move higher, and we saw some profit booking. However, I would say that 24,000 levels acted as a crucial support, and Nifty managed to bounce back above those levels in today's trading session. So I think going forward into the May series, because tomorrow is the monthly expiry, Omega, I think that 23,500 for the May series is going to be very critical support, and we are not expecting Nifty to fall below those levels going forward as well, because as you also mentioned at the start of the show that the volatility index fell today. So overall, we think that the VIX has cooled off significantly from the high levels, and overall trend now for the VIX is going to be negative. It's going to be inching lower only, and it's unless it trades below the levels of 20. I think 23,500 levels will be held. Going forward in the May series, we think that 24,800 to 25,200, that is going to be the range on the upside. And the way the banking pack has also recovered quite sharply from the lower levels, along with the Nifty Pharma and Reliance as well, as we're talking about Nifty Pharma. I think the overall trend is positive. It's just one sector, Nifty IT, which has been a pain, Thomas, I would say. And if at all we see some pulling off or some pause in selling pressure as far as Nifty IT is concerned, then I think the upside levels from here on could be seen very easily. So apart from Nifty IT, I don't see any major index which would be trading with a negative bias going forward. So my bias is positive going forward, and I think 23,500 would be a very critical support for the May series.
Okay, critical support for May series. Sudeep, a lot of moving parts in the markets today, especially the pharma pack. Anything that you like? What is your take on Sun Pharma? Then Cohance as well. That leadership change that came by after this underperformance, there was a big spike in the stock price?
Well, I think very good news for pharma today. I think the Sun Pharma-Organon acquisition is great news for Indian pharma. Sun has completely transformed itself from what it was to a pretty much branded company. 51% of its business will come from branded segments. Then they have biosimilars and others. So about 70+% will be differentiated products, which is unique amongst Indian pharma companies. Overall, the acquisition will be good. I think the management is talking about it being EPS active from year one. The debt also is very much manageable considering the cash flows of Organon and Sun Pharma. So I think, leave aside, today's excitement around the valuation. If there is a correction in Sun, it will be worth acquiring it from long-term perspective. Cohance, of course, it has been a gross underperformer in the market for quite some time. Mr. Umang Bora coming in has raised hopes and expectations, and that's pretty much the reason why the stock is on an upper circuit. We'll have to wait and watch. It has definitely potential. Let's see how Mr. Bora takes it forward.
Indeed, and that was the two big pharma names that were the talk of today's trading session. The other major announcement that came in today were results from Ultratech, and it was an all-round beat this time around. The profits were up over 20%. The board also announced a special dividend. Nigel is here with the report card. Nigel.
Well, that's right. Ultratech's numbers actually look quite good. If you just compare the operating profit in comparison to our poll, it was a good beat, close to 7% higher. The absolute number came in at around 5,600 crores. The margins as well came in at around 21.7%, which is very, very heartening given that we were working with the number of close to around 20%. Their focus on the cost side really seems to be paying off big time in uncertain environment, because the green power mix now stands at around 43% of the total power consumption mix. Remember, just a year or so ago, it was only around 34%. So that's good. Pet coke prices have been moving up because that moves up in line with what crude does. And pet coke as a percentage of the mix, that's come down to around 41% from around 54%. So clearly they're focusing on the cost side. And that's what led the operating EBITDA per ton to pop up by close to around 170 rupees. It came in at around 1,253 rupees. You can clearly see on a sequential basis as well as on a year-on-year basis, there's a good improvement in the profitability. The volumes, the grey cement volumes came up by close to 9.3%. But Ultratech brand sales, that popped up by close to 19%. And that's something that the street will like very, very much. Utilization levels as well held around the 89%. So on the volume front, no worries, that's a grey cement. And on white cement, the volumes popped up by around 15%. The cherry on the cake is that they're taking a big capex plan. On an annual basis, they're spending 10,000 crores on capex, but yet the debt number seems to be, under check. In fact, on a year-on-year as well as on a sequential basis, the debt number came down. So put everything together on that sort of a base where you deliver that sort of a growth and you focus on the cost side as well as keep debt in check. The stock, in fact, was a little bit flattish today, but otherwise, the numbers look quite good.
Okay, numbers look good. That's on Ultratech Cement. Sudeep, coming to you on this one, are you bullish on the cement pack, particularly for Ultratech? Would this be one of your buys?
Well, it has been one of my buys for a long time. I definitely believe in what's happening in cement. The demand-supply position is excellent from a manufacturer point of view, and that's why probably the price hikes haven't come in as such, but the volumes are good and volumes have been going up. Ultratech definitely has transformed itself. The competition has definitely kind of encouraged it to do many more things than what they were doing earlier. And the performance has continuously and regularly improved. Also, one should look at the performance of India Cement, how things have transformed, things have changed post Ultratech getting involved there. The cost control and cost efficiencies which Ultratech is extracting is absolutely fantastic. So we are positive. The valuation is not cheap, and one has to remember that. If somebody is planning to enter, they can enter if taking opportunity of some correction in the near future, but plan to hold it for long term. It's not a stock where you will make quick bucks.
It's not a stock where you will make quick bucks. That's the point to be understood, Sudeep. But power stocks, of course, those are the ones that continue to do well. Even in today's session, they are continuing from where they left off towards the end of March as well. Tata Power, Torrent Power, Adani, NTPC, all of them were higher today. In fact, Torrent Power was also at a 52-week high in today's session, along with names like CESC. But Sonal, what's driving this move in a lot of these power names?
We hit a peak level in terms of consumption for power, and that is specifically on April 26, that's Saturday, 256 gigawatt. That was power consumption in the country. The last time we saw this record high level was back in May 2024 at 250 gigawatt. The government says they will be looking at peak consumption of 263 gigawatt in the month of April, and this year it should peak at 270 gigawatt. If we map April itself, in the first half of April or early April, we saw consumption of around 210 to 220 gigawatt. It moved to levels of 232 to 239. And then come April 25th, that's the weekend, we saw 252 gigawatt. And on April 26th, we hit that high of 256 gigawatt. Of course, we've seen that 35 to 40 gigawatt of jump within a month itself. Demand sustained over 230 megawatt in the second half. A lot of it is happening because of late month spike, which is driven by heat wave. That continues to be the biggest factor for this surge in consumption that we are talking about. Across the board, be it most of these states, Maharashtra, for instance, saw a peak demand of 26,700 megawatt. It is amongst the largest contributors. If we talk about Tamil Nadu, peak demand of 21,000 megawatt. We did have Kerala with a peak demand of 6,000 megawatt, which saw record consumption levels as well. Now, if we talk about the fuel mix, where is this energy getting generated from? Thermal continues to be the biggest contributor, 75% coming in from there. Be it coal, lignite, you have gas as well, 20 to 25% coming in from, or 25 to 30% coming in from solar, hydro, wind. The question remains what it does to our grid. A lot of these power utility stocks are already up 30 to 50%. There are valuation concerns as well. However, considering the consumption levels that we are hitting and the heat wave that could continue, we are just in April, the consumption is something that we'll be tracking very closely, and ultimately what happens to power stocks.
Well, unsurprising considering how hot and sultry it is outside right now. The power stocks continue to do well on that peak power demand. Jay, on the charts, what among these power names still excite you? Of course, a lot of these stocks have gone up significantly in the month of April. But where are the charts looking favorable even now after this kind of move among these power names?
Sure, Homas. I mean, this is a very interesting sector, I would say, Homas. The reason being is that if you see even during the fall, when the geopolitical tensions were growing, that point of time also, there were a couple of sectors which really outperformed the market, and power was one of that, which was quite resilient. In fact, we saw a clear outperformance of this sector during the war period as well. And it really outperformed the benchmark indices. And right now also the momentum is not taking a pause. In fact, it's gaining further momentum, and it's still trading higher. And I think there is a couple of opportunities out here. One stock would be Tata Power, wherein the overall leverage as far as derivatives is concerned is still quite low. We don't have much of long positions out there, and it's trading around the levels of 453 on the downside. I believe that 430 on an immediate basis is a very critical support. So that can be looked into. I think that the overall trend is positive out here. It has provided a breakout from a good consolidation. So from the long build-up, or the probability of a good long build-up, Tata Power is one such stock, wherein the leverage is still quite low. Torrent Power, as you mentioned, is clear in an uptrend. In fact, that is where we have seen the long build-up happening. So from that point of view, this stock also can be looked into. So these are two stocks, Torrent Power and Tata Power, I think, which still has a lot of opportunities on the long side from here on. And two other stocks which I would like to add, Homas, is REC and PFC. Both from the point of view of short covering. I mean, it's been 1.5 years, still 18 months, the stocks were trading with a negative bias. We have seen good short build-up out there. And the kind of recovery which we have seen in the recent month, in the April series, has been phenomenal in these two names, mainly on account of short covering. So there is still much more room left out here, at least by 15 to 20% in the near term, wherein we can see some short covering happening because of this momentum out there in the power sector itself.
Power, that continues to remain the sector of the month possibly, but there was plenty of news-driven action on the last street today. Stocks like Mobi, Quick, Cohance, we just spoke about that, and even Paytm that were in the thick of things. Devyani is now joining in with these names. Devyani.
Well, first up is Paytm. RBI has cancelled the payments bank license for the company effective April 24th, 2026. There's no expected impact on the core business or the financials of the company. Next up is MobiKwik. The company received RBI approval for its NBFC license. They're launching direct lending via the MobiKwik Financial Services. Also on our radar, Cohance Life Sciences. It was in focus on the back of a management reject. Company has named Umang Bora as its new executive chairman and group CEO. He will take on as the executive chairman on May 1st and assume the group CEO role from the 28th of May onwards. On the back of earnings, the Supreme Industries, after a steady Q4, revenue was up 17% while net profit jumped 48% with margin expansion. Sales volume has reached 2.32 lakh metric tons this time around. Also, Varun Beverages, after the company reported a good set of results. Revenue growth of 18.1% year-on-year reported, supported by domestic volume growth of 14%, while in the international territories, a volume growth of roughly around 21%. Last up is Mahindra Holidays. After a weak set of numbers, the single-digit revenue growth this time around with margins under pressure.
All right. Thank you so much for joining us with all those details, Devyani. Sudeep, coming to you, anything that stood out for you? MobiKwik getting its NBFC license, Paytm being stripped off one of its licenses. What stands out for you?
Well, Paytm is kind of a market, and generally we all are aware of what was happening. This has been going on for the last 2 years. So it is pretty much on the expected lines. That's probably the reason why market reacted and then came back, and it closed with only minor cuts. As far as MobiKwik is concerned, I think getting an NBFC license is definitely good news, but I think that in itself doesn't change anything. Amongst competitors, I would rather buy a Paytm than MobiKwik at this stage.
From almost post-listing highs of 700, MobiKwik is now at 224. Sudeep, Jay, thank you so much for spending time and joining us today on the show. We'll take a short break, get you all the top corporate voices and the key events to watch on the other side. Stay tuned. Welcome back. On to some top corporate voices of the day. The MD and CEO of IDFC First Bank told CNBC TV 18 that the bank is on track to return to around 20% growth next year. He, however, flagged that bond yields rising 30 to 40 basis points last quarter amidst geopolitical tensions led to a treasury loss of about 150 crore rupees.
Shriram Finance's Executive Vice Chairman indicated a calibrated slowdown in MSME disbursements as the company stays watchful amid evolving conditions. Credit levels are expected to remain broadly stable with an adverse monsoon flagged as a key risk.
Hindustan Zinc expects over 50% EBITDA coming from its silver business on the back of higher prices. It expects the precious metal to be in deficit over the next couple of years. The company also estimates renewable energy to contribute to 30% from the current 18% to keep a cap on the cost of production.
Okay, and before we wrap, we bring you some key market events to watch out for. Upasana Bhatt is standing by with the key events. Upasana.
Well, first up, let us look at some of the important results. Companies like Maruti Suzuki, Eternal, GRSC, Bandhan Bank, Castrol, Seat, Dalmia Bharat, RAC, Sapphire Foods, all these counters will be reporting their Q4 FY26 numbers tomorrow. So we'll be keeping an eye out on that one. Now let us look at some of the important core domestic economic data. RBI to auction 14,500 crore state government securities tomorrow. So we'll be certainly keeping an eye out on that one. And even the IIP data for the month of March will be out tomorrow evening. And mind you, in terms of other events, PM Modi will visit Varanasi on 28th and 29th of April to address some of the various project launches and even the women's meet. And lastly, Google to kick off its massive $15 billion data center project. So that is also something we'll be keeping an eye out on. Now, on the flip side, in terms of the global cues, let us look at some of the important ones. FOMC meeting is scheduled from April 28th to 29th, and even Bank of Japan interest decision will be out tomorrow. And in terms of some of the key global events, in terms of other ones, King Charles will make a state visit to United States in Washington, D.C. to address the Congress. So that is also an important one. So all in all, looks like quite an eventful day tomorrow.
Okay, all right. Thank you, Upasana, for joining us. And with that, it's a wrap on this edition of Markets Forward. Thank you so much for tuning in. We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Iran's foreign minister arrives in Moscow for talks with Russia's President Putin as he steps up diplomatic efforts to end the war with the US. US President Trump says Iran's leaders can call us to negotiate after cancelling a planned visit by his envoys to Islamabad. Crude oil prices remain elevated as the Strait of Hormuz remains choked for shipping. Israeli attacks kill 14 people in Lebanon in what is the deadliest day since the ceasefire. Dalal Street snaps a three-day losing streak. Nifty ends above 24,000. All sectoral indices close in the green. Pharma and IT stocks lead the gains. Mid-caps outperform. Sun Pharma acquires US-based Organon with an enterprise value of $11.75 billion. This is among the largest foreign acquisition by an Indian company. Dalal Street waves a thumbs up to the deal, which will double Sun Pharma's annual revenue to more than $12 billion. A sweltering heat wave scorches large parts of the country. More than 90% of the world's hottest cities are now in India. Weather department warns conditions could worsen over the next few days. Government considers 5,000 crore rupees in emergency credit to airlines impacted by the war in West Asia. More than 15,000 flights cancelled in the last 2 months, leading to potential losses of nearly 6,000 crore rupees. Indian Airlines are currently operating only 25% of their scheduled flights to the Gulf region. The high voltage campaign for West Bengal draws to a close. Election Commission tightens security around 142 constituencies that will vote on Wednesday. The 31-year-old gunman appears to have acted alone, had a shotgun, handgun and knives. Union government holds a high-level meeting with states to crack down on counterfeit goods to finalize a roadmap for nationwide enforcement. Adulterated food and spurious medicines emerge as a national challenge with more than 24 seizures in the last 3 months. Auto rickshaw and taxi driver unions across Maharashtra up in arms after state government plans to impose a Marathi mandate starting the 1st of May. Drivers could lose their license if they do not have basic knowledge of Marathi and will be subjected to checks by the Transport Department. All right, the top story this evening, the US and Iran remain locked in a tense, open-ended standoff as negotiations have stalled. Let's break down the latest developments. Iran has reportedly offered the US a new proposal to reopen the Strait of Hormuz and end the war. However, Axios has reported that this deal proposes to postpone nuclear talks to a later date. Iran's foreign minister raised the plan during his meetings in Islamabad over the weekend. The US has received the proposal but is yet to respond. Trump is reportedly expected to hold a Situation Room meeting on Iran with his top national security and foreign policy team today. Meanwhile, Tehran has stepped up diplomatic efforts to end the war with the US while blaming America for the stalemate. The Iranian foreign minister arrived in Russia today after his visit to Pakistan and Oman. Arakchi said that the US-Iran conflict would be on the agenda during the discussions with Russian officials. He added that the talks failed because of Washington's excessive demand. Arakchi went on to say that Oman has agreed to continue consultations to secure safe transit and protect shared interests in the strait. On the other hand, Trump has now ruled out in-person negotiations with Iran. The US president told Fox News that Iran could telephone US officials if it wants to negotiate an end to the conflict. Trump said that talks in Pakistan would be, and I quote, wasting too much time. He added that Iran's oil storages are full because of the US blockade in Hormuz. He claimed that Iran has about 3 days before the country's oil pipelines risk explosion from being clogged up. The US has claimed that it directed 38 vessels from Iranian ports to turn around or return to so far in the crucial waterway. The US CENTCOM added that American forces continue to enforce the US blockade, stopping ships from both entering and exiting. However, Iran appears to continue loading oil despite the US claims. A ship tracking website, Tanker Trackers, has said that Iran has loaded the equivalent of 4.6 million barrels of oil at crude oil terminals. The site has reported that ships carrying these barrels appear to have crossed US blockade. The tensions in the strait have kept crude prices elevated, with Brent now inching closer to $110 mark. Meanwhile, in Lebanon, Israel killed 14 people in fresh strikes as the tenuous 3-week ceasefire continues. Thousands were forced to flee after Israeli forces issued new evacuation orders in the southern part of the country. Both Israel and Hezbollah have accused each other of ceasefire violations and claim that their attacks are retaliations to these violations.
Pakistan is playing an important mediating role in the negotiations between Iran and the United States. It was necessary to have a review of the latest situation. In any case, developments have occurred in the negotiations. The Americans' approaches caused the previous round of talks, despite the progress that had been made, not to reach its objectives. The excessive demands they made and the incorrect approaches they adopted. It was necessary for us to have consultations with our friends in Pakistan to examine the latest situation.
The 31-year-old gunman who fired shots at the White House correspondents' dinner is set to appear in court. Authorities have revealed his identity as Cole Allen from California. Officials say the gunman was targeting President Trump and administration officials. He faces charges including assaulting a federal officer and discharging a firearm. The gunman appears to have acted alone and had a shotgun, handgun and knives.
A man charged a security checkpoint armed with multiple weapons, and he was taken down by some very brave members of Secret Service, and they acted very quickly. The man has been captured. They're going to his apartment. I guess he lives in California, and he's a sick person, a very sick person.
All right, on to the day's market action. The market snapped a 3-day losing streak. Nifty ended near the 24,100 mark, while Sensex rose over 600 points. All sectoral indices closed higher, with Nifty Pharma and Healthcare being the biggest outperformers. All right, the big corporate story this evening, Sun Pharma will acquire US-based Organon for $11.75 billion. The deal helps the company strengthen its branded and generics portfolio. The combined annual revenue will also cross $12 billion. This is also the second largest acquisition by an Indian company overseas. The Tata Group's acquisition of Chorus nearly 2 decades ago remains the largest deal with a valuation of $12 billion. Sun Pharma's acquisition sits above Bharti Airtel's acquisition of Zen Africa for $10.7 billion. Ekta Batra is here with more on the deal and what it means for Sun Pharma and the industry at large.
It's official. Sun Pharma is acquiring US-listed Organon for $11.75 billion, the largest overseas acquisition ever by an Indian pharma company. Sun pays $14 per share in cash, equity value at around $3.99 billion, with the balance covering Organon's net debt of $7.6 to $7.7 billion. The deal closes early 2027, funded through $2 to $2.5 billion of Sun's own cash and bank financing. So what does Sun get? Organon is a $6.2 billion revenue, $1.9 billion EBITDA business across women's health, biosimilars, and established branded medicines in 140 countries. The deal doubles Sun's revenue to $12.4 billion overnight, makes it a top 25 global pharma company, top 3 in women's health, 7th largest biosimilars player globally, and it essentially fills 3 gaps Sun couldn't fill organically: women's health, biosimilars, and direct commercial presence in Europe and China. Innovative medicines jumps from 20% to 27% of revenue. Biosimilars, where Sun had 0 presence, now contributes around 6% in terms of total sales. The concerns, however, are real. Sun goes from a net cash to net debt overnight, 2.3 times net debt to EBITDA post-deal, and debt repayment is the stated priority, with $2 to $2.4 billion in combined free cash flows. Guidance is that the debt burden should reduce in the next 4 to 5 years. Dividend policy is also under review by the management. Key factors that will be watched closely going forward: integration of 50,000 plus employees, though Sun points to Ranbaxy and Taro as its proof of concept earlier. Street will also watch for synergies, which are guided at around $350 million over the next 2 to 4 years, and any impact of tariffs in the US on Sun, Organon, or the combined entity. Organon's growth is the other overhang. Revenue has been flattish over the last 3 years. Its largest segment, established brands, declined around 4% in CY25. Sun, however, is targeting single-digit growth through line extensions and product combinations. Geographically, India drops from 33% to 17% of revenue, and the US from 31% to 27%, which some investors see as dilutive to revenue quality. On valuations, the deal comes in below that $13 billion speculated mark, so that's a positive. At around 6.2 times EBITDA, analysts are broadly supportive, some calling any stock weakness a buying opportunity, others flagging near-term range-bound pressure from the deal overhang. Sun says it will be EPS accretive from day one, and management is clear. They cannot give specifics on near-term growth. This is about longer-term value creation, not a 6 to 12-month story. The financial logic is sound. The execution is where Sun will be judged going forward.
As a company, we ourselves are debt averse. However, we are not risk averse. So at some point of time when debt will help us scale the business and change the trajectory of the business, we are comfortable with debt. But we should be able to repay the debt within a reasonable period of time.
Right, shares of 197 Communications, Paytm's parent company, declined in trade. This after the RBI cancelled the banking license of Paytm Payments Bank on Friday. The Payment Bank's board initiated the process of winding up its operations with the board and shareholders approving the move at a meeting held on the 25th of April. The company said that the winding up will be carried out in accordance with regulatory directions and subject to approval from the central bank. The Reserve Bank has granted approval to MobiKwik Systems to operate as a non-banking financial company. The company plans to set up a wholly owned subsidiary to house its lending business. This will enable it to expand credit offerings under a regulated framework. The new entity will focus on delivering both secured and unsecured loans. The government is planning to roll out a 5,000 crore relief package for airlines under the Emergency Credit Line Guarantee Scheme. Sources have said that this proposal is likely to be placed before the cabinet this week. The move comes as financial stress on the aviation sector has intensified with rising cost pressures linked to the prolonged tensions in West Asia. The scheme will be aimed at easing liquidity stress, especially for cash-strapped carriers. More than 15,000 flights to West Asia have been cancelled in the last 2 months since the conflict began. Indian Airlines are currently operating only 25% of their scheduled flights to the Gulf region. Madiha Mujawar is here to explain the financial impact of the conflict on Indian aviation. Madiha, the losses keep mounting. What are you picking up?
Well, the scale of the losses is quite significant. Over 15,400 flights have been cancelled by Indian Airlines alone since February 28, when the West Asia conflict began. That's 2 months of disruption and a sharp drop in connectivity to West Asia. Airlines are now operating just 50 to 55 flights a day to the region compared to nearly 200 flights pre-conflict. The impact on passengers is also substantial. Over 13.6 lakh travelers have been affected due to cancellations, delays and rerouting. But beyond operations, there's a serious financial hit. Industry estimates suggest that Indian Airlines could be staring at a revenue impact of over 6,000 crore. That's also a conservative calculation. So a typical India Gulf flight, often operated by aircraft like the Airbus A320 or Boeing 737, the narrow body planes that carry around 150 passengers on an average, considering a load factor of 85% per flight. With a fare of 18,000 rupees on an average and an additional earnings from cargo, seats, meals and ancillaries, airlines make roughly 40 lakh per flight. Now multiply that by 15,400 cancelled flights and the revenue at risk crosses 6,000 crore, and this does not even include higher fuel burn and costs from longer rerouting. So while flights are still operating, Indian Airlines are now navigating both operational disruption and mounting financial pressure as the crisis continues.
All right, thank you, Madiha, for that update. Moving on, General Atlantic-backed ACCO has appointed investment bankers for its upcoming initial public offer. As per Money Control, the IPO is expected to include a mix of a fresh issue and an offer for sale by existing investors. The firm is targeting a valuation of $2 to $2.5 billion. Cement major Ultratech has reported a steady set of numbers in the fourth quarter. Net profit and margins beat estimates, while revenue came in line. On an annual basis, net profit grew over 21%, while revenue jumped nearly 12%. The board has also approved a special dividend of 240 rupees a share. Private lender Axis Bank has trimmed its employee headcount by around 3,000 in FY26. This comes as the bank continues to see productivity gains from its investments in technology and digital capabilities. The bank's total workforce also declined 3% on an annual basis. On a sequential basis, the headcount declined by 552 employees in the March quarter. Now, India is grappling with a severe heat wave with temperatures soaring close to 47 degrees Celsius in several parts of the country. India's Met Department has warned that heat wave conditions are likely to persist over the next couple of days. Parts of Vidarbha, Rajasthan and Uttar Pradesh are among the worst affected. The highest maximum temperature was recorded at 46.9 degrees Celsius in Akola, Maharashtra. More than 90% of the world's hottest cities are now in India. Authorities have also flagged health risks, urging people to avoid prolonged exposure to the sun, stay hydrated and take precautions as extreme conditions continue. Santya Gora has more.
Rising mercury continues to wreak havoc in parts of Himachal, Delhi, Uttar Pradesh, Madhya Pradesh, Maharashtra, Punjab, Haryana and Rajasthan. IMD has issued a heat wave warning for these regions for the next 3 days. Weather factors like clear skies, ensuring more absorption of solar radiation and an anticyclonic circulation trapping the heat are responsible for this phenomenon.
This is the anticyclone which you see. It is over Maharashtra. So what role does this exactly play? Your earth is getting hot, warm air is getting advected. Now, whenever there is an anticyclone, it is the characteristic of the anticyclone to subside the air. Yeah. So, see, this anticyclone is placed over Maharashtra. So the air is getting subsided. When the air is subsiding, what does it actually mean for a layman? It means that the warm air is unable to rise.
So heat is trapped. IMD has said that the development of a western disturbance will lead to some rain spells and thunderstorm in parts of Himachal, Delhi and northwest India, bringing some relief in these regions by this evening. Maharashtra will also witness slight relief by tomorrow.
The winds in the lower levels, though northerly, will not be that strong. So the advection of heat will be lesser. And the anticyclone is getting distorted. So when the anticyclone is getting distorted, the heat wave is likely to abate over Maharashtra. It doesn't mean there is going to be a huge respite, but this type of this degree of discomfort may slightly reduce.
IMD has advised people to avoid heat exposure and stay hydrated. IMD has also issued an advisory for farmers, including ensuring frequent irrigation and shade for newly planted crops. Now, these prolonged and severe episodes of heat wave have become an every-year phenomenon for India. In 2025, medical journal The Lancet published a report stating that in 2024, out of 19.8 days of heat wave, 6.6 days were a result of climate change. The study also claimed that between 2001 and 2023, India lost 2.33 million hectares of its green cover, and out of 189 most populous cities in the country, 14 cities had extremely low level of greenness and 110 cities had very low level of greenness. Now, this western disturbance will bring some relief for 5 to 6 days, but it won't ensure that this will be the last phase of heat wave for India for this summer. In Mumbai, with camera person Milind Wagmare, this is Santya for CNBC TV 18.
India's power demand has surged to record highs driven by a heat wave across the country. Peak electricity demand has touched 256 gigawatts in April 2026, the highest level ever recorded. The government now expects demand to climb further to around 263 gigawatts this month. Looking ahead, the centre projects that peak demand could cross 270 gigawatts over the course of the year. Coming up, auto rickshaw and taxi driver unions across Maharashtra are up in arms after the state government's plan to impose a Marathi mandate. Details up in a bit. Welcome back. India and New Zealand have signed a free trade agreement after 13 months of continuous negotiations. With this deal, India has trade pacts with all members of the Regional Comprehensive Economic Partnership, barring China. The Commerce Ministry has said that there will be zero duty market access on 100% of India's exports to New Zealand. New Zealand has also committed to invest $20 billion in the Indian market over 15 years. However, certain items including dairy, coffee, milk and edible oils will be excluded from the agreement. Now, auto rickshaw and taxi driver unions across Maharashtra are up in arms after the state government's plans to impose a Marathi mandate. Starting the 1st of May, drivers could lose their license if they do not have basic knowledge of Marathi and will be subjected to checks by the Transport Department. Sneha Biswas reports on the government's plan and why the unions are protesting it.
For auto and taxi drivers in Maharashtra, a driving test will soon be the least of their worries. Starting from May 1st, their fluency in Marathi will determine whether they'll get a permit or get to keep the one that was issued within the last 10 years. Failure to do so may result in the permit being denied or even cancelled.
सरकार के पास दूसरा कोई मुद्दा है नहीं, अननेसेसरी ये सब बात बोल के मिसगाइड कर रहे हैं।
रोजगार चल रहा है, उसके ऊपर पैर मत रखो, उसको चलने दो अच्छी तरह, और जिसको नहीं आ रहा तो उसको सीखो, सीखने की कोशिश करो।
भाषा सब जगह एक दूसरे का आना चाहिए, लेकिन नहीं आता है तो उसको क्या कर सकता है, समझो तुरंत तो कोई बोल नहीं सकता है मराठी।
हम लोग इसका सपोर्ट में नहीं है, हम लोग इसका अगेंस्ट में हैं, हम लोग इसका विरोध कर रहे हैं।
लोगों के पेट में अगर लात मारने के काम सरकार करेगी तो हम लोग भी मत के दाता से मतदाता होने के नाते फिर वोट दे के हम लोग भी लात मार के इसी सरकार को भगाने के प्रयास करेंगे।
According to unions, the current rule only requires a working knowledge of Marathi. However, concerns are rising that stricter measures like written tests or essays could make things difficult for many drivers. This is especially significant because associations say nearly 80-90% of drivers come from the states of Uttar Pradesh and Bihar.
वर्किंग नॉलेज जो रहना चाहिए उसको, तो वर्किंग नॉलेज के लिए मुझे नहीं लगता कि या हमारे यूनियन को नहीं लगता कि उसको लिखना पढ़ना भी आना चाहिए। उसको कोई आईपीएस और आईएएस का एग्ज़ाम नहीं क्रैक करना है।
200-400-500 कमा के जाओ, घर पे खाना बनता है, खाते। अब 10 दिन हम लोग गाड़ी पे नहीं जाएंगे, घर वाले तो भूखे मर जाएंगे।
मैं 83 से मेरा परमिट है, 83 से मैं गाड़ी चला रहा हूँ। मुझे आज तक कोई ऐसा नहीं मिला कि वो बोला नहीं तुम हिंदी मत बोलो, मराठी बोलो।
कि मुंबई में ये टारगेट किया जा रहा है।
Once the drive concludes on May 1st, authorities will compile a detailed report which may be used to expand similar enforcement measures across the state. CNBC TV 18 had sent a detailed questionnaire to Maharashtra Transport Department. However, we have not received any response. So from what we understand is people are okay with speaking in Marathi. The only issue is the compulsion part. We have also written to Ola, Uber and Rapido to understand if these rules will be applicable on their platforms or not. However, responses are still awaited. With cameraman Altaf Ahmed, Sneha Biswas for CNBC TV 18.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV 18.
It's official. Sun Pharma is acquiring US-listed Organon for $11.75 billion, the largest overseas acquisition ever by an Indian pharma company. Sun pays $14 per share in cash, equity value at around $3.99 billion, with the balance covering Organon's net debt of $7.6 to $7.7 billion. The deal closes early 2027, funded through $2 to $2.5 billion of Sun's own cash and bank financing. So what does Sun get? Organon is a $6.2 billion revenue, $1.9 billion EBITDA business across women's health, biosimilars, and established branded medicines in 140 countries. The deal doubles Sun's revenue to $12.4 billion overnight, makes it a top 25 global pharma company, top 3 in women's health, 7th largest biosimilars player globally, and it essentially fills 3 gaps Sun couldn't fill organically: women's health, biosimilars, and direct commercial presence in Europe and China. Innovative medicines jumps from 20% to 27% of revenue. Biosimilars, where Sun had zero presence, now contributes around 6% in terms of total sales. The concerns, however, are real. Sun goes from a net cash to net debt overnight, 2.3 times net debt to EBITDA post-deal, and debt repayment is the stated priority, with $2 to $2.4 billion in combined free cash flows. Guidance is that the debt burden should reduce in the next 4 to 5 years. Dividend policy is also under review by the management. Key factors that will be watched closely going forward: integration of 50,000 plus employees, though Sun points to Ranbaxy and Taro as its proof of concept earlier. Street will also watch for synergies, which are guided at around $350 million over the next 2 to 4 years, and any impact of tariffs in the US on Sun, Organon, or the combined entity. Organon's growth is the other overhang. Revenue has been flattish over the last 3 years. Its largest segment, established brands, declined around 4% in CY25. Sun, however, is targeting single-digit growth through line extensions and product combinations. Geographically, India drops from 33% to 17% of revenue, and the US from 31% to 27%, which some investors see as dilutive to revenue quality. On valuations, the deal comes in below that $13 billion speculated mark, so that's a positive. At around 6.2 times EBITDA, analysts are broadly supportive, some calling any stock weakness a buying opportunity, others flagging near-term range-bound pressure from the deal overhang. Sun says it will be EPS accretive from day one, and management is clear. They cannot give specifics on near-term growth. This is about longer-term value creation, not a 6 to 12-month story. The financial logic is sound. The execution is where Sun will be judged going forward. A lot of the shareholders have bought Sun Pharma stock because you're a net cash company, you're a safe investment, and now you're a net debt company. I know you've given a timeline, a brief timeline in terms of how you'd like to reduce the debt, and its net debt is at 2.3 times, so that's comfortable for you. But a little more granular details in terms of the journey on debt reduction, 1. And 2, the revenue for Organon has been sluggish for the past 3 years on the top line, $6.2 to $6.4 billion. What is the plan to possibly build up all of the verticals, from women's health to established brands to the biosimilars business?
No, I think, Ekta, you know that as a company, we ourselves are debt averse. However, we are not risk averse. So at some point of time, when we think that the debt will help us scale the business and change the trajectory of the business, we are comfortable with debt. Not debt alone, but also based on our internal assessment of the future cash flow and our ability to repay the debt or bring it down to a much more reasonable level. Because I think even like what Jayashri explained, when we are raising the money or we will pay for the company, the debt to EBITDA is 2.3 times. It's not a very high debt ratio, even though the amount of debt would be significant. But we should be able to repay the debt within a reasonable period of time. And we've been disciplined about repaying debt in the past, and we'll continue to be disciplined post the closing of transaction. Maybe Kirti can respond to the next question.
Yeah, I think in my view, this is a very important question, Ekta. What you're asking is how do we grow business, and they have been stagnant for last 4 or 5 years, or a very small growth of 1 to 2%. So I think if you look at, they have 3 parts of the businesses, and innovation, they are big in terms of women's health, then established brand and biosimilar. I will explain you. In innovation side on women's health also, they have done in licensing of a couple of new products. So there is a product called Medulla, and this is all in public domain. Then there is a product called Nilemdo, they have in license, so that business can grow from where it is today. That's one part of it. What I see as a much bigger opportunity is on innovation side is our ability to license products globally for the entire market, like for 140 countries on both in terms of women's health and other therapeutic areas. Second side on innovation is they also have a product called Vitama, which fits very well with our dermatology portfolio. And third product is Emgality, which is a different therapy area, is migraine, but it's a good innovative product with a patent protection, and it has a long run-up to grow further. So now, as a Sun's responsibility, or I would say, is to how do we add more product into this basket that the innovation keeps growing. And that's possible for us to do, like in women's health, there are more than 100 opportunities. Maybe all may not come to the market, but even if a couple of opportunities which are close to phase 3 or close to market, if we can in-license, this part of the business will grow. Second come the established product business, where the 50 or 51% of the revenue comes from it. There we have a lot of ideas in terms of line extension. These are very well-known brands. See, if I launch a new line extension or new formulation or even new combination of the product, we can have this brand grow from where it is today. In some of the market, they are growing, but this growth can even further fuel and do it. And third, of course, biosimilars, they are growing 13%, and biosimilar, as I explained you, is a much bigger opportunity. In terms of number of product getting LOE by 2035 is almost 320 billion. So we have to consistently and constantly look at what are the new biologics I can in-license and make them successful. It's a good business. They are worldwide ranked 7th, and we, with our licensing and our ability of marketing, we can improve this further also. So I think broadly for everyone, I think there is a good opportunity for us to grow this business from where it is today.
I also caught up with the Sun Pharma management after the deal was announced. Let's take a look. Mr. Kirti as well as ma'am, thank you very much for joining in and speaking with CNBC TV 18. Mr. Kirti, I'm going to start with you. We've spoken about how you all do have plans in terms of growing the revenue eventually. But just wanted to understand that with this acquisition, what is the plan for Sun Pharma when it comes to research and development? Is that going to be a part of this acquisition, or is that maybe a plan which might be now possibly put on the back burner?
Well, thank you, Ekta. I think we'll, as we said, we'll continue to invest on R&D. Now we are investing on 2 R&Ds. One is innovative R&D and generic R&D. So going forward also, our plan will continue to invest on the R&D on the innovative side also.
Okay.
Because what I said and what you should understand is now we have a commercial platform through Organon where we can go to 140 countries. Now, how do I use this commercial platform? I will need a product, and this product can come from the only R&D.
Yeah.
So there are 2 ways. Either I take the R&D from outside, or I can develop in-house R&D. So we'll continue our effort on developing product through our in-house R&D.
Okay, so that would continue.
Yeah.
But what is Organon's R&D pipeline looking like, which you can possibly leverage?
So Organon has a limited pipeline in terms of R&D, and most of the details we cannot disclose, but I would say it's a limited pipeline. Few things they have done very recently. They have licensed 2 new products which will get commercialized in next 2 to 3 years.
Okay, so that means that you would be looking at out-licensing deals, in-licensing deals, as well as maybe bolt-on acquisitions of certain brands, which Sun Pharma has done in the past. Would that be a strategy that you all would adopt?
See, broadly, Ekta, what I can say, whatever is required for us to grow the business, then it's like acquisition of a brand, or in-licensing of the product, or sometime even out-licensing, we will do it. And that is what we have been doing for a long time in the interest of the business, depending on the therapy areas.
Okay, all right. On that note, ma'am, there is going to possibly be a lot of stress in the initial 4 to 5 years because you will be taking on that debt. You will possibly look at opportunities in terms of growth as well. So give us a sense in terms of what shareholders should expect in the next 4 to 5 years when it comes to the balance sheet of Sun Pharma and Organon combined.
Sure, Ekta. With this acquisition of Organon, from a cash positive, Sun would get into a debt EBITDA of about 2.3x. Both these entities on a standalone basis itself generate positive cash flows to the extent of about $2.5 billion on an annual basis. With some of the synergies that we have spoken about and the growth opportunities in terms of revenue, I believe that this will further augment the cash flows from the operation. This will be used towards repayment of the debt, and we will also be using it selectively towards acquiring assets as required, whether it be in licensing or brands. This is business as usual, which is how both these companies have been operating. So I do not think this should cause any further stress on the balance sheet. I do believe in the next few years, we should be in a position to comfortably pay the debt and also have funds for further investment.
Okay, the $350 million in terms of synergies that you've spoken about, that will be, you'll probably see that in the next 2 to 4 years is what you've guided for.
Yes, absolutely.
And what would that be based on?
See, this is looking at Sun's ways of working. We are known to be a company who's been very disciplined. In our DNA, we have lean operations, bringing in cost efficiencies in multiple fronts. When you look at procurement, it could be procuring from a joint procurement, looking at both Organon and Sun together. So our negotiating power with our suppliers could be better. Sourcing itself could be from markets where you could get a better cost leverage. Likewise, there are multiple areas across supply chain and functions that we have identified which could help us to realize this potential.
Okay. Would that mean that margins will, possibly remain between this 29 to 30% band? That is, Sun Pharma reported margins of 29% in FY25, and Organon is at around 30% margins. So is that the band that we're working with?
Yes, I think that could be the band that we will look at for the combined business.
Okay, but initially, will we see some hiccups? Will we see margins possibly see a decline because of integration issues? How should one possibly look at the margin trajectory in the next 1 year?
As you know, in all companies where you go through the integration, the first year there could be some costs in terms of the transaction, in terms of integration. The synergies will start flowing in over a period in time, which we believe will be between year 2 to 4. Therefore, the first 1 year or 1.5 years, you could see a slight dip in the margins, but this is going to be a temporary phenomenon and it will come back to its normal numbers.
So steady state would be anywhere between 29 to 30 odd %.
Absolutely right.
Okay. Based on the current assessment, and you did mention that the established pharma business would possibly look to come back to a single-digit revenue growth. When are we expecting Organon to come back into see a sustainable growth trajectory?
No, I think I would say these are initial days. We just completed due diligence, but we have a lot of thoughts and ideas on how do we bring this business.
You must be having an
to
internal target. Say 2 to 4 years down the line, we want Organon to report an XYZ amount of growth.
No, that part of the work we need to do more now, because this was the initial part where you do due diligence, you look at all functions and everything together. But now what we are looking at, what are the sales synergies? But to ask specific question in which year this growth will come is very difficult to answer. But the effort for all of us is to see that growth comes early. And we have done this in earlier transactions also when we looked at in Taro or in case of Ranbaxy, we could bring some of this business on a growth path much earlier compared to what they were doing in the past. So if I go with the same experience, I think the same something we can do during the Organon also.
So same question to you, Mr. Kirti. Initially, we are going to see hiccups in terms of growth for Sun Pharma as well. Is, on a consolidated entity, the average growth is possibly going to reduce because of both of the entities coming together. If so, what is the internal bandwidth that you might be working with?
As we said, Sun keeps growing at a single-digit number, and our focus is the Sun should continue to grow at that number, and it should not come down. Now the question is, Organon is not growing, or they are almost like a stagnant. So for 1 or 2 years, the growth may not be in line with what Sun has a usual growth. But then all of us will make an effort to see that the growth comes back on track in a few years down the line. Yeah.
On that point, you do have your branded business, which is growing. It's 20% of your business at this point in time. You have key drugs such as Illumia, Sequoia. You do also have maybe some issues with regards to, say, the Halol facility at this point in time. Do you think that there could be a dilution in terms of the management focus on the Sun Pharma core business because of the integration of such a large business?
I think the integration takes its own time. It's like a process where we have to go through 1 to 2 years. But as a management, we have discussed this internally. Is like we need to continue to grow the Sun Pharma's business the way it is growing today, and then look at how do we grow the Organon business. It's a challenging time, and we have to go through this time. I think what makes me more comfortable is we have done this repeatedly. When we acquired Ranbaxy, Ranbaxy was 2 billion, Sun was also 2 billion. And both the India business as well as the emerging market, they grew than what it was growing under the Sun's.
But that was an Indian entity buying an Indian entity. Here you are, acquiring an MNC. You're acquiring a US business with a completely different culture. So from that standpoint, what do you think might be the biggest challenge?
No, I think the biggest challenge, in my opinion, is not the culture, but to show the ways to the people on how they can succeed. Because what I appreciate is Organon also has a good talent. Now once we assess their talent and we show them this is the way you can grow. As an example, if I in-license product, I introduce new product. If the business start growing, then that talent, when they are seeing the growth, they will also feel much better. And that time integrating two companies will become much easier. So as we said, is like everybody wants to succeed in life. Nobody wants to remain stagnant or not to grow. As a leader, if I am able to show them how to grow, it will help us to integrate both business more successfully.
US tariffs, Section 232. How are you navigating that for Organon and Sun Pharma? Do things get difficult or do things get easier because they have 3 manufacturing facilities in the US?
I can speak for Sun Pharma. Organon is still a listed company and they have not made any public statements around it, and therefore I would not be able to comment on it at this point in time. Organon has 3 facilities, those are in Europe. And then from Europe, they ship it to US for final sale. As far as Sun is concerned, we have been in discussions and we have a strategy to see how we can work through the tariffs.
Okay, all right. Just a quick last question. There was news which just came out during the press conference about, Ademi LLP possibly investigating Organon for possible breaches of fiduciary duty. It's a class action suit. Any comments? Because I know these sort of come up quite regularly with any kind of big moves or transactions in the US. But your comments, sir?
No, my comment is that today we have announced the transaction. Sun and Organon are 2 different companies. So we will close the transaction maybe 6 to 9 months down the line. So during the period, Organon remains an independent company. So it's better that the Organon has to handle this kind of litigation. The Sun, we won't be able to comment on it.
Okay, all right, Mr. Kirti, as well as ma'am, thank you very much for joining in and speaking with us. Thanks very much.
Thank you very much.
Thank you. Time for a short break, but don't go anywhere. We'll bring you more on the mega deal between Sun Pharma and Organon. Stay tuned. Welcome back. We spoke to some top brokerage firms to gauge their view on the Sun Pharma deal. Let's see what they had to say.
So my sense is that they will be able to become again net cash company over the next 3 to 4 years. Moreover, the innovative medicine business revenue, which is currently contributing 20% for Sun Pharma, with this deal would jump to around 27% of the overall combined entity.
Clearly, it's one of the large transformative acquisitions, I would say. Rarely you see Indian companies acquiring such large companies outside India or even inside India. So to that extent, of course, this is one of those large acquisitions.
I think this is a great acquisition by Sun Pharma. In my view, stronger companies in India have aspirations to be going global, and this is one of the methods in which they can do that. Not only it helps them acquire new products, new geographies, it kind of helps strengthen their overall strategy for growth on an inorganic basis. Companies need to be also very calibrated, especially when it comes to acquisitions in the foreign markets.
Sun Pharma's acquisition story is a deliberate decade-long migration from generics to high-margin specialty branded products, with dermatology and oncology as the twin pillars. Global specialty revenue has risen 17% to $1.2 billion in FY25, contributing roughly 20% of total revenue. The deals have gotten smaller for Sun Pharma in size, but sharper in focus. Taro Pharma best illustrates Dilip Sanghvi's deal-making DNA. Sun first tried to acquire the Israel-based generic dermatology company in 2007, injecting $60 million, only for Taro's promoters to fight through courts for a couple of years. Sun wrested control in 2010, survived a rejected $685 million buyout attempt, and simply waited. 17 years later, the full acquisition closed in Jan 2024 for $348 million. The $4 billion Ranbaxy acquisition in 2014 was the watershed moment for Sun Pharma, creating the world's fifth largest specialty generic company overnight. It came loaded with damage, 4 FDA sideline plants, and an antitrust litigation that eventually hit $485 million. Sun worked through it, delivering $300 million in terms of synergies by FY18 and emerging with a large manufacturing footprint and distribution across multiple markets. With scale secured, Sun pivoted to branded specialty. Dusa in 2012 for $230 million, Odomzo from Novartis in FY17 for $175 million, Sequoia, an ophthalmology drug from Ocular Technologies, Concert Pharma in 2023 for key drug Lexelvi for alopecia, and Checkpoint Therapeutics in March 2025 for $355 million, adding FDA-approved oncoderma immunotherapy drug Uniloxity. And now it's official. Sun Pharma is acquiring US-listed Organon for an enterprise value of the largest, $11.75 billion in terms of an acquisition that Sun Pharma has made. This marks the largest overseas acquisition by an Indian pharma company, making Sun a global pharma player. The deal values Organon at $14 per share in cash, translating into an equity value of $3.99 billion, with the balance reflecting net debt of roughly $7.6 to $7.7 billion. While the leverage is significant, Sun has guided that the transaction will be EPS accretive from day one. This is not a deal to be judged over the next 6 to 12 months. It is clearly a long-term play, points out Mr. Dilip Sanghvi. Those who have tracked Sun Pharma over the years call this a classic Sun move, a large calculated bet entered with discipline and built for the long haul. That said, execution will be key. And with that, it's a wrap on this special broadcast. Thanks very much for watching.
Hello and welcome. You're watching News Center. I am Ashmit Kumar. Now it's the month of April and India is already grappling with a severe heat wave. Temperatures have soared close to 47 degrees Celsius in several parts of the country. The Met Department has warned that heat wave conditions are likely to persist over the next few days in Punjab, Haryana, Delhi, Uttar Pradesh, Rajasthan, Madhya Pradesh and Maharashtra. Again, a large part of your central Delhi, central India, the heartbeat there. On April 26th, Maharashtra's Akola recorded the highest maximum temperature of 46.9 degrees Celsius, while Amravati recorded a maximum temperature of 46.8 degrees Celsius. Barmer and Jaisalmer in Rajasthan also sweltered under temperatures of 46 degrees Celsius. The IMD has warned that high temperatures could increase the likelihood of heat-related illnesses, particularly among people exposed to the sun for prolonged periods or those engaged in heavy physical work. IMD has also issued an advisory to farmers, including ensuring frequent irrigation and shade for newly planted crops. More than 90% of the world's hottest cities are now in India. Prolonged and severe heat wave conditions have become an every-year phenomenon for India. Research published in The Lancet claimed that in 2024, over 6 days out of India's overall 19 days of heat wave were a result of climate change. As per the study, India lost 2.33 million hectares of its tree cover between 2001 and 2023. Of this, 143,000 hectares were lost in 2023 alone. The study also found that out of 189 most populous cities in India, 14 had exceptionally low and 110 cities had very low levels of greenness. Well, to discuss this further, we will be joined by Mahesh Palawat, the Chief Meteorologist at SkyMet. Also with us is Mr. Vishwas Chitale, Fellow at the Council of Energy, Environment and Water, and Madan Sabnavis, Chief Economist at the Bank of Baroda. To all of our panelists, thank you so much for joining us. Let me first come to you, Mr. Chitale. Again, we saw over the weekend a lot of images being published on social media, maps of India in deep red, maps which showed that how 92 out of the 100 hottest cities of the world are currently in India. So we saw those alarming pictures, images, posts on social media. What I want to ask you is, help us cut through the clutter. Are we in a case of heat wave conditions here in India, and how long will these conditions persist?
Thank you, Ashmit, for having me on this show. We are pretty much in the heat wave conditions right now. And if you see the temperatures in central India, as well as in northern belts, as well as northwestern India, the temperatures are well above the normal conditions, and heat wave has been already declared for various parts of North India. So as you mentioned some of the statistics, I would also like to bring the attention that risk to extreme heat is not only because of temperatures or daytime temperatures that we face, but our research at CW that we published in 2025 identified that nearly 57% districts in India, which house almost 3/4 of India's population, fall in high to very high category of extreme heat. And this we concluded by analyzing 35 different variables, which incorporate socioeconomic conditions, which incorporate green cover, which incorporate water bodies, and many other indices in collaboration or in addition to temperature, daytime temperature, as well as nighttime temperature. So also another statistics that I would like to highlight here is, we might talk about daytime temperature conditions going well above normal, but actually warm nights are also increasing very rapidly across various Indian cities. And actually that is a major concern, considering that we don't acknowledge the impacts of warm nights. So that's why it is important to understand extreme heat as a systemic risk while we look at the extreme heat related issues.
Right. Let's also get Mr. Mahesh Palawat in on this conversation. He's the Chief Met Officer at SkyMet. Mr. Palawat, again, tell us, increasingly, as persons living out of this central belt of India, we are seeing these extreme weather events almost every year. We see fresh highs being climbed. Tell us, is this a new normal that we're looking at? Or what we have on our hands is currently an extreme weather event that is likely to pass soon?
Yes, Asmit, we are witnessing a new normal because now we are in the month of April and still temperatures are climbing up to 47 degree over many parts of the country. Like Banda recorded 47 degree in southwest Uttar Pradesh, that is Bundelkhand, and temperatures in Rajasthan, they are hovering around 45, 46, and in Vidarbha, Marathwada, North India, Karnataka, Rayalaseema, all these areas are witnessing temperature well above normal, and heat wave to severe heat wave conditions are prevailing now. And this year, we are witnessing El Nino year, and it is historically one of the strongest El Nino. So this impact of this weather phenomena will be seen across the globe in terms of rising temperatures as well as the below par monsoon over Southeast Asia, including India, Pakistan, Bangladesh, Sri Lanka, all these areas. So we can say that now that the temperatures will rise further in the month of May because May is the hottest month. So the intensity and frequency of heat wave is increasing year by year as greenhouse gases are increasing and they are warming up our atmosphere. Yeah.
Are you working with any projections, Mr. Palawat, as to what the temperatures in, say, suppose the northern Indian cities of, say, perhaps Delhi, Lucknow could be? You mentioned that the temperatures may climb even more in the month of May. Any estimates, any projections that you have, say, suppose for Delhi, what it may look like going forward with these extreme weather conditions?
Yes, up to now, Delhi has recorded 43 degree, that is the extreme temperature until now in April. But now, as we progress further in May, we think that temperatures may reach a 45 degree mark, 46 degree mark also. And until first half of June, because monsoon usually arrives over Delhi and NCR around 27 of June. So the distress level increases during first half of June as winds change direction from northwesterly, westerly to easterly, and humidity tends to increase during that time. And whenever temperature reaches 40 degree mark, the field like temperature will be around 50 or 52, 53, because the combination of high humidity and high temperature increase the distress level, and the discomfort level will also increase. Yeah.
Some worrying estimates, those, Mr. Palawal. Thank you so much for joining us. But do stay on. Mr. Madan Sabnavis, if I may come to you, can you help us with an estimate as to what is the immediate fallout that one can expect, especially as far as agriculture is concerned, especially as far as rural consumption is concerned, on account of these severe heat wave conditions?
So if we're looking in terms of the heat wave conditions, I think let's see what could possibly be the impact. See, the first thing which we're seeing is that labor productivity is something which comes down. And lots of these daily wage earners who are in the fields of construction mainly, and as well as agriculture, I think their incomes is something which is likely to get affected. Because if you don't work for those many hours, you get paid a lower amount, which of course finally affects your consumption power. The second part which we're seeing is that on account of these heat wave conditions, the level of evaporation of water goes up. So that's one of the reasons why we've seen that the reservoir levels could be trending downwards, which really means that the potential irrigation facilities until such point of time that a monsoon arrives is likely to get affected. And this is what could be pushing back once again agricultural production and accordingly rural consumption. And the third part is when you're looking in terms of animal husbandry, because when we normally talk of agriculture income, we tend to focus a lot on crops, but there's also this particular part of animal husbandry, which also tends to get affected because of the absence of water facilities. So on account of all these three conditions, this is in the pre-monsoon, before the monsoon has set in. So what we really have a situation today that rural spending, which should normally have been fairly stable at this particular point of time, will be a bit more cautious. And given the fact that we have other problems on account of the war, which is affecting overall investment climate as well as consumption, I think we were always hopeful that, say, rural consumption is something which will do well. Now, with the El Nino news coming in, so we know there could be some kind of a setback out there. So we'll have to, of course, wait and see. But the precautionary motive is something which could hold back on spending in the rural areas until there is further clarity in terms of how the monsoons are going to arrive and how it's going to progress.
More specifically about the agri space, Mr. Sabnavis, Will this be a double whammy? We were already talking about how the fertilizer supply is under an umbrella of uncertainty on account of the situation in West Asia. Will this now serve as a double whammy for the agri space, for the rural sector?
Not in a major way, but definitely it is a setback for agriculture because we are also in the month of April. There's a certain part of the Rabi crop which is being harvested. So if I'm talking in terms of agricultural labor, having problems in terms of doing their work because of these heat conditions. Again, we're not sure how the crops could be affected on account of these heat conditions. Definitely, there will be a kind of a potential setback for overall Rabi prospects, which again feeds back into your overall agricultural income and spending.
Sure. Mr. Chitale, let me come to you. I just want to get a sense so far as addressing these extreme weather conditions are concerned. The answer by most households is to buy another AC, but the AC penetration in India is very low. It's about 9 to 10% of the households. Should that demand go any further, should more number of households start purchasing air conditioners, will that lead to perhaps a negative feedback loop where we try to address the heat conditions, but also at the same time ensure that there are higher emissions through increased ACs as well as strain on the power sector?
Yeah, so Ashmit, definitely buying a AC is very easy or go-to solution, but definitely not the ideal solution in this situation. Because we must understand that, of course, air conditioners also lead to local scale warming, and also they continue to continue to warm the atmosphere a lot. So that's why it is important to understand how do we build better and how do we enforce the mandate of building codes in order to build better energy efficient buildings as well as better cooler buildings. In addition to this, there are various cooling solutions that are available at a very affordable rate in market. I think it is just about finding the right solution that meet your demand at the local scale, at your household level or at a community level, and that can address the issue of extreme heat going forward. But of course, we also understand that, this problem of extreme heat is right here, right now, and it is here to stay. So when we talk about urbanization as one of the key trends across various cities in India, urbanization is one of the causes for this kind of extreme heat wave conditions also. So it is important to also enhance the green cover and water bodies across the country, across a majority of our cities, in order to understand that this can very well bring some passive cooling effect, and that can help us get some sort of relief from these kind of extreme heat wave conditions.
Speaking of urbanization and increased strain on the power sector, Mr. Sabnavis, let me get your thoughts. The Indian Power Ministry's projection is that the Indian power demand could go up to as high as 271 gigawatts. Are we geared to address those kind of demands? Is there going to be strain on the Indian power sector? Is it the renewables that are kicking in to support this spike in power demand that we're currently seeing?
In fact, I think you've answered the question by saying, yes, there is this increased demand which is there. And I think renewables is something which is going to provide a lot of support for this increased demand. And this is something which is going to happen every summer. So as my colleagues on the panel were talking about this being a kind of a permanent feature which is going to be there and something which is going to spread across more regions. So I think the challenge, actually, if you're looking in terms of the discoms, is how do you remain profitable in this kind of a situation? Because we've already seen that there are large subsidies which are being given on power. Now, as the demand for power keeps increasing and the provision of power is taking place through the conventional mode, there will, of course, be this case of saying that you're not able to really increase the prices at the consumer end. So therefore, there will be this case of saying that there will be additional strain on the finances of the discoms. This is something which will have to be taken up at a different forum. But in terms of physical supplies, yes, definitely there is going to be an increase in terms of demand, something which the renewable space is going to provide a lot of support. And we should remember that renewables is more expensive compared to the conventional energy sources. So that will be another issue as far as the distribution system is concerned. But I think we're looking at, say, I think the stock in terms of higher demand for air conditioners. I think this particular industry will actually be feeling good at this point of time because there was a bit of uncertainty on account of the war conditions. Now that you know that conditions are going to get even more severe and we still have another month and a half before the monsoon actually arrives, I think there could be more demand for air conditioners. That's what we are hearing when we talk to our clients in this particular segment, that a subnormal monsoon is always good for in terms of certain consumer goods industries. And this is one of them which is likely to benefit from these conditions.
Well, speaking of solutions as far as heat wave conditions are concerned, many experts come on our channel. They tell us an increased tree cover is important. But I just want to get Dr. Chitale on that. Dr. Chitale, as per the India State of Forest Report of 2023, the forest cover in India is 21.76% of geographical area. Now, while that number may be reassuring, there are other experts who flag that we've played very fast and loose with the definition of what qualifies as forest cover. Some even tell us that technically, even the Delhi's famous Lodi Gardens will be construed as forest cover under this definition. Is that a concern? Have we miscalculated the tree cover that we have, especially when it comes to combating with conditions like heat wave?
I would look at it in a different way, Ashmit. Actually, I mean, in the urban context, there is significant amount of potential that exists in terms of enhancing the urban green cover. And then there are various mechanisms in which many of the states or cities have been doing that to some extent. So also that knowledge sharing among the cities should happen in order to understand how they have been able to bring significant amount of green cover. And especially like in case of Maharashtra, we are aware that there is Mazji Vasundhara scheme, under which there is also a competition that is run at the state level for various cities. I mean, not various, but all the cities and all the Gram Panchayats to compete for how much they have been able to enhance their green cover in their context. So these kind of incentivization mechanisms do exist. Some sort of impacts are of course available. But of course, we have to look at, like, with this rapid urbanization trend, what are the new ways of getting the green cover really established and strengthened in that context. And in that context, in terms of cooling solutions, in terms of, say, green facades, or even in terms of cooling shelters with passive cooling mechanisms, these are some of the ways in which various cities are trying out these solutions. As and when, if we do the impact assessment of these kind of solutions, I think we have a lot to learn from these. And definitely this knowledge sharing among the cities can help us understand how do we overall strengthen the green cover across the country while we address this issue of extreme heat.
We're running out of time. I'll just come for a quick final comment to Mr. Mahesh Palawat. Mr. Palawat, again, you mentioned that this is a new normal. Should we be geared for more severe heat wave conditions stretching across 2026 and 2027 as well? More severe heat wave conditions and longer duration as well of these heat wave conditions?
It depends upon year to year, because this is El Nino year. So the temperature will be rising much more rapidly, and heat wave intensity and frequency will be higher than normal. And whenever there is a La Nina year, so during that time, we think that pre-monsoon activities will enhance, leading to some relief, occasional relief. But now also, in next 2 to 3 days, from today also, rain activities and thunderstorm activities have already started over Rajasthan and parts of Madhya Pradesh. By tomorrow, it will be over Punjab, Haryana, Rajasthan, Delhi, Uttar Pradesh, and East India, Bihar, Jharkhand, West Bengal, and Odisha. And it will continue until 1st or 2nd of May over many parts of the country, leading to some relief. So, occasional relief will be there in the month, in the May also. But it depends upon the global climate conditions, that how the heat wave or intensity and frequency will be there in coming years. But yes, we are sure that the number of heat wave days are going to increase year by year until we address the problem of global warming, climate change, which Mr. Dr. Chitale had already mentioned, that we have to restore our green cover and go towards renewable energy.
Right, Mr. Palawat.
And all these things should be taken into context.
Right, Mr. Palawat, I'd like to thank all of our guests for giving clarity firstly, and then of course issuing a sense of caution about need for urgent action in terms of addressing the situation. All I can say is, gentlemen, stay hydrated as far as these heat wave conditions are concerned. With that, let's take a short break. But coming up next, India and New Zealand have signed a free trade agreement to strengthen economic ties. We speak to Anant Goenka, president of FICCI, on the key growth opportunities for India when we come back. Stay tuned. Welcome back to News Center. Now, after more than a year of negotiations, India and New Zealand have signed a free trade agreement to significantly boost economic ties. With this deal, India has trade pacts with all members of the Regional Comprehensive Economic Partnership, barring China. The Commerce Ministry has said that there will be zero duty market access on 100% of India's exports to New Zealand. New Zealand, meanwhile, has also committed to investing $20 billion in India over the next 15 years. Now, certain items including dairy, coffee, milk and edible oils have been excluded from the agreement to protect the interest of Indian farmers. The two sides expect the trade agreement to come into force within this year itself. Joining us now to discuss what that pact means for India Inc. is with us Mr. Anant Goenka, President, FICCI. Mr. Goenka, thank you so much for joining us. First, tell us what is the kind of potential value that we can unlock with this deal. Currently, the trade deal, the figures we have is bilateral trade in the vicinity of $2 billion. To what figure can that grow?
No, absolutely. We had a very small share of New Zealand's imports. Barely 2% of their total import basket is sold by India. They're importing about $50 billion. We're at about $1.3 billion. So I think we're talking about multiples in opportunities, 2x, 3x kind of opportunity in terms of growth. I'd say in addition to that, there is a $20 billion commitment over the next 15 years of investment into India. New Zealand is very well integrated into the global trade network, a number of FTAs that they have signed. India was one of the few that was pending, and it's great that this has happened. And I'd say it's focused on a number of key sectors that are important to us from textiles, gems and jewelry, pharmaceuticals. So a number of textiles due to benefit as well.
Let me in fact build on that. Just some of the numbers that I was picking up as a part of this deal, we're given to understand that India will get duty-free access on 100% of tariff lines as opposed to the current situation where they were charging as much as 10% on as many as 450 tariff lines. So in material terms, Mr. Goenka, what does that translate into? You were telling us about sectors that stand to greatly benefit under this deal.
That's right. So textiles, leather, gems, jewelry, auto parts, pharmaceuticals, I think these are the big sectors that are likely to benefit out of this. Just on the opposite side from India, there's about 70% of our tariff lines have opened, but the key segments which are sensitive to Indian farmers, dairies, pulses, sugars, those have still been protected.
Tell us also about an aspect of this FTA which deals with how New Zealand is committing to about $20 billion in investment over a period of 15 years. Firstly, is that a commitment? Is that an assurance? Is that binding? And if yes, then what are the kind of areas where we could begin to see capital inflows over the next 10 to 15 years?
Right. I think it's a very positive sign of commitment between the two countries. There is an element of rebalancing clause just in case these commitments are not met, in which case India can always adjust its tariffs or the rules of engagement if that investment is not done. So to that extent, it's a very positive sign of a developing country and a developed country, them putting in investments. It could be in the form of technology, in the form of their various areas of expertise in agriculture, organic farming, and so on, which can also be a big benefit to us.
Another aspect, Mr. Goenka, I want to get your thoughts on. There's a clause of this FTA which deals with mobility of people. It allows for 5,000 work visas annually. That number may not be large, but is this perhaps a template on which India can now proceed with some of the other countries that we're negotiating with, that there needs to be a subset dedicated for mobility of people as well?
Right. All our agreements, or at least in the recent past, there has been a very high level of comprehensiveness in the agreements. It's not just goods being traded, but it is much more in terms of IP protection, people movement, GI location protection, student mobility. So all of that has been included in this agreement. On the case of professional and student mobility, we are looking at about 5,000 skilled manpower in IT, Ayush, and other related spaces. Generally, New Zealand has been fairly restrictive in people mobility, but it's a very positive sign that for New Zealand to be having with India, where I think it's possibly the most liberal agreement that they have with any other country.
Also, for an industry perspective, while there is, of course, like you mentioned, significant excitement about the opportunity that the India-New Zealand trade deal unlocks, is the industry waiting for some of the bigger deals to be cracked? We're talking about the likes of Australia, Russia, and of course, the big one, United States.
No, of course, those are much larger in the form of value. But I'd say that even the smaller ones in terms of size all add up, especially in a case where in the last year we've seen that there has been high tariffs that were imposed on India by the US. It's the right time to diversify, to look at new relations as the world is getting a little bit more fractured. We've seen last week the Korean president coming in, and there's some progress on those discussions. So all of these add up very much. And the shift has been to partner more with developed world where the complementarities are very high.
And one final question, any reading as to when we can expect from your assessment the India-US deal? We're all watching very keenly. We're hearing that June perhaps may be the date where we may seal the deal or put ink to paper. Any reading on how urgently we need this India-US deal to go through?
I think it's very difficult. I don't have a view on that. I'd certainly say that everything in the US is so volatile. They're busy with the war and other areas of prioritization. So I think from our side, I'm sure we would have the bandwidth, but I don't know if there is bandwidth currently, but I'm sure the efforts and discussions are very much on to find the right agreement for both sides.
Right, Mr. Goenka, thanks a lot for that. But clearly, we're watching out for that big deal. Our negotiators have come back from Washington, and they're yet to give us more clarity on what the road ahead may look like. But clearly, this is the season for FTAs. India has cracked another one, the latest one with New Zealand. All eyes now, of course, on some of the larger deals that we're looking at, whether that's Australia, Russia, and of course, the big one, United States. Thanks once again, Mr. Goenka, for joining us. But with that, it's a wrap on this edition of News Center. More news and updates will continue right here.
The next session asks a straightforward but a difficult question. If the case for equity is already clear, what is still holding leadership back? Because the issue is no longer talent, India has that in abundance. The real question is whether institutions are evolving fast enough to recognize it, back it, and move it to the top. I request Shireen to kindly take this town hall ahead with Mr. Sunil Kant Manjal, Chairman, Hero Enterprise, Rajesh Warrior, the President, Operations and CMD, Cognizant India, Sandeep Batra, MD, Head of International Wealth and Premier Banking, HSBC India, Soma Mandal, Member, Public Enterprise Selection Board and former Chairman, SAIL, Swati Bhargav, the co-founder of cashkaro.com, Aparna Saxena, founder and CEO, Antinorm, Ritu Arora, country head, India Allianz Services, and Shinjini Kumar, former banker and author of Busy Women. Shireen, over to you.
Well, thanks very much, Shruti. We have a power-packed lineup of some very celebrated women and men. Soma Mandal, I want to come to you because, you know, the public sector gets a bad rap and everybody believes that the private sector does much better when it comes to inclusion and diversity. But the public sector in India has had women like you who've been champions of change and leaders at the very top. Ladies and gentlemen, when she led the Steel Authority of India, India's largest steel company in the public sector, she delivered outstanding results. 1 lakh crore in revenue was under your tenure, a 30% increase for the very first time. Massive debt reduction as well.
Yes.
How much is the debt reduction?
Debt reduction was more than 50%. We were from, say, 53,000 crores to around 25,000 crores.
And a significant improvement in EBITDA as well.
Yes, it was.
You know, did people look at you and say, wow, how did you get this done? Or did people just take it for granted that you were put in the position that you were because you were the best person for the job and hence you got the job done?
See, it's this way I think at leadership positions. I somehow feel the team doesn't feel whether you're led by a woman or a man at the level when you reach the leadership. So it's all about, if it would be me, maybe I took some leadership decisions, but then it was the team who ultimately did their best. So it was a total result of the entire teamwork. The team, I don't think at any point of time it was a woman or a man who's leading the team.
And I hope that is the case in most organizations as well. But you know, today you're a member of the PSEB. You're looking at ways that the public sector is hiring people. What is it that you would like to see being done differently so that we see more women like you at the top?
This is a real point of concern because we at PSB, we select the leadership for all the public sector, central public sector enterprise. What happens is we don't find the pool there. Okay, so, and if you really look at the pool, in the financial, like you have the Power Finance Corporation or the REC, so the financial sectors we get some pool. In fact, the chairperson of PFC has been a woman. The head of EIL has been a woman. But when you look at manufacturing sector, you don't get. And why don't we get it? Why don't you speak? You spoke about the broken rung. There are various issues, like you have these all these refineries or the manufacturing plants or the process units all in remote location. So many of the women, we have not gone there after relocation used to become a problem. And now the leadership position, the pool comes from people who have already had 20 years of service. 20 years back, there were very few women who went to the shop floor. In my time, if I look at the shop floor, I used to look around, where do I go for a washroom? If I go to the plant, it's like a washroom maybe 10 or 15 minutes away. You go to, so, but what has happened today is
different today?
It's different today. So it was earlier, it was whether it was the chicken and the egg story, which one is first, but now I find the steel plant, and there's a lady who has been in the shop floor and has been wanting to be in the shop floor right from 80s. So, and the workmen also accept. But the problem is about how do we get more women in manufacturing sector?
So how do we?
Okay, I find a few few issues which come up. One, of course, is a number of women joining the industry. We do have a lot of women joining. The problem first starts with what happens after you get married. There has been one of the Fortune 500 CPSE who has refineries in various places, and they have started a matrimonial within the group, within the company, a matrimonial. And I don't know how successful it is.
But it's a practical idea.
It's a practical idea, because if you're in one refinery, you do not know whether somebody else is there somewhere else. So after wedding, how do you relocate? Second problem which really comes up is how do you, in manufacturing, there's a lot of challenging roles. And we as a society, we are very protective about the women. So in this protection, we tend not to give the challenging roles to the women. And I have also done it. And ultimately, if you look 1 year, 2 year, 5 years, since that lady, the woman, the girl has lost out. So it is time for the woman. People have done it. In fact, the chairperson of CPSEs, I was saying, she also 30 years back spoke to her boss. You have to be open, speak to your boss and say, look here, I'm willing to take this challenging role.
Yeah, absolutely.
And so maybe that would also be a, but otherwise rules, policies are all, enabling policies are all in place. I would expect, and the present generation, I've seen the present generation working in the blast furnace, the SMS, and they work shoulder to shoulder with the boys, young boys. So I think in the next few years, we'll see a woman CEO leading a steel plant. I'm surely going to see that.
Well, we certainly hope that does happen. So, Mandal, many thanks for joining us here. And you need to think about practical ideas. She gave us one: start a matrimonial, arrangement within the organization. That's something that you do need to think about as well. Shinjini, I want to come to you, because Shinjini is, of course, many things. She's been with the Reserve Bank of India. She's been part of Paytm's Payment Bank. She's herself an entrepreneur. She started her own fintech company and now has authored a book called The Busy Woman. Tell us a little bit about that.
Okay, so the full title is Busy Women, Building Commerce and Culture in Middle India. So essentially it is a book for which I traveled through 30 cities and documented what was happening on the ground with women, not just the women who you usually see associated with commerce, as in, the Sridevi in English, but actually women who are, like Mr. Munjal said, women who are inheriting businesses. So because the two things that are actually closing the wealth gap are essentially inheritance, because you can earn all your life, but you may not be able to match up to the inheritance. My story of life, I thought I had very big jobs, I made money, and then my husband's a professor and a poet, because of whom I'm so successful, and at the end of it, he inherits more than I build, and I'm like, how does that happen? So inheritance is a huge deal, and with so many years of family planning, we now have so many families which are 2 daughters or 3 daughters, and these daughters are at a very different league from the earlier generation. So that's really closing the gap. The second thing that's happening is a lot of professionally qualified girls are getting married into business families. And I call this the Marwari daughters will change the world, because you go to these tier 2 towns and you find girls with very high degree of education. Many of them have gone abroad, business schools, IIM. There's a girl from IIM, in my book, there's a girl who goes to IIM Ahmedabad and then gets married into Bhubaneswar. Now, she can't find a job of her profile in Bhubaneswar, but her father-in-law is willing to give her the capital to start a business. And lo and behold, she starts a business of silver. And ladies and gentlemen, if somebody started a business of silver 5, 10 years ago, you know where they are sitting today. So, there is a lot that is changing. It is not the reason I wrote this book and decided to focus on the middle of the country, the middle of the business, and the middle of the population segment, was because we often ignore that, and that is what gives us the sense of dismay. When I built my startup, it used to amaze me how most of my friends were 50-year-old men who were successful. And it amazed me every time I would talk to a man and say, I'm building a company for women and money. 98% of the time, they would talk about their maid not having a saving account. And then I would turn back and tell them, I'm not building for your maid, I'm building for your wife or your daughter. And there was no conversation after that. I have had men who are otherwise my friends tell me in fundraising meetings that, but my wife only shops. Why are you building a wealth product for women? Is that the right target market? Are you sure you're not limiting yourself? The level of bias that exists is quite phenomenal. So I was, like, you have this FFF. I was the FFF, the failed female founder. And I decided to take that and write the story that I did. And yeah.
So Shinjini, leave us with the one surprising insight that we should all take note of from the travels and from the many women that you've portrayed in your book.
You know, the insights are never surprising, Shraddha, you will agree. The biggest insight in my book is that the 3 words that are told to women at every step of life that prevent them from becoming who they become are, kya zarurat hai? You go to women in the villages, they are doing everything. This, young 25-year-old mother of 3 children will get out of her house. She needs to get to her school, to her whatever, Anganwadi or wherever she works. She'll take a lift from some brother-in-law. She'll be covering her head in the ghungat. I will not take a lift with a stranger man on a 2-wheeler. She will, because she needs to go to that school in time to get her salary. So जहाँ ज़रूरत है, वहाँ बहुत कुछ हो रहा है. हम उसको देखते नहीं हैं, हम उसको समझते नहीं हैं. In my next book, I have a chapter called Men Who Cook, because we all believe that Indian men are useless. You see the migrant workers and what they are doing, what lives they are living and how they. So same way, the bias cuts both ways. But the kya zarurat hai is such a fascinating phrase. A woman starts her business, kya zarurat hai? She wants to grow it, kya zarurat hai? She wants to take a transfer, kya zarurat hai? She wants to, extend her office hours, kya zarurat? As long as you are home when your child comes home, as long as you can take a break when your mother-in-law breaks her bone, you are doing fine. Outside of that, kya zarurat hai? That was my biggest insight.
May no mother-in-laws have to break their bones, but yes, in the league of kya zarurat hai is log kya kahenge, and I think we need to get past that as well. thanks so much for being here. Ritu, of course, runs Allianz in India. And congratulations on getting the joint venture done with Jio, a 50-50 joint venture that Allianz has announced just yesterday with Jio. And they will be, of course, they have been big in the insurance sector in India, but now with a new partner. Ritu, thanks very much. And I want to understand from you, where do we now take not just the conversation, but the action on this front?
You mean on insurance?
No, not on insurance. on women. Insurance, I know you're going to get that done anyway.
Sure. I think a lot is being said, and we need to start measuring action. One of the questions that I was coming across recently was, why is it so different? Is it different, first of all, overseas and in different markets? I was with Asia Pacific till recently and India. And it made me wonder and ponder and reflect. And I do realize there is a difference. I think outside of India, we've started institutionalizing it. It has come into structures and systems and processes about measuring and looking at diversity, different forms of diversity. In India, it is still sporadic. It is still good intent. It is still very diverse. It varies leader to leader within the same organization. And I think it would really help if we continue this dialogue and institutionalized what is the best practice, what is the best framework, and made it out there as a blueprint for everyone to pick up, disclose, measure, track.
No, I completely agree. But, contexts are different. But in your assessment, in the many markets, global markets that you've worked in, since you talk about institutionalizing the template, what is it that we can import from some of the experiences that you've had in other markets to India to ensure that we see better outcomes, better results?
I often hear in India the fact that the pipeline is leaky. I don't think the pipeline is broken at the bottom. It gets narrower at the top, and that's where the decisions get made. And it's not just performance and merit which gets you at the top. It needs a lot of sponsorship and advocacy. And I think that is a best practice one needs to inculcate to make sure whenever there is an opportunity, are we putting a female first? Are we even asking a female? I mean, a personal anecdote, we had a very important position which was cross-border, and we were looking at a panel of candidates. We were not looking at this lady because we knew she had just had a baby a month back. And I said, shall we ask her? She's had a baby a month back, but maybe she's ready. And she did take it when she was asked. But the bias that carries that she's just had a baby a month back, how is she going to move cross-border? That's her problem to sort out. The choice is for her to make and her family to make. And I think it's important we start asking and sponsoring the women talent more consciously.
I think you're absolutely right about that. I think a lot of the behavior is self-limiting. Women hold themselves back, but equally organizations also tend to hold back, assuming that it is something that a woman may not want to do or may not be able to do, and so on and so forth. And as you pointed out, just ask the question, give the woman the choice to say yes or no. And I think that is the least that you can do for somebody who works with you.
Let me add something to that, Shriram. So not just ask, also make the environment conducive for that lady, give her and her ecosystem that coaching and enable how she can make it do, rather than, obviously it's difficult to do, but how can she make it do is also the organization's responsibility.
What is the one question that you've been asked over and over again in the many decades that you've been around in the financial services sector that you still wonder, I'm still being asked that question?
Can you manage family and work together? I'm surprised. It's been 30 years and I still hear the same question, not for myself, but I hear the girls being asked the same question even today. And it's very disappointing.
It is very disappointing. None of the men are being asked that question. How are you going to manage family and work? And if you are going to ask the women that question, you better ask the men that question as well. Ritu, many, many thanks for joining us. Swati, thank you for being here with us. You started up in 2013. You've had marquee investors come on board at Cash Karo. Again, a lot of people say women lack ambition, women lack aspiration. I mean, we have enough examples in this room and enough data to say that that's not the case. What have been some of the biggest deterrents in your journey so far, but also, where have you got your tailwind from?
I think the first tailwind actually came from Ambala, which is where I grew up. And when I grew up, the most I wanted to do was actually, no offense to Delhi, but to go and study at St. Stephen's because, and you know, which is like, I was going to say that, look at the, you know, which is great. But, you know, like I didn't know beyond Delhi is what I'm saying. Like I didn't know anything being in Ambala from like beyond Delhi. And my grandfather used to say that, he used to tell my mom that you will not marry her at the age of 21, which is what may have happened with you. She is going to study. So he had that thing. So my dad came across this advertisement for Singapore scholarship after class 10, and he said, you topped Haryana, why don't you apply for it? And I said, Papa, what are the chances that a girl from Ambala will come in the top 25 people, you know, across guys and girls across India? And then I looked at myself. This is what women do all the time. We always discount ourselves first before the world discounts us. Yes, exactly. So I applied for that. I got that. Then I got a scholarship to London School of Economics. Then I worked at Goldman Sachs in London for 5 years, started our business, moved to India, raised money. But I think the first tailwind came from actually my friends and family, my aunties and uncle from Ambala, who actually, when they saw that Singapore scholarship, 20 people got together. 16 saal ki ladki ko Singapore jana chahiye ki nahi? And they said, oh, jana chahiye. And I also made a case. I said, if I don't go, how will ever your kids go? You need some role models. And after that, a lot of kids have gone abroad to study. So tailwinds come when you let girls have ambition, when you don't tell them ki kya zarurat hai. शादी तो करनी है. That's what people say. पढ़ लिख के क्या होगा? MBA करके क्या होगा? You'll get a good husband, as if that's the goal of life. So tailwind comes when people encourage you to think beyond that. That husband is not your goal.
I mean, it could also be part of your goal. It cannot and should not be the only goal that you aspire for. But, you know, in the last 10 plus years of building Cash Karo, you know, what have been some of the biggest hurdles that you've had to face, especially and we hear so much about the fact that it's always very hard for women founders to raise money and so on and so forth. What advice would you give to female founders who are looking at raising capital today, who are looking at starting up today, who are also looking at scaling up today?
Well, we've raised 250 crores in funding so far, and our Series A was Kalari Capital. And at that time also, Vani and I were the only two females in that entire room. And after that, Mr. Ratan Tata came on board as an investor. And when we met him, we had that 20-minute conversation. And what changed that conversation was me asking Mr. Tata that, you know, instead of pitching here on the side, because he was sitting and having his lunch, I was like, there'll be no eye contact, no relationship. How will he ever invest? I said, sir, do you mind if we sit across from you and have a conversation, just those same 20 minutes? He said, yeah, do that. But because it was a chat, he liked us, he liked the business, and he invested. So I think every time I forced myself to ask the question and to not doubt myself, write myself off before it had even happened, it paid off. And then Series B was Korea Investment Partners, where I was pitching to a room of 30 Korean men, because that was what investment committee of KIP was like. And I didn't think many of them even understood English. So I was looking at the graph saying, look at the shape, look at the shape, right? And but that's fine. I think what happens is you grow through it. And even my Series C was 130 crores. And I was actually going to have a kidney transplant 3 months after that Series C round. So I had it in my mind कि मुझे तो दोनों करना है, because I am going to do both. My hemoglobin was 5.5. My kidney function was 3 to 4%. And I was sitting across as if, yeah, so what? Because actually, so what? Things do go wrong in life. I was always glad that my problem is one I know. Things happen out of the blue. So health and everything is actually a mental game. Can you make yourself mentally strong enough? Can you make yourself mentally such that, you know, I mean, I even disclosed it to the investor before they wrote the term sheet. And I said, this is going to happen in 3 months. And it was an all-male investor, and they said, it's okay, we know you'll bounce back. And I did. Within 2 weeks, I was back home, working from home, and it was fine. So yeah, thank you. And I think, so therefore, it's not as much about men or women. I think we also have to remember that investors are in it to make money. So if they're sitting across from somebody who they think can deliver, who has a business that is, you know, I mean, in our case, we have precedents of success abroad. Why can't we do it in India? It's a much bigger market. So I think it's all about how you communicate that vision. And if you demonstrate that you have the confidence, and I think to do that, to get there, the advice I would give to women also is that there are some shifts that we need to make in ourselves to show up for good. Stop pre-apologizing. Stop over-explaining. Take a compliment. Take interest in money. Don't think that my father or my husband or someone's going to manage all that. We are earning it, but we are not investing it. We are saving also, but we are not investing because we think that part to someone else will manage. But the minute you start asking those questions, which you think that, oh, ab tak to usko ye pata hi hona chahiye, that's when you actually take control of your finances. And I think financial independence and financial literacy is very important for every woman, because if you want to get out of a situation in life where you want to get out, you can only do it if you have a choice. It could be a bad marriage, it could be a bad job, it could be a really hurtful boss, or whatever it is that is killing your vibe or your soul. You can only do it if you are financially independent.
Well, can I just say that you're absolutely brilliant, Swati. Take that compliment with all the love that we're giving it to you with. But thank you so much.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Iran's foreign minister arrives in Moscow for talks with Russia's President Putin as he steps up diplomatic efforts to end the war with the US. US President Trump says Iran's leaders can call us to negotiate after cancelling a planned visit by his envoys to Islamabad. Crude oil prices remain elevated as the Strait of Hormuz remains choked for shipping. Israeli attacks kill 14 people in Lebanon in what is the deadliest day since the ceasefire. Dalal Street snaps a three-day losing streak. Nifty ends above 24,000. All sectoral indices close in the green. Pharma and IT stocks lead the gains. Mid-caps outperform. Sun Pharma acquires US-based Organon with an enterprise value of $11.75 billion. This is among the largest foreign acquisition by an Indian company. Dalal Street waves a thumbs up to the deal, which will double Sun Pharma's annual revenue to more than $12 billion. A sweltering heat wave scorches large parts of the country. More than 90% of the world's hottest cities are now in India. Weather department warns conditions could worsen over the next few days. Government considers 5,000 crore rupees in emergency credit to airlines impacted by the war in West Asia. More than 15,000 flights cancelled in the last 2 months, leading to potential losses of nearly 6,000 crore rupees. Indian Airlines are currently operating only 25% of their scheduled flights to the Gulf region. The high voltage campaign for West Bengal draws to a close. Election Commission tightens security around 142 constituencies that will vote on Wednesday. The 31-year-old gunman who fired shots at the White House Correspondents' Dinner set to appear in court. Officials say the gunman was targeting President Trump and administration officials. The gunman appears to have acted alone and had a shotgun, handgun and knives. Union government holds a high-level meeting with states to crack down on counterfeit goods to finalize a roadmap for nationwide enforcement. Adulterated food and spurious medicines emerge as a national challenge with more than 24 seizures in the last 3 months. Auto rickshaw and taxi driver unions across Maharashtra up in arms after state government plans to impose a Marathi mandate starting the 1st of May. Drivers could lose their license if they do not have basic knowledge of Marathi and will be subjected to checks by the Transport Department. All right, the top story this evening, the US and Iran remain locked in a tense, open-ended standoff as negotiations have stalled. Let's break down the latest developments. Iran has reportedly offered the US a new proposal to reopen the Strait of Hormuz and end the war. However, Axios has reported that this deal proposes to postpone nuclear talks to a later date. Iran's foreign minister raised the plan during his meetings in Islamabad over the weekend. The US has received the proposal but is yet to respond. Trump is reportedly expected to hold a Situation Room meeting on Iran with his top national security and foreign policy team today. Meanwhile, Tehran has stepped up diplomatic efforts to end the war with the US while blaming America for the stalemate. The Iranian foreign minister arrived in Russia today after his visit to Pakistan and Oman. Araghchi said that the US-Iran conflict would be on the agenda during the discussions with Russian officials. He added that the talks failed because of Washington's excessive demand. Araghchi went on to say that Oman has agreed to continue consultations to secure safe transit and protect shared interests in the strait. On the other hand, Trump has now ruled out in-person negotiations with Iran. The US president told Fox News that Iran could telephone US officials if it wants to negotiate an end to the conflict. Trump said that talks in Pakistan would be, and I quote, wasting too much time. He added that Iran's oil storages are full because of the US blockade in Hormuz. He claimed that Iran has about 3 days before the country's oil pipelines risk explosion from being clogged up. The US has claimed that it directed 38 vessels from Iranian ports to turn around or return to so far in the crucial waterway. The US CENTCOM added that American forces continue to enforce the US blockade, stopping ships from both entering and exiting. However, Iran appears to continue loading oil despite the US claims. A ship tracking website, Tanker Trackers, has said that Iran has loaded the equivalent of 4.6 million barrels of oil at crude oil terminals. The site has reported that ships carrying these barrels appear to have crossed US blockade. The tensions in the strait have kept crude prices elevated, with Brent now inching closer to $110 mark. Meanwhile, in Lebanon, Israel killed 14 people in fresh strikes as the tenuous 3-week ceasefire continues. Thousands were forced to flee after Israeli forces issued new evacuation orders in the southern part of the country. Both Israel and Hezbollah have accused each other of ceasefire violations and claim that their attacks are retaliations to these violations.
Pakistan is playing an important mediating role in the negotiations between Iran and the United States. It was necessary to have a review of the latest situation. In any case, developments have occurred in the negotiations. The Americans' approaches caused the previous round of talks, despite the progress that had been made, not to reach its objectives. The excessive demands they made and the incorrect approaches they adopted. It was necessary for us to have consultations with our friends in Pakistan to examine the latest situation.
The 31-year-old gunman who fired shots at the White House Correspondents' Dinner is set to appear in court. Authorities have revealed his identity as Cole Allen from California. Officials say the gunman was targeting President Trump and administration officials. He faces charges including assaulting a federal officer and discharging a firearm. The gunman appears to have acted alone and had a shotgun, handgun and knives.
A man charged a security checkpoint armed with multiple weapons. and he was taken down by some very brave members of Secret Service, and they acted very quickly. The man has been captured. They go into his apartment. I guess he lives in California, and he's a sick person, a very sick person.
All right, on to the day's market action. The market snapped a 3-day losing streak. Nifty ended near the 24,100 mark, while Sensex rose over 600 points. All sectoral indices closed higher, with Nifty Pharma and Healthcare being the biggest outperformers. All right, the big corporate story this evening, Sun Pharma will acquire US-based Organon for $11.75 billion. The deal helps the company strengthen its branded and generics portfolio. The combined annual revenue will also cross $12 billion. This is also the second largest acquisition by an Indian company overseas. The Tata Group's acquisition of Chorus nearly 2 decades ago remains the largest deal with a valuation of $12 billion. Sun Pharma's acquisition sits above Bharti Airtel's acquisition of Zen Africa for $10.7 billion. Ekta Batra is here with more on the deal and what it means for Sun Pharma and the industry at large.
It's official. Sun Pharma is acquiring US-listed Organon for $11.75 billion, the largest overseas acquisition ever by an Indian pharma company. Sun pays $14 per share in cash, equity value at around $3.99 billion, with the balance covering Organon's net debt of $7.6 to $7.7 billion. The deal closes early 2027, funded through $2 to $2.5 billion of Sun's own cash and bank financing. So what does Sun get? Organon is a $6.2 billion revenue, $1.9 billion EBITDA business across women's health, biosimilars, and established branded medicines in 140 countries. The deal doubles Sun's revenue to $12.4 billion overnight, makes it a top 25 global pharma company, top 3 in women's health, 7th largest biosimilars player globally, and it essentially fills 3 gaps Sun couldn't fill organically: women's health, biosimilars, and direct commercial presence in Europe and China. Innovative medicines jumps from 20% to 27% of revenue. Biosimilars, where Sun had 0 presence, now contributes around 6% in terms of total sales. The concerns, however, are real. Sun goes from a net cash to net debt overnight, 2.3 times net debt to EBITDA post-deal, and debt repayment is the stated priority, with $2 to $2.4 billion in combined free cash flows. Guidance is that the debt burden should reduce in the next 4 to 5 years. Dividend policy is also under review by the management. Key factors that will be watched closely going forward: integration of 50,000 plus employees, though Sun points to Ranbaxy and Taro as its proof of concept earlier. Street will also watch for synergies, which are guided at around $350 million over the next 2 to 4 years, and any impact of tariffs in the US on Sun, Organon, or the combined entity. Organon's growth is the other overhang. Revenue has been flattish over the last 3 years. Its largest segment, established brands, declined around 4% in CY25. Sun, however, is targeting single-digit growth through line extensions and product combinations. Geographically, India drops from 33% to 17% of revenue, and the US from 31% to 27%, which some investors see as dilutive to revenue quality. On valuations, the deal comes in below that $13 billion speculated mark, so that's a positive. At around 6.2 times EBITDA, analysts are broadly supportive, some calling any stock weakness a buying opportunity, others flagging near-term range-bound pressure from the deal overhang. Sun says it will be EPS accretive from day one, and management is clear. They cannot give specifics on near-term growth. This is about longer-term value creation, not a 6 to 12-month story. The financial logic is sound. The execution is where Sun will be judged going forward.
As a company, we ourselves are debt averse. However, we are not risk averse. So at some point of time, when we think that the debt will help us scale the business and change the trajectory of the business, we are comfortable with debt. But we should be able to repay the debt within a reasonable period of time.
Right, shares of 197 Communications, Paytm's parent company, declined in trade. This after the RBI cancelled the banking license of Paytm Payments Bank on Friday. The Payment Bank's board initiated the process of winding up its operations, with the board and shareholders approving the move at a meeting held on the 25th of April. The company said that the winding up will be carried out in accordance with regulatory directions and subject to approval from the central bank. The Reserve Bank has granted approval to MobiKwik Systems to operate as a non-banking financial company. The company plans to set up a wholly owned subsidiary to house its lending business. This will enable it to expand credit offerings under a regulated framework. The new entity will focus on delivering both secured and unsecured loans. The government is planning to roll out a 5,000 crore relief package for airlines under the Emergency Credit Line Guarantee Scheme. Sources have said that this proposal is likely to be placed before the cabinet this week. The move comes as financial stress on the aviation sector has intensified, with rising cost pressures linked to the prolonged tensions in West Asia. The scheme will be aimed at easing liquidity stress, especially for cash-strapped carriers. More than 15,000 flights to West Asia have been cancelled in the last 2 months since the conflict began. Indian Airlines are currently operating only 25% of their scheduled flights to the Gulf region. Madiha Mujawar is here to explain the financial impact of the conflict on Indian aviation. Madiha, the losses keep mounting. What are you picking up?
Well, the scale of the losses is quite significant. Over 15,400 flights have been cancelled by Indian Airlines alone since February 28, when the West Asia conflict began. That's 2 months of disruption and a sharp drop in connectivity to West Asia. Airlines are now operating just 50 to 55 flights a day to the region, compared to nearly 200 flights pre-conflict. The impact on passengers is also substantial. Over 13.6 lakh travelers have been affected due to cancellations, delays and rerouting. But beyond operations, there's a serious financial hit. Industry estimates suggest that Indian Airlines could be staring at a revenue impact of over 6,000 crore. That's also a conservative calculation. So a typical India Gulf flight, often operated by aircraft like the Airbus A320 or Boeing 737, the narrow body planes that carry around 150 passengers on an average, considering a load factor of 85% per flight. With a fare of 18,000 rupees on an average and an additional earnings from cargo, seats, meals and ancillaries, airlines make roughly 40 lakh per flight. Now multiply that by 15,400 cancelled flights and the revenue at risk crosses 6,000 crore, and this does not even include higher fuel burn and costs from longer rerouting. So while flights are still operating, Indian Airlines are now navigating both operational disruption and mounting financial pressure as the crisis continues.
All right, thank you, Madiha, for that update. Moving on, General Atlantic-backed ACCO has appointed investment bankers for its upcoming initial public offer. As per Money Control, the IPO is expected to include a mix of a fresh issue and an offer for sale by existing investors. The firm is targeting a valuation of $2 to $2.5 billion. Cement major Ultratech has reported a steady set of numbers in the fourth quarter. Net profit and margins beat estimates, while revenue came in line. On an annual basis, net profit grew over 21%, while revenue jumped nearly 12%. The board has also approved a special dividend of 240 rupees a share. Private lender Axis Bank has trimmed its employee headcount by around 3,000 in FY26. This comes as the bank continues to see productivity gains from its investments in technology and digital capabilities. The bank's total workforce also declined 3% on an annual basis. On a sequential basis, the headcount declined by 552 employees in the March quarter. Now, India is grappling with a severe heat wave with temperatures soaring close to 47 degrees Celsius in several parts of the country. India's Met Department has warned that heat wave conditions are likely to persist over the next couple of days. Parts of Vidarbha, Rajasthan and Uttar Pradesh are among the worst affected. The highest maximum temperature was recorded at 46.9 degrees Celsius in Akola, Maharashtra. More than 90% of the world's hottest cities are now in India. Authorities have also flagged health risks, urging people to avoid prolonged exposure to the sun, stay hydrated and take precautions as extreme conditions continue. Santya Gora has more.
Rising mercury continues to wreak havoc in parts of Himachal, Delhi, Uttar Pradesh, Madhya Pradesh, Maharashtra, Punjab, Haryana and Rajasthan. IMD has issued a heat wave warning for these regions for the next 3 days. Weather factors like clear skies, ensuring more absorption of solar radiation and an anticyclonic circulation trapping the heat are responsible for this phenomenon.
This is the anticyclone which you see. It is over Maharashtra. So what role does this exactly play? Your earth is getting hot, warm air is getting advected. Now whenever there is an anticyclone, it is the characteristic of the anticyclone to subside the air. So see, this anticyclone is placed over Maharashtra. So the air is getting subsided. When the air is subsiding, what does it actually mean for a layman? It means that the warm air is unable to rise.
So heat is trapped. IMD has said that the development of a western disturbance will lead to some rain spells and thunderstorm in parts of Himachal, Delhi and northwest India, bringing some relief in these regions by this evening. Maharashtra will also witness slight relief by tomorrow.
The winds in the lower levels, though northerly, will not be that strong. So the advection of heat will be lesser and the anticyclone is getting distorted. So when the anticyclone is getting distorted, the heat wave is likely to abate over Maharashtra. It doesn't mean there is going to be a huge respite, but this type of this degree of discomfort may slightly reduce.
IMD has advised people to avoid heat exposure and stay hydrated. IMD has also issued an advisory for farmers, including ensuring frequent irrigation and shade for newly planted crops. Now, these prolonged and severe episodes of heat wave have become an every-year phenomenon for India. In 2025, medical journal The Lancet published a report stating that in 2024, out of 19.8 days of heat wave, 6.6 days were a result of climate change. The study also claimed that between 2001 and 2023, India lost 2.33 million hectares of its green cover, and out of 189 most populous cities in the country, 14 cities had extremely low level of greenness and 110 cities had very low level of greenness. Now, this western disturbance will bring some relief for 5 to 6 days, but it won't ensure that this will be the last phase of heat wave for India for this summer. In Mumbai, with camera person Milind Wagmare, this is Santya for CNBC TV18.
India's power demand has surged to record highs driven by a heat wave across the country. Peak electricity demand has touched 256 gigawatts in April 2026, the highest level ever recorded. The government now expects demand to climb further to around 263 gigawatts this month. Looking ahead, the centre projects that peak demand could cross 270 gigawatts over the course of the year. Coming up, auto rickshaw and taxi driver unions across Maharashtra are up in arms after the state government plan to impose a Marathi mandate. Details up in a bit. Welcome back. India and New Zealand have signed a free trade agreement after 13 months of continuous negotiations. With this deal, India has trade pacts with all members of the Regional Comprehensive Economic Partnership, barring China. The Commerce Ministry has said that there will be zero duty market access on 100% of India's exports to New Zealand. New Zealand has also committed to invest $20 billion in the Indian market over 15 years. However, certain items including dairy, coffee, milk and edible oils will be excluded from the agreement. Now, auto rickshaw and taxi driver unions across Maharashtra are up in arms after the state government's plans to impose a Marathi mandate. Starting the 1st of May, drivers could lose their license if they do not have basic knowledge of Marathi and will be subjected to checks by the Transport Department. Sneha Biswas reports on the government's plan and why the unions are protesting it.
For auto and taxi drivers in Maharashtra, a driving test will soon be the least of their worries. Starting from May 1st, their fluency in Marathi will determine whether they'll get a permit or get to keep the one that was issued within the last 10 years. Failure to do so may result in the permit being denied or even cancelled.
सरकार के पास दूसरा कोई मुद्दा है ही नहीं, अननेसेसरी ये सब बात बोल के मिसगाइड कर रहे हैं।
रोजगार चल रहा है, उसके ऊपर पैर मत रखो, उसको चलने दो अच्छी तरह, और जिसको नहीं आ रहा तो उसको सीखो, सीखने की कोशिश करो।
भाषा सब जगह एक दूसरे का आना चाहिए, लेकिन नहीं आता है तो उसको क्या कर सकता है, समझो तुरंत तो कोई बोल नहीं सकता है मराठी।
हम लोग इसका सपोर्ट में नहीं है, हम लोग इसके अगेंस्ट में हैं, हम लोग इसका विरोध कर रहे हैं।
लोगों के पेट में अगर लात मारने के काम सरकार करेगी तो हम लोग भी मत के दाता से मतदाता होने के नाते फिर वोट दे के हम लोग भी लात मार के इसी सरकार को भगाने के प्रयास करेंगे।
According to unions, the current rule only requires a working knowledge of Marathi. However, concerns are rising that stricter measures like written tests or essays could make things difficult for many drivers. This is especially significant because associations say nearly 80-90% of drivers come from the states of Uttar Pradesh and Bihar.
वर्किंग नॉलेज जो रहना चाहिए उसको, तो वर्किंग नॉलेज के लिए मुझे नहीं लगता कि या हमारे यूनियन को नहीं लगता कि उसको लिखना पढ़ना भी आना चाहिए। उसको कोई आईपीएस और आईएएस का एग्ज़ाम नहीं क्रैक करना है।
200-500 कमा के जाओ, घर पे खाना बनता है, खाते। अब 10 दिन हम लोग गाड़ी पे नहीं जाएंगे, घर वाले तो भूखे मर जाएंगे।
मैं 83 से मेरा परमिट है, 83 से मैं गाड़ी चला रहा हूँ। मुझे आज तक कोई ऐसा नहीं मिला कि वो बोला नहीं तुम हिंदी मत बोलो, मराठी बोलो।
कि मुंबई में ये टारगेट किया जा रहा है।
Once the drive concludes on May 1st, authorities will compile a detailed report which may be used to expand similar enforcement measures across the state. CNBC TV 18 had sent a detailed questionnaire to Maharashtra Transport Department. However, we have not received any response. So from what we understand is people are okay with speaking in Marathi. The only issue is the compulsion part. We have also written to Ola, Uber and Rapido to understand if these rules will be applicable on their platforms or not. However, responses are still awaited. With cameraman Altaf Ahmed, Sneha Biswas for CNBC TV 18.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV 18.
and welcome to Startup Street. I'm Ritu Singh. With me is Shruti Mishra and Arundhati Ramanan. Here are the key headlines from the startup space. General Atlantic-backed ACCO appoints investment bankers for its upcoming initial public offering. The IPO is expected to include a mix of fresh issue and an offer for sale by existing investors. The firm is targeting a valuation of $2 to $2.5 billion.
Early-stage venture capital firm Capital A secures the first close of its second fund at 160 crore rupees. Looks to back early-stage startups. The fund is targeting a base corpus of 300 crore rupees with a green shoe option of 100 crores.
App-based transport workers are demanding mandatory heatwave protection, including paid breaks and access to water, under the Code on Social Security 2020. The Indian Federation of App-based Transport Workers has urged the government to implement these measures, citing similar protections in other countries.
Amazon now is rapidly expanding its quick commerce services to 100 Indian cities, boosting its micro-fulfillment centers to over 1,000. This strategic move, backed by a significant investment, aims to enhance delivery speed and selection, directly competing with rivals in the fast-paced online grocery market.
Meta Platforms has signed an agreement with Overview Energy to secure power from startup space-based solar energy infrastructure for the Facebook parent's data centers by the end of the decade. The agreement grants Meta early access to up to 1 gigawatt of capacity from Overview's system.
Well, those are the headlines we've been tracking for you this evening. The top story today, D2C insurer ACCO has set its IPO wheels in motion and is eyeing a $2 to $2.5 billion valuation. ACCO has appointed ICICI Securities, Morgan Stanley and Kotak Securities as book-running lead managers for its proposed IPO, according to people familiar with the development. The Bengaluru-based company is expected to file its DRHP with SEBI in the coming months. Sources tell me the IPO is likely to include a mix of fresh issues and an offer for sale by existing investors. Founded by Varun Dua, ACCO received its license in late 2017 and commenced operations in 2018. In a general issuance market historically dominated by intermediaries, ACCO has positioned itself as a direct-to-consumer player, bypassing agents and traditional distribution channels that account for a significant portion of industry costs. In FY25, the company reported revenue of 2,837 crore rupees, marking a 35% year-on-year increase, significantly outpacing the broader insurance sector, which grew at under 10% during the same period. The company also reported a 37% reduction in net losses, signaling improving unit economics as it scales. Till date, ACCO has raised over $583 million and is now gearing up for its biggest test yet, the public markets. Ritu, over to you. What else is what's brewing?
Well, that's about the IPO markets, but here's a regulatory license that MobiKwik has received. A final approval from the Reserve Bank of India for this. The company says this approval is going to pave the way for launching its lending arm that is going to be called MobiKwik Financial Services, which will be its wholly owned subsidiary. Now, MobiKwik has also said this is going to strengthen their regulated lending play, enable it to design new credit products, and expand reach across consumers and merchants. They also added that the in-house NBFC is expected to fast-track go-to-market, offering both secured and unsecured loans with a focus on the underserved geographies. Operations are going to begin once the company receives the COR, or the Certificate of Registration, from the RBI and meets the stipulated conditions. Now, that's as far as MobiKwik is concerned, but let's move on to our first guest of the show. India, of course, has a cricket obsession that spans generation, but it's never really had a world-class cricket video game to show for it. Now, Light Fury Games wants to change that. The Bangalore-based AAA gaming studio has just closed an $11 million pre-Series A round, backed by Bloom, V3 Ventures, Mixi and Times Internet, and in a headline-grabbing move, MS Dhoni, Jasprit Bumrah, Hardik Pandya, Ravindra Jadeja, Shreyas Iyer, Tilak Verma, and even Sai Sudarshan have all come in as strategic investors. The studio's debut title, eCricket, is built on Unreal Engine 5 and it is targeting a 2026 mobile launch. Joining us now is Karan Shroff, the co-founder and CEO of Light Fury Games. For more on this, Karan, firstly, congratulations on the fundraise, but, honestly, that $11 million, will it really move the needle? when it comes to building a world-class AAA game product for the world? How exactly are you going to deploy this capital?
Yeah, thank you, Ritu. I think we did raise about 8.5 million in our seed round, and now with this additional 11 million, we'll see the product through to shipping. And with that, we also have some amount that we'll allocate towards the distribution of the game. And from there, it would also lean into live services and live ops. So that's what this capital will be used. Is it enough? Yes, it is. We're building out of India. We're able to keep the costs in check. We're very frugal as a company and business. And at the same time, this is a live services game. So as we start putting it out in the market, we will add more and more features over the next cycles as the game progresses.
Karan, it's interesting you have these 7 famous cricketers as investors as well. But what exactly will be the contribution beyond branding? Any tangible value that they will add to gameplay?
Yeah, look, cricket is a place of passion for all of us at Light Fury, right? And it's something that, of course, the whole nation shares, and also all of these cricketers. And I think their insights will add a lot of value to what we're building. It's not just the fidelity or the gameplay experience overall, but even the nuances of the sports, right? Like the sport, there's so many details that you kind of get into when you're building a cricket game. Cricket is a very complex sport compared to a lot of sports out there, and it has to be done and built right. So their experience, their knowledge of the game, and their understanding of everything that they have through their journey of being heroes of our country, will really help us move this needle forward. So in whatever time that they can give us, we'll make the most of it.
Okay, Karan, everyone says cricket never really got its FIFA moment in gaming. To your mind, what fundamentally has not worked in its favor so far, and what are you doing differently to crack that code?
Yeah, look, cricket is a social sport. Our game is also going to be social. You can play, against each other, using the multiplayer mode, but you can also add friends in the game. You can socialize with each other, talk to your other friends, compete with them. And at the same time, we want to deliver all of this with the highest fidelity. So if you look at a Dhoni in game, he's going to look like Dhoni, he's going to play like Dhoni, and all of these things matter to the fans, having the right names, having the right jersey numbers, having the right attributes, all of these things play very critically, for all the cricketing fans. On the other hand, the gameplay experience is going to have a lot of depth, so you can make a lot of progression as you keep playing the game. So over the course of time, you keep leveling up, you keep making that progression, and that adds to a lot of depth to the gameplay experience, which I feel has truly been missing. The third and fourth, in fact, most important is we're building on the back of physics, which makes the game unpredictable and esports ready. And the last piece is, of course, delivering all of this with the highest fidelity and a broadcast experience. So serving cricket as it should be, and that's the vision that we're building e-cricket with.
All right. Are you building e-cricket, though, as a premium title, freemium, or a live service model? You're also launching, interestingly, a mobile-first model. Would you say that would limit the depth expected from a AAA title, especially when, the serious gamers still lean towards console and PC?
Yeah. So I think mobile is a massive market and it's growing year on year, and which is why we chose to go first with mobile. In the future, we will also ship on console and PC. We haven't defined a timeline as yet, but we will be on those 2 platforms as well. We will push the envelope as much as possible on mobile. The game already is in a phenomenal shape. We are in the last stages of development. And once it's out there, we're very confident it's going to be the best cricket title in the world. So we have chosen mobile first as we want us to reach every nook and corner of the world, and of course starting with India, and you have the maximum number of users on mobile. So that's where we chose to build first.
All right. And how aggressive is the monetization model? And how are you really going to avoid the pay-to-win trap that really kills sports game communities?
So look, we have a very experienced team. Our game designers and our head of monetization have built several titles on mobile, especially, that have done incredibly well, through their journey. It's going to be a free-to-play game, a freemium model, so you can come in and play for free as long as you like. But on the other hand, you will also have options to purchase and make purchases in the app. The game is built around collectability, so you get to collect your players. As you've seen, we've closed a lot of these guys. We have over 600 international athletes, and all of them will be presented in their true avatar, right? So collectability comes at the core of everything that we're building. So it's going to be free to play in a nutshell, but you will have the traditional, IAP routes that we will monetize. But on the other hand, you can also watch ads and unlock a lot of things in the game. So if you choose not to play and just give us your time, you can do that as well, and it won't fall into that trap of pay to win.
Okay, Karan, finally, give us a sense of your expected revenues or sales trajectory in the next few years. How profitable could the business be?
Well, we are not aiming small. I won't give you an absolute number, Ritu, but the thought is very clear. Every sport out there, you look at football, it has $2 billion titles. You look at basketball, it has $1 billion title. You look at baseball, it has $1 billion title, but cricket doesn't have one. That's our ambition. That's our goal. We want to be the first $1 billion IP in cricket. Now, whether we achieve that in 3 years or 5 years, we'll have to see. But that's the vision and that's the dream that we're chasing. We're building with the highest quality and highest caliber, and it's a serious attempt from India for the world. It's the second largest sport, and it deserves a $1 billion IP.
All right, Karan, and we wish you the best with that. Thanks very much for your time here. We appreciate it. Thank you.
Thank you, Ritu. Nice speaking to you.
All right, moving on the hot seat today, we have Deccan AI that is betting big on solving one of artificial intelligence's biggest challenge, accuracy. As the global race shifts from building smarter models to deploying reliable ones, the company has raised $25 million from E91 partners, Saskina and Process Ventures. With 10x growth over the past year and a client base that includes some of the world's top AI labs, Deccan AI is positioning itself as a critical layer powering the move from AI pilots to real-world high-stakes deployment. Joining me now to discuss this further is Purva Bhandari, the co-founder of Deccan AI. Also with me, Ritu. Purva, welcome to Startup Street. Everyone is chasing super intelligence, but you've doubled down on super accuracy. What did you see in the market that made you believe reliability, not raw capability, would be the real bottleneck for AI adoption? If you could take us through what's on offer.
Perfect. That's a great question and exactly why we are here. So at Deccan, we believe that while all the frontier labs are pushing the boundary and pushing the capability benchmarks when it comes to what an AI model can do, the real value actually will be derived once these models are deployed in production. And that is what we are here to do. So today, Ritu, we work with the majority of the Magnificent Seven in developing the best state-of-the-art AI models. We are the platform and the services layer for these for these companies, the LLM builders. And our ambition, and we've started earlier this year with getting into operations, building the Infosys of the future of the world of AI. And our ambition is to actually build that layer of services and platform that can actually take these models, the capabilities, and deploy them in real life, messy situations that probably today enterprises struggle with.
Purva, hi, this is Ritu. Ritu, that was my colleague Shruti asking you that question. But, Purva, you're operating in this post-training layer. What happens for a viewer if the layer is weak, and how does Deccan AI fix that in a way that large labs or hyperscalers aren't already doing in the market?
Yeah, so we work with these large labs and hyperscalers in making sure that before they get their models to the market, right, whether it be the retail market or be the enterprise market, we are able to make sure that these models actually work well, even for the edge cases. So a lot of large language models are built on tons of data, billions of dollars that are, making these models, let's say, accurate to a degree of 70%, 80%. Our job here at Deccan is to build that reliability layer to make this, 70 to 80% going to 90, 95%, because that's the dream that we are chasing, especially if you want AI to be yielding ROI for enterprises, right? So today, a lot of pilots, let's say last year, there were a lot of pilots that probably took shape. But now CEOs are asking that, hey, you've gotten this done. Can I actually deploy this without the AI model making an error? Our job here, Ritu, is to essentially make sure that these models are working with humans in the loop to make sure that you're expecting the person who is using, a consumer, is getting the output that they're expecting and not something which is haywire. So I'll give you an example here. A couple of years ago when RPA took off, the robotic process automation, the trouble was that it wasn't flexible enough. It was too brittle, so to speak, to make sure that actually our enterprise workflows are getting done. Now, with AI, the problem is that it is very probabilistic. So you don't know as an enterprise, let's say you're a big giant conglomerate that is deploying AI and having your consumers interface with them. You don't always 100% know that AI is going to give you the right answer or it's going to take the right course of action. So you always need a human in the loop. Our belief is that enterprise will always succeed with a human in the loop. And we are here to make that bridge happen, right, with the humans and the models.
Okay. Purva, Shruti here. Like I mentioned earlier, you've just raised $25 million from A91 partners, Saskina and Process. Where does this capital go first? Are you looking to scale your expert data network, deepen, your RL environments, or build enterprise infrastructure?
All of these, because we feel that there's like two pathways that AI is exploring in to bring in maturity. One is with the data and the hyperscalers. It is all about RL environments, and we are building that aggressively. So we are hiring in the Bay Area. We are hiring ML engineers. We are building deep tech in that side. And then on the enterprise side, we are launching 2 product layers on Enterprise OS and Helix, which will enable us to penetrate deeper into enterprises.
That. Purva, finally, since we run out of time, you've grown 10 times in the last year. You're working with some of the world's top AI labs. What is driving this kind of growth, and how much of it is repeat versus new demand?
No, this is a lot of repeat as well as new demand. I think this area is exploding. We've already grown 10x, as you said, Ritu, and we are hoping to go 100x in the next couple of years, because that's where the market is going. And if you really look at it today, the early adopters of AI are probably a handful of organizations. There's opportunity to deepen there, as well as there's a lot of land to be grabbed in new enterprises.
All right, Purva, with that, we'll have to wrap up our conversation. But many thanks for joining us on Startup Street, and wish you the very best.
Thank you, Shruti. Thank you, Ritu. Nice to meet you.
Well, with that, it's time for us to head into a short break. But coming up, as AI moves from a back-end tool to the front line of cyber warfare, financial systems are now facing a new reality. Intelligent defenses taking on equally intelligent threats. So are we stepping into an era of AI versus AI? And what does that mean for risk, resilience and investment in BFSI? We decode on the other side. Stay tuned. Welcome back to Startup Street. From fraud detection to threat intelligence, AI is no longer just a tool. It's becoming the battlefield itself. As financial institutions double down on digital infrastructure, a new reality is emerging. Intelligence systems defending against equally intelligent attacks. So are we entering an era of AI versus AI in cybersecurity? And what does that mean for risk, resilience and investment in the BFSI sector? Joining me to decode this shift are JP Mishra, founder and CEO of Deep Algorithm, and Bhaskar Majumdar, the managing partner at Unicorn India Ventures. Gentlemen, welcome to Startup Street. Let me start with you, JP. Are we already in a true AI versus AI phase in cybersecurity, where systems like Mythos are constantly learning and countering equally intelligent threats? How real is that shift today?
Very rightly you said, like, we are into the war of AI versus AI. Because the conventional security system that was built to tackle the attacks coming from the human attacker. But nowadays, attacks are not from human. It's where the AI agent itself is doing attack. Think about what is the massive speed. These AI agent, when it attacks on the system, it learns from the attacks itself and change the vector. And that's adaptive way. So to tackle these kind of attack, we require the AI defense system, where the autonomous AI red team continuously scan, find out the vulnerabilities, and autonomous AI blue team to find those fixes and patch it in real time. Because tackling this AI system, we need completely autonomous AI defense system. That's the need. Without that, it will be very difficult to tackle this AI attack. And that also, we need to have the native AI system, where our AI agents, that also must be secure. Their identity must be secure to complete the community.
Okay. All right. Bhaskar, let me come across to you now. From an investor lens, does this mark a structural shift in cybersecurity? Are we now allocating capital differently in what is essentially an AI arms race?
Hi, Shruti. Good to again be on your show. So you're absolutely right. Like JP has rightly said, the need of the hour is autonomous defensive systems that can simulate, detect, and neutralize the threats in real time. And these necessarily happen much faster than the human-led teams so far. From an investor lens, this creates a shift in the capital allocation, away clearly from the static tools, which were more signature-based and rules-driven security, which is what cybersecurity till date has been, towards more adaptive AI-native platforms that continuously learn attack patterns. So it's literally into a continuous do loop that you're constantly learning from the attack patterns. And capital is increasingly now starting to be concentrated in full stack AI security platforms, and no more in the earlier point solutions that used to be the order of the day.
Yes, yes. All right. JP, coming back to you, if attackers today have access to similar AI capabilities to what platforms like Mythos offer, what becomes the real edge for defenders? Is it the models, the data, or the context in which that intelligence is deployed?
Well, very right question you have asked, right? So see, data and context, that is going to be very, very helpful when we are going to build our defensive AI system. And since we are going to build our autonomous AI systems, it will have the complete access of our environment, code, ecosystems. So definitely it will have a structural benefit from the general AI system. One of the most important part we need to focus is our even defensive AI system also must be secure. It shouldn't be hacked by this adversary's AI agent. And for that, we need to have the native context and intent-based identity agent and security system that will ensure our complete autonomous AI system would tackle. So three things we need to have, especially in our AI defensive system. One is the speed, how fast we can continuously scan and fix those issues. Second, the native AI security. And third part is complete having the governance of entire agency ecosystem.
Okay. So, Bhaskar, when both sides are powered by AI, how do you even begin to underwrite risk? Does this make platforms like Mythos indispensable, or does it amplify systemic vulnerability?
Mythos-type platforms actually become risk mitigators, if you will, and not amplifiers.
Okay.
Because they reduce the response response time from minutes and hours as it used to be to literally milliseconds. However, it's a double-edged sword, because they also introduce systemic risk concentration. So if a dominant model then fails, then the failure really propagates itself much faster. So it's a very, people are waiting to see how the whole thing pans out, but fundamentally, because historical breach data becomes less predictive, the traditional underwriting breaks down. And therefore, people are waiting to see how basically the underwriting now takes off.
All right. JP, give us a sense of what you are hearing from BFSI clients right now. Are boardroom conversations actively shifting towards, this AI versus AI paradigm, and how is that redefining your role?
Because this is a concern across not only BFSI, it's across all the system. If you see critical infrastructure, right? Everywhere now, this is the worry how we are going to tackle this AI-based attack. So it's a kind of continuous war. We need to be focused very aggressively because we don't have any option. Now, static rules-based, signature-based a kind of security mechanism is not going to work at all. We need to have built autonomous AI defense system. And there we need to also add this, as I mentioned earlier, the native AI security to ensure our defense system should identify those in advance and fix this in real time before attacker gets it.
Sure. Bhaskar, again, talking about the BFSI sector specifically, do you see AI-led cybersecurity moving from a discretionary tech spend to core infrastructure? And how does that impact long-term conviction for investors?
I think absolutely. And this is where the biggest structural shift is starting to happen, especially if you take sectors like BFSI or pharma, the regulated sectors. In these sectors, AI security is moving from becoming as fundamental as the core banking is in the BFSI sector. And platforms like Mythos will sit in line with the transaction flows and not as overlays. And like you said, CSO is no more, a part of the CIO. CSO is now a part of the whole boardroom discussion. And from a strategic perspective as an investor, this is sort of expanding the TAM significantly for companies like Deep Algo, which JP runs, where we are an investor. This is improving the pricing power and increasing the extreme switching costs. So cybersecurity is becoming an embedded infrastructure rather than cost, so to say.
All right. On that note, Bhaskar and JP, I'll have to wrap up our conversation, but many thanks for your valuable insights and for joining us on Startup Street today.
Thank you so much.
Thank you, Shruti.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned to CNBC TV 18.
warm welcome to On the Record with me, Shriram. It's been a big year for banking. We've seen a lot of deals take place, but it's also a difficult environment that the banking sector finds itself in as the war in West Asia continues to rage on. It is taking a toll and an impact on investment decisions. For HSBC in India, it has been a strong year. They've grown both as far as profits are concerned and, of course, improved on operational efficiency, and doing that all with great provisioning. Joining us now to talk about the road ahead is HSBC's Hitendra Dave. Hitendra, always a pleasure. Many thanks for joining us here on CNBC TV 18. Before I talk to you about all things HSBC, we've just seen the news coming in from the RBI, so let me address that. And for the benefit of our viewers who are just tuning in, this is what the RBI has done. It has withdrawn the circular that it had issued on the 1st of April, which was ostensibly to try and stabilize the depreciation of the rupee. Now, what the RBI has done today is that corporates can now rebook cancelled hedge contracts. This had been disallowed in the April 1 circular. Banks can quote and offer corporate hedges in the offshore market. Of course, the overall cap of 100 million still remains. Let's start by what the impact and the implications will be of the relaxations that the RBI has now announced.
First of all, thank you, Shireen. Always good to be speaking to you. No, I think the governor said it in his post-policy press conference where he was asked about these measures, that unusual times, unusual volatility, the Indian rupee perhaps moving almost singularly. On days where the rest of the pack was weakening, we were weakening. On the days where the rest of the pack was not weakening, but we were still weakening. And their analysis, their data suggested that if they were to put some wedge between the onshore markets and the offshore markets, it could help, and the data would seem to suggest it has at least helped calm some nerves out there, because as we all know, currencies can be, you can just get into your own self-created spiral a little bit, and therefore if the market regulator feels that spiral needs to be broken, I think they've broken it. But I think they had clarified that it is to address an unusual circumstance, and today's withdrawal of the April 1 circular would seem to suggest that hopefully this is the first of the overall withdrawal that they will do, so that the market liquidity, the access of corporates, access of banks, and access of all stakeholders in India and outside India to a deeper and more liquid market goes back.
But do you believe that today's relaxations are on account of the fact that the rupee has stabilized somewhat, and that's given the RBI the comfort to take this decision? Or do you believe that it is because of feedback coming in from stakeholders? And we've seen that many have been saying that this was perhaps a little too harsh, maybe almost sledgehammer-like. Which of the two do you believe could have been the reason behind today's move?
Well, I think it will be a mix of both. Yes, there was feedback. I think the central bank immediately after the circular and in the days that have followed has been in constant touch with the market. And I think even while wanting to achieve the regulatory objective of putting a curb on speculative positions or very large positions, in the process, when you come out with a circular like that, even bona fide transactions could also get curtailed. There were also a situation where a lot of us had deals out with our own counterparties.
So it was impacting you?
No, I think it was just making it more cumbersome to unwind those transactions, and which is what they have. So they have taken away some of those things which remove the cumberness, which remove the friction without adding to the demand for dollars just through this process, is my sense.
Okay.
So I think it will be a mix of both feedback as well as the desire to be a opening of the market slowly.
But, on the back of what we've already seen the RBI do and today's decision and the move that we've seen in the currency market, what's the outlook now as far as the currency is concerned?
Yes, so I think remove these circulars and the last 2 weeks of because ultimately in the long run, any asset, any currency is a function of demand and supply. You can put a halt to temporary demand, which is what these measures did. You can add some supply through some other measures. We are reading about OMC's demand having been taken out of the market or whatever. But ultimately, I think the currency was weakening not just in the month of March. March was accelerated, but through the last many, many months. And that I think most people think partly was caused by this persistent selling in the stock market by FPIs, which was almost on a good day, $100 million, on a good day, almost going up to $500, $600, $700 million. And it was almost daily, right? So, and that demand had to be met in the market. Usually you would meet that demand through either FDI coming in. Now we all know that the net FDI number is turning out to be relatively insignificant, while the gross numbers are relatively unchanged and healthy, but the outflow has taken away the impact from a currency perspective. And I think the third thing, which is more technical, is that because there was a like I said, currency was in a self-fulfilling cycle of expectations, which caused exporters to hold back dollar supplies and importers to accelerate dollar demand. So this combination has to be, one of the three of these has to break, or two of the three of these, or three of the three of these have to break for the currency to fundamentally change its direction. We are seeing early signs of FPI selling tapering off. I mean, just let's not make too much of 1 week, but it looks like at least, and you hear from experts that perhaps in any case we are coming towards the end of that because of valuations or whatever. So yes, you would expect currency to be more range bound than it was, but the bias for slow weakness will change only when either the FPIs come back, or you have gross FDI, and the exporter-importer narrative will follow these two, as opposed to lead these two.
So let's address both the FPI as well as the FDI issue. And, you know, it could be a function of valuations. It could also be a function as far as the currency is concerned that FPIs will consider in the midst of a whole host of other factors. But do you believe that we could perhaps have seen the bottom, the worst, as far as the FPI selling is concerned? What do you think could turn sentiment?
Well, the best way to turn sentiment is to report good growth in earnings, right? I mean, if you show good growth in earnings, the kind of earnings growth that historically India has delivered, mid-teens and above, why would people not come back? Because India offers one of the most broadest markets in the world, right? Domestic market economy, IT economy, consumer economy, a very thriving financial services sector, infrastructure sector, real estate sector. You don't get too many markets in emerging markets that have this broad a range. And that's what has attracted FPIs over the years to India. So you really want this to change? I think track earnings. The moment you see earnings growth breaking out of the last 15, 18 months of, high single digit, low double digit kind of numbers, it'll come back. Or we need FDI. I think FDI, because it's much more stable, much more predictable. We need a couple of sectors here where global boards start feeling a FOMO, right? We have to create a sense of FOMO about our market.
So which could those sectors be where, between the government and all other stakeholders, in your words, we can create FOMO?
No, we've seen, like you mentioned in your opening comments, right? We've seen significant FDI in the broader financial services sector. We have seen significant money coming into NBFCs, significant money coming into banks, exactly. And it's not over yet, right? I mean, there are other banks which are still in the process of being identified for appropriate buyers or suitors. So in the financial services sector, yes. I think everyone thinks the next round of growth for India has to come from manufacturing, whether manufacturing for the domestic consumer base or manufacturing for the world, and especially with all these FTAs being signed with the UK, with EU, let's see what happens with the US tariff agreement. So I think it's very difficult to say this sector will drive, but you can sense that last 15 to 18 months, both people in the policy making circles, people in the business circles, I think are looking for that one thing to create that sense of excitement for international investors.
But speaking of sentiment at this point in time, as I pointed out, the war in West Asia continues. We don't know how quickly this will be resolved or whether this is going to continue to be a protracted battle. How is this starting to impact boardroom decisions? Are people now saying, look, let's wait it out, let's wait to see how this settles and then make fresh moves? Or are they saying, let's get on with things because we don't know how this is going to end?
I think there'll be two types. One is if there are strategic markets, right? I mean, you will continue to invest in that strategic market and see through this war situation, because you don't go into a market, commit lots of money, and then because of this you withdraw or you stop investing. That's not how real money or serious money considers itself, right? If you haven't made that commitment, would you go a little slow? Yes, possibly yes. But my own sense is, and our own surveys seem to suggest that, over the last 7, 8, 9 years, the world has got so used to such unusual periods. COVID was perhaps even more unusual than what we are living through. Then we had the tariff-related uncertainty for most of last year, and then we have, the Iran-US conflict out there. I think most boardrooms have become a little tougher on that side, that if we stop at every news flow, at every event,
we're not going to get anything done.
We are not going to get anything done. So I think at least our surveys, our research, our conversations seem to suggest that the world is not going to put things on pause. They might look for higher returns, purely because some of the risks have now surfaced. And now that the risks have surfaced, you want that appropriately captured in the return metrics.
So how do you think India finds itself positioned at this point in time? If you look at what's happening in some of the other high growth markets or high growth regions, they have been very directly impacted by the West Asia conflict. So do you believe India stands at an advantage today on account of that? Or do you believe that, because of the supply chain disruptions, because of the uncertainty, etc., the risks, even for India, have gone up and will then be factored into these investments decisions?
So, Shireen, I think it's almost impossible to say risks have not gone up for any part of the world. I mean, there will be some countries here, there, which might even be beneficiaries of the development since the end of February or so. But overall, global risks have gone up, and that's what is reflected in so many measures of risk. That said, in the context of India, see, why do people come to India? That hasn't changed. Okay, they come to India because we have a large domestic market. They come to India because, by and large, law and order is a very acceptable compared to countries at our levels of income. They come to India because of the soft power that India wields in terms of the number of engineers we have, the number of doctors we have, the number of nurses we have, etc. They also come to India because of the talent in if I can call it modern economy, like IT and potentially AI, etc. Right? So that hasn't changed. And I would say that at the margin, because it's impossible to recreate an economy with 1.4 billion people, or to create all the other factors that I've listed, right? At the margin, you are slightly better off. You are worse off than where you were 6 months back or so. But at the because there are so many economies which have much bigger problems. We have a problem. Our fisc is definitely going to be much more challenged than what we thought when the budget was presented. Our trade deficit or current account deficit likely to be more challenged also. But that's a 1 year, 2 year challenge. It is not that you are permanently looking at India now going back to some high inflation, high fiscal deficit, high current account deficit kind of days. So I would actually say time is for us to somehow or the other make use of this period. I know it sounds almost too difficult, too rose-tinted or whatever, but we will need to do this because the country does need the FDI too. As I mentioned in the previous question, So
and that's what I want to double down on. What can be done to use this crisis? I mean, as they say, never waste a crisis.
Yes.
What can be done to use this crisis? We've seen, for instance, the government amend Press Note 3, making it easy.
I think, and I'm sure the government is working on it, but the amount of so-called reforms that the government has done is actually not. If you put it together, it's quite substantial, right? I mean, on electricity availability, prices, it's very different to what it was 5 years back. on central government approvals, even if single window has not worked properly, but just the competition among states for high profile businesses, high profile sectors definitely is much easier. You look at what's happened to commercial real estate, right? Real estate.
Yeah.
The largest owners of real estate, which 20 years back nobody would have thought of any foreigner will ever touch, are foreigners. The top 3 owners of real estate in the country are foreigners. So there is a lot which has been done. I think the last 2-3 bits, or maybe the one most singular most important bit, would be land. It is still a difficult thing, and it doesn't fall in the central bucket, it's in the last. So I think land availability and creating infrastructure around it, and then just I would suggest, take 10 marquee projects. Just run them, and this government is great at mission mode in whatever they choose to do. Just run those and show the world that you can build a steel factory, whatever you want, automobile factory, or electronics gadget manufacturing, and really showcase those, and that creates a little bit of the FOMO that I spoke about.
Let's talk about HSBC's plans for India. You've come off a great year, strong profitability, expansion as well. You've got the clearance for 20 new branches. You've done 5 already. Take me through what it's looking like now for the year ahead as far as HSBC is concerned, and the aspiration of being in the top 5.
Yeah, so I think, so thank you for the comments. Please play the headline like that.
Which headline do you want?
No, I think we think we can add a lot of value to the global Indian. That global Indian is a company, global India is a partnership firm, global India is a mega corporate of Indian origin which wants to go abroad, make acquisitions abroad, trade with the rest of the world, source from the rest of the world, sell to the rest of the world, or could be mega companies outside India, or who want to come to India, the commercial real estate we spoke about, or the healthcare we spoke about, and many other ways. It could also be the Indian diaspora wanting to come back to India or buy a house, send their kids back, or it could be Indians wanting to send their kids abroad or start a nest egg abroad or something. So that's our principle. We want to be the global bank of India. Okay. In the process, will we do some business for people who have business? Of course we do, and we do very substantial amount of that. The second thing is we can really help young companies. So we are the only bank possibly which has a dedicated innovation bank. I think we are already committed about $1 billion. These are companies which are owned by typically venture capital funds, etc. So very early stage young companies. The third area is trade. HSBC is the world's largest, and if I may say so myself, we are the best trade bank in the world as well. And what we help people with, I think our customers do realize that, and that's why we get disproportionate, because we are able to also tell them what is the credit risk of a counterparty, which very few other banks can around the world or something. So, and in the wealth space, as you mentioned, I think we are experiencing significant growth. I think maybe it's the data is not publicly disclosed, but if you want to search up which credit card spend has been fastest growing in the last 3 years, I won't stop you from doing so, as long as it's part of the headline. So, and even our Premier, which is our go-to top brand, I think is growing faster than it ever has. Our CASA is growing at a healthy pace. So it is all looking good. Like I keep saying, I think with all this combination, with the trust word that is very commonly associated with us, with the balance sheet, which is generally a source of strength for HSBC globally, right? I mean, we are not a cause of problems for the world. We typically, during times of trouble, actually a lot of money comes to HSBC. That's how we are seen as a flight to safety bank. With all these things, with the great team we have, with the heritage we have here, if we are not a top 5 private bank in India. And if we are not compounding at a faster pace than the rest of the industry, then, frankly, we would not have done a good job.
So given the strength of the balance sheet as well as the aspiration that you have, more M&A, you've done some, more M&A on the cards? Anything interesting?
I think on M&A, given how rapidly we've grown in India, and the kind of growth we are experiencing across all the products that I mentioned, one way is let's just grow, because in 3-4 years we'll have created another bank of our size today, hopefully, or so. The other is why waste 4 years, right? So I think it's not a definitive yes or it's not a definitive no. Our bank is too large right now to be able to say no, yes definitely or no definitely, but anything which fits our global strategy, I think we are open to.
So which way are you leaning to at this point in time, at this juncture, and what could potentially look?
Bang in the
what
middle.
Could be?
I'm bang in the middle.
But what could be interesting?
No, I think we have announced our global strategy. We want to be the leading transaction bank in the world. So if anything helps us accelerate, we are already a very, very large transaction bank in India. We process billions of dollars of payments. We make hundreds of crores of payments, thousands of crores of payments every day. We do all kinds of transactions for our customers and for our individual customers. Anything that can enhance that, we could be very open for. In the wealth space also, we have announced transaction banking, wealth, and 1 or 2 other areas which are less relevant for us. So in those areas, we will, if there is something interesting that someone shows to us, we'll evaluate it.
Well, speaking of something interesting, I mean, AI and how everybody is trying to grapple with it. Regulators globally at this point in time concerned about just how quickly things are moving. We've just had a meeting take place in the US of banks as well as the regulator. What are A, the opportunities that you've been able to leverage and capitalize on already, and B, what are the concerns at this point in time?
So I think we are using AI. I mean, everybody has been using AI for many, many years. The most modern version of AI, I think we are using it for things like transaction monitoring, which is, while it sounds like a simple word, a bank like ours will process millions of transactions every day. And the suspicious characters or the wrong characters will try to use us to enter the financial system. And it is for us to make sure that each and every transaction we process is in line with what we thought the customer is using us for. And that to do on using anything except AI now doesn't really work, right? So, and that has really helped us, focus in. Otherwise, we were just calling a few thousand transactions every day as being not suitable, but now you're narrowing it down. Similarly, in many of our customer-facing contact centers and things like that. So it's an evolving subject. I think, like all banks globally, we want to use it as much as possible, but cautiously, right? Because it is still not the done deal. Is in certain areas we have fed it some of our internal documents. So our RMs today can know. If you call my branch today and say, okay, I want a mortgage in this particular township, earlier he or she would say, let me call you back, call, reverse call. By the time you're busy with your next interview, and it just goes away. Now it's there in AI for us. Everything. So many of our policies like this are being fed, which are largely around customer service, customer turnaround times, etc. Are there risks? Yes, of course there are risks, and therefore, even we are investing significant, whether it's cyber, whether it's something else, in those areas to make sure that we use it to do good and not get caught up ourselves.
So, let me end then by asking you, as far as the road ahead is concerned for you, and sticking to the aspiration of wanting to be in the top 5 in India, given all the uncertainties and the volatility that you're faced with today, how confident do you feel of being able to achieve that, and by when?
No, so I think, like I mentioned, if we are not confident with the mix that I shared with you, right? Trust, balance sheet, team, customer franchise. You would be surprised if you do a survey of our customers, very large percentage will say we love dealing with HSBC. See, that's a very rare, it's a very rare situation to find yourself in. Now with this, if I don't have confidence, then you got to find a new CEO for HSBC in India. So,
should that be the headline?
but so therefore, I think the confidence levels are quite high, but we are also realistic, right? We are only going to tap into the opportunity that the external environment presents. If the external environment is go and running, then we will do better than what we are thinking. If it's contracts for whatever reason, we are a conservative bank, we will then also take appropriately conservative decisions and steps. We are prudent, as you mentioned, I think we liked our balance sheet to be totally clean, no hidden anything at all. So yes, we are confident. I think the next 5 years should belong to us, but it's a should. Whether it will or not will depend then on each quarter how we perform.
Well, we wish you the very best of luck for each quarter and for the next 5 years. And thanks as always, Hitendra, for speaking to us here on CNBC TV 18.
My pleasure, Shri.
Well, with that, it is time for us to wrap up this edition of On the Record. Stay tuned to CNBC TV 18. We've got plenty more coming up for you. The newsmakers and the conversations will continue. From all of us here for now, goodbye and many thanks for watching.
The next session asks a straightforward but a difficult question. If the case for equity is already clear, what is still holding leadership back? Because the issue is no longer talent, India has that in abundance. The real question is whether institutions are evolving fast enough to recognize it, back it, and move it to the top. I request Shireen to kindly take this town hall ahead with Mr. Sunil Kant Manjal, Chairman, Hero Enterprise, Rajesh Warrier, the President, Operations and CMD, Cognizant India, Sandeep Batra, MD, Head of International Wealth and Premier Banking, HSBC India, Soma Mandal, Member, Public Enterprise Selection Board and former Chairman, SAIL, Swati Bhargav, the co-founder of cashkaro.com, Aparna Saxena, founder and CEO, Antinorm, Ritu Arora,
taken for you to be able to marry distribution and manufacturing from a product point of view that works for the Indian customer?
Berkshire Hathaway was built like that, so I was like, fanboy, let me follow. And we were sort of this challenger to Policy Bazaar, probably the first challenger that came up. I still live in Bangalore, that I was a Swiggy loyalist.
Yeah.
And most people in Bangalore were, but most people in Gurgaon or Delhi were Zomato loyalists.
Yeah.
Like you build a habit.
Yeah.
We sell a PDF at the end of the day. We sell a document, a contract. There are only 8-10 suppliers. Some of the suppliers are bullies because they're all large companies, right? Getting the license was such a big deal.
Yeah.
That, it just became the goal. And we were probably not thinking how hard it's going to be to get, get customers aligned. It had been like 2-3 weeks and nobody had bought. I had started calling up my friends, tum to le lo yaar.
People still think of you as a digital marketplace, essentially. People don't recognize the fact that you are truly yourself an insurance company. When do you believe that shifted, that change happened?
Deep sort of philosophy with which we went with was that, hey, we want to own the customer. We don't want the agent or the bank to own the customer. I think for the first year, we didn't sell in Delhi. It's like, I think, too notorious a market. Our data is not working. It's too large.
Does it hamper your growth prospects?
Agent or whoever is talking to the customer is constantly deselling Acko. So not only the customer has to select me, he has to select me over a voice that's constantly telling him it's shit. Don't go there. Nobody will help you if there's a claim.
India's general insurance industry is estimated at over 2.5 lakh crore rupees in annual premiums, dominated for decades by agents, intermediaries, and commission-led distribution. But as digital penetration deepens, the battle is shifting from access to experience. Hello and welcome to Young Turks Reloaded. I'm Shriram Bhan. Founded in 2016, Acko set to build out India's first direct-to-customer digital insurance company operating with zero commissions and no offline sales force. Almost a decade later, Acko today is a leader in this space and is hoping to build on the over 1 billion policies that it's already served across more than 78 million unique customers and built a claims ratio of 98% with a net promoter score of 70. In FY25, Acko posted revenues of 2,837 crores, up 34% year-on-year, while narrowing its losses by 37%. From motor insurance, its flagship, to health-embedded protection and pure-term life insurance, the company has steadily expanded its portfolio while betting on technology-led underwriting, issuance and claims. In a tightly regulated, capital-intensive business built on trust and long-term discipline, can a digital native insurer reshape the industry's economics, and what does sustainable scale look like in insurance? Joining me now is Varun Dua, the founder of Acko. Varun, great to have you join us on Young Turks Reloaded. I want to go back to 2016 when you had the thought of being able to do this and disrupt this space in the manner in which you attempted to do. This is a highly regulated business. It's a capital-intensive business. It's a business that has seen the incumbents, some very large incumbents, spend a significant amount of their money and bandwidth on building it out over the last 2 decades. It's also a low-penetration business. It's also not an easy business to make money. What gave you the audacity to think that this was a business you may want to take a shot at?
I think partly naivete. I think I would say that, I always say that it chose me rather than me choosing it. It's an interesting story. When I was graduating from college and you're supposed to do like final year thesis or some report.
Yeah.
That's your final score. This was back in 2003-04. And I was, like, for the lack of not being able to find a topic, it was all in the news that time, insurance, because the industry had just got privatized.
Yes.
I interacted with a bunch of industry experts at that point to try and build my report. And one of my industry guides who was helping me sort of build that report, because I was trying to do interviews of CXOs in insurance companies to find out how they're going to do it, ended up offering me a job. And that's how I got involved. I worked with the Tata Group,
Tata AIG.
For the first 5-6 years of my business, and I was fascinated by the business. I said, this is crazy. You sell probability, you sell math. So the ambition sort of came from the fact that, there were models of, in the Western world, primarily. and no bigger, better than Berkshire Hathaway.
Yeah.
It's an inspiration. I've grown up sort of watching the shareholder, shareholder
Annual shareholder meeting.
Yeah, I used to love, have Warren Buffett and Charlie Munger speak, the simplicity, the clarity, and the entire fortune of Berkshire Hathaway was built on insurance, right? The concept of free float, it was alien to me what free float is. Yeah. And I think I just got fascinated with that thing, and given my journey, and then starting to see what Munger and all these guys speak about, and how beautifully they had built a resilient business over decades, and it had also, apart from insurance, become this huge investment entity because of the treasury that they had created.
Yeah.
I was like, and it was customer friendly.
Yeah.
It wasn't trying to sort of placate intermediaries all the time. So I just went like, I have to do this, right?
From 2016 to 2017, when you got the license, to 2018, when you were waiting for your first customers to come on board, what was that like? And was there a moment where, while you were waiting for the customers to sign up, that you thought, did I make the biggest mistake of my life?
Getting the license was such a big deal.
Yeah.
That, it just became the goal. And we were probably not thinking how hard it's going to be to get customers aligned. We knew it would be hard, but, our focus was just so much on, hey, we've got the license now, at least the journey can start. I think when we set it up and we got the website, app sort of rolling, and, it was like 2-3 weeks. People would come, we would do some content, some, Google, some marketing, some people would, just browse the website and drop off, and it had been like 2-3 weeks and nobody had bought. I had started calling up my friends, "Tum to le lo yaar."
Did they oblige?
Some of them did. Some of them did. And it kind of got going, but yeah, that was very scary because there was this huge moment of self-doubt after the first 2-3 weeks. So it's like, ye khol to liya, maybe even if I was buying my insurance, I'd buy from a Tata or an ICICI. Why would I buy from Acko? It suddenly is not making sense to me anymore. That I think the doubt creeps in as an entrepreneur, as a founder. Like, have you
bitten off more than you can chew?
Yeah, bitten off more than you can chew. So it was a little bit of scare in the first 30-40 days, but I think somehow, I still remember my first non-friend customer.
Help a friend in distress.
None of them. I think I remember it was one gentleman from Hyderabad. And I called everybody. Do you know the guy? Did you tell him? They said, no, we don't know him. I was like, okay, great. Someone's bought it, right? Like, people had to call and ask us, are you an insurance company? He said, yes. It's like, product kiska hai? I said, nahi sir, hamara hi hai.
But that's still the problem, isn't it? That people still think of you as a digital marketplace, essentially. People don't recognize the fact that you are truly yourself an insurance company. When do you believe that shifted, that change happened?
About 3-4 years into the journey, that perception started to, sort of shift. People started to experience the claims. A lot of people started talking about Acko's claim service is good, it's decent. And that's when, sort of the perception, started to change. Also, to your point, that people still, I deeply dislike that characterization of digital. While I'm still trying to.
While you are, yes.
Yeah, so I'm trying to shed that label. I'm hoping folks in the media help me shed that label. I think the deep sort of philosophy with which we went with was that, hey, we want to own the customer. We don't want the agent or the bank to own the customer, which is very different. Now, which could mean that if people come to my office and buy directly, that's also fine. I don't want the middleman. So disintermediation is probably our true characterization versus digital. It just so happens to be that the easiest way you can disintermediate is on the internet.
Correct.
That's how I would, that's how I'd put it. But the whole thesis and the economics of the business really depends on whether the middleman exists or the middleman doesn't exist. Because it doesn't matter whether the middleman is digital or physical.
Correct.
The economics remain the same.
Yeah.
it's not like a policy bazaar or an insurance dekho, and you have lots of now digital distributors. It's not like they own the customer. They charge commissions, rightly so. And whether it's an agent on the ground who's selling in his neighborhood, he owns the customer and he's charging commissions. They're not very different.
Yeah.
You know, just the medium has changed. Economics have not.
Yeah.
And I think that's the characterization I'm trying to break, that the economics change when you own the customer deeply.
So let's talk a little bit about
Yeah.
that and what it's actually taken for you to change not just the economics, and I don't know whether you've managed to change the economics just yet, but what has it taken for you to be able to marry distribution and manufacturing from a product point of view that works for the Indian customer?
I think first thing that we did was narrow our focus. You know, most insurance companies that you'll see, it's the license is literally a license to sell many products.
Yeah.
You know, so you can do fire insurance, you can do, you know, sort of marine insurance, you can do lots of things, right? The license is a license to now go out and build revenue across multiple things. So if you look at most insurance companies, they operate in commercial risk, retail risk, aviation risk, terrorism pools. Like there's lots of risks, right? Like to do, and they also sell travel insurance to you and me, or car insurance to you and me. And we said that's not our business. You know, there could be hundreds of places where we could be selling insurance, but let's focus on the top 200 million people in India. We are a consumer platform. You know, we want to look at it like these are and top 200 million people in India is actually 40-50 million families, that narrow. You know, and it kind of corroborates because there are only 30 million cars in India, 30 to 40 million cars, right? So you're really talking to that audience.
Yeah.
I said, that's my customer, nobody else. At least for the first phase of ACO, which could be 10 years or 15 years. You know, I'm sure we can do more, but like that's the...
Do you feel ready to do more now?
No, I wouldn't say. I think we barely scratched the surface. I think the company is getting profitable now, all of that is happening, which gives us room to do more. But I think the economics, the moats in those categories are very different, you know, so you have to build your capabilities to be able to get there. Inside of the top 200 million people, we further narrowed our focus that we will only do car insurance. We won't even do health, we won't do life. All of health, life, all the stuff that we do today is just as recent as 2-3 years old.
Yeah.
And that was a conscious choice for two reasons. One, we thought that, you know, we don't want to spread ourselves thin. We want to become the best auto insurer first. And auto, because at least you have to trust me, but you definitely don't have to trust me as much as life insurance or health insurance.
Yeah. You know, it's interesting that you talk about narrowing your focus and staying sharp, because I think this is a very interesting aspect of a founder's journey, also learning the art of sacrifice. And there must have been many temptations, there must have been many distractions, there must have been many who perhaps told you at that point in time, try this, try another city, you know, try and look at how quickly you can actually ramp up revenue. How did you sort of stay centered in the choices that you made and believing that the art of sacrifice was as important as sort of experimenting with many ideas?
It's very easy to build scale in this business. Like it's like super easy. All you need to do is go to a car dealer if you're selling auto insurance, go to a bank if you're selling health and life insurance. Whatever commission is being offered by whichever insurer, just offer them 300 bips more. You're done. You know, like
as easy as that.
That's simple. The math is, the world is fairly simple in this, you know. Just offer them a little more, put some sales guys in their branches, and put some sales guys in their deal at the car dealer.
And that's what's happening today.
Yeah, even today, that's all that happens. Like you pay a little more, and you placate them. You send your people down on the ground and have chai pani with them. Do incentives, contests, take them to Bangkok, take them to London for these expeditions.
How much of this chai pani is driving this business at this point in time?
A lot of it, I believe.
So then there is legitimate cause for the regulator to crack down,
I
as well as
personally
the government
believe
to crack down on
I
the
personally
commission side.
I personally believe so. I think while the method of cracking down I may have different views.
Okay.
Of, you know,
Why do you have different views on the method of cracking down? What do you have an objection to?
I don't have an objection to. So I think what the government or the regulator is trying to do is absolutely in the right direction. I think in India, I'll give you a certain example. I started my career in insurance with Tata 20 years ago.
Yeah.
Auto insurance, the commissions were 15%. On an average, 15 to 18% is what an agent would get. Today, it can range anywhere on the lower end from 25, that's the lowest end, up to 40. Okay.
25 to 40%.
40% of what you pay as a consumer is going to the car dealer or the agent. Not 1 year. Every year you renew, also it goes. Even if you did not ever speak to the agent. I think what the regulator or what the government directionally are trying, I don't know what comes out finally, how they implement it, is definitely in the right direction, because in India it's just gone to another level. All countries have had this cycle of excess commissions and, as the markets mature, have controlled it. But it's become ridiculous,
So you're saying that the fact that we're now an industry that has about 30 years behind us as far as the private insurance sector is concerned, so there is a degree of maturity. You're saying the problem has gotten worse, not better.
Yeah, I think so. And it's also to do with, it's still one of the last few remaining high growth insurance markets. Everything else is either growing but too small, like in Indonesia or Vietnam. They're growing, but in the size of it, it's like 2 cities in India, right? Like so this is the only last large underpenetrated market. So there's competition, so everybody is here for land grab at the moment. It's where India is probably in its journey. There's a lot of growth available. Today, Indian insurers in public markets are valued more by having worse economics than a US insurer.
Given the environment that you're operating in and the competitive landscape that you just spoke to us about, as well as this commission and incentive-driven model that the world has gotten used to and adjusted to, does it hamper your growth prospects? And is that a trade-off that you're willing to make at this point in time?
I think it does, partly. I wouldn't say that it doesn't impact our growth, because also we've taken almost an anti-establishment stand, right? Like, because if a customer is coming to an ACO website, he's also getting calls.
So you're seen as the good guys or the bad guys?
By the intermediary community, we are definitely seen as the bad guys, because we say zero commission. Our ads say that, right? Like,
have they tried to go after you?
Oh, absolutely.
In what ways?
Regulatory complaints to saying, hey, this is, they're saying zero commission, they're saying distributors don't add any value, that's unfair. We haven't said that distributors don't add any value, but we've had complaints on, hey, why are you calling zero commission products? You're spending on marketing, so your customer doesn't understand commission and marketing are same. So lots of these technical issues. Distributors have refused to work with us on some areas that where we wanted some distributors or brokers to work with us. On the health side, we wanted to do something specifically. I think now the markets and the intermediaries and like everyone's adjusted to us. I would say it's like a grudging coexistence in some sense. Now nobody's at loggerheads, but we've had those days where because the agent or whoever is talking to the customer is constantly deselling ACO. So not only the customer has to select me, he has to select me over a voice that's constantly telling him it's shit. Don't go there. Nobody will help you if there's a claim.
And they're still doing that.
Of course, they still do it. You know, it's in their interest to do so. ये तो online company है, कल कुछ हो जाएगा तो office भी नहीं है इनका तो like आप कहाँ जाओगे? Like it's a very easy.
But, you know, and that's it's not something easy to actually deal with. How have you dealt with that?
I really think that, you know, it's taken time. I think reputation gets built over time, you know, and the number of naysayers are decreasing over time. I'm not saying I think we still have naysayers, like online company hai, tum kahan ho, office nahi hai, and all of that. But I think those naysayers are decreasing, and primarily we have almost like 3.5 million vehicles insured with us right now. And all of them have been buying for years. The word of mouth has now crossed that inflection point where basic trust we are not solving for. I refuse to believe that my core market by 2030 is somebody who's born in the year 2000. You know, I feel terribly old, but
yes, so do I.
So that customer is
doesn't have the baggage of the past.
Doesn't have the baggage, has started their life with a iPhone or like, and is working more on ChatGPT and Claude, and I refuse to believe that, you know, that customer is going to go and do some chai pani with some agent and, you know, like, so behavior is going to shift, and the tailwind of shift is likely to be people who are going to do a lot more self-discovery. That self-discovery can happen from chatting with ChatGPT and finding out which the best insurance is, or watching some content on social media to educate themselves. The discovery methods are changing, you know, and that leads well to a model like us.
So let's talk about the economics now, where we currently are and where you see yourself over the next few years. Just turned profitable, you've brought down your losses quite significantly. How comfortable do you feel about the state of play today, and what could this number potentially look like 5 years on?
So our model is built on the fairly simple premise, right? Like, we are a large advertiser. We are the largest advertiser in insurance. Maybe Policybazaar and us is 95% of all marketing that happens in insurance. You know, all other insurance.
That's your commission.
In some sense, but that's fixed. It doesn't increase because India can absorb only so much, you know, media spend, and what you need is a little bit of scale to be able to cover that. Once you start covering that and your renewal is all free, like I spoke about, it just kind of automatically, the wheels start turning in a way that you can essentially, from a 15% ROE kind of business that the traditional industry is building, you can easily build a 25 to 30% return on it, like a double. So on the split of revenue, for if the company is doing $100, 60, 70 is coming from renewal, which is coming to a zero cost. So imagine a company which is doing 60, 70% of the revenue with no cost. That's when the engine flips. So more from a we have now at that inflection point where we are. So from this perspective, if we start growing, I think from break-even point, which we are hitting now on the general insurance business, life insurance is new for us. That's not profitable. I think we will continue to. We'll probably be one of the most profitable insurance companies India has seen, because it just compounds from here on fairly quickly.
You know, and that's a pretty big claim to make, that you're going to be India's most profitable insurance company. By when? I mean, what are we talking about? You said you're at that inflection point.
I think in about 3 years from now, I think from the break-even point to we can deliver, you know, maybe like a 20% plus or closer to 25% return on equity profile in about 3 years, which is double the return on capital the insurance industry is generating in about 3.5
So
years.
would that be the appropriate time to look at an IPO, or are you already looking at an IPO today?
No, we're already looking at one. I don't have a specific timeline with all the wars and all stuff going on and markets tanking. I think it's also for us to look at, apart from where our numbers are going, what the mood in the market is. So near term, definitely we're not waiting 3 years, but maybe sometime this year we will
file.
We're thinking through it.
What things that you think you've been able to successfully do that have emerged as game changers to win customer love?
And I think fulfillment is very important to us. We do one thing that's starting to win us a lot of love. We've done it only in Bangalore. We're hopefully scaling it now.
Bangalore's clearly the
It's our home, right? It's our base. It's easy to monitor.
Yeah.
Our head office is there. So we started doing this. We have some drivers and one or two nice Mercedes cars positioned at the top bars in Bangalore on weekends.
Okay.
Fridays, Saturdays.
Right.
There's a bunch of just drivers. They're wearing an aqua uniform, and we have one or two cars, nice cars, like how an Emirates would pick you up, or just positioned at the bars. And if you're an aqua customer visiting a bar on the weekend, you can either use one of those drivers to drive you back home, or you can sit in one of our cars and go back home.
Okay.
Just go back home safe, because it's in my interest, to not let you bang your car when you're drunk.
Yeah.
And we call it Aqua Safe Drop, and it's receiving a lot of love. This is in our territory. It's good for the customer. Hey, have a drink, but we'll drop you home.
Yeah.
We'll drop you home safe. I've insured your car. You better not bang it, and you'll be safe, right?
Yeah.
But this is, or buying our own tow trucks, right? And they're painted green. They look lovely. They're they catch attention on the road. So I think we keep doing these things, and we'll continue to scale these things, because I do believe this is better marketing than maybe running an ad on IPL or something.
You're not really looking at doing this at scale.
No, we will. I think top 8-10 cities we will scale this. We're seeing how it runs in Bangalore.
Okay.
But so some of this is really fun to do, because it's good for the customer, it's good for the brand, in both ways.
Well, Varun, here's wishing you and ACO the very best of luck. We hope that you continue to build on the momentum that you've generated so far, and may you have many more micro moments that you capitalize on. But thanks very much for dropping in and giving us a rundown of the journey so far, but more importantly, the road ahead for ACO. Thanks very much for your time.
Thank you so much.
Well, with that, it is time for us to wrap up this edition of Young Turks Reloaded. As always, we like to hear from you. Do send us your feedback and your comments. We'll be back again next week with another startup founder. Till then, from all of us here, goodbye and many thanks for watching.
Hello and welcome to India Business Hour. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening. Sun Pharma acquires US-based Organon with an enterprise value of $11.75 billion. This is among the largest foreign acquisitions by an Indian company. The Lal Street waves a thumbs up to the deal, which will double Sun Pharma's annual revenue to more than $12 billion. Iran's foreign minister arrives in Moscow for talks with Russia's President Putin as he steps up diplomatic efforts to end the war with the US. President Trump says Iran's leaders can call us to negotiate after cancelling a planned visit by his envoys to Islamabad. Crude oil prices remain elevated as the Strait of Hormuz is choked for shipping. Israeli attacks kill 14 people in Lebanon in what is the deadliest day since the ceasefire agreement. The Lal Street snaps a three-day losing streak. Nifty ends above 24,000. All sectoral indices close in the green. Pharma and IT stocks lead the gains. Mid-caps outperform. Rupee is above 94 against the dollar despite marginal gains. Government considers 5,000 crore rupees in emergency credit to airlines impacted by the war in West Asia. More than 15,000 flights cancelled in the last 2 months, leading to potential losses of nearly 6,000 crore rupees. Indian Airlines are currently operating at only 25% of their scheduled flights to the Gulf region. The war in West Asia has also led to a spike in fertilizer prices. The cost of urea has nearly doubled. Sources say government's fertilizer subsidy bill could rise 20% and cross 2 lakh crore rupees. Reserve Bank issues final rules for asset classification and provisioning by banks under the new expected credit loss mechanism. The rules will take effect from April of next year. A sweltering heat wave scorches large parts of the country. More than 90% of the world's hottest cities are now in India. Weather Department warns conditions could worsen over the next few days. The 31-year-old gunman who fired shots at the White House Correspondents' Dinner set to appear in court. Officials say the gunman was targeting President Trump and administration officials. The gunman appears to have acted alone and had a shotgun, handgun, and knives. The high-voltage campaign for West Bengal draws to a close. Election Commission tightens security around 142 constituencies that will vote on Wednesday. Union government holds a high-level meeting with states to crack down on counterfeit goods to finalize a roadmap for nationwide enforcement. Adulterated food and spurious medicines emerge as a national challenge with more than 24 seizures in just the last 3 months. Auto rickshaw and taxi driver unions across Maharashtra up in arms after state government plans to impose a Marathi mandate. Starting the 1st of May, drivers could lose their license if they do not have basic knowledge of Marathi and will be subjected to checks by the Transport Department. Well, let's begin with the day's trading action. The Sensex and Nifty snapped a 3-day losing streak. The Nifty ended near the 24,100 mark, while Sensex rose over 600 points. All sectoral indices closed higher, with Nifty Pharma and Healthcare being the biggest outperformers. Well, the